to make, and that is to authorize the continuation of an arbitration that already had started when she took office. And this decision was to arbitrate on an issue that already had been decided by the courts. And there's one thing, that the bank's offenses and the bank's faults have never been denied by a court when the arbitration started. The Supreme Court did reform a decision by the appellate court, but on completely different grounds. So she politically was confronted with a decision that could be considered sound at the time.
We know that her former chief of staff, Stéphane Richard, the CEO of Orange at the moment, was very close to Nicolas Sarkozy, the president at the time. We know that Bernard Tapie also was publicly supporting Nicolas Sarkozy. Do you think this is political?
Well, I think it would be difficult to say it is not political, and that it is strange that all this happened as soon as Sarkozy stepped down from his presidency. So I do think there's a strong political connotation behind that.
Mr. Chekhov, thank you so much. That was Antoine Chekhov, lawyer at FTPA in Paris, and the trial of Christine Lagarde keeps going on here.
Caroline, thank you very much indeed. Caroline Kernan there with Antoine Chekhov, founding partner at FTPA Lawyers. Right, time for a Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. Italy's Monte Paschi Bank wants to avoid a government bailout with a $5.3 billion capital raising plan. The bank will step up efforts to win investors for a debt for equity swap. Monte Paschi is trying to clean up its balance sheet by disposing almost $30 billion in bad loans. Philips has agreed to sell a majority stake in its lighting components unit to Apollo Global Management. It's a cut-price deal that values the business at $2 billion. Almost a year ago, the US government blocked a transaction with a Chinese buyer for national security reasons. Boeing's announced it'll sell almost $17 billion of airplanes to Iran. It's the first kind of its deal, or the first deal of its kind since 1979. Now Boeing may have to sell the deal to President-elect Donald Trump. Trump is opposed to the nuclear agreement with Iran that eased economic sanctions and, of course, cleared the way for the Boeing sale. That is the latest Bloomberg Business Flash. Right, BOTC next, battle of the charts. We battle it out over the yield curve as the Fed meeting looms. This is Bloomberg.
It is time now for our global battle of the charts, where we take a look at some of the most telling charts of the day and what they mean for investors. You can access the charts on the Bloomberg by running the function featured at the bottom of your screen. And kicking things off for us today, Taylor Riggs right here beside me.
Hey, Julie. So, of course, all morning we've been talking about the 10-year yield hitting the 2.5 range. That is a big deal, but I wanted to take a look at the yield curve in general and get a pretty big, broad perspective as we head into Wednesday's Fed meeting. So, the yellow line, a year ago, where we were when the Fed raised rates for the first time since the financial crisis. And then we go down to the blue, which is the day after Election Day. And then, boom, we pop up. We are much steeper now in the white line where we are today. The 30-year approaching the 320 mark, the 10-year, of course, approaching that 2.5 mark. Many more traders right now saying the 10-year at a 3% is much more realistic than a 10-year with a 2 handle, something we are looking at, the curve steepening to over 200 basis points between the 2 and 30-year.
All right, heading into the Fed meeting this week. Mark, what do you got?
Julie, keep an eye on China. Unease is once again permeating its financial markets. This is really important. Yes, we're talking about the Fed. Yes, we're talking about Italy. But do keep one eye on China. Let's not forget what happened at the start of 2016, this botched introduction of circuit breakers, a series of weaker currency fixes really rattled global markets. Then the Communist Party took steps to stabilize markets, reduce volatility, restore investor faith. Just have a look at what's happened today, Julie. Today alone, forget what's happened in the last month. Today alone, we've seen the Shanghai Composite Index, the white line, fall by 2.5% at the close. The blue line is $1, which is near its lowest level in 8 years. And then, of course, we saw a tumble in the government bond market as well, Julie. The 1-year sovereign yield rose by 15 basis points to a 19-month high. That's the purple line. So it's almost like the perfect storm. The question is, what's the reason for this synchronized sell-off? Well, you've got President-elect Donald Trump's questioning of the One China policy. You've got the regulatory crackdown on insurers' investments, higher money market rates, and concern that property prices are about to fall as well. The big fear, of course, is we're going to return to what happened in January. The unpredictable nature of Trump's comments on trade policy only add to the uncertainty. Check this out. CITIC Securities last week, Julie, which, by the way, is the nation's largest brokerage, said it was more worried about the money market now than during the 2013 cash crunch, given accelerating fund flows. So as we approach the end of 2016, are we going to see a repeat of the beginning of the year at the beginning of 2017? Unease, Julie, very much permeating China's financial markets. If you want to check out this chart, #BTV, I think it was 5288. Yes, it was.
5288. Taylor, Mark's chart scares me more. It definitely wins on the scariness. I think I'm going to have to give it to Mark today. China is obviously a very important issue, especially in this U.S. political environment. Thanks to you both. Taylor, come back, please, and give us another one. Mark?
Julie, we're just going to show you what's happening with the Chancellor here, Chancellor of the Exchequer, Philip Hammond. He's given this update on his autumn statement, the government's budget for next year. He says the government has made no decisions on the customs union post-Brexit and that financial services in particular are expressing concerns. Do watch this on the Bloomberg at Live. I'll leave you with this. That's the end of us today. We'll see you tomorrow.
It is noon in New York, 5 p.m. in London, and 1 a.m. in Hong Kong. I'm Julie Hyman.
And I'm David Gura. Welcome to Bloomberg Markets. From Bloomberg's world headquarters in New York, we're covering stories from New York to London and Vienna this hour. Here's what we're watching. ExxonMobil chairman and CEO Rex Tillerson is the frontrunner to become President-elect Donald Trump's Secretary of State. We look at what this appointment could mean for oil and the energy markets. Plus, oil surging to the highest in 17 months as OPEC and non-OPEC members say they're ready to deliver to production cuts. Now, it's a question of whether they follow through on those promises. We hear from Carlyle Group co-CEO David Rubenstein, who weighs in on the fragile state of Europe and the most recent appointments by President-elect Donald Trump. Halfway to the trading day, Abigail Doolittle joins us now with a look at the markets. Abigail.
So we're looking at somewhat mixed trading here for the three major averages in the U.S. We have the Dow slightly higher, which puts the Dow on pace for yet another record close. The S&P 500 is trading modestly lower at this time. It had been higher earlier, at which time it did carve out yet another intraday record high. But the Nasdaq is the big laggard today, really being dragged on by tech. In fact, these divergences among the averages really seem to have to do with sector performance. When we hop into the Bloomberg and we take a look at the IMAP for the S&P 500, basically sector composition, we see that tech is really a big drag on the day. Consumer discretionary is another big drag, while energy, on that oil strength that David was just talking about, is really helping out. So maybe if oil continues these gains, it can help turn the S&P 500 back into the green. As for what's really helping both the S&P 500 and the Dow, but truly the Dow performance, we have a few movers, including Johnson & Johnson trading nicely higher. In fact, on pace for its best day since the election. On a bullish mentioned by Barron's. Barron's does see 20% upside potential for the shares of Johnson & Johnson, while ExxonMobil and Chevron are trading higher on that oil strength. And again, if we see a bit more of a recovery in oil, higher at this time, but off of the highs, perhaps that can power both the S&P 500 and the Dow higher yet, and the S&P 500 perhaps back into the green. Now, what's dragging on the S&P 500, we are looking at Alexion Pharmaceuticals and Apple. Apple is down after a big week last week. Apple climbed last week, having its best week since September. But Alexion Pharmaceuticals is down 15%, on pace for its worst day since November of 2005, on the news that CEO David Hall has resigned amid an improper sales probe. David Brennan is the interim CEO, but with these shares down so much, investors clearly do not like that uncertainty, Julie.
Thanks, Abigail. Getting back to that oil story now, Saudi Arabia has signaled it is indeed ready to cut oil production more than expected. That surprise announcement coming after Russia and other non-OPEC countries promised to reduce output from January. In a Bloomberg exclusive, Russia's energy minister, Alexander Novak, said oil companies are already taking measures to introduce the cuts.
In the first stage of the cuts, you would be able to see as early as January. And I would like to say that we have already discussed this with the companies. So companies are quite well aware of what they have to do. And considering that this is a voluntary step by which these companies are taking, because they understand all the benefits of this deal, and they also understand that the deal is there in place and they have agreed to it. And considering this, they're already preparing for the cuts which will take place starting in January. So as we speak now, they are taking measures and readying their plans.
So how that materializes, each company going to get a percentage of what they need to cut?
I would like to stress once again that companies have agreed voluntarily to this, and considering this, they are quite well aware of all the terms. They said that they would join, and this has been confirmed by my recent meeting with the company heads. They said that they would join the agreement which has been reached by the ministers today and do what is necessary. So the production cuts would be split proportionally between the companies. We would also create a production monitoring committee, but internally for the Russian Federation, which would be doing just as its name implies, monitoring the compliance with agreements we've reached with the companies. So the objective here would be to, on a regular basis, monitor the implementation and have quick methods of communication with the companies to address it. And I think that I cannot stress this enough, that companies are basically on a voluntary basis correcting their investment programs. They're correcting their production plans to fit within these agreements.
Staying with Russian corporation, Rosneft just sold $11 billion to Glencore and the Qataris. what else do you see Glencore and the Qataris bringing to the table beyond cash?
Overall, we are very positive on this deal. It has gone as planned, in accordance with the time schedule it was planned. And it is indeed one of the biggest deals both in Russia and globally over the recent times. So we view this as a very positive sign, bringing foreign investment into Russia and foreign capital.
What is a healthy oil price for Russia? What are you targeting? And considering this deal got done today only because of the non-OPEC members led by you and Russia, would Russia ever join OPEC?
As far as prices are concerned, we try to stay away from forecasting these prices because obviously it's the market which decides them and it's quite unpredictable most of the times. But what I can tell you is that the current price level is fully satisfactory to us as a country. Russia, as you well know, is not a member of OPEC and it doesn't have any plans to join the cartel. But Russia is ready to enhance its ties and its cooperation with OPEC countries. And I think today's deal and everything preceding it lays a very solid foundation for such cooperation in the future.
That was Russian Energy Minister Alexander Novak in an exclusive interview with Bloomberg's Anne-Marie Horden. Now let's check in on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our newsroom.
Julie, thank you. President-elect Donald Trump's leading choice for Secretary of State may have trouble winning confirmation over his ties to Russia. Senators from both parties are balking at the possibility that Mr. Trump may nominate ExxonMobil CEO Rex Tillerson. He has ties to Russian President Vladimir Putin. The president-elect's advisor, Kellyanne Conway, spoke earlier on NBC.
We want somebody who's already accustomed to negotiating. We want somebody who, because he is an oil man, has been in Yemen and China and Russia and in the developing world, in the Middle East, certainly, Matt. It's not like Vladimir Putin and Rex Tillerson are pounding down vodka at the local bar. They're not intimate friends.
Florida Senator Marco Rubio tweeted that being a friend of President Putin is not an attribute he was hoping for a Secretary of State. A federal judge is rejecting a request to recount paper ballots in Pennsylvania. Green Party presidential candidate Jill Stein was looking to recount votes in Pennsylvania, Michigan, and Wisconsin. A federal judge halted Michigan's recount, and the Wisconsin recount's expected to conclude today. Mr. Trump won all three states narrowly over Hillary Clinton. Two men who provided money to a key suspect in the fatal Paris and Brussels attacks have received prison sentences in the UK. Mohammed Ali Ahmed was given 8 years. Zakaria Boufasil was receiving 3 years. They provided $3,700 to bombing suspect Mohammed Abrini in July of 2015. He's the man in the hat seen on video footage just before the March bombings at the Brussels airport that killed 16 people. He's in custody in Belgium. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg.
Mark, thanks very much. Exxon CEO Rex Tillerson has emerged as the front-runner to be Donald Trump's Secretary of State. Tillerson has 2 decades of deal-making experience with Russia's oil industry, but his popularity in Moscow is being seen as a liability by a growing chorus of lawmakers in Washington, as you heard a moment ago from Mark Crumpton. Joining us now is Vincent Piazza, Bloomberg Intelligence analyst here on set with us in New York. Tell us a bit about the history here between Rex Tillerson and Russia. He was able to push through a number of big deals with Russia during his tenure at Exxon.
I think it's those ties that may have attracted the incoming administration to Tillerson as a possible selection for Secretary of State. It's a deep relationship. It goes back to the 1990s. Started out in Sakhalin Island, which was a major project, and it's continued thereafter, especially during the Rosneft JV as well. So it's a relationship that can be levered, and it may reset the relationship between the two countries on something that they can agree on, the importance of energy security and energy abundance as well.
There's been so much attention focused on his relationship with Russia. What about other countries? What's his experience like around the globe?
Yeah, that is a great point, because as head of Exxon, you are the head of an organization with a global scale spanning 50 countries. Having an appreciation for the different cultures, different value systems, the different social mores, allows you to appreciate the intricate relationship that one country must have with another country. And it's transactional, right? I mean, he was there to do deals where one country gets something and you get something as well. So it's mutually beneficial, a symbiotic relationship, as opposed to something more confrontational, perhaps.
You've been following his career. He's been on the job since 2006. I was talking with Fadl of Oppenheimer this morning about a quotation he had in the New York Times back in 2006 when he was taking this job from Lee Raymond, and he said that what you're seeing here is basically the same old wine in a new bottle. That Exxon kind of runs itself. The chairman and CEO, has some determinism at the head of the company, but really this company kind of runs in the direction it always has. How has Rex Tillerson sort of changed the way this company's been run?
Well, in two unique ways. Number one, it's the relationship with Russia and the expanding relationship there as well, but also the recent acquisition of XTO back in 2010. That was a major bet on natural gas that did not pan out, a $35 billion bet on natural gas that seemed to turn the other way on them. But I would say those are the two most significant issues that has occurred during his tenure there.
And now, to follow up on David's question, it looks like Darren Woods, who's the president, would be the heir apparent to then take over from Tillerson. How does he compare? How will he change Exxon, if at all?
That's a great question, and I think the one issue, the one challenge for him is to validate the integrated model. Now, you have certain challenges, and you have challenges with respect to environmental activists. You have the ascendancy of renewables. You also have the fact that production, upstream production, has not grown in roughly a decade. You have a reserve base that has been relatively stagnant for the last 5 years. He comes from a different side of the business. He comes from the refining and chemical side of the business, the downstream piece of the business that has really been the ballast for the organization during this time of weak prices. He's rationalized the downstream business, selling off some pieces, improving the profitability. So I think there's an appreciation and an understanding that we're in this period of uncertainty and volatility in the price of oil and gas, and perhaps he can bring that expertise to the table and bring it over to the upstream side and the overall organization as well.
You mentioned renewables, and I wonder what we know about Rex Tillerson's attitude toward climate change and alternative energy.
I think that has shifted somewhat and more nuanced, but I think, as you could imagine, ahead of an organization that deals with conventional oil and gas, that he would take somewhat of a skeptical point of view.
And that has been one of the points of early contention regarding his potential appointment, is that when you talk about the Paris Climate Agreement, here is the U.S.'s main representative around the globe, and that perhaps he would not be so willing to support that. Do we have really any real indication of whether he would or not?
I'm not sure he has offered any on-the-record commentary about that, but I think what's more important here is that energy security is a function of national security. And if you view through the prism of the geopolitical tensions that we are seeing across the globe, especially in the energy-sensitive areas, you can understand why an unconventional pick like this would actually help us better appreciate those tensions across the globe in those energy-sensitive areas.
That's great to speak with you. Thanks very much. That's
Thank you.
Piazza there of Bloomberg Intelligence.
Well, coming up, it's our deals report, and we'll be talking about the failed merger of Viacom and CBS as Sherry Redstone withdraws her proposition. This is Bloomberg. This is Bloomberg Markets. I'm Julie Hyman.
And I'm David Gura. Looking now to CBS and Viacom. The Viacom-CBS deal has collapsed. Sherry Redstone withdrew her proposed merger of the two companies, ending negotiations for a colossal deal. Shares of both companies fell as the merger plan dissolved. And joining us now is Jeff McCracken, Bloomberg's global M&A managing editor. And Jeff, how much of a surprise was this? It seemed like, from many indications at least, this was full steam ahead and that Les Moonves would be running the combined company.
Yeah, I guess it's a bit of a surprise. We had picked up over the weekend that Les was a bit reluctant to do a deal because he wanted assurances that he was going to control or have, control of the Sherry, the Sumner, Redstone,
the family
voting.
shares.
Yeah, he wanted to know he could run these combined companies, which are big and would need a lot of work. He could do it without interference, if you will. And our sense was that she was reluctant for that. And I think in part the reason this announcement came out today was she and her lawyers and her side, if you will, wanted to make it look like they were out front here and they were the reason the deal fell apart.
And was she the one who then made the call because of what Moonves was asking for? Do we know?
Yeah, it's not entirely clear. What I wonder, and I think some people will wonder, is we started making calls yesterday, like, okay, we understand Les has these concerns. Did that play at all into her coming out with this announcement today? Honestly, we don't know. I mean, the other issue was Les didn't want to pay a premium. There were a lot of research analysts who had put out reports saying this is going to be a zero premium or a very small premium. Viacom had made a presentation, as we understand it, I think around Thanksgiving, before Thanksgiving, that showed they wanted a pretty healthy premium. We don't know how much, but it's a $15 billion company already, so any premium is going to probably value it at 18 to 20 billion in all likelihood.
So you have these dueling visions. You have Les Moonves' vision for a combined company. You have Bob Bakish, who's been running Viacom, now will run Viacom.
Right, now he is not the interim, he's the full-time CEO.
Exactly. What is his vision? What's the Bakish vision for Viacom, and what happens to Paramount?
Yeah, I think that the two main things is he's going to have to clean it up, so there's going to have to be some restructuring, probably some job cuts that'll come down the pike, and I think he's going to push more into international viewing. I mean, that's a place perhaps that they might be able to boost themselves and return some profitability. CBS is doing okay, well. Yeah, and it's a big thing. The Redstones don't want to give up control, so I don't think you're not going to see CBS doing a really big deal. I don't think. There are some smaller deals that are out there that they could buy other smaller studios, but likely both companies feel pretty good where they are.
Will CBS look elsewhere? I mean, not necessarily through acquisitions, but what are growth areas for the company?
Yeah, I honestly don't know. I don't know. I think because they've been focused for the last couple months on perhaps doing this deal, so they haven't really given a good sense of what their standalone plan is. Viacom, I think, has been a bit more open about what they're going to do. As I said, restructuring, trying to fix some of the areas like Paramount and others that have been, losing money. What's funny, when these deals, when these companies broke in two, I think it was 2006, Viacom was the strong one. They were the stronger company people envisioned. But since then, it's gone in a bad direction, if you will, for Viacom, or not as good for Viacom as it has been for CBS, which does seem like the dominant studio, if you will.
Quickly here, does this end the soap opera? Is there now stability for these two companies, or do we still follow the machinations of the Redstone family and who does what?
Yeah, I don't think it ends the soap opera. I wouldn't be surprised if 6 to 12 months we're not talking about something again. This is, the deal is dead today. It's dead now, but let's not rule out 2017 or 2018. At some point, the Redstone family, I think, sees the value in bringing these companies together, and they're the driver for any kind of deal.
All right, Jeff McCracken, we're not done with you. Jeff is managing editor for Global M&A, and he's staying with us. Coming up, his interview with Eric Sheila, who's a partner at Cravath, Swaine and more. He's been involved in several major deals, including Time Warner, Yahoo, and DreamWorks. This is Bloomberg. This is Bloomberg Markets. I'm Julie Hyman.
And I'm David Gura. Let's continue to talk M&A in the media space now. Time Warner's $109 billion sale to AT&T is still pending, as is Verizon's $4.83 billion acquisition of Yahoo's operating business. Bloomberg's executive editor for Global Deals, Jeff McCracken, is standing by with Eric Shealy, partner at Cravath, Swaine & Moore's corporate department, and he's helping to broker some of the above deals. Jeff, I'll toss it over to you.
Thank you, David. Eric, good to see you.
Good to be here.
Sporting the beard, I see.
Yeah. I'm following after you.
Thanks. So as David said, you've been on all these big deals. What's going on in the media space where you've got, I mean, not just the AT&T Time Warner deal and Yahoo Verizon, but then we had the Comcast deal for DreamWorks. I mean, what's going on in the media space that's forcing or pushing this kind of consolidation?
Well, I think each of those deals, as you would expect, has its own particular thesis, its own particular context. And I think if you look at two of the deals, it's really about expansion of an existing platform. But if you look more broadly at TMT, I think one of the forces driving consolidation is the need to be able to adapt quickly to changes in how consumers are consuming media across more platforms, across more devices. People are looking for more personalized experience with media, and people are looking for a little bit more interactivity. And I think that process is going to continue as technology exponentially rapidly advances. And I think one of the things you're seeing in an effort to combine content with distribution is an effort to get the production of content closer to the consumer so you're able to be a little bit more nimble and innovate and address their needs.
And this is obviously an international phenomenon, if you will, because was it Friday of last week, Fox announced they and Sky were in talks. So Fox could buy the other 61% they didn't own. So obviously, you know, consumers in Europe or in Asia are also thinking the same way or have the same view.
Yeah, I think it's really the same basic thesis. I don't think that the forces driving this kind of consolidation in the United States are unique to the United States. I think they're largely without borders, and I think it's basically the same concept.
How much of this is driven? I know you don't do just media deals, you do a lot in the tech space. How much of all this consolidation is driven by the fact that tech companies become obsolete, if you will, in a year or two? You know, what's the hot phone in 2010 is dismally obsolete in 2016. I mean, is that part of what drives all these deals?
You know, I think it's some of it, although the phenomena that I just mentioned I think is bigger than any particular device. I think part of the underlying phenomena of trying to be as close to the consumer as possible is to be able to adapt to those changes. So we're going to see things come in like virtual reality. We're going to see a bigger impact of artificial intelligence. Devices are going to change. You know, who knows what it's going to be in the Internet of Things. I mean, you'll have video on your refrigerator.
Right.
I think as that happens, being closer to the consumer is going to allow content producers to be more nimble. There is a little bit of what you're talking about. I mean, if you look at tech in particular, you look at social media, I think one of the strategic challenges of any incumbent in that space is constantly working to maintain relevance, given how quickly like a Snapchat can become widely used and displace an incumbent. So I think you're going to see, or you have seen, an M&A strategy to deal with that. I think Facebook, for example, has been very smart about its acquisitions over the course of the last 5 years to make sure that they evolve.
Right, right. Now, the AT&T Time Warner deal was a big deal, $100+ billion, as David was saying. What kind of, were there special precautions, special things you guys did to, you know, keep this to a pretty small group of people?
Well, you know, as you well know, it's very, very difficult to keep any public M&A deal quiet, regardless of the size. And there's only a few levers you can pull. You can keep the in-the-know group very, very tight. You can be thoughtful about where you have meetings, particularly when you're dealing with a high-profile, recognizable executive, and you can try to get done and get to announcement very, very quickly. It's basically that kind of blocking and tackling. Now, when you're dealing with a transformative deal like this, particularly in the media space, because we know the media loves to cover itself.
Right.
And again, with recognizable senior executives, I think the real difference is not so much the tactics, it's the vigilance with which you deploy them.
Yeah, sometimes it feels like for whatever reason, and maybe it's because the nature of the people that are in the media, those deals seem to leak. Maybe more so than the, you know, the industrial Midwest kind of deal. Maybe I'm biased. I just feel like you see a lot of those deals in the press long before they're announced.
You know, I think, like I said, I think if you look at any public deal of any significance, I think you always start the deal in this day and age prepared for the possibility it's ultimately going to leak. And that's because it's really across sectors. You know, again, media is probably more sensitive than others just because it's very consumer-facing, very high-profile. But I think it's actually a phenomenon across industries.
Got it. I wish we could keep talking, but unfortunately they're telling me we're all done. Back to you, David.
Kraken, thank you very much. He's our Bloomberg executive editor for Global Deals with Eric Shealy there. Coming up, the Carlyle Group co-founder and co-CEO David Rubenstein on turmoil in Europe and Washington bureaucracy under a Donald Trump administration. That's coming up next. This is Bloomberg. Rain subsides a bit. Live from Bloomberg World Headquarters in New York, I'm David Gura.
And I'm Julie Hyman. This is Bloomberg Markets. Let's start with the headlines on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our newsroom.
Julie, David, President-elect Trump is sending former presidential rival Carly Fiorina for Director of National Intelligence. That's according to a report by the New York Times. Trump met with the former Hewlett-Packard CEO today here in New York.
We talked about the opportunity that the president-elect has to literally reset things, to reset the trajectory of this economy, to reset the role of government, to reset America's role in the world and how we're perceived in the world. And I think it's why he's getting such fantastic people in his administration.
Trump is meeting with another former presidential rival today, former Texas Governor Rick Perry. He reportedly is a candidate for Energy Secretary. It's official. John Kelly has been tapped to head the Department of Homeland Security. The announcement from President-elect Trump's transition team came this morning. Kelly, who joined the Marine Corps in 1970, retired earlier this year, wrapping up a final 3-year post as head of U.S. Southern Command. Kelly faces Senate confirmation information. A group tracking the U.S.-led coalition's airstrikes targeting Islamic State is alleging a lack of transparency in assessing civilian casualties. The report by London-based Air Wars says the number of civilians killed since last summer, 2015, is at least 1,500, much higher than the U.S. acknowledged. Airstrikes have been used in the fight against Islamic State in Iraq and Syria. The U.S. Supreme Court has decided not to take up a battle over Internet sales taxes. Justices let stand a Colorado law that requires Internet retailers to turn over customer data in an effort to pay sales taxes they owe. A retail industry trade group said the measure violates the Constitution. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Julie?
Thank you, Mark. Let's get a quick check on U.S. stocks. The major averages right now are little changed, really, a mix. The Dow is very slightly higher, only about 7 points. It did touch an intraday record earlier today, but the S&P and the NASDAQ are still declining. Let's go now to Bloomberg's Abigail Doolittle for what is on the move. Abigail?
Well, one of the big laggards today, Julie, are the shares of Lockheed Martin down sharply. And we can really see the drop in this two-day chart. This, of course, after President-elect Donald Trump tweeted earlier that the F-35 costs are out of control and that billions of dollars can be saved on military purchases, among others, after January 20th of next year. Now, this is about 20% of Lockheed Martin's revenues or net sales, so it could, of course, be a concern for the shares. The stock is on pace for its worst day since 2011, so quite a drop there. But the company, Lockheed Martin, did respond by saying, quote, "We welcome the opportunity to address any questions the president-elect has about the program. It's a great program. And since the beginning, we've invested hundreds of millions of dollars to reduce the price of the airplane by more than 60% from the original price." So a bit of a conversation there between the president-elect Donald Trump and Lockheed Martin. I'm sure more is to come. But on this day, it is certainly dragging on some of the other defense stocks, including General Dynamics, Raytheon, and Northrop Grumman. And when we take a look at spending on military over the last year, in fact, we see that the concern here is the U.S. Nearly $600 billion in military spending from the U.S. The next closest was China of $215. So if President-elect Donald Trump really comes down hard on this, it could certainly be a big problem for some of these companies. Time will tell. As for some other movers, we're looking at Boeing and Airbus. Now, both of these companies, they have both reached deals or agreements with Iran Air for deals. Now, we see that Boeing, however, is trading lower. The reason for this, and it is the first possible agreement since 1979 for $16.6 billion in airplanes, it could require the agreement of Washington. So that's weighing on the shares a little bit. As for Airbus, Iran Air CEO said that they're confident that a deal will be struck within 2 weeks. David and Julie.
Thanks, Abigail. We'll be talking much more, by the way, about Lockheed Martin and some of these other defense contractors in the 1 p.m. hour.
From Brexit to Italy to the upcoming French elections, uncertainty seems to be the only thing in Europe. Today on Bloomberg Daybreak Americas, the Carlyle Group co-CEO and co-founder David Rubenstein discussed his outlook for Italy and the European Union.
There's no doubt that Europe is in a little bit of turmoil because you have French elections coming up and no one knows where that's going to go. You have the new government in the UK trying to figure out how to get out of the EU. Germany will have elections in 2 years, and you have Italian government that's new again. The euro is going to go down probably continuously for a while until there's more stability. There's no doubt that it's in the interest of the United States to have a strong Europe and a strong euro, stronger than it is now. I think it'd be good for the United States. So we are not just sitting there saying, well, it's too bad for you. It's really a situation where we want to have a strong Europe, and we probably should exercise whatever influence we can to have some impact on it. I suspect in the end, the ECB and the EU will give some credibility to what the Italian government wants to do and let them be more flexible in working out this bailout, because otherwise, if the Italian government were to be in such terrible shape and Europe would be going south because of it, it would not be good for all of Europe.
Europe has been through two crises in recent times, a financial one, and then we had the Eurozone debt crisis after that. Right. Arguably, though, we witness more political fragmentation now than maybe we did 4 or 5 years ago, but we don't talk about redenomination risk in the same way. When are we going to start having regular conversations around here about redenomination risk? Is that going to happen?
I think it's possible, but I think the greater interesting thing to talk about is whether or not Europe can actually come together, the leaders can come together and come up with something that makes sense. Remember, the theory of the EU And the theory of the ECB and the theory of the euro is that Europe be better off if everything worked together and more coordinated. But right now, despite all these devices, the euro, the EU, the ECB, Europe seems to be not really working together as cooperatively as it should. So they really need the leaders in Europe to get together and really recognize that they have a potential crisis there, and they've got to be more cooperative and recognize that Italy can't do everything that the ECB and the EU rules require. It's not going to be possible. And if Germany and others don't really relent a bit, you're going to have bigger problems in Europe.
Do you see evidence that European leaders are moving in that direction? I mean, you had Brexit, and there was a lot of complaining about the bureaucrats in Brussels who are not really elected and not really responsible. Mr. Fillon right now, who is a leading candidate for France, is really for reforming Brussels. Is there really movement toward reformation?
I think there is a recognition that there needs to be some change. I was at the EU Parliament the other day and spoke there and to some group of it, and there's clearly a recognition that there has to be some adjustment, I believe, because the rules are a little too strict, and really you've got a bureaucracy sitting in Brussels and everybody else feels disconnected from it. So I think there will be some change.
We have this growth and stability pact that they all have to try and abide by on budget deficits, on the size of their debt pile. When are they going to take their foot off the necks of the banks across much of Europe? When are we going to get some help there? Because you speak to a load of financial leaders very regularly. You spoke to Lloyd Blankfein of Goldman Sachs very recently on your own program. It's clear to me that the US didn't just do a good job of cleaning up the banks after the financial crisis. They've done a better job of allowing the banks to finance the US economy. When are we going to see a pivot there?
Well, there's no doubt that after the Great Recession, the European banks did not clean up their balance sheets as much as the U.S. banks did. As a result, today they still have some bad loans. They also are not lending as much as they probably should, or as much as U.S. banks are. I think they do need to look at that. And I think the ECB needs to be more aggressive in telling the banks that they ought to lend more, and also probably providing more support. I think Mario Draghi has done a spectacular job, and unfortunately he has to leave at some point. His term is up. But I think he's probably the most important financial figure in Europe for sure. And when he does go, it'll be a big problem.
We also asked David Rubenstein about a Donald Trump presidency. Specifically, what will Washington look like after inauguration?
There's no doubt that it's a different group of people who are coming in to run the government than we've had in the last 8 years, I'd say, and we'll see what happens. I do know many of these people. They're obviously very successful business people. Being successful in business doesn't necessarily mean you'll be successful in government. Being successful in government doesn't always mean you're going to be successful in business. So I think we'll see how it works. Sometimes business people go into government and they do very well, and sometimes they go into government and they don't do as well. We'll just have to see.
So the story is you have the cabinet looking like a C-suite, and that's going to be awesome for businesses. They're going to get to grow like bananas. You're going to have the corporate tax rate really lower. They're going to do really well. Is that the correct linkage to make?
In the euphoria of a post-election period of time, everybody is happy who's won the election. And when you start picking people who you think have done very well in the business sector or whatever they've done in private life, they look like they're going to do very well in government. You just don't know. When I worked in the Carter administration several hundred years ago, no doubt before you were born, Jimmy Carter had a Democratic Congress, and he had been a newly elected Democratic president, and we thought we would get everything through Congress. It turns out the Democrats in Congress had their own ideas. This time, I think the Republicans in Congress may have some of their own ideas as well. So the biggest risk I think the president-elect will have is that everything he wants, he just won't get through Congress, and therefore he'll have to pick and choose, and therefore there'll be some disappointment that all the things that he's wanted to get, he just may not get.
There's also the issue about the extent to which you can get the bureaucracy to do what you want to do. It's one thing to be the secretary of something. There's a standing bureaucracy at each one of these agencies that sometimes is hard to turn around. Henry Kissinger wrote about that.
Remember, there are 2 million civilian employees in the federal government, and the president of the elect is going to get to pick about 4,000 of those new people, and actually he won't get them all done for a while. So he may only pick 50 people or 100 people before he's inaugurated, but you've got 2 million people working for you, and that bureaucracy doesn't change on a dime, so it will take some time.
But nevertheless, when you sort of hear the rhetoric, you hear the people being put out for the nominations, you hear potential Rex Tillerson for Secretary of State, what does that tell you about U.S. foreign policy? It's more U.S. focused, it's less global, more company friendly, I mean, broader sense.
Well, Rex Tillerson is a very talented person. I do know him and respect him a great deal. I think he has a global perspective. He spent most of his life really running around the world working on energy projects. So I think he has a global perspective. It's a corporate global perspective, but he does have a global perspective. I think he's a talented enough person to figure out how to do this job. The biggest challenge he's going to have is the bureaucracy of the State Department may not like exactly what he's represented, so he's going to have to deal with that, but I think he's talented enough to be able to do so.
Out of all the policies you've heard, if you did get the call, Mr. Rubenstein, to President-elect Donald Trump, what would be the policy, the number one, that you would want to see that would be good for business, would be good for the economy?
The most important thing that business people want is certainty. Just tell us what you're going to do and try to get that accomplished. I think that business people really like certainty. We can live with lots of different things. Just tell us what the policies are going to be. And when there's certainty, business people can react to it. So just let's have a very certain policy, realistic policy. I think that's the most important thing. Realistic policy and things that can realistically get done. And I think the economy will reflect that very well if that happens.
That was the Carlyle Group co-founder and co-CEO David Rubenstein. And we have some breaking news here. Italian Premier designate Paolo Gentiloni is announcing the formation of the new cabinet in Rome. That new government will be sworn in at 2 p.m. Eastern. Yesterday, President Sergio Mattarella asked Foreign Minister Gentiloni to try to assemble a new government with the Democrats' majority in Parliament. So I suppose that is the room where the swearing in will be taking place. So
just
the guards
those
there.
Guards.
Exactly.
And some news out of Israel as well. U.S. Defense Secretary Ashton Carter is speaking in Israel right now during a ceremony to welcome the arrival of the first F-35 Joint Strike Fighters in Israel. Israel has 50 on order. Not looking at the right footage there, I don't believe. This is after President-elect Donald Trump took aim at another high-profile military program, Lockheed's F-35 fighter jet, the Pentagon's most expensive weapons system yet. Coming up, we're going to the Las Vegas Motor Speedway to take some of Lamborghini's most exclusive supercars out for a spin. That is next. This is Bloomberg. I looked like Philip Hammond.
You're watching Bloomberg. I'm Julie Hyman.
And I'm Mark Barton. This is your Global Business Report. The fallout from the Brexit vote continues. A look at the toll it's taking on luxury home prices in the UK.
Boeing makes its first sale to Iran in more than 3 decades, but now the company has to sell the deal to President-elect Trump.
And in today's Quick Take, insider trading, a look at what defines it and the wide range of penalties for this corporate crime.
China has complained to the World Trade Organization about U.S. and European Union tariffs. The Chinese want the U.S. and EU to quit using example prices from other nations in anti-dumping cases. China says that using third-country models has artificially raised tariffs on Chinese exports.
It's the worst December in 6 years for the London housing market, according to the property website operator Rightmove. Asking prices fell more than 4% from last month, and house prices in inner London are down 6%. An April tax hike on property investors and worries about Brexit have hurt luxury home prices. Boeing has announced that it'll sell almost $17 billion of airplanes to Iran. It's the first deal of its kind since 1979. Now Boeing may have to sell the deal to President-elect Donald Trump. Trump is opposed to the nuclear agreement with Iran that eased economic sanctions and cleared the way for the Boeing sale. President-elect Donald Trump is rejecting intelligence assessments that Russia tried to help him win the election. Trump spoke to Fox News.
I think it's ridiculous. I think it's just another excuse. I don't believe it. I don't know why. And I think it's just, they talked about all sorts of things. Every week it's another excuse. We had a massive landslide victory, as you know, in the Electoral College. I guess the final numbers are now at 306, and she's, down to a very low number. No, I don't believe that at all.
A group of Republican and Democratic senators has called for an investigation. The lawmakers say Russian meddling in the election is a grave threat to national security.
Time now for our Bloomberg Quick Take, where we provide context and background on issues of interest. It seems obvious on first glance that insider trading is cheating and ought to be a crime. Ivan Boesky and hedge fund billionaire Raj Rajaratnam famously went to jail for doing it, and George Soros paid a big fine. However, it isn't obvious at all. Here's the situation. In the U.S., where prosecutors have vigorously pursued insider trading cases, there is no clear law defining precisely what constitutes insider trading and what does not. There's also a huge variance in penalties, with a maximum 2 years jail time in France versus 20 in the U.S. and South Korea. The U.S. Supreme Court upheld a California conviction that resolved what sort of benefit a defendant must receive to make insider trading a crime. That decision restores some, though not all, of the leverage lost by prosecutors in 2014. That's when an appeals court in New York narrowed the definition of insider trading and made it harder to bring cases. Here's the background. Insider trading became a crime in the U.S. through judicial interpretation of a 1934 law aimed at cleaning up markets after the 1929 stock market crash. One of the most famous cases made a household name of financier Ivan Boesky, who is thought to be at least part of the inspiration for the character Gordon Gekko in the 1987 film Wall Street. In the UK, insider trading became illegal in 1980, while legislation against this practice wasn't enacted in Germany, India, and China until the 1990s. Meanwhile, Japan tightened insider trading laws in 2013 after scandals embroiled prominent firms, including Nomura. Here's the argument. Insider trading proponents contend that it allows information to be incorporated into stock prices quickly, making them more accurate. The contrary view is that access to non-public information allows the select few to make big bucks. To complicate the issue, corporate employees, the real insiders, are allowed to trade their own stocks so long as the information they're trading on is generally available. You can read more about insider trading and all of our quick takes at NI Quick on the Bloomberg. And that is your Global Business Report. Head to Bloomberg.com for more stories.
That's more breaking news out of Italy. Premier designate Paolo Gentiloni just announced the formation of his new cabinet, and Pier Carlo Padoan will remain as finance minister in the new government. Also, Angelina Alfano will be the new foreign minister for the Italian government. This is Bloomberg. This is Bloomberg Markets. I'm David Gura. For $12,000, Lamborghini's most loyal customers spend 2 days on the track driving the brand's most exclusive supercars. Bloomberg's Matt Miller attended Lamborghini's Avanzato Academia at the Las Vegas Motor Speedway to learn if the program is worth the high price tag for drivers and for the brand.
Here at the Las Vegas Motor Speedway, Lamborghini loyalists have gathered for the brand's Academia.
Hello everyone again, and welcome to the second day of the Avanzato.
Avanzato is the advanced track academy offered to Lamborghini owners.
I think anyone who gets one of these cars absolutely has to take that Experienza program because your level of appreciation is just through the roof.
2 days, participants get a bit of classroom instruction covering stuff like choosing the best way into and out of a corner. But the highlight is the hours on the track, where they get one-on-one coaching from pro-level race drivers.
$12,000 for the intensive experience gets you a seat in the Aventador supercar as well as countless laps in this Huracan road car. But most importantly, since all of these people already own a Lamborghini, you get to drive the Super Trofeo race car.
That's the souped-up car used in Lambo's private racing league. It's got 40 horsepower more than the production Huracan and costs an extra $125,000. Getting behind its wheel is one of the major selling points for the Avanzato.
This is it, dude. This is the culmination of 2 days of intensive training. How was it?
Oh, it was amazing.
Yeah?
Another thing.
Yeah?
Really, very different.
I can't wait. Insane. All right, I'll buy one too.
To wrap up the weekend, Lamborghini holds time trials where all the software developers, security consultants, and brain surgeons in the group get to see who's really the fastest. And those who win typically get an invitation to a full race weekend, complete with pit crew and a helicopter ride to the track.
It gives us who want to be something that we will never be, a professional race car driver, a pathway to get as close as we can get. It's a marketing ploy also. Maybe I should buy a Super Trofeo race car and start a race team.
That's right, buy a team. The program isn't just aimed at selling more cars. Lamborghini has little problem finding buyers for its products. But most of the participants are among the super rich. And Lambo wants them to put even bigger bucks up to start their own teams for a private racing league.
I jokingly said to them that if I did well in the courses, then I'd continue on and do the Pelota. And I'm hooked. This experience has made me want to buy a Super Trofeo car.
In the 2 years since Lambo's been running the program, only a handful of participants have started teams, but the number is growing, and that's the kind of connection the company aims to foster with its academies. But you'll want to sign up fast. It only happens twice a year.
Ferruccio Lamborghini was a self-made man, and when you talk to Lamborghini owners, so many of them are self-made individuals. We don't have trust funds. We weren't given what we got. We went and got it, and that is the spirit of the bull.
And that was our colleague, Matt Miller. For more, check out Pursuits, your destination for the finest things in life, including travel, watches, dining, and property. Just head to NI Pursuits Go on the Bloomberg.
And let's take a quick check on markets before we head to break. We've got the Dow hanging on barely to its gain, only about 12 points up. We still have the S&P and the NASDAQ lower. Interesting here, divergence with oil prices, which are strongly higher today, but not helping the S&P 500 and the NASDAQ overwhelm their losses here. Oil prices are getting a boost from that OPEC, non-OPEC agreement on production cuts.
All right, still ahead, we'll talk to the former U.S. ambassador to Syria and Israel, Edward Jajarian, all about oil and President-elect Donald Trump's possible pick for Secretary of State. This is Bloomberg. It's 1 p.m. in New York, 6 p.m. in London, and 2 a.m. in Hong Kong. Good afternoon. I'm David Gura.
And I'm Julie Hyman. Welcome to Bloomberg Markets. From Bloomberg World Headquarters in New York, we are covering stories from San Francisco to Paris and Istanbul this hour. Here's what we're watching. 2 days now until the highly anticipated Federal Reserve rate decision. We have the 3 charts you cannot miss ahead of Wednesday's meeting. Plus, Bill Gates and more than a dozen of the world's wealthiest individuals reveal a new $1 billion investment fund to foster major advances in clean energy production. And a shakeup at Chipotle. Co-CEO Monty Moran is leaving the company, putting founder Steve Ells in sole charge of reviving the burrito chain after its food safety crisis. We are halfway through the trading day. Bloomberg's Abigail Doolittle is here with the latest. Abigail.
We are still looking at mixed trading, Julie. We have the Dow trading slightly higher, but the S&P 500 and the NASDAQ both lower, certainly more red than green. Nonetheless, the Dow right now is on pace to close at yet another record high. The S&P 500 earlier did carve out yet another intraday record high, and much of this could come down to sector composition. The NASDAQ is really being dragged on by both technology and biotech, but what's helping the Dow and what had been helping the S&P 500 is still helping the energy sector. This is a chart of the S&P 500 Energy Index, a intraday chart, and we see that earlier today it spiked sharply higher, still nicely higher, up more than 1%. But if this energy sector can come off of the lows of the day, perhaps we'll see the Dow's gains become much stronger, and perhaps the S&P 500 can turn higher once again, and perhaps join the Dow for yet another record closing high. Now, there's lots of talk about the idea that stocks at these current levels with all of these record highs, that stocks are frothy. In fact, when we go into the Bloomberg and we take a look at BTV 5285, this chart may give credence to that idea. This is a long-term chart of the trailing 12-month PE, or price to earnings multiple, on the S&P 500, basically a valuation metric. And we see for a bulk of this time it has basically traded between 12 and 18 times. One notable exception, though, back during the tech bubble, we had the PE go sky high. We now have the S&P 500's PE climbing above that range at levels last seen in 2002. So perhaps this does provide some idea that valuation is high, but we also see back in the tech bubble that it climbed much higher. So it'll be interesting to see how all of this plays out. As for what is the top sector at this point, overtaking energy, we are looking at the telecom stocks. AT&T and Verizon are both nicely higher on an upgrade at Baird, where we have analyst William Power, saying that AT&T should benefit from deregulation and lower tax rates. He did upgrade shares to an outperform. Sprint, however, is down for its 3rd day in a row. It's also worth noting that the FCC, is auctioning off another wave of airwaves tomorrow, the 4th wave of auctions around airwaves. So perhaps investors are taking that into consideration, too, with the gains in AT&T and Verizon, David.
All right, Abigail, thank you very much. Abigail Doolittle there with that market update. Now let's check in on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our newsroom. Mark?
David, thank you. Senate Majority Leader Mitch McConnell says he has the, quote, highest confidence in the U.S. intelligence community. Speaking today on Capitol Hill, the Kentucky Republican defended the CIA and its reported finding that Russia tried to help Donald Trump win the presidency through cyber meddling. McConnell also took aim at Moscow.
Well, let me just speak for myself. The Russians are not our friends. They invaded Crimea. Senator McCain and I and some of our Democratic friends met with a delegation from the Baltic countries just this past week. To say that they're nervous about the Russians, to put it mildly.
McConnell's defense of the CIA puts him at odds with the president-elect, who has rejected the agency's findings. Kellyanne Conway says she, quote, politely declined an offer to serve as White House press secretary for President-elect Trump. That's according to the Washington Examiner and Politico. Conway noted that whomever takes the position will inherit a hostile press corps. Conway has previously hinted that she would avoid a formal role in the administration. Defense attorneys in the Charleston church shooting trial are trying to get testimony from the first witness struck from the record. Felicia Sanders, a survivor of the attack, testified last week that Dylan Ruff belonged, quote, in the pit of hell. The defense team's attempt for a mistrial of the remarks failed. Prosecutors say Ruff was trying to start a race war by killing 9 black churchgoers last year. A manhunt is underway in France for 4 thieves who've stolen what could be more than $1 million in gold. The thieves stole the gold from an armored truck on a major highway near Lyon and then set the vehicle on fire and the 2 drivers inside. Police say the drivers were rescued thanks to a tip-off from a witness. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Well, Federal Reserve leaders are meeting in Washington this week to discuss interest rates for the first time since the U.S. presidential election, which has sent long-term bond yields and equity markets soaring on bets the new administration will stimulate growth. Bloomberg's Matt Boesler joins us now with a decision day guide, and we should say long-term bond yields and equity markets have been soaring in anticipation of stimulus, in anticipation of the Fed, et cetera. So we are looking at this through the prism of charts, Matt, and I believe I have your first chart up here, which is a look at the employment rate among a segment of the population versus wages. Can you talk us through this?
Yeah, so with the Fed, everything kind of starts with the jobs report, and the jobs report that we got 2 weeks ago was very solid, and so it gives them a good kind of, entrance into this upcoming meeting where they're expected to raise rates. This chart shows, the white line shows 35 to 44 employment in the United States, so kind of that key middle demographic that you would expect to be most likely to be working of any. And you can see that last month that hit a new high for the cycle. And that's charted against the blue line shows prime age wage growth. It's a measure compiled by the Atlanta Fed, and that has really leapt up recently as well. So we're definitely getting these strong employment trends, finally starting to see that wage growth we've been waiting for. It's a really good sign for the Fed. Kind of makes it an easy decision for them on Friday.
So just to be clear, that's the employment rate, not the unemployment rate among those folks. So we're seeing strong employment growth and strong wage growth among that cohort.
Correct.
When get to your next chart here in a moment, but when you look at the amount of Fed speak we've heard going into this meeting, is there growing consensus here that we are at full employment? Is there unanimity of any sort?
Yeah, I think, so they submit estimates once a quarter for where they think full employment is. And in September, when they last submitted estimates, the median of the 17 officials on the FOMC said it was at 4.8%. Now, the jobs report we got on Friday showed that unemployment fell from 4.9% to 4.6%. So it went from above their estimate of the natural rate of unemployment to below it. And that could be a potential fulcrum here going forward. That's definitely kind of like a key metric that is a big part of the Fed narrative. So already we're hearing, for example, some Fed officials like Charlie Evans, who's considered more dovish, saying, well, maybe we don't need as much fiscal stimulus now as maybe we were talking about being needed a few months ago. So that could be a potential, big change.
All right, let's pull up your next chart here. That's G, hashtag BTV 5283. Looking here at the Goldman Sachs U.S. Economic Surprise Index, that's in blue, and the white, the expected percentage points of Fed tightening in 2017. What do you see here?
Yeah, so looking beyond, the rate hike that is expected this week, that white line shows you how many are expected for next year, and it's right in line with the Fed's latest projections. So the market sees, 2 rate hikes roughly next year. That's basically where the market was for 2016 at liftoff last year. So it's kind of a similar setup. You can see that the election has played a big part in boosting that. That surge in the white line was kind of right around the beginning of November when the election happened. But you can also see the blue line. I think this is really important too. The economic data have gotten a lot better just since the election as well. And so this blue line shows how much economic data are beating or missing analyst forecasts, and you can see they're beating forecasts by the most since mid-2014, and so that's really helped to boost rates and provide confidence in the outlook for higher yields as well.
Let's get in the next chart here. This looks at what's happening with the housing market and mortgage rates. And as expected, because we've got an increase in 30-year yields, that means an increase in mortgage rates as well. We're also, though, seeing an uptick here, and this is in the blue line, an uptick in mortgage applications. And that's not unusual, right? You tend to see when rates start to go up, people sort of not panic, that's too strong a word, but they rush to then get their mortgage applications in before rates go up even more. Is that essentially what's happening here?
That does look like how it's playing out so far, yeah, because, you know, we've had this big surge in mortgage rates as well since the election, but mortgage applications have actually gone up and not down, which is kind of surprising because if you go back to the taper tantrum in 2013, which is the other red vertical line near the beginning of the chart, you can see that as soon as interest rates really started going up there, that was kind of the top for mortgage applications and they started to fall. And so I think the big question is, you know, that potential downside of higher interest rates is tighter financial conditions. And if we're going to see that, we'll probably see that show up first in the housing market. So it does look like we're kind of getting some of that, bringing buyers off the sidelines now that rates are going higher. But keep an eye on mortgage applications to see if those tighter financial conditions are actually starting to have a negative impact on the economy. And then that's something the Fed might have to take into account going forward as well.
All right, Matthew Boesler, thank you so much giving us a little preview of the Fed through these various charts. And don't forget to tune in to the special coverage of the FOMC meeting on Wednesday. It begins at 1 p.m. on Bloomberg Television and Radio.
And coming up, Microsoft co-founder Bill Gates and other business leaders are launching a $1 billion clean energy fund. We'll dig into where the fund will invest its cash. Next, this is Bloomberg. This is Bloomberg Markets. I'm David Gura.
And I'm Julie Hyman. We have some breaking news coming to us from Dow Jones regarding Apple. The reporting is that Apple held talks to invest in that SoftBank $100 billion fund. Remember, Masayoshi Son was just touting this fund along with Donald Trump at Trump Tower the other day, I believe. So again, here, Dow Jones is reporting that now Apple has held talks to invest in that fund. And luckily enough, we have Bloomberg editor-at-large Corey Johnson here with us today, who covers all things tech. So what's your take on these headlines? I know we're catching you as they're coming out.
So Masayoshi Son is really interesting and to me, a very impressive guy who's done some amazing deals. Had a lot of big deals fall apart. He doesn't have $100 billion. So he would like to have $100 billion. I don't want to speak for you guys, but I'm going to say Sure. We all would like to have $100 billion to invest. He's in a better position to try to raise that money, but certainly Apple is a place where he might want to go to try to raise some of that money. Would certainly approach them. They've got to talk to SoftBank. SoftBank's such an important company in telecommunications, particularly in Japan, but also with their holdings in Sprint and beyond. They've announced that it's the Vision Fund, they're calling it. They've opened up an office in London. They're well underway in this fundraising. They expect to do a lot of venture investing. And it's an interesting time right now in venture investing because you have a lot of commitments of capital in venture, some of the biggest commitments we've ever seen, and some big funds in Silicon Valley raising some even bigger funds to go forward, even as there's a sort of feeling of frothiness in the market and then maybe there might not have been many big ideas to invest in. And secondarily, I think it's an interesting time for these kinds of investments because with the success of Amazon Web Services and Microsoft Azure and Rackspace and other companies in the cloud, the cost of starting a new company in technology is much less than it's been in the past. So you have these bigger funds chasing companies that need smaller amounts of money. It's a very interesting time in venture capital.
And just quickly, does Apple have a history, though, of investing in these types of funds,
They really
right?
do not.
Yeah.
So it would certainly be a stretch in something new, but Apple's done some new things. Of course, they made that investment in Didi not even a year ago that suddenly turned into, I think, as I recall, about a 30 or 40% gainer in about a 3-month return after the Uber investment with Didi. And so Apple has used these things strategically, at least in the Didi case, once, to get into a place that they couldn't get into otherwise. That was unusual for Apple, at least on paper right now. That looks enormously successful. We'll see if these talks go anywhere. It'd be a different kind of partnership for Apple.
All right, let's pivot to talk about a smaller fund by comparison, $1 billion.
Only $1 billion.
The Breakthrough Energy Fund that Bill Gates is championing here. What do we know about it and what this fund might be interested in investing in?
So it's just as it's interesting time for venture capital, it's really interesting times for clean tech investment right now because you have this incoming Trump administration that has been openly hostile towards the idea of climate change, which is a real thing, but many of them don't believe it. It'd be hard to even find a group of people that didn't believe it as much as they have done so in the early collection of people around the Trump administration. And in particular, they have been critical of the programs of the Department of Energy that have championed clean technology and investments in clean technology. So now you have Bill Gates, Jeff Bezos, even Jack Ma at Alibaba, who has investments all over the sun of some very interesting and even curious things. I'll say curious to be kind. But the notion that clean tech investment is going to have to come from somewhere other than the federal government, it always has. But the clean tech is under siege right now, likely, or will be under siege under the Trump administration. These big investors who are looking at the problems of technology and clean tech in particular, saying these are long-term problems that take deep pockets and long-term investments to come up with solutions. So I think it's really an interesting time for them.
Well, and it's also interesting looking at these heavy hitters investing in clean tech because you have clean tech on the one hand as sort of trying to do good in the eyes, perhaps, of these investors, and then you have the success of them as investments. And that part has not been certainly has not been consistent if you look at clean tech, right?
Well, and then determine success, right? It was Tesla's successful investment for early investors. Maybe if they sold, has the company had a dime of free cash flow over a long term? No, not at all. So I don't know how you define success. I think that, and I think that this is where social investing gets challenging because their goals are greater than just a return on capital. That they also have the goal of using capitalism to change the way technology works and change the way business works. But that can make for tricky investing. It isn't always for the bottom line.
Corey, great to speak with you. Thanks very much. Good to see you here in New York as well. That's Corey Johnson. You can hear more from him about 40 minutes time when he'll be joined by Carol Massar for Bloomberg Markets on Bloomberg Radio.
And still ahead, the latest victim of Trump's Twitter account. Shares of Lockheed Martin, they're lower today after the president-elect went after the costly F-35 program via Twitter. The impact on the defense sector and American businesses is next. This is Bloomberg.
This is Bloomberg Markets. I'm David Gura.
And I'm Julie Hyman. Shares of Lockheed Martin continue to tailspin after President-elect Donald Trump tweeted today that the company's F-35 program and cost is out of control. Billions of dollars can and will be saved on military purchases after January 20th. The $379 billion program is the costliest U.S. weapons program. It's been plagued by delays and cost overruns. In October, the Pentagon said it would need as much as $530 million extra to finish the fighter's development phase. Joining us now for more is Bloomberg Intelligence senior aerospace, defense, and airline analyst George Ferguson. And by the way, Lockheed's not the only stock that's down today. Northrop Grumman, which I believe also is a participant in the F-35 program, is also lower today, George. So is there a way to sort of reduce the cost of this program? Does Donald Trump have a point here?
Look, I think there's a way probably to reduce the cost of every single defense program. I think it's just a matter of how hard you want to look into each of them and how aggressive you want to get on cuts. So there is a potential. He talked about saving billions of dollars. We're talking about a program that will become, I believe, the largest defense program ever, some $300 billion in spend. And so to find billions of dollars in $300 billion, I wouldn't say is terribly aggressive. But I think it does set a signal to the rest of the defense establishment, and that is that Donald Trump is not going to, his administration isn't going to increase defense spend and not look for more out of defense contractors. He's looking for more value. He said this during the campaign. And so, you know, I think he'd like to be able to buy more defense with maybe the same, maybe a slight increase in dollars, but he wants to buy more defense.
And Howard Rubel's joining us now as well. He's a senior research analyst in aerospace and defense electronics at Jefferies. Good to have you here. How much of an outlier is this program in particular, is the F-35 program? So the president-elect holds it up as an exemplar. Well, what does it tell us about the rest?
It's the biggest program, so it's going to be, you know, a standout. It's going to attract lightning strikes from time to time. You know, a lot of the problems associated with the program have actually been solved, and I think the question that we need to address going forward is what's the unit cost and how do you improve the learning curve? And frankly, Lockheed's done a nice job of late of recovering.
And does this signal, when we, sort of to George's point here, when you get Donald Trump tweeting something like this, is this an indication that perhaps he's not going to be as bullish or as favorable to the defense industry as perhaps some had supposed post-election?
Well, we can't tell yet. I mean, it's only tweets, it's not full statements. And so what I think is important is if you ask the question about the average cost of the airplane, it looks big to the average consumer, and you want to say, well, why does that exist? And so I think the question he asks, why, is a great question, and the answer is partly to protect pilots, partly because it's the most sophisticated fighter in the world, and partly because it can do things that nobody else has ever been able to do before. So there's a balance here between how much it costs and what the value to the U.S. military is, and I think that, you know, the whole point here is maybe he's asking the right questions, and he needs to sit down and get really complete briefings, both classified and otherwise, as to what the right outcome is.
George Ferguson, a question here just about this, in light of the questions that were raised last week about Boeing, as well with regards to the Air Force One orders that are already on order. I wonder how much a president-elect, a president, can do about deals that have already been inked in terms of bringing costs down.
Yeah, well, there's a lot of follow-up contracts that will come for F-35, and so for sure he'll have an opportunity to really you know, to push his agenda with F-35, and I think that's with most military contracts. You're going to find out that there's a contract cadence that he can get inside and make changes to.
Howard, does this affect your investment thesis on these companies to have sort of these tweets coming out? Is it at the very least a risk that you have to consider now?
I think that's a very fair point, that it is a risk. I mean, we have not been recommending Lockheed. We've instead preferred either Boeing or Northrop.
Of course, he tweeted about Boeing also.
But you know, the beauty of that is the CEO of Boeing went in there and had a conversation. And when you have a conversation and a dialogue with people that are learning about new processes, you gain an understanding to improve the decision making. And so I think this industry in some ways is more complex than almost any you'll ever find. I mean, if you think about the 787 for half a second, it's the largest civilian engineering project that man has ever undertaken. And so it takes years and decades to fully understand the implication. And to some degree, the F-35 is a little bit the same way, but I also think Boeing's got a competitive aircraft in the F-18, and so we have 2 hot production lines. So maybe the Navy buys some more F-18s and compensates for some of the F-35s.
George Ferguson, just last question to you here about the way that contracting is done in Washington, D.C. There's been talk for a long time about reforming that process. Companies in Silicon Valley eager to get into that process have expressed their consternation with how difficult it is. What's the likelihood of real contracting reform in Washington in the near term?
I mean, I think everybody comes to Washington looking to do contracting reform. I think it's a great idea. Again, I think there's plenty of waste in the system that you could try to take out. The challenge here is there's not many companies that can deliver platforms like the F-35, Northrop's bomber program, Boeing's tanker program. So you have a limited number of contractors that actually bid on this stuff. So that's where I think you start to run into some of the challenges. You try to reform contracts, drive down costs. It becomes you've got a base of contractors who can build this that you want to maintain their health, and you have a lack again of sort of big diversification to be able to other people to provide it.
Okay, George, you got to leave it there. George Ferguson of Bloomberg Intelligence and Howard Rubel of Jefferies. Live from Bloomberg World Headquarters in New York, I'm Julie Hyman.
And I'm David Gura. This is Bloomberg Markets. And let's start with the headlines on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our newsroom. Mark?
David, Julie, President-elect Donald Trump has narrowed his search for energy secretary to 4 people. Former Texas governor and presidential candidate Rick Perry is said to be the leading candidate. 2 Democratic senators from energy-producing states are also in the mix. Heidi Heitkamp of North Dakota and Joe Manchin of West Virginia. That's according to people familiar with the selection process. Ray Fishburne, Dallas investor and vice chairman of the Trump Victory Committee Fund, is said to be a candidate as well. President Obama has agreed to lease office space at the World Wildlife Fund headquarters in Washington. That's according to the Washington Post, citing 2 unidentified officials familiar with the plans. The building is located in the northwestern section of D.C. called Foggy Bottom. Turkey is still reeling from the aftershocks of the failed coup attempt over the summer. The economy unexpectedly fell in the third quarter at an annual rate of 1.8%. It's the first time in 7 years Turkey has announced a contraction. Still, recent reports indicate Turkish consumers are spending more in the fourth quarter. The victims of the Pulse nightclub shooting in Orlando, Florida, were remembered today. Survivors, staff, and relatives of victims held a moment of silence at 2:02 a.m., the exact time 6 months ago that gunman Omar Mateen started shooting inside the gay nightclub. The names of each of the 49 patrons who were killed were read. Dozens of others were also injured during that shooting. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Julie?
Thank you, Mark. President-elect Donald Trump may be closer to naming his Secretary of State, and the frontrunner comes from the world of big oil. Yesterday, Mr. Trump tweeted, "Whether I choose him or not for state, Rex Tillerson, the chairman and CEO of ExxonMobil, is a world-class player and dealmaker. Stay tuned." But as enthusiastic as Mr. Trump is about the Exxon CEO, some senators are already expressing reservations because of Tillerson's close ties to Russia's president, Vladimir Putin.
Vladimir Putin is a thug, a bully, and a murderer, and anybody else who describes him as anything else is lying. So we cannot have an accommodation with the Russians until they understand what Ronald Reagan taught them, and that is peace through strength. And right now we have no peace and we have no strength. So it depends. I don't know what Mr. Tillerson's relationship with Vladimir Putin was, but I'll tell you, it is a matter of concern to me.
Joining us now to discuss the geopolitical circumstances surrounding a potential Tillerson appointment for Secretary of State is Edward Jurijan. He's Rice University Baker Institute for Public Policy Director. He has served as the U.S. ambassador to Israel and Syria and is the former Occidental Petroleum chairman. Edward, thank you so much for joining us. What do you having an energy industry background yourself, presumably you don't think that would disqualify Rex Tillerson from such a role. What would he bring to it from having had this corporate experience?
Well, in my experience, CEOs of major energy companies necessarily have great international experience because of the multinational character of these corporations, especially ExxonMobil is the largest and has operations, I think, in at least 50 countries in the world. And Rex Tillerson, as CEO and chairman of ExxonMobil, has the great responsibility in that position of negotiating with foreign entities, leaders of the world, and basically has to know a lot about what's going on in that country before a corporation like ExxonMobil makes investment decisions. So I think the qualifications on the international scene are really more positive than any negatives.
You know the situation on the corporate side from your work at Occidental Petroleum. You know the situation on the State Department side as well. This is a Byzantine network, a Byzantine hierarchy in Washington and around the world. Is it at all worrisome to you that the person heading that organization would not have any basic familiarity with how the State Department works?
Well, that's always an issue when you have someone who doesn't have the political experience or has not worked in government. When they come into a top managerial position, as you mentioned it, the bureaucracy can be quite Byzantine. But again, when you have someone who's a good executive and has good leadership skills, he or she can sometimes see through that when they take over the bureaucracy and adjust it to their own requirements. Let's not forget George Shultz, who came from Bechtel. It's true that he was Secretary of Labor also, but George Shultz brought that type of expertise and management skills into the job.
Turning to the issue of Russia directly, what is the proper positioning with regard to that country at this point?
Well, look, we have a very difficult, contentious relationship with Russia. It has deteriorated in recent years. It's one of the most critical issues on the international scene. In my personal view, the new administration, the Trump administration, has to take a very hard look at the U.S.-Russian relationship. It is a relationship that matters. It impacts on U.S. national security interests in a major way. Let's not forget that Russia straddles Europe, the Middle East, all the way to China. There are many issues that we need to come to certain common understandings, if we can, with Russia. So I think this is an opportunity to re-engage in a strategic dialogue, and I don't mean a phony dialogue just for the sake of procedure and theatrics, but a real substantive dialogue. Where are the issues that we differ on? Is there any potential of really resolving those issues, such as in Syria and Ukraine? And what are the common interests, such as the common interests we have in defeating Islamic radical jihadist groups such as ISIS? So this is an opportunity, and I don't think we should see it as a problematic initial approach, but one that can provide a moment for us to restructure this relationship.
You know, since his name was floated, since Rex Tillerson's name was floated, it seems like a lot of reporting on and interest in has been on his relationship with Russia, his experience in Russia, and perhaps that tells us something about this incoming administration's priorities when it comes to foreign policy. But do you worry at all about the fact that there are other countries we're dealing with at this point and have tricky relationships with at this point? I think of countries in the Middle East. I think about China as well. Are you convinced that Rex Tillerson could engage with those countries as ably as he would be able to deal with Russia?
Well, he has extensive experience in the Middle East and dealing with Arab countries in the Gulf, countries like Qatar and others. So I think he has that knowledge base. I do not know how extensive his knowledge of China is, or if ExxonMobil has had any dealings with China. But again, if he comes to the State Department, he will have a vast array of expertise that, if he listens to that expertise and gains the knowledge, I think it's really the leadership skills that are really important. But let me make one point on this Secretary of State appointment. One thing that a lot of the commentary is missing is that what is essential, no matter who it is, no matter who the President-elect Trump chooses, it's that personal, professional relationship between the President and the Secretary of State that is critical. If that relationship is there, for example, as existed between President Bush 41 and Secretary of State Jim Baker, they were a powerful team because nobody could get in between those two men on foreign policy. When Baker spoke, everyone knew he was speaking for the President of the United States. That's an essential element of the choice of Secretary of State. She must have the full confidence of the President and has to be part of the inner team.
Thank you so much. Really interesting perspective there on that relationship between the Secretary of State and President. Edward Djerejian is Rice University Baker Institute for Public Policy Director. He's also a former U.S. ambassador to Syria and Israel. Thank you so much for your time. I appreciate it.
My pleasure.
A Chipotle C-suite shakeup is leading the stock indexes higher today. We discuss who's stepping down and who is resuming control next. This is Bloomberg. This is Bloomberg Markets. I'm David Gura.
And I'm Julie Hyman. Let's head over to Bloomberg's Abigail Doolittle for the chart of the day. Abigail.
Hi there, Julie. Well, we have several great charts today, all of which deal with the idea of when will tightening or the possibility of the Fed tightening hurt stocks. Of course, we have rates rising and stocks going higher. Usually the threat of tightening hurts stocks. When we first take a look at BTV 5292, we see last year when the Fed tightened that the economic surprise index, the Bloomberg Economic Surprise Index in white, was down near lows, basically telling us that the economy was somewhat on shaky ground, not really beating estimates. But this time around, we see both the S&P 500 and that economic surprise indicator climbing higher, telling us that the economy is doing a bit better than analysts and strategists are thinking. So perhaps that supports the idea that the economy and that stocks can handle rates going higher, and that's why we do have a little bit of this dichotomy. However, when we take a look at our next chart, this shows that in slow cycles, it's the second year that's often painful for stocks. A slow cycle is defined by rates being moved up with a bit of time in between, similar to what we have right now, December of last year. Possibly this Wednesday, and we see that stocks in those slow cycles tend to lag, so that could be what we're looking at. And then finally, when we take a look at a really long-term chart that gives great perspective in terms of yield and stocks, we see that the S&P 500 in blue over the last 30 years or so has really shot higher to the record highs. And what seems to have supported the S&P 500 perhaps to some degree are rates going lower, really that extraordinary monetary policy helping to fuel rates, the stocks go higher. But something interesting to take note of here is that yields going lower, that tells us bonds are rallying. So to have bonds rallying and stocks rallying at the same time, that's a bit of a difference. So it could be interesting. Maybe we get back to the old paradigm of bonds selling off as rates go higher and stocks go higher, perhaps going back to the idea the economy supports that sort of a return to that dynamic that, again, is considered to be more normal.
Although, as that chart shows, maybe it's not so. Maybe what we think of as that normal paradigm isn't so normal after all. Thanks, Abigail.
All right, time now for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. We start with Sherry Redstone withdrawing her proposed merger of CBS and Viacom. Redstone, whose father Sumner Redstone owns both companies, notified both boards today. A person familiar with the matter says Viacom interim CEO Bob Bakish will become the company's permanent leader. Meanwhile, the New York Post says CBS is pursuing other potential deals and that the broadcaster itself could be of interest to Verizon. Credit Suisse is planning to sublease space in London's Canary Wharf financial district. That's according to people familiar with the matter. The bank had earlier said it would cut about 4,200 workers by year's end. Credit Suisse may sublease space elsewhere in the East London financial district, including Columbus Courtyard, as it tries to cut rental bills. And Advanced Micro Devices says it'll start offering graphics chips for artificial intelligence use in data centers. The chips are the company's first product to help computers train themselves in tasks like image recognition. AMD expects the chips to go on sale in the first half of next year. And that is the Bloomberg Business Flash.
Well, Chipotle shares are higher today on news that co-CEO Monty Moran is leaving the embattled burrito chain, putting founder Steve Ells in sole charge. The move follows a tough year for Chipotle. They suffered a series of foodborne illness outbreaks in 2015. They're still struggling to repair their image. Joining us now for more is Bloomberg News food industry reporter Craig Giammona. Craig, thanks for joining us. And so how does this sort of change how Chipotle is going to be managing the recovery with just having Ells in charge? How is co-CEOs holding them back, if in fact it was?
You know, I mean, it's not clear necessarily that it was, but I do think it's sort of Steve Ells, the founder of this company. It's his baby, and he is taking sole control at a very critical time. I mean, that this turnaround has been sluggish at best. It really is not evident yet that they can turn this thing around. And Ells is saying, you know what, I'm going to be solely responsible for running the operations. He's admitting that these restaurants are not being run particularly well. He said at least half of those restaurants are not up to par. So this is him really diving in and taking control of the situation, I think.
Remind us of the history here. Steve Ells, the chef, the creator of Chipotle. Monty, the guy who was brought in to be the sort of business half of the brain. How has it worked out since he was brought on?
You know, pretty well. I mean, Monty Moran was COO when this company was high flying. I mean, for years, the sales growth was the best in the industry. The stock went nothing but up until they hit this major issue. So, you know, I don't think this is any kind of failure by Moran necessarily. Like I said, he was the COO in charge of this stuff when they basically revolutionized sort of fast food with their service model. And Ells is just saying we kind of have to get back to what we do best.
So what does that getting back entail? So if Ells says half the stores are not up to par, what do you do to change that at this point?
Well, so it's a really tricky situation. They sort of made their brand by being simple, right? You walk in, you see the assembly line. People really like that. That was a novel concept. But all this food safety stuff has made it extremely complicated to run these restaurants. So what L's is saying to us today is they're nailing it as far as the food prep and the new safety protocols. But what we've done is taken our eye off the ball when it comes to sort of the customer experience. So they've spent a lot of money, millions and millions of dollars, getting people back with free burrito coupons, that kind of thing. When those people come back, they need to keep them. They need to be reminded kind of why they liked Chipotle in the first place. That's not happening right now, and that's why those sales numbers continue to go down.
Presumably it was the board that influenced this decision. How much confidence is there on the part of investors in the Chipotle board at this time?
You know, the board has been under attack. They need, that sort of board has been called, I think, old, male, and stale. You know, they need some fresh blood there, and El says soon. He wouldn't really specify whether that's the end of this year or early in 2017, but we're going to see some new board members. A lot of those board members have been on there since it was a private company, you know, that was owned partly by McDonald's. So they definitely need some new blood there. That's something that Pershing Square is sort of calling for. You know, Bill Ackman is in the stock now. El says that this decision today was not at the behest of Pershing, that it was his decision in the board, but there is definitely pressure on this company. People need to see signs that they can turn it around.
And Craig, just quickly here, when Chipotle was high flying, it started to explore different ventures, right? Shop House, the pizza chain that they invested in.
That's right.
What's the status of those efforts now that Chipotle's business is down?
Well, so that was, I think for a long time when they were doing great, no one really questioned it. There was sort of this Asian concept, this pizza concept. Now there's a lot of scrutiny on that. Just sort of, should they be doing that, or should they have their sole focus on getting the burrito thing right? They just opened the burger restaurant in Ohio. Early signs on that are so-so. It kind of sounds like a Shake Shack, better burger, you know, simple menu. So we'll see, but I think there's a lot of questions sort of in the investment community about whether they should be focusing on those side projects.
Just a really quick question here. Michael Halen, the Bloomberg Intelligence restaurant analyst, you quote in your story today, he says the inability to run good restaurants this year is almost mind-boggling.
Yeah.
How much can you extrapolate this to how other restaurants are doing? In other words, the problems that Chipotle's been having, how do they shake out through the industry?
You know, I think the thing for Chipotle is just that they have to figure out how to do the food safety stuff and run great restaurants. So they sort of, it seems like they spent the last year making sure the food was safe, which obviously they had to do. Now it's much more complicated to run those restaurants. So sort of they have to get back to doing that and also doing great restaurants. And it's been a struggle so far.
All right, Craig Giammona, thank you so much. Bloomberg News food industry reporter talking to us about Chipotle. And coming up on What'd You Miss, David Wu, Bank of America Merrill Lynch head of global rates and currencies research. He'll discuss why Trump raising doubts about the One China policy is a big deal. That's at 4 p.m. Eastern.
And an IMF researcher turned Venezuelan whistleblower and now a potential advisor to the Donald Trump transition team. We'll introduce you to him next. This is Bloomberg. This is Bloomberg Markets. I'm David Gura. The government of Venezuela has a lot of enemies in Washington, but few more committed and connected than Martin Rodil. Carol Masser and Oliver Rennick spoke to Bloomberg Businessweek reporter Ethan Bronner about his profile of Mr. Rodil.
We started out looking for a story about how looking at PDVSA helps you understand how Venezuela has fallen apart over the last couple of years. But we found ourselves with him and found ourselves completely fascinated by his world. And what's so he has become a kind of broker, bringing people who want to give testimony or who feel they have no choice but to give testimony to U.S. officials who are pursuing cases of corruption and drug trafficking.
I feel like he's thick in the middle of it. Take a step back, because he was a low-level employee, right, low-level-ish, at the IMF. How did he come to be kind of at the epicenter of all that's kind of bad, or much of what's bad, in Venezuela?
Right. So he was, as you said, he had actually come here as a young graduate from university to study English and to sort of expand his horizons a little bit. From Venezuela. He's Venezuelan. And he came here in 2000. And he started working, and he met a guy at a party who is an Israeli guy who went to work for a consulting firm that was hired by a big bank that was worried that money coming through a bank they wanted to buy in Panama had Iranian money coming through it, which would violate U.S. sanctions against Iran.
So basically then from there, he became sort of a freelancer, found that he kind of had a knack for looking into these things.
Exactly.
Where then did his business start to prosper? Who started giving him contracts?
So to just take one step back, what happened is that he had been an intern for several months at PDVSA at the oil company before coming to America. And when this guy called him and said, we're looking into whether PDVSA is involved in Iranian money coming through Panama American Bank, he called a friend of his at PDVSA, and it all sort of opened up a whole bunch of documents, and he worked the story, and basically it was partly out of patriotism. He wasn't making any money out of it, but then ultimately he realized that U.S. agencies would pay him to bring these folks, and he could act as a sort of intermediary, helping the people who wanted to talk cut a deal with U.S. agencies, and the agencies paid him, and then those folks who were, some of them were wealthy, were willing to pay him to help get them out. And ultimately, he also went to work as a kind of consultant for big banks and hedge funds.
Ethan, what's interesting is you actually say he brought something like 24 elites from Venezuela to the United States to kind of tell about what was going wrong in Venezuela, and specifically with their giant oil company. You're talking about former generals. You're talking, I think,
that's
about
right,
a
even
former
ministers.
Yeah.
Absolutely. These are very serious people who, some of them had been involved or seen bad stuff. Some of them were suddenly being pursued by the regime in Venezuela. And Martin became a guy they knew who had links to U.S. agencies and became their intermediary. And he also has a very charming manner. And he has he also, when he sits you down, often they would meet at a Caribbean island, and he would download what you knew as someone who wanted to get information out, and then he would figure out where it could go, and he ended up being this amazing intermediary.
You guys met him?
Oh, I spent many hours with him.
And what's he like?
He's a very interesting guy, because this world we're describing, that we're talking about, feels kind of almost a demi-monde or underworld, but Martin is very charming, and I mean, I think he's both sort of a bulldozer and a pussycat at the same time. He's a guy who can get his way, but who also, he sort of moves you through his sincerity. You don't have the feeling that he's out to screw you, to be perfectly honest. You have the feeling that he wants to move this thing along. And part of it is he really is very upset at what has happened in Venezuela, and he wants to have the government be moved out.
And you can read Ethan's latest story in the latest issue of Bloomberg Business Week, and hear more from the magazine's reporters and editors every Saturday and Sunday on Bloomberg Television.
Well, coming up on Bloomberg Markets, Bloomberg TV contributing editor Bill Cohen will discuss the collapse of that proposed Viacom-CBS merger, a deal that would have recombined the Redstone family's media holdings to create a new television industry giant. That's at 2:20 p.m. Eastern. This is Bloomberg.
It is 2 p.m. in New York, 11 a.m. in San Francisco, and 7 p.m. in London. I'm Scarlett Foe.
And I'm Oliver Rennick. Welcome to Bloomberg Markets.
In Bloomberg World Headquarters over the next hour here in New York, plus we're covering stories out of Vienna, Moscow, and Los Angeles. Here's what we're watching. Oil climbing to a 17-month high after Saudi Arabia eyes even deeper cuts. Meanwhile, the rally in oil prices having a knock-on effect on bonds, the 10-year yield at one point touching its highest since 2014. ExxonMobil CEO Rex Tillerson said to be under consideration for U.S. Secretary of State. With 2 decades of deal-making in Russia under his belt, the Kremlin is applauding the move, while U.S. lawmakers are already raising some red flags. And President-elect Donald Trump takes aim at Lockheed's F-35 fighter jet program, Trump calling costs out of control, his tweet sending defense stocks lower on the day. All right, U.S. markets close in just under 2 hours. Let's get a check on where equities are trading with Abigail Doolittle. Looks like a mixed read right now.
It is a mixed read, but amazingly enough, Scarlett, this board also has record highs on it. The Dow right now up ever so slightly is on pace to finish at yet another record closing high. The S&P 500 earlier had carved out yet another fresh intraday record high, so it'll be interesting to see whether stocks can turn a little bit higher into the close. We have 2 hours ahead, but the NASDAQ has been firmly down all day, really being dragged on by technology and biotech. As for what's holding back the S&P and the Dow, we're looking at the financial sector. This is the worst drag on the S&P 500. We have Bank of America, Wells Fargo, and JP Morgan all lower. Perhaps these stocks are taking a bit of a breather. The financial sector is the top sector since the election, up about 18% ahead of today on growth expectations. Of course, also as yields have climbed higher. And as Scarlett mentioned, yields earlier, the 10-year yield hit a level not seen in quite some time. But now those gains have really paired. And we go into the Bloomberg and we take an intraday look at the yield, the 10-year yield in white, but also the Bloomberg Dollar Index in blue. The Bloomberg Dollar Index has been down all day, and it appears to be leading the 10-year yield down. That's typically not the way that it happens, but this chart here may suggest that a Fed rate hike is priced in largely on Wednesday, and that we're now starting to see a yield trade down into that. Turning to a part of the commodity complex that's been overlooked or underlooked today, I should say, because of oil's gains, natural gas. Natural gas is down sharply, down 6%. This is Tradition Energy is saying that hopes for cold weather have really been snapped, that right now we're seeing warmer weather than expected on this. We do have 2 of the E&P stocks trading lower, including Southwestern Energy and Range Resources. Range Resources is actually having its worst day in quite some time. And we go to the Bloomberg, though, there is some reason to think that this could reverse. This is #BTV 4228, and it is a long-term chart of natural gas. And back in 2012, we see that natural gas put in what's called a golden cross when the 50-day moving average moves up through the 200-day moving average. It speaks to lots of bullish buying momentum. And lo and behold, one was put in earlier this year telling us that while it might be a bumpy or a volatile ride for natural gas, that gains, big gains, could be ahead, and perhaps for some of those E&P stocks as well, Scarlett.
All right, Abigail Doolittle, we'll keep an eye on that. Thank you so much.
All right, now let's check on the Bloomberg First Word News this afternoon. Mark Crumpton is in our newsroom with more. Mark.
Oliver, thanks. Speaker Paul Ryan says the House Intelligence Committee will look into cyber threats such as hacking by Russia of the Democratic National Committee and Hillary Clinton's presidential campaign. He says any investigation should not cast doubt on what he called the clear and decisive outcome of this election. Meantime, White House Press Secretary Josh Earnest had this to say about the investigations.
You didn't need a security clearance to figure out who benefited from malicious Russian cyber activity. The president-elect didn't call it into question. He called on Russia to hack his opponent. He called on Russia to hack Secretary Clinton.
Earnest called government intelligence officials patriots. In Philadelphia, former U.S. Representative Shaka Fattah has been sentenced to 10 years for a racketeering scheme that included money laundering and bribery. The federal judge called the 60-year-old Democrat's crimes astonishing, given that he and his TV anchor wife had a $500,000 annual income. Fattah insists the Justice Department's racketeering case is politically motivated. Egypt's president says a suicide bomber caused the explosion that killed 24 Christians at a chapel in Cairo. Hundreds attended a memorial earlier today for those killed. It was one of the deadliest attacks on the religious minority in recent memory. The U.S. Supreme Court is allowing the NFL's $765 million concussion agreement to stand. The justices left alone a federal appellate ruling that the deal, while imperfect, was a fair resolution of claims filed on behalf of more than 20,000 retired players. Former players who opposed the accord argued it wouldn't adequately compensate them for the brain damage they may have suffered. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Oliver?
Thank you, Mark. Will we see a downturn in the economy during a Donald Trump presidency? Last October, Carlyle Group co-CEO and co-founder David Rubenstein warned that the U.S. was due for a recession.
We tend to have recessions every 7 years, more or less, in the United States since World War II. So at some point in the next year, 2 or 3, you can expect a recession. I don't think we're here now. I don't think there's any indication of it. But you do expect some slowdown after pretty good growth we've had the last couple of years.
But earlier today on Bloomberg Daybreak Americas, Rubenstein backed off any immediate downturn in the economy.
When Alan Greenspan was the head of the Fed, there was some talk that the business cycle had been repealed because we had postponed recessions for such a long time. That turned out probably not to be the case. I think since World War II, as I've said before, we have recessions on average every 7 years, but we've gone as long as 9.5 years. So I think what's happened now is we probably pushed the recession down the road a little bit because the stock market is more ebullient. I think there's more confidence in the market. And whether or not this is justified or not, there's no doubt that we're not likely to have a recession, I think, in 2017.
Former Prime Minister, former Chancellor Gordon Brown did the very same thing. He stood up in Parliament and said it's the end of boom and bust. On the boom and then the bust, if we're going to get fiscal stimulus this late in the cycle, how much of a boom are we going to get and how much of a bust will soon follow?
Well, nobody really knows for sure. There's no doubt that if you're pushing it down the road, at some point the decline could be greater than would otherwise be the case. But right now, I don't think we're going to see anything like a 2006 and 7 period of time where we're likely to go into a gigantic Great Recession. I think we'll probably have, when we have it, a modest recession, but it's not likely to be in 2017. I think what you're likely to see is stimulus out of the Congress, and I think you're likely to see tax cuts, and as a result, I think you'll push down any recession for quite some time.
So how do you process all that information as an investor and make decisions now? I mean, where are you in your cycle about buying and selling?
It depends on what part of the world we're looking at, but in the United States, we're very determined to make investments now because we think it's a pretty good time to invest. Prices are not cheap, but financing is available. In Europe, I think prices are a little bit cheaper, and therefore very attractive right now.
What about, though, all this animal spirits you've been talking about means it's time to sell and rotate out of some of the assets that you've been invested in?
Well, we always are selling some assets. We own hundreds of companies, and we're always selling some when it's appropriate to sell them. But right now, prices are high, so there is a fair amount of selling going on. But in some sectors, prices are a little depressed, and therefore you can make good investments. Right now, the sectors that are doing quite well are probably the ones you'd want to sell for a while.
Can you help us understand which is which? I've spoken to David Foley of Blackstone. He's like, in energy, I got nothing. There's like nothing distressed anymore. Where is the distressed opportunity?
Well, the distressed opportunities may not be in the United States right now. There may be in other parts of the world. So we're looking at the global investments. In the United States right now, probably everything is doing reasonably well. I think right now I don't see a great gigantic area of distress, but some companies might have borrowed too much. And while the sector might be good, the company itself might not be in great shape.
So what about Europe specifically and geopolitical risk? Because we certainly have seen this year a lot of geopolitical risk and markets not being able to price it in. As you look at Europe as an investment opportunity, how do you process things like the turmoil in Italy, in France, and perhaps even Germany?
There's no doubt that Europe is more stressed than the United States and maybe even in Asia. And right now, because of what's going on in Italy, what's going on in the Brexit situation, and what's going on in France, the uncertainty there in terms of who the next president will be, I think there's no doubt a chance to buy things at lower prices than before. I think Europe is being helped a lot by the quantitative easing that ECB has done, and they have to continue doing that for quite some time. There's no doubt prices are cheaper, though, in Europe than they are elsewhere.
You touched on the availability of financing. Now, supply of credit and price of credit, two different things.
Yes.
The price of credit's going to change in the coming year, perhaps significantly. What's that going to mean for you?
I don't think it'll be that significant. If the Fed were to increase the Fed funds rate by 25 basis points this week, that's built into the market. And even if they were to go 100 basis points over the course of next year, that's not a gigantic increase. If you were going to have an increase of several hundred basis points, that would be different. Credit availability is a much greater problem than credit pricing right now, because there's plenty of credit availability. If credit availability were to go away, that's a problem. Right now, I don't see any sign of that happening.
Yours is an international business, and we are seeing in the headlines every day now things like perhaps Rex Tillerson going to be Secretary of State. We had Donald Trump yesterday questioning the one China policy. How does that affect your investment opportunities when it comes to things like Russia and China?
Well, in my business, we're typically making long-term investments, so we're not based on what happened in the headline today or tomorrow or so forth. We really are looking at longer-term investments. We have to make longer-term projections, but obviously you have to take into account what public figures say. In terms of those statements, I don't think it will affect what we do in terms of a longer-term investment. We're still very bullish on China.
Oh, good. Let's talk about bullish on China, because the markets were flying today, just not in China.
Right.
China saw a lot of shakeout today as well. Why are you bullish when there seems to be the risk of a trade war with the U.S.? You don't know what those relations are going to be. They want to burst the property bubble.
We have about 320 million people in the United States. There are 1.4 billion people in China. They're growing at 6.5%. We're growing at 1.5 to 1.7%. So given the size of the population, the number of consumers there, that while there might be temporary ups and downs, the amount of people who are there to buy products and services are pretty significant. And therefore, relatively speaking to private equity, it's a small percentage of their economy compared to the United States. So there's still an enormous opportunity to invest in China and not be crowded out by so many other people competing with you.
Maybe they're growing at 6.5%. Maybe.
Well, put it in quotes. Put it in quotes.
If you believe the numbers.
An asterisk. Disclaimer there, David?
Well, Alan Greenspan used to famously say that the advantage of looking at China was you could tell the numbers before the quarter was over. But I think the economy in China is two different economies. The state-owned enterprise economy might be growing at 2 or 3%, whereas the entrepreneurial economy, the logistics economy, the things where there's real entrepreneurial instincts and not the SOEs, they're growing at 10 to 11%. So together, it's about 6.5%. And I think those numbers are pretty legitimate. Also, the Chinese leaders, they use many different things to figure out what the numbers are really, and they use electricity transmission, they use rail transmission, and I think they would say probably 6.5% is probably a pretty good number, and I think it is.
That was David Rubenstein, co-founder and co-CEO of the Carlyle Group, speaking earlier on Bloomberg Daybreak Americas. And don't forget, you can catch David at David Rubenstein Show peer-to-peer anytime online, and this Wednesday at 8 p.m. Eastern.
Coming up, President-elect Donald Trump takes aim at Lockheed Martin's F-35 program. Lockheed shares declining to a one-month low. It's also weighing on other defense stocks. You've got Northrop Grumman and Raytheon each down by better than 2%. And a quick glimpse at what is happening in Rome and Italy at the presidential palace. It is the swearing in of Italy's new Prime Minister, Paolo Gentiloni, along with his new cabinet. This is Bloomberg.
Realmente la Costituzione e le leggi e di esercitare le mie funzioni nell'interesse
This is Bloomberg Markets. I'm Scarlett Fu.
And I'm Oliver Rennick.
We have some breaking news. Turns out that Barclays, Citigroup, and JP Morgan are helping the U.S. government broaden a currency probe. As you know, Barclays agreed to allegations of currency rigging with last year's guilty plea, but that information that it gave up in return is now being used by the government to broaden this investigation into the manipulation of the FX market. So you've got JP Morgan, Barclays, and Citigroup cooperating to offer evidence of a potential new antitrust conspiracy in the FX spot market that prosecutors say involved different currencies than the ones that were at the center of the 2015 investigation and the 2015 guilty pleas. This is all according to court papers filed by the government and the banks in advance of sentencings that are scheduled for later this week. We'll keep an eye on this story for you. Meantime, if you look at the defense sector, shares of Lockheed Martin are under pressure today after President-elect Donald Trump tweeted that the F-35 program and its costs are out of control. Trump also mentioned the program during his interview on Fox News Sunday.
I don't need a $4.2 billion airplane to fly around in, okay? I don't need that. And especially when it's totally out of control because, you know, they've lost control of it. And I let them know that I don't want this. I just see things that's so incredible. You look at the F-35 program with the money, the hundreds of billions of dollars, and it's out of control.
Every day.
Meanwhile, Lockheed Martin said in a statement today that it has worked to lower the price of the F-35 by more than 60%. And, quote, "We welcome the opportunity to address any questions the president-elect has about the program. It is a great program." So for more on this, let's get to Douglas Rothacker. He is defense analyst for Bloomberg Intelligence, and he joins us now from our bureau in Princeton, New Jersey. So, Doug, give us some context here, because it seems like the president-elect just brought up the F-35 program without much prodding. What's the genesis of this? How did this come about? Why is he bringing this up now?
Well, the F-35 program is the government's biggest defense program right now. So in totality, the government estimates it'll cost about $400 billion to buy all of the F-35s, and that's just the U.S. alone. But it's important to note that we are far into this program, so there's a lot of risks that are behind the program. And if you look at an annual basis, the U.S. will spend about $10 billion on the F-35 this year. And in terms of Lockheed, next year they'll expect to generate about $12 billion of their total revenue, so quite a bit more than 20%. So definitely a big program, and I'm sure that's the genesis to your point of why President-elect Trump is coming at this.
Doug, so you mentioned that this program is already pretty well underway, yet traders here in the market clearly reacted and sold off Lockheed Martin pretty quickly today. What are people worried about, or what would you, I guess, be worried about when you look at what they have to lose here? What's at stake that's left in this program?
I think the biggest concern from a broad defense contractor standpoint, and now that we're transitioning to the new administration under President-elect Donald Trump, is the attack, if you will, or focus on defense profitability. So we think the biggest risks are if the new administration focuses on costs and controlling costs. It's in all likelihood the contractor profitability and margins could see a decline from that. But that's not to say we're not in more of a positive defense spending outlook, and revenue and profits, we expect will rise. But I think profitability from a defense contractor is going to be the biggest focus as we move here with the new administration.
And if you go inside the Bloomberg, you can see it's obviously not just Lockheed Martin that has been suffering today in the wake of these comments. You also have Raytheon down as well. This is a chart from Dan Curtis, who put it together. The blue part of the bars show how much Raytheon gets from the Department of Defense. It varies between 60 to 68% of the total, which is the white portion of the bar. So clearly, this is not just limited to Lockheed Martin.
Right, and it's also, I think, surprising a lot of people, because when you look through estimates going into this election, is basically saying that a lot of these defense companies were going to benefit under the Trump election.
All right, a little bit of a head scratcher there. Thank you so much, Douglas Rothacker, defense analyst for Bloomberg Intelligence. We appreciate it.
Still ahead, Viacom gets left out in the cold as deal talks with CBS collapse. The shares are sinking, but the change of plans may be good news for CBS. This is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu.
And I'm Oliver Rennick. The Viacom-CBS deal has collapsed. Sherry Redstone withdrew her proposed merger of the two companies, ending negotiations for a colossal deal. For more, we're joined by a man who's been following the entire drama between Viacom and CBS from the get-go. It's Bill Cohen, a Bloomberg TV contributing editor, and he's on the phone in New York. Bill, obviously, so the breaking news here, what do we know about how this sort of went down? How do we get to this point where things are falling apart?
Well, I mean, as you know, Oliver, they each established independent committees of the board to analyze the proposed transaction. They hired investment bankers. I'm sure they had some serious negotiations about all of this. And, you know, as best as I can surmise, and which makes total sense, Les Moonves was trying to buy Viacom for as low as possible as he possibly could and take control of it. And I'm sure the Viacom board and its bankers didn't want to sell for the price that Les wanted to pay. But I think Les showed a lot of discipline here, and this is probably the right outcome for both companies.
Les also attached some conditions to a purchase, a merger as well. He wanted control over the Redstone family's voting shares. Do you think that he knew that that was probably asking for too much, that might be a deal breaker here?
Well, I mean, not necessarily, Scarlett, because I think that you know, obviously Leslie Moonves was the guy that the Redstone family wanted to run both companies. I mean, he is a proven media executive. He's done great things at CBS, whereas Viacom has fallen on hard times. So it's not at all surprising that Les would want total control and wanted to be able to get done what he wanted to get done at Viacom. And being able to vote the family shares is, you know, probably part of that. I'm sure that they could have, you know, if there was a serious disagreement, they might have been able to work something out. I suspect that it became very difficult for the Viacom board to get a fairness opinion about over the price that Leslie wanted to pay.
Bill, how tough was it for the CBS board and Moonves to back away from this deal? I mean, should we be giving him credit here to some extent to not kind of giving in, holding her own?
I think Leslie deserves a lot of credit for being disciplined and not sort of giving in to the deal heat. There was a lot of deal heat around this transaction. I'm sure that a lot of Viacom shareholders would have loved if CBS had gotten control of this and gotten a premium and had Leslie Moonves run this. But Leslie has always said from the beginning that he did not want to lose discipline on price. He wanted to make sure that it made sense. And I applaud him. I give him a lot of credit because a lot of CEOs get into deal heat and then they do deals and regret it later. And I think he showed a lot of discipline. By the way, that doesn't mean this might not come back. This might be just a negotiating ploy.
Hey, Bill, that's what I was going to ask, because your experience here on Wall Street, I mean, you dealt with a lot of this type of investment banking and deal making. How tough is it? What are the sort of forces pulling both ways on a company's leader at that point? Is there more at stake than just the deals, the relationships with bankers, et cetera?
Well, of course, everybody, you know, the forces align wanting to get a deal done because that's how bankers get paid. That's how everybody sort of gets prestige and takes victory laps. So again, I give Leslie a lot of credit for having discipline here. But just because this fell apart, you know, in December of 2016, if it's sort of meant to be, don't forget these companies were together 10 years ago and were split apart. If it's meant to be, if the current leadership of Viacom doesn't get the job done and they're kind of untested, then they might very well turn again to Leslie Moonves and have him be the savior, you know, again, because the Redstone family wants to create value here. The Viacom stock is down more than 50% over the last couple of years, and CBS has been a bit on a tear, and so they want to get that value of Viacom up, and they're hoping that Leslie Moonves can do that for them, but this wasn't the right price at the right time, and it very well may come back.
Right. It's a reminder that this deal was really more about propping up Viacom rather than CBS. Bill Cohen, what would you look for very quickly here as a next step of this saga?
I think the disappointed Viacom shareholders are going to probably push for a deal, and we'll see it come back.
All right, Bill Cohen.
Bloomberg TV contributing editor and also contributor to Bloomberg View. Thanks so much.
Still ahead, the commodities close. Oil climbing to a 17-month high. This comes after Saudi Arabia eyes deeper cuts and non-OPEC countries join in on the deal. This is Bloomberg. From Bloomberg World Headquarters in Midtown Manhattan, this is Bloomberg Markets. I'm Scarlett Fu.
And I'm Oliver Rennick. Commodity markets are closing in New York. Bloomberg's Abigail Doolittle is here with the latest. Abigail?
Well, lots of movement within the commodity complex today, Oliver. Here are some of the standouts for us. Within the energy complex, we have the divergence between oil and natural gas. Oil, of course, trading higher as both OPEC and non-OPEC members agree to cut supplies. Natural gas trading lower as weather is warmer than what had been anticipated earlier last month. As for the precious metals, we see some strength there. This as the Bloomberg Dollar Index is falling. What really stands out to us the most, though, is the performance in oil, just this big rally at levels last seen in July of 2015. So we want to take a look at how this looks for the stocks. We go to the Bloomberg and we take a look at G hashtag BTV 5291. On top, we have an S&P 500 energy stock or oil stock index. We see it rebounding quite nicely from the lows last January, up, in fact, 50% from that time period. The question is this sector overbought? Now, the RSI on the bottom, or a momentum indicator, may suggest that, yes, these stocks are overbought, hitting the sell level of 70 up there. It's been pretty reliable in the past. And we see that much of the movement higher in the RSI has come after the election. So let's take a look at a few of the top performing stocks since the election. And we are looking at a number of different names here, including Transocean, Chesapeake Energy, Helmerich, and Payne and Hess. Very interesting that there are two drillers in there. And wow, look at those gains. Just absolutely huge gains since November 8th. And finally, this is very interesting. One sector that initially fell within the energy complex after the election, but it has now recovered. This is the new energy index, or basically the green stocks. Initially fell after the election, but has now regained and is now up 1%. Pretty nice recovery there, Scarlett.
All right. Thank you so much, Abigail Doolittle. We're going to stick now with oil because Bloomberg's Amory Horton caught up with Russia's energy minister, Alexander Novak, in an exclusive interview. So here's what he had to say about Russia's production cuts.
Although a very important role has been played by the ministers, but I think that the key role should be given to our leaderships. And I would like to especially note Mr. Putin's role here, who has been very supportive of the deal, has been pushing us forward, understanding the importance and the need for this deal to be done. And having this political support, which I just spoke about, this has actually significantly helped us to build a very trustful relationship with our partners from OPEC and from non-OPEC countries, especially with the country of Saudi Arabia, with which we now have a very long path which we walked together.
Are these non-OPEC cuts genuine, though, or are they natural declines?
I have to say that the situation is different as we go country by country, but I was very pleasantly surprised to see so many countries respond to the invitation by OPEC and Russia to participate in this deal to help stabilize the market. I would have to say that most of the countries which joined, and it's very important to say that they joined voluntarily, so nobody's going to force them to reduce production, it's their own will, and most of these countries, they would be taking active measures to reduce production, and that's very important.
What about the remainder? Who's going to make up to get to the 600,000 barrels a day target?
I think it's important to understand that we're not dogmatic. 600,000 barrels per day was not the only possible result for us. There will be countries which possibly would join the arrangements. There would be different decline paces, and I think that we most likely would be able to achieve an overall production decline higher than the 560 which we spoke about today. And another key thing which I would like to highlight is that the agreement is open for other parties to join. So this time there were 11 countries here, but there may be others willing to join who are not able to participate today. In fact, we believe there are many like this. What is important is that the doors are open and that a precedent has been made. And now we have a framework to act jointly.
The Saudi oil minister said he's willing to cut even more, maybe below 10 million barrels a day. Would Russia cut more than 300,000?
At this point, we have signed the deal for 6 months. This is the first stage, which would last until the end of the first half. Of course, there's a framework which allows us to extend the duration of the agreement, but we would be monitoring very closely the effect of this agreement on the market, compliance of countries, and we'll be making a decision whether another cut or extension of this agreement is necessary upon completion of this term.
When does Russia begin their curbing?
I think that the first cut, the first stage of the cut, you would be able to see as early as January. And I would like to say that we have already discussed this with the companies. So companies are quite well aware of what they have to do, and considering that this is a voluntary step by which these companies are taking, because they understand all the benefits of this deal, and they also understand that the deal is there in place and they have agreed to it. And considering this, they're already preparing for the cuts which will take place starting in January. So as we speak now, they are taking measures and readying their plans.
And that was Russia's Energy Minister Alexander Novak speaking to Bloomberg's Anne-Marie Hordern in Vienna.
Now to President-elect Trump's search for a Secretary of State. ExxonMobil CEO Rex Tillerson is reportedly the top candidate, and he has ties not just to the oil industry, but also to Russia. Council on Foreign Relations President Richard Haass joined Bloomberg Daybreak Americas with more insight into the Tillerson-Russia relationship.
This is a hard transition to read the tea leaves, but it would seem that he's the clear favorite. But until it's over in the sense that he hasn't been nominated. The president spoke about him on, I think it was Fox yesterday, and it was 90% likely, but the last 10%. And as you saw from John McCain, and as you're hearing from Senator Lindsey Graham and others, more than anything else, this question of Russia is going to be central to his confirmation, and it's coming at a time when Russia is everywhere in the news because of the whole intelligence brouhaha about to what extent the Russians were trying to interfere in our election. And how concerned should we be, assuming for a moment it is Mr. Tillerson, with that Russia connection? Is it an advantage or a disadvantage? He has, after all, dealt with Mr. Putin, and apparently successfully. Well, that's probably going to be the question a lot of people are going to be asking, exactly what were the nature of those deals, what is he advocated for in the way of sanctions, and more important, what does he think going forward? It's one thing to be a businessman, where you've got one set of considerations, and Russia's an important piece of real estate. It's another thing now, what I think they're going to want to hear is, what does he think policy towards Russia ought to be, say, on Ukraine? What ought to be in Syria? What ought to be on the continuation or not of sanctions? So I think all of that is going to come to the fore.
In the New Yorker over the weekend, Rex Tillerson, from a corporate oil sovereign to the State Department. I've heard people describe Exxon as a country known as Exxon, led by Rex Tillerson. How much of an advantage is that, actually, to run the State Department after running Exxon?
It brings real strengths. Rex Tillerson, who I know, I've spoken at my organization several times, he has tremendous what I would call ground truth. He knows the details of the places he operates. He's also run a big organization. He's met with a lot of global leaders. All that is clearly to the good. That said, he hasn't had the public sector experience. It is different from, say, running that. If you remember what happened to Paul O'Neill when he went from Alcoa to the Treasury Department, it's not exactly in the annals of a bureaucratic success. Also, there's a difference between knowing what you might call ground truths about the world and knowing about American foreign policy. More than anything else, quite honestly, what matters is Donald Trump. If Donald Trump decides to appoint Rex Tillerson, and if he can get through confirmation, and Donald Trump will back him 100%, 24/7, that is the essential prerequisite. What you can't do as a Secretary of State, what will make it impossible to succeed, if people around the world see daylight between you and your boss, then they will believe they don't have to take you seriously.
You just heard from Council on Foreign Relations President Richard Haass speaking earlier on Bloomberg.
Let's broaden out this conversation now about Rex Tillerson, along with some other appointments that the president-elect may soon be making. Joining us at Trump Tower is Bloomberg's Tolu Olorunnipa. And Tolu, Congresswoman Cathy McMorris Rodgers just entered the building. She's been seen lingering in the lobby. The question here is, will she be named Interior Secretary? She is on the short list, isn't she?
Yes, our reporting shows that she's actually at the very top of that short list. Donald Trump has met with her and spoken with her, and right now they're meeting again to try to seal the deal on this appointment. She is very much a proponent of drilling more on federal lands, and she wants to do more drilling on federally owned lands. That's something that Donald Trump has also supported. So if she does get this position, we will definitely see a departure from the Obama administration's policy concerning federally owned lands and drilling.
All right, we are looking at Representative McMorris in the lobby right now. So while you're there, before we get to more about the Tillerson, Tolu, let's talk about who's been coming and going there. What else are we looking at in terms of appointments that you've been seeing over there at Trump Tower?
Well, we've seen Donald Trump meeting with a number of different people that he ran against in the Republican primary. So he's met with Ben Carson, who's going to be his Housing and Urban Development Secretary. He also met with Carly Fiorina, who is reportedly being looked at for the Department of National Intelligence. And he's also going to meet with Rick Perry, who is at the top of his list for the Energy Department. So he's meeting with a lot of the people that he ran against, and he's trying to mend those Republican fences and get a strong start to his administration when he takes office in January.
Mending Republican fences. I think that's an interesting phrase, given that when different members of Congress heard about Rex Tillerson's possible appointment as Secretary of State, they did not react kindly. You had Marco Rubio, for instance, and John McCain, both protesting against the possible Secretary Tillerson. What can you tell us about this divide between mainstream Republicans and the president-elect?
Yeah, this is going to be a tough choice if Donald Trump goes ahead and selects Rex Tillerson for the Secretary of State. He's already getting pushback from a number of Republicans who are the people that he'd have to rely on. It's a very tight margin in the Senate between Republicans and Democrats, and we expect Democrats to be pretty staunchly opposed to all of Donald Trump's picks. So if he chooses Tillerson, he's going to have an uphill battle to get him confirmed with people like Senator McCain, Senator Rubio, and even people like Lindsey Graham concerned about Tillerson's close ties to Russia and close ties to Vladimir Putin.
It's interesting when you think about where Donald Trump has sort of been prioritizing. Obviously, he talked about energy on the campaign trail a bit, but it wasn't exactly one of his biggest rallying calls. And now he's putting a lot of emphasis with Tillerson, now perhaps the Secretary of State, obviously a big energy guy. We've got a lot of Texans now heading towards the White House. What do you think is perhaps behind this refocus on energy?
Well, Donald Trump says he wants to make America great again, and part of that is trying to rebuild a lot of the jobs that have been lost in the energy sector. He's trying to make sure that America uses all of the resources that it has, and he's sort of inching away from President Obama's focus on climate change. Donald Trump has sort of toyed around saying that he's not sure if climate change is caused by man, so he wants to make sure America is using all of its resources. At the same time, he's not so sure that he wants to focus on climate change. So that's what we're seeing with a number of these picks that are very important for the oil and gas industry. So we'll expect Donald Trump to continue along this path.
All right, Tolu Olorunnipa talking to us from outside Trump Tower, a very busy Fifth Avenue there. Thank you so much. And we should mention as well that according to Bloomberg reporting, Oliver, Dan Yergin, the Pulitzer Prize-winning energy author, said that a potential pick of Tillerson would be tremendous. He says that Tillerson's experience and intellect is tremendous, and that he would separate himself from Exxon, the company.
All right, there we go. And also, there's, of course, we didn't get to it, but there's still plenty to say about his relationships with Russia, et cetera.
Absolutely. All right, let's get you a check on the headlines on Bloomberg First Word News at this hour. Mark Crumpton has more from our newsroom. Mark?
Scarlett, thank you. It is official. John Kelly has been tapped to head the Department of Homeland Security. The announcement from President-elect Trump's transition team came this morning. Kelly, who joined the Marine Corps in 1970, retired earlier this year, wrapping up a final 3-year tour of duty as the head of the Southern Command. Kelly faces Senate confirmation. The Kremlin is disputing claims that it used hacking to interfere with the U.S. presidential election to aid President-elect Trump. The press secretary to Vladimir Putin told reporters today that allegations have, quote, nothing to do with reality, end quote. Trump and his team are pushing back on those claims as well. Former Portuguese Prime Minister Antonio Guterres was sworn in today as Secretary General of the United Nations. He succeeds Ban Ki-moon at the end of the month. Guterres is the 9th UN chief in the world body's 71-year history. The U.S. Supreme Court has decided not to take up a battle over Internet sales taxes. Justices let stand a Colorado law that requires Internet retailers to turn over customer data in an effort to get shoppers to pay sales taxes they owe. A retail industry trade group said the measure violates the U.S. Constitution. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlett.
Thank you so much, Mark. Coming up next, in the midst of the rallying crude, treasuries are selling off for a third day. The 10-year yield, as a result, touching the highest level since 2014. Right now, little change, but it has been climbing. This is Bloomberg.
This is Bloomberg Markets. I'm Oliver Rennick.
And I'm Scarlett Fu. We've got breaking news. It is official now. Goldman Sachs COO and President Gary Cohn will be joining Donald Trump as director of the National Economic Council. So again, the president-elect putting out a press release saying that he intends to appoint Gary Cohn as assistant to the president for economic policy and director of this National Economic Council.
Yeah, and I was just going to point out, there's a great article on the Bloomberg today by Dayton Campbell and Jenny Sorain examining who could potentially replace Cohn. They mentioned that some of the front runners include Harvey Schwartz and David Solomon. Then there's also the issue of whether or not Lloyd Blankfein is going to choose multiple executives to replace Cohn. So obviously there's going to be a lot of important developments there for the bank, which is on a tear, the stock price, by the way, after the election.
All right, so the machinations behind the scenes at Goldman Sachs following Gary Cohn's departure. Meantime, it is time now for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. The U.S. government is using information from Barclays, JPMorgan Chase, and Citigroup to expand its currency probe. The banks have cooperated to provide evidence of a potential new antitrust conspiracy in the currency spot market. Prosecutors say it involves different currencies than the ones at the center of their 2015 guilty pleas. That is according to court documents. Deutsche Bank could opt for a merger. That's according to a report in Handelsblatt citing Alistair Warren. He is the head of investment banking for Europe, Africa, and the Middle East. Warren also dismissed speculation about the bank's possible withdrawal from the U.S. market. An Aetna executive defended the withdrawal from Obamacare health insurance exchanges in 3 states during testimony today. Stephen Kelmar told the federal judge presiding over the Humana Aetna antitrust trial that the company should have exited all of the Affordable Care Act online marketplaces because the program isn't economically viable. The withdrawal came after the government sued the insurers to block the $37 billion merger. And that is your Business Flash update.
The sell-off in Treasuries extends to a third straight day as oil rose. The yield on the 10-year U.S. Treasury bond rose above 2.5% for the first time since 2014. So for some perspective on the bond route, let's bring in Bloomberg's Joe Weisenthal, co-host of What'd You Miss? Not a huge sell-off today, but yet more red and some more weakness in the bond market.
It was quite a bit worse earlier in the day. Yields really shooting higher again. And I kind of think, the big question is this bond route a function of where we are in the cycle, economic data looking pretty strong everywhere, inflation pressures firming, or is this about some sort of expectation of real policy regime change, which, if you believe that, would explain why it really seemed to kick into high gear after the Trump administration? I don't think we really know the answer to that yet, but I think that is sort of the big question. Do we just sort of hang out in this sort of mid-twos area, or do we shoot a lot higher on yield?
Which, by the way, only takes us back to, what, like 2014?
Yeah, exactly. If we're like here, and this is just sort of a reflection of where we are in the data, and then you look at a long term, we're still like basically nowhere. But if you think that this sell-off in Treasuries is about something changing, and that something changing would be a meaningful handoff from monetary to fiscal policy, a meaningful change on trade policy, like sort of deep policy changes if they come to fruition, then who knows where we could go.
I know that I think on the list of asset classes, stocks are like one of your ones that you're least interested in. But what I'm curious about is the fact that today we've got yields up again, but then you've got some of the bond replacement type stocks we always talked about. They're actually doing well. They kind of were back on Friday as well. Utilities, staples, all this stuff. Are you as interested as some people are about whether or not those companies can do well as bonds sell off?
No, I'm very intrigued by that. I mean, we were talking about who did we have on Friday on what do you mean? Russ Kostridge
of BlackRock.
And we were talking about this sort of sweet spot where like people going into these sort of bond-like stocks in the equity market to sort of get the best of both worlds. They want that coupon, they want that yield, but they also want some of that upside so they can sort of keep a foot in both worlds. So, especially this summer, people just loved those. And remember all the talk about how everyone was going to buy REITs because they were being spun into their own thing and all kinds of stuff like that. So I think it is very important to look at those as sort of this gauge of market enthusiasm.
I wonder to what extent the Fed acknowledges or ignores completely the sell-off that we've seen in bonds, since we haven't really figured out what's driving the declines there. I mean, as they try to assess whether this is cyclical or whether this is structural, maybe it's safer at the end to just not refer to it.
Just wait a couple of days and see what they say rather than trying to guess, right?
I guess we'll start taking more note of it when we get a little bit higher than 2.5.
All right, still pretty low.
All right, Joe Weisenthal on the show today on What'd You Miss? David Wu of Merrill Lynch will give his outlook on global rates and currencies ahead of the Fed. Coming up, Disney goes rogue with its latest Star Wars film, jumping out of its trilogy and testing a new method of standalone movies. But will the strategy pay off? This is Bloomberg.
Disney's newest Star Wars film, Rogue One, opens in theaters on Friday domestically. And while Star Wars is typically a goldmine, Disney is testing out some new tactics here. Joining us from L.A. is Bloomberg's Chris Palmieri. So, Chris, tell us about the new tactics that Disney's testing out here.
Well, what they've got planned is now 6 films. We've got 5 more left in the series. So they're doing a Star Wars every year through 2020. And they're alternating between the traditional trilogy format and what they're calling these standalone films. So Rogue One is the first of these standalone pictures. It fits into the overall mythology of Star Wars, but they're sort of the characters won't be recurring.
So give us some perspective on what Disney expects to make on this film, because we know they bought Lucasfilm for, what, like $4 billion, right? Budget for Rogue One, according to your guys' story, is about $200 million. What do they need? What's going to be the benchmark here for them to say, you know what, that was a good job, let's do it again?
Disney hasn't said specifically what they're hoping to do. You know, we've talked to analysts. Said the movie may do $800 million worldwide, and if that case, it'll be profitable. It could probably do more than that. It'll likely be the second highest December opening weekend in film history after Rogue One. So it's going to have a big opening. It's going to do well. It's just that Rogue One, last year's film, was so spectacular, $2 billion, that it's not going to be that good. But if it does half that, it's still a huge hit.
Yeah, I find it fascinating that the company is trying to manage expectations a bit here and talk down the kind of merchandising opportunity that Rogue One can present.
Yeah, they've said that they expect this quarter the merchandise sales profits to be down about 20% because it's that problem, the year-over-year comparisons. You just can't top. Force Awakens last year was 10 years of pent-up demand and people waiting in line to buy the toys. And
so this one feels like there's some risk because it's a new character, it's a new plot line, but they've got another nest egg they can tap into, at least story-wise, and that's Han Solo, right? They've got more coming out.
They've got a Han Solo standalone picture and then a third standalone. They haven't said exactly what that will be, but they've found a way to keep these stories fresh. Marvel has done a great job of that. No matter how many superhero movies they have, Marvel continues to do well. There's an element. I saw the film this weekend of that kind of humor, and it's really like a war movie, and you feel like you're on the beaches of Normandy watching this. So it's going to do well.
All right, Chris Palmieri, we shall see. Thank you so much, Chris Palmieri, joining us from L.A.
I shall see Wednesday night. Coming up, the Russell 2000 record. Are more gains in store for the small cap index? We'll talk to Lori Calvasina at Credit Suisse. This is Bloomberg. It is 3 p.m. in New York, 12 p.m. in San Francisco, and 8 p.m. in London. I'm Oliver Rennick.
And I'm Scarlett Fu. Welcome to Bloomberg Markets.
We are live from Bloomberg World Headquarters in New York for the next hour. Plus, we'll be covering stories in Denver, Moscow, and China. Here's what we're watching. Stocks are mixed today as the Dow tries to close at a new record while the S&P is going back and forth, mostly in the red, as telecoms and utilities are leading the way in the S&P 500. And cutting corporate taxes has been one of the central themes of the Trump campaign. If you follow suit, which companies will benefit the most? And is the door closing on Chipotle's chances for a turnaround? We'll talk about the latest shakeup in the C-suite of the troubled Mexican food chain. And we're 1 hour away from the close of trading. Let's get a check on the markets with Abigail Doolittle. What's going on?
Well, as you just mentioned, we do have U.S. stocks mixed at this point, and this may not look like a picture of strength, but we do actually have a record high on this board. Right now, the Dow is on pace to close at yet another record high. Earlier, carving out an intraday record high. The S&P 500 had done that as well. The Nasdaq, though, is really the big laggard today, really being dragged on both by its overweighting to technology and biotech. In fact, much of the divergence that we're seeing among the average averages today really seems to have to do with sector performance. When we hop into the Bloomberg and we take a look at the IMAP on the S&P 500, this is really a terrific function. It gives a very quick snapshot of the sector composition within an index, and we see basically mixed sector composition within the S&P 500. Not too surprising considering the mixed performance. As Oliver had mentioned, the top performing sector, telecom and utilities. This is yield is trading down to some extent. These stocks look a little bit more attractive, while among the worst financials. So let's take a look at a few of those telecom stocks that are rising today. We're looking at both AT&T and Verizon, some nice gains here. Another boost for the telecom sector beyond yields falling off of their highs of the day. We do have an upgrade over at Baird with analyst William Power upgrading AT&T, saying that he thinks that the company is likely to benefit from the possibility of deregulation and lower taxes. We have Verizon trading higher in sympathy. As for that worst performing sector, though, we really have the financials taking a bit of a breather. This includes Bank of America, Wells Fargo, and JP Morgan. Lots of red here. This, of course, is the top sector since the election. As of Friday, up 18%, but it appears that these stocks are taking a breather today. But, of course, as I had already mentioned, yields are off of the highs. This could weigh on these stocks a bit more, too. And it's worth taking a look at the 10-year yield, not just in terms of what's happening today, but certainly ahead of the Fed rate, the Fed meeting, policy meeting on Wednesday. Most investors are expecting the Fed to hike rates. And this chart is a long-term chart. It is G#BTV5215, a 40-year chart of the 10-year yield on top. We see a move toward the top of a descending trading range, but we also see on bottom the RSI hitting 60. Augustin Vera told our team a few weeks ago that the last 5 times this has happened, it's typically signaled a reversal. So we may see a move back down for the 10-year yield. A little bit of consolidation in that yellow box, a bit of a pause after November's biggest move up in the 10-year yield ever, Scarlett and Oliver.
All right, thank you so much, Abigail Doolittle. That's a great chart. I love it.
It is great. We'll have to, I'm sure it'll come up again, right?
All about the 10-year channels.
All right, moving on to equities. President-elect Donald Trump's tax plan would reduce tax rates for both corporations and most individuals. But which companies have the most to gain from his plan? Joining us now is Credit Suisse Chief U.S. Equity Strategist Lori Calvasina. And Lori, you're looking at small caps in particular. They have had quite the run up. The question is, can that continue?
So, you know, we wouldn't be surprised to see a small period of digestion in here. But bottom line, I don't think the trade is done.
If we come inside the Bloomberg here, this is a chart that Dan Curtis put together for us, and it shows the Russell 2000's 20-day outperformance versus the S&P 500. And last week, which is right around here, the outperformance, Oliver, widened to as much as 9.3 percentage points. That's the most since going back to 2000, but you can see what happened in 2000 after that strong outperformance, which is a massive underperformance.
I'm curious because there's this outperformance that Scarlett's talking about, and how do we figure out why it's happening? Is it because people look at a trade policy and they think it's very domestic, favorable, or do they say I want to be risky, so I want to get in small cap stocks which have a higher beta?
Well, I think what was interesting is right before the election, you saw a number of valuation dislocations, and small caps was one of them. We actually saw earlier this year our model on small versus large was back down to 1991 lows. It wasn't quite that attractive in early November, but still very, very deep in terms of small versus large.
So some of it is the valuation story.
Well, that's how the party got started, essentially. When we look at our model today, you're basically back to fair value, but you're not expensive yet. And I think that's the key thing. As long as things like stronger economic growth next year come through, we see some progress on this tax reform, which a lot of people are talking about right now. And I think also the impulse towards protectionism benefits the domestically focused names as well. So I think what leads the trade here is a little bit different than what got the party started.
And to what extent do you think investors have acknowledged that and start to price that in?
In terms of the tax reform?
Yeah.
It's definitely the #1 issue we've been hearing about post-election. I think at the end of the day, though, people haven't figured it out entirely. And I think there's a lot of uncertainty as well on timing. So I think the street's going to be looking for progress to be made. It's partially priced in, but not fully priced in at this point.
Okay, so I know that for a while before Chief U.S. Equity Strategist, you did specialize in small caps. But when you take a look at the broader sort of market overall, what I guess is sort of the big thing that stands out to you when you think about about, especially one part that I'm interested in, is the CapEx. I've heard a lot of people talk about how under Trump administration you might see more CapEx by companies if they're pumping this money into the economy and encouraging people to spend on infrastructure. What does that do to some of the shareholder-friendly type stuff, the buybacks and whatnot?
Well, we've already been seeing buyback activity slow down meaningfully. Dividend activity looks like it's also stalling out at extremely high levels. So I think if money does go towards CapEx, it will borrow from the buyback dividend story. But at the same time, if we repatriate dollars back home, if we lower the corporate tax rate, I don't think there's any guarantee that it goes to CapEx. I mean, I think you could see some of that money go back to some of these shareholder-friendly strategies as well.
So, Oliver, we had Russ Kostridge of BlackRock on earlier this week, or last week, I should say, on What You Missed. And he was talking about how a lot of people are picking up on small caps because the big caps certainly suffer from the stronger dollar because they're so dependent on overseas profits. Yet a stronger dollar means tighter financial conditions, which tends to be worse for small caps.
Yeah, that's a very curious point, too. I think there's an understanding that may not always be perfect that, a rising dollar is bad for large cap companies. But if that's happening as the economy is expanding, then can we say, hey, these stocks are going to do well?
Well, if you look at the rate of upward revisions in the different size segments, the large caps tend to be a touch more sensitive to a strengthening dollar. So even though it's negative for everything, small caps might be a little bit better off there. I think one thing we have to think about next year, though, is higher volatility in the market. And traditionally, people think of that as being a bad thing for small cap stocks. What we've actually told people is to remember that when the VIX swings up, it's bad for small caps in the short term. Historically, though, that's a good buying opportunity for the longer term. And we actually did a study looking back over various years at different average levels of the VIX. And what we found was fascinating. If the average level for the VIX as the year as a whole stays below 25, small caps can still outperform. When you cross that 25 threshold, that's when small caps tend to have trouble on an annual basis. So higher volatility could make things interesting in the short term, but as long as it's not too bad, you can still get that outperformance.
And to your point, I want to dive into the Bloomberg real quick because this is a chart put out by the U.S. stocks team today. This is essentially looking at Lori's point here in terms of volatility expectations. There are VIX, the Russell 2000 volatility expectations versus the S&P 500. You can see as that number goes up, expectations for volatility in small caps are bigger than that of the S&P 500. But when I think about this sort of volatility, I think back and forth, and I think small caps having a higher beta, and I don't know, I feel like there's risk associated with that I may not want to get into.
The way I've described small caps going into next year, it's a show me story. You can't buy the stocks anymore because they are cheap. You could really make that argument before the election. The news flow has to come through at this point. Now, what I think is interesting is if we do get those spikes in the VIX, if the news flow does turn against the small cap space in the short term, we're at neutral levels. We're going to get cheap in a hurry. And so then you'll have that buying opportunity again. So I think it could be a volatile March higher, but I still think you'll get that outperformance.
And of course, within small caps, we need to delineate between different sectors. The financials obviously have been on a tear because of expectations that they too would benefit from higher interest rates and a steeper yield curve. Which sectors do you want to be in versus which do you want to stay out of?
So we do like the banks. Frankly, though, we see more opportunity in other areas like insurance, which is much cheaper, hasn't run quite as much. There's still a lot more room for earnings expectations to come up. Our banks trade, we still think there's room, but it's a little bit farther along in the game than some of the other areas of financials. One area that still looks very, very compelling is retail on valuation. So that's another area we're looking at as well. Transportation is another.
One thing that's very curious, and I'm actually, the genesis for this is a note from your former employer, Citi. They're looking at sort of this macro trend where investors have been looking for the riskier parts of the market. They've been looking for some of the beaten up names as opposed to those that are going to show growth. They're kind of looking at value risk, which you associate that with a lot of times an emerging market, but yet investors in the U.S. have preferred to keep the money here, and instead you have these emerging market stocks that are lagging a little bit. Is there any chance that as people get more risk on, they might move some of that capital to emerging markets?
We definitely hear a lot about sort of the small cap versus emerging markets trade from an asset allocation perspective. I don't do work on the EM stocks, so I can't really comment there, but you do tend to see those rotations from time to time.
Very interesting.
All right, our thanks to Lori Calvasina, Chief U.S. Equity Strategist at Credit Suisse. We want to get you to Bloomberg's First Word News at this hour. Mark Crumpton is in the newsroom. Mark?
Scarlett, thanks. It's official. Goldman Sachs President and COO Gary Cohn, once the heir apparent to CEO Lloyd Blankfein, has accepted the job as President-elect Trump's Chief Economic Policy Advisor. That's according to Mr. Trump's transition team. Mr. Cohn spent more than 25 years at the investment bank. Senate Majority Leader Mitch McConnell says he has the, quote, highest confidence in the U.S. intelligence community. Speaking today on Capitol Hill, the Kentucky Republican defended the CIA and its reported finding that Russia tried to help Donald Trump win the presidency through cyber peddling. McConnell also took aim at Moscow.
Well, let me just speak for myself. The Russians are not our friends. They invaded Crimea. Senator McCain and I and some of our Democratic friends met with a delegation from the Baltic countries just this past week. To say that they're nervous about the Russians, to put it mildly.
McConnell's defense of the CIA puts him at odds with the president-elect, who has rejected the agency's findings. In Italy, Paolo Gentiloni has been sworn in as prime minister. This after he submitted the lineup of his new government to President Sergio Mattarella. Economy Minister Pier Carlo Padoan will remain in his post as part of the new coalition government. Matteo Renzi had been serving as caretaker prime minister after resigning last week following voter rejection of his proposed constitutional reforms. The European Union will set out for the first time Thursday how it will conduct its Brexit negotiations with the UK. According to a draft of the EU statement read to Bloomberg, EU governments will be asked to, quote, proceed swiftly in authorizing the opening of the negotiations. That will occur once British Prime Minister Theresa May triggers Article 50 of the Lisbon Treaty to formally start the withdrawal. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Oliver?
Thank you, Mark. Coming up, shares of Chipotle on pace for their best day in nearly a month. Founder Steve Ells is retaking the top job, sending co-CEO Monty Moran packing. This is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu.
And I'm Oliver Rennick. It's time now for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. The Senate's top Republican is warning that the current level of U.S. debt is, quote, dangerous, and says he may want to tax overhaul to avoid adding to the deficit. Senator Mitch McConnell made his remarks today on Capitol Hill and possibly put himself on a collision course with President-elect Trump. He's aiming to enact the biggest tax cuts since the 1980s. McConnell also poured cold water on another Trump idea, a massive stimulus package. Apple has held talks about investing in a $100 billion technology fund that SoftBank Group aims to launch next year. That's according to a person with knowledge of the discussions. Apple may contribute as much as $1 billion to the fund, which would give the company insight into up-and-coming technologies. And Credit Suisse says it plans to sublease space in London's Canary Wharf financial district, according to people familiar with the matter. The move comes after the bank said it would cut about 4,200 workers by the end of the year. Credit Suisse may sublease space in other buildings in the East London financial district, including Columbus Courtyard, as it seeks to cut high rental bills. And that's your Bloomberg Business Flash update.
Shares of Chipotle are rising today on news that Monty Moran has stepped down as co-CEO of the embattled burrito chain, leaving founder Steve Ells as chairman and sole chief executive. The move follows a tough year for Chipotle as the company tries to recover from a series of foodborne illness problems in 2015. Joining us now is Bloomberg News food industry reporter Craig Giammona and Bloomberg Gadfly columnist Shelley Banjo, who's been writing about this. Craig, let's start with you. Who exactly is Monty Moran? What's his expertise? What was his contribution, and how's the company going to feel his absence?
He was the operations guy. I mean, he was COO when the company was doing really well. He eventually got promoted to co-CEO. And he was kind of, Steve Ells is the culinary background. He's sort of the chef, the foodie. And Moran was sort of known as like the operations guy who was, running the restaurants and making sure sort of the trains ran on time and that kind of thing. And obviously that's been a problem for them the last year. This recovery has faltered. And, we heard Ells say the other day he's not happy with as many as half of the restaurants. It was a pretty startling number.
Okay, Shelley, so I hear about basically two people running a company. One leaves after a pretty rough period. It doesn't sound like a whole lot has changed, but as you write in your Gadfly piece today that this is something that you've been sort of talking about for a while that makes a lot of sense.
Yeah, the people have been pushing for the co-CEO structure to disband that structure because they're saying, they need really someone in charge who's really responsible for everything. When there's one person responsible, the buck stops with them. But it's not just Moran. It's also we're waiting to see if there's going to be more board changes coming up, if there's going to be new people to the board. And I wrote a column today saying, Ells bought himself a little bit of time now, but he could be next too.
He could be next, although we've seen this play out for, a year now, and these things tend to start showing signs of progress or deterioration at about this point. I wonder, Craig, if you can compare and contrast the recovery from this food safety issue at Chipotle versus, say, Yum Brands, which also had its own fair share of these problems.
Yeah, it took a long time for Yum. I mean, that was a bad one for them, too. I mean, I think with Chipotle, the difference was just that this really hit at the heart of their brand, right? They were known for sort of higher quality ingredients and premium, and they had this kind of health halo around the company that this thing really sort of hit them hard, hit them at what they do best. So it's been a sluggish recovery at best. I mean, it's taken a long time, and I think that people are getting impatient in the investment community about when are these numbers going to start to turn around. I mean, they'll start to lap the really bad numbers. So if we don't see some sort of progress there where they're going against -20, -25, they really should be able to do better on that. And that will be a real bad sign if they can't put those numbers up.
Yeah, what is the sort of benchmark here where investors are going to say, all right, maybe this looks good on the surface, but 6 months from now, a year from now, we want to see these numbers line up?
Yeah, I don't hear specific numbers, but there just needs to be some sense that it's moving in the right direction, and that's been in short supply so far.
Shelley, we've seen founders ride to the rescue before. I think of Howard Schultz and Starbucks, Jack Dorsey and Twitter, of course. Those companies went in very different directions following the return of their founder. What is Chipotle hoping to do by really installing the founder back in a position of sole decision-making?
I think you're exactly right. I think Ells has this kind of credibility. He started the brand. He had the passion for it, not unlike the way Schultz did with Starbucks and John Mackey also at Whole Foods. And so you've seen these folks come in and kind of re-energize and get people excited about it. The thing is, though, Ells has been there for the past year. So I don't know if it's going to have the same kind of push that it has before. But maybe, if he comes in and he says to his employees, I'm in charge, I'm going to, shake things up, I'm going to do something differently, maybe he'll get people inspired again.
We also know about another player in this entire thing, not so much on the corporate side, but on the investing side, which is Bill Ackman. All right, what do we know about what role he's going to play in this as this company starts to try and get the wheels moving towards going in the opposite direction and improving the situation?
Sure, I expect we'll hear a little bit more about that today. At 5 o'clock, Chipotle is going to have a call with analysts and investors. So far, Bill Ackman has taken about a 10% stake in the company. He said that he loves the company. He's praised the founders. He thinks Chipotle is the greatest. He eats there. This is not something where he's coming in and saying, "Oh, I'm really going to go after them and off with their heads" or anything like that. He wants them to do well. So we'll see what he can actually do, though.
And I'm glad Shelley brings up this conference call that they're going to be holding tonight. What are investors and analysts really looking for the company to answer tonight?
Probably some specifics about just the question you're you're asking, which is that, Els has been there this whole time. So what is this structure going to mean now that he is solely in charge, and what's his focus going to be as we move into 2017? And, are there signs does he have specific ideas for how to get those sales going again? He's saying basically that they spent all these millions of dollars getting people back into the restaurants with free burritos, but that they aren't staying for whatever reason. They're not sort of hooked again like they were. So how is he going to change that?
If burritos don't do it, then I don't know what will.
And Oliver, you're a Chipotle.
Hey, who knew that according to Shelley Banjo, Bill Ackman likes Chipotle, so I guess Bill and I have something in common.
Exactly. All right, Craig Giamona of Bloomberg News, our food industry reporter, and Shelley Banjo, Bloomberg Gadfly columnist. Thank you so much.
Still ahead in today's Options Insight, we're talking Potash. The stock is up more than 12% on the year and currently on pace for its biggest yearly gain since 2010. This is Bloomberg. This is Bloomberg Markets. I'm Oliver Rennick.
And I'm Scarlett Fu. It is now time for Options Insight with Abigail Doolittle.
Thanks, Scarlett. Joining me for today's Options Insight is Jim Struger of MKM Holdings. Thanks so much for joining us here in studio, Jim. Always great to have you.
Thank you.
And you have with you a terrific chart of implied correlation. Can you talk us through this chart?
Sure. So lots of talk about a paradigm shift post-election. Obviously, stocks overall in the U.S. have done well. A lot of dispersion, and the question is out there, what does that really mean? So this is a graph of S&P 500 implied correlation. It's moved to cycle lows. So what this measures is the forward-looking expectation of correlation, in this case among the top 50 components of the S&P 500 by market cap. Historically, if correlation is low, the essentially inverse of that is dispersion. Dispersion is high. That means sectors, individual stocks are sort of flying all over the place and moving on their own idiosyncratic facts. That, over the course of time, is and has been a very healthy environment, particularly for active managers. So that's one way to put some context around what's happened since the election.
And that may suggest, because there's so many indicators, that stocks are overbought right now, the Dow with its RSI at a 20-year high, but this may suggest that this run in stocks could go higher.
Certainly could. What we've talked about here for the last several weeks, and we'll continue to, and with our clients, is use options to exploit this. So we want to remain directionally long, levered into 2017. If you do need to sell long stock, look to replicate that via options, or if there's a stock stock you love, look to add long convexity in parallel. That could just mean buying calls outright. It could be mean buying call spreads. It's stock specific, but we really want to keep the pedal to the metal into 2017.
Well, turning to your trade, I know that Jonathan Krinsky, MKM's technician, is saying that there's room in the fertilizer stocks. Your trade is on potash. Can you talk us through this?
Sure. So the fertilizer stocks, multi-year downtrend, flatlined at the lows for almost all of this year. What Jonathan talked about in his note today was a bullish reversal in this sector. You could potentially layer on sort of a reflation element to this trade. Now, plenty of fundamental analysts have come out and downgraded a few of these stocks as they have lifted. What we want to do is take advantage of this positive backdrop we see, implied volatility being low. We want to go out to March of next year. You just buy 21 strike calls outright. You pay about 75 cents for them. Nice trade to get long directional exposure.
Great stuff. Have to leave it there. Thanks so much for joining us, Jim. Scarlett, back to you.
All right. Thank you so much, Abigail. Still ahead, Bank of America Merrill Lynch's head of global rates and currencies research, David Wu, joins What'd You Miss. He's calling U.S.-China relations one of the biggest risks to watch for in 2017. Remember, he talked about the impossible trinity when it comes to the Chinese yuan, so it should be a great conversation.
All right, we're definitely going to be watching it. Thanks so much. This is Bloomberg.
I'm Mark Crumpton. It's time for Bloomberg's First Word News. A federal judge is rejecting a request to recount paper ballots in Pennsylvania. Green Party presidential candidate Jill Stein had sought recounts in Pennsylvania, Michigan, and Wisconsin. A federal judge halted Michigan's recount. Wisconsin's has been completed, and the State Elections Commission is planning to vote to certify the results. Donald Trump narrowly won all 3 states over Hillary Clinton. Retiring Senate Minority Leader Harry Reid says FBI Director James Comey swayed the November election. Reid tells CNN that Comey's actions in the preceding weeks were partisan and handed the presidency to Donald Trump. Reid says Democrats would have won the White House and regained control of the Senate if not for Comey's handling of Secretary Clinton's email server investigation and allegations of Russian hacking. In Philadelphia, former Congressman Shaka Fattah has been sentenced to 10 years in prison for a racketeering scheme that included money laundering and bribery. A federal judge in the case called the 60-year-old Democrat's crimes astonishing, that he and his TV anchor wife had $500,000 in annual income. Fattah insists the Justice Department's case was politically motivated. Former Portuguese Prime Minister Antonio Guterres was sworn in today as Secretary General of the United Nations. He'll succeed Ban Ki-moon at the end of the month. Guterres is the 9th UN chief in the world body's 71-year history. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Bloomberg's World Headquarters in New York, I'm Scarlett Fu.
And I'm Joe Weisenthal. We're 30 minutes from the close of trading here in the U.S.
U.S. stocks are falling. The rally in energy companies fading after crude oil pairs its advance.
The question is, what do you miss?
U.S. Federal Reserve policymakers meet for the first time since the election, and prospects of a more aggressive central bank and rising oil prices are sending yields higher today. U.S. President-elect Donald Trump has upped the ante with Beijing by saying he will use the One China policy as a bargaining chip to get a better trade deal. We'll look at why this is a big deal. Plus, how do we explain why people sometimes make choices against their better economic interests? And have we entered a new paradigm of decision-making? We'll explore these questions with Richard Thaler, one of the founding fathers of behavioral economics, next.
And let's look at where the major averages stand as we head towards the close. Bloomberg's Abigail Doolittle is standing by.
Thanks so much, Joe. And heading into the close, we're looking at what we've been looking at most of the day for the major U.S. averages here in the U.S., and that is mixed trading. That being said, we do have the Dow holding on to a very small gain, one that puts the Dow on pace for its 6th record close in a row. Quite a winning streak. The S&P 500 and the NASDAQ, though, really lagging. Let's really focus in on this Dow strength, though, helping the Dow higher today to this potential 6th record high, closing high, Johnson & Johnson. This as Barron's did have a bullish mention saying that Johnson & Johnson could climb by 20% from current levels. In fact, Johnson & Johnson is having its best day selection. Pfizer is also higher after the company did raise its quarterly dividend on an annual basis. This equals $1.28 per share, up 6% from where it had been. And then finally, ExxonMobil trading nicely higher in sympathy with oil. Oil levels last seen in July of 2015 as both OPEC and non-OPEC members have agreed to cut supplies and really help the oil price. As for whether or not these record highs for the Dow can continue, are the markets frothy? Is it overbought? Let's hop into the Bloomberg and take a look at #BTV3505. This is a one-year chart of the Dow. On top, we see the Dow trading nicely higher. In fact, right now up about 13% on the year, on pace for its best year since 2013. On the bottom of the chart, though, we have the Dow's RSI, or the Relative Strength Index. This is a momentum indicator, and typically when it goes above 70, many investors and strategists use that as an indication to sell. We see that the Dow is above that that 70 mark. It has been there for the longest stretch over the last year. In fact, the Dow's RSI is at its highest level since 1996, so basically in 20 years. Interestingly, though, Jonathan Krinsky, the head of technical analysis over at MKM, he's saying that overbought doesn't mean over, and he has a point. The Dow, of course, climbed quite a bit since that last high back in 1996, right into the 2000 peak. So it'll be interesting to see whether this turns out to be a sell signal or just a cautionary tale of caution. Scarlett and Joe.
Thanks, Abigail.
All right, we have some breaking news on Viacom. It is official. The company is saying that it has stopped the exploration of a potential combination with CBS, and it has named Bob Bakish as permanent CEO. He was acting as the interim CEO, but he is now the permanent CEO. Of course, Viacom, the owner of MTV, Nickelodeon, and Comedy Central, was looking to be reunited with CBS under Shari Redstone's proposed merger of the company. Shari Redstone and her family do have a controlling stake in both Viacom and CBS. You can see their Viacom shares have been tumbling all day, down more than 9%. What'd you miss? A recent surge in consumer confidence is largely due to Americans' initial reactions to President-elect Donald Trump's presidential victory. In the latest University of Michigan survey, there were some exceptions to the optimism, mainly among those with a college degree and among residents of the Northeast, reinforcing the extent of the divide in the country. Joining us now is Richard Thaler, who studies behavioral economics and finance at the University of Chicago Booth School of Business. Thank you so much for joining us, Professor. We see it in the financial markets. We see it in the reactions to domestic policy, foreign policy. What makes people so convinced suddenly of the upside, the potential upside, give the benefit of the doubt, when there are no specifics given yet on any of the policy prescriptions out there?
Well, I think anyone who's trying to put logic into anything that's happened in the last 6 months or so in elections is going to have a hard time. Both Brexit and the Trump election, people seem to be just voting against their self-interest.
From a behavioral standpoint, is there a reason why, in the absence of any real details about what Trump is going to do, or even how Brexit is going to affect the U.S. economy or the UK economy, that people start telling a positive story? We hear all kinds of stuff, fiscal stimulus and deregulation, even though Trump hasn't really talked much about that. People nonetheless have really glommed on to this fairly positive story without any of the negative sides. What makes us do that?
Well, people suffer from something called the confirmation bias, which is they seek evidence that's consistent with their beliefs, and they go out and look for it. So if you'd like to think that the market is going to go up and the economy is going to be great, then you'll latch on to any bit of information that may support that, regardless of where it comes from.
So going off on that a little bit, to continue that idea, how do we explain the behavior of people who understand that their choices are against their better economic interests, but do so anyway as a way to send a message? You know, they're cutting off their nose to spite their faces. Why would they continue doing that? How do we explain that kind of action? Well,
you know, one way of thinking about this is it's kind of like when you have an itch. You get a mosquito bite or poison ivy. What do they tell you to do? Don't scratch it. What do we all do? We scratch it. So this is just human nature. And that's the way people are acting these days. They got an itch, and they're going to say no. And they're going to just reject the status quo because they're angry or because things haven't been going well for them recently, and vote for something else, be it leaving the EU or voting for the non-status quo candidate. And the beliefs of many of these voters just have nothing to do with reality. I saw an interview with one Trump voter who said she was voting for Trump because Obama had ruined the economy, the unemployment rate was very high, inflation rate was high, and the dollar was weak. Now, if those are your beliefs, I don't know where you're getting them.
Does there come, are there certain conditions which arise in a society in which people might be more inclined to cast a vote that's more, you know, sort of burn it all down and start over? I mean, obviously, normally we have elections and someone representing the sort of status quo and the sort of existing norms of politics. Usually someone like that emerges as a winner. In this case, is someone who appears to be very different than the status quo and someone who clearly flouted the norms that we have for how to run an election. Is this a fluke? Could this happen any time, or are there certain conditions that make it more fertile?
Well, it's never happened before, and we can hope it never happens again. But I think it's fair to say that people are acting emotionally, and we do a lot of stupid things when we're emotional. It's really all as deep as we need to go. If somebody insults you, you're likely to say something you'll later regret, and people may someday regret some of the votes they've made.
You know, it's as you've been saying, and as a lot of people say, there's a certain level of seeming irrationality or seeming like President Donald Trump can't deliver on what people want to deliver, or maybe they have a misconception, as in the example that you cited, about the current state of the economy. But is it also possible that economics just is not equipped to understand actually what motivates the voters, and that maybe people have deeper interests and deeper anxieties that traditional measures can't really get at yet?
Oh, I mean, look, economists aren't very good at understanding the psychology of voters. Actually, very few people are. But what's curious is I think we've seen a big decline in the value of expertise, and that would include the three of us. So the media and the talking heads you bring on, people don't put much stock in what we're saying anymore. And so I put some of the blame for this, if we're going to call it blame, on the chattering classes we haven't gotten through.
No, you bring up a really good point. I want to go back to the emotion part of it, because it seems like the emotional response can be fairly contagious, infectious even. We've seen Brexit already. We've seen the U.S. presidential election. We've seen the Italian referendum. We have elections in Europe next year. What might give people pause next year to hold back on the emotion and vote more logically? Or is it a case where you've got a couple of polls that are voted in favor of the emotion, so people continue to run with it until it plays itself out?
You know, I think it is true that Brexit and Trump are very much the same phenomenon, but it's not that Trump voters, I'm guessing most Trump voters would have no idea what Brexit even was. So it's not that they got carried up in some wave that started in England, as much as the working classes have been losing ground for the last 30 years, and they're angry about it. And that same phenomenon is happening in various places around the world. Of course, everything matters, and we know this. I think it would be wrong to overinterpret this election. After all, 100,000 votes going a different way, and we would all be talking about how Trump lost and how could anybody have ever thought he would win. So, yes, it's a shocking result, and his behavior since the election has made it more shocking. But we have to remember that more people voted for his opponent than for him.
All right, good points. Richard Thaler from the University of Chicago Booth School of Business, thank you so much for joining us. Richard Thaler, of course, one of the founding fathers of behavioral economics. Coming up, BP Capital Chairman T. Boone Pickens gives us his take on President-elect Donald Trump's anticipated selection of ExxonMobil CEO Rex Tillerson as the next Secretary of State. This is Bloomberg. Energy investor T. Boone Pickens is applauding the potential selection of Exxon's CEO Rex Tillerson as Secretary of State. Mr. Pickens calls the selection perfect, and he writes in a statement, roughly 2/3 of the world's oil is controlled by state-owned oil companies, so politically he's well skilled for the position, and those are the very nations America has keen interests in for economic and national security reasons. Mr. Pickens joins us now on the phone. Mr. Pickens, thank you so much for taking the time. My first question to you is, have you been in touch with Rex Tillerson or the campaign and have the confidence that he will indeed be named Secretary of State?
Well, I know Rex, and I'm not in touch with this decision on Secretary of State, other than through the TV and other news media. But I know Rex, and I've known him for years, and great addition to the cabinet.
Mr. Pickens, as you mentioned, obviously, many of the hottest geopolitical spots in the world are oil nations. So from that perspective, Rex Tillerson would have, great insight. On the other hand, perhaps the interests of the energy industry are different from what the interests of the U.S. would be overall geopolitically, perhaps as it pertains to security and human rights and other things like that. Are you confident that Rex Tillerson would be able to separate the interests of the country from the interests of oil?
Yes, I would. Tillerson is, he's a major oil company guy, but he's had so much experience, and he's a good man. He's worked with Boy Scouts and different organizations and all. No, I would have no question about Tillerson being a good Secretary of State. He's a good man. He's a hardworking guy, and he knows the world. Exxon operates around the world, and I would think he'd be an excellent choice.
That may be the case, but to follow on Joe's question, how does Rex Tillerson ensure that there isn't conflation between the U.S.'s diplomatic interests, its geopolitical interests, and the energy industry's business interests?
How does he assure us that he would not have a conflict? No, Tillerson, he's a worldwide personality, and to go from CEO of Exxon, I mean, he's leaving Exxon. He's off to a different part of his life, and he would go to Secretary of State, and he would perform that function just like he would if he was at Exxon. I mean, don't confuse me that he's going to make a decision for Exxon or no. I mean, he would be working for the United States government and doing, everything he could to be sure our business would go forward and be, well executed. So no, I think Tillerson would be great for the job.
Obviously, this potential name has come under a lot of criticism. I think probably part of it is the fact that he is an oil CEO, the industry inherently being political, but also due to his perceived relationship with Vladimir Putin. We have a story just out on the Bloomberg about how Rex Tillerson frequently went to the White House regarding the Russia sanctions, wanting to make sure competitors wouldn't gain an edge through it. He is considered to be a friend of Putin and, very close. Given that Trump is already sort of under fire for perhaps, on all this stuff about the hacking, is this going to create a headache for Trump? The idea of having a Secretary of State that furthers the idea that this White House would be more favorable to Russian interests?
Well, the hacking, I hate to tell you all this, but I don't even know anything about how to hack anything. So but no, Tillerson, I think he'd be great. He knows Putin, so he could sit down and talk to him about things. He's not about to make some foolish deal, of course. And I can't emphasize this more. When Tillerson leaves Exxon and goes with the State Department, he is 100% State Department. Exxon's got plenty of people to run Exxon. They don't need another CEO. They've got a CEO in waiting. So he will go to all lengths to be the very best Secretary of State the United States has ever had.
I'm glad you bring up ExxonMobil here, because I wonder what your thoughts are, if you have any, on ExxonMobil's president, Darren Woods, who would be the heir apparent to Rex Tillerson. I mean, if the company has a CEO in waiting, is he the CEO in waiting?
Is he? You say the CEO in waiting?
Is Darren Woods, the president of ExxonMobil, the CEO in waiting, the one who would then succeed Rex Tillerson?
I don't know who's going to succeed Tillerson. I know this. Don't worry about Exxon. They've got plenty of executives, qualified, good CEOs that are available there, and no question about it. And so he will, the day he leaves and goes to work for the State Department, he will be 100% for the government. He's not working for Exxon anymore.
I want to switch gears and talk about OPEC. Oil is surging today on news that the organization seems to be getting it together, has not only willing to cut, but cut more than expected. How confident are you that OPEC will be able to execute on what it's announced? Do you think they'll be able to go for a while without cheating and boost the price of oil from here?
No, listen. I'm long oil, so I think it's they want more for their oil, and they have said what they're going to do, and they will carry out what they say they'll do. They will cut supply, and the price of oil will come up. I mean, it's the producers of oil, whether they be OPEC, the Russians, whether it's the oil and gas industry in the United States, have all had enough, and so you will be at $60 a barrel within 30 days.
$60 a barrel in 30 days, that's your forecast, as long as OPEC abides by the production cuts that they've agreed to?
Yes. I think that you will have those cuts, and you will see January of next year, you'll be up $60 a barrel.
What about much higher than that? I mean, you know, I feel like we've completely discounted the ideas that we're going to see, say, triple-digit oil per barrel, dollars per barrel anytime soon. Is it plausible that we could get back there? What do you see for 2017, 2018, and beyond?
Okay, take me up to 2018, you got a chance, but you aren't gonna have $100 oil in 17. But I do think you can have $75 oil in 17.
But there have been a lot of instances where OPEC hasn't been able to comply with production cuts that they have set out in the past. Do you expect there to be wobbles along the way, instances where they can't quite commit to what they have promised? What might those look like?
Well, you're saying that they won't stick with the deal.
Correct.
I believe they will stick with the deal. I think it's going to happen. And when you look, I mean, the Russians need money. OPEC needs money. And yes, I think they will stick with the deal. The Saudis have said they will cut below 10 million a day. So they're cutting out 1 million barrels a day. So they have to be the biggest one to do it. When they perform, when they show the leadership, and they will, that the other countries will come along.
Real quickly, some of the skeptics of this deal, including Goldman Sachs, have argued that, you know, if prices go up, that U.S. supply of oil can just come on quickly and depress prices overall. How quickly can U.S. production react to any price increase?
Well, let me tell you, I know the oil field. You know that. And I can tell you it will not come on fast because the people that worked in the oil field, they now have other jobs. And so it is, women run the oil field. They tell their husband, look, you get a job. No, I'll go back to work when the rig goes back to work. No, you get a job. You're not going to hang around the house. I'm telling you the truth. I know exactly what. And those guys have got jobs.
Okay.
And, all right, you got it.
Mr. Pickens, we've got to leave it there. Thank you for your time. We really appreciate it. T. Boone Pickens, Chairman and CEO of VP Capital. This is Bloomberg. straight from the closing bell. What'd you miss? Another record day for the Dow and the S&P 500 hovering near an all-time high, while small caps are retreating. Oil jumping by more than 3%, also sparking a bond sell-off. All of this ahead of Wednesday's Fed decision. I'm Scarlett Fu.
And I'm Joe Weisenthal. We want to welcome our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. The Dow closes at a record high again. For the S&P 500, which is down by about 2 points, barely lower here. This is the worst day since December 1st. Pretty hard to believe. And crude oil, really the star mover, I suppose, if you want to point one out. It's gained more than 1.5%, although it did gain a lot more.
Higher,
exactly, and it paired some of its advance to close.
Yeah, another Dow record high, sort of returned to the norm here with the Dow rallying and the NASDAQ selling off.
All right, in terms of the actual stocks to pay attention to, it kind of started off in Asia overnight. And I bring this up because you see a lot of red arrows there. Stocks across Greater China mainland, Taiwan, Hong Kong, they all fell as China took a much stronger tone in warning Donald Trump not to use the one China policy as a bargaining chip in trade discussions. Jamie Metzel of Atlantic Council, if you'll remember, Joe, told us that Beijing cares more about Taiwan and the one China policy than the Sino-U.S. relationship. FXI I also included there at the end. It's the ETF that tracks Chinese stocks in New York trading, down 2.4%. Energy stocks, also big movers here as oil prices rose. They rallied in the early part of the session, but faded some of their gains as oil paired its advance. For the XLE, which is the Energy Select Sector Spider ETF, that is at its highest since last June. And you can see that ConocoPhillips, Marathon, and Exxon all up by better than 1%.
Let's look at government bonds. Not much action in the U.S. side. Yields just marginally higher, both the 2-year and the 10-year, both up a little bit. But let's take a look at the Chinese 10-year. A pretty significant jump. We hardly ever talk about Chinese government bonds. It's just not discussed very much. But let's take a look at this. This is a 1-year chart of 10-year yields in China, really having shot up a lot lately. And so this represents a sort of another form of tightening. And you mentioned the equity sell-off last night in China. It wasn't just combined to that. It was also bond yields. So might be something you want to keep your eye on right there.
All Chinese assets. And in fact, we'll talk about this a little bit later with David Wu of Bank of America Merrill Lynch. Let's move on to currencies here, where oil exporting currencies rising in value versus the dollar. The ruble at its strongest since July of 2015. You could see there also the Mexican peso, even with today's decline against in the dollar versus the peso. The Mexican peso is still down about 9% since the U.S. election. A quick check also on the Turkish lira, depreciating for a third day. There are a number of concerns here on Turkey. Weak data. You had the economy contracting in the third quarter. Also increased political risk because there were a pair of bombings in Istanbul on Saturday that killed more than 40 people. And of course, the backdrop of oil rising. That's bad news for Turkey, which imports its oil.
And on commodities, speaking of oil, that's obviously the big one, up 1.7%. It had been up quite a bit higher earlier in the day on this news of deeper cuts from oil-producing countries than had been expected.
Up as much as 5.8% to 54.51.
Really much bigger earlier. Gold up marginally, and steel up 0.8, had been higher, but that's also, keeping an eye on those industrial metals. I want to take a look at a 1-year chart of oil just to give you sort of the perspective here. What a monster year, up 46% over in the last year. But what's really remarkable here is how low we were earlier in the year. We started the year with like a 29% plunge in just the first couple months of oil, then have really come surging back, actually more than double since the bottom. So it has been quite a year for oil.
Pretty remarkable moves there. Okay, well, what'd you miss? Oh, those are today's market minutes. I was so excited to get to what'd you miss. What'd you miss? Before Donald Trump was elected, many strategists and analysts said that if he would win, the markets would tank, the economy would head into recession. One person who disagreed, one contrarian, was David Wu. He is Global Rates and Currencies Research Head at Bank of America Merrill Lynch, and he joins us now.
David Wu, great to have you on set. I think of all the strategists, your sort of post-election forecast, especially in the event of a Donald Trump victory, was closest to being correct. Most people saw doom and gloom. I want to go into this chart It's a look at the Bank of America Merrill Lynch multi-asset strategy 2x leverage index, basically a risk parity index that has a big sort of bond component, really underperformed. And in my view, even more than the equity rally, the defining aspect of this post-election period has been the sell-off and the failure of diversified portfolios. You called the potential for higher growth, higher inflation if Donald Trump won. That certainly seems to be the expectations. How much further can we see these moves play out?
Personally, I think there's probably still some room for these trades to continue. Because the honest truth is, if you think about this, right? I mean, Trump said he wanted 4% GDP, right? Mnuchin said he wanted 3 to 4%. And yet you look at consensus forecasts, for 2017 it's at 2.2%. For 2018 it's 2.2%. That's where there's a huge perception gap. I'm still very much, most clients I talk to, people are worried about, well, listen, maybe these tax cuts are going to get saved rather than spent. People are worried that, at this very late stage of the business cycle, all you're going to get is inflation rather than growth. Right. But I think, honestly, people are finding excuses for why they don't have the trades on. Because I think the bottom line here is this. You cannot just look at this as pure fiscal stimulus. You got to look at this as a cocktail of measures that are designed to boost confidence, okay, to free up the animal spirits, okay? And I think this is also going to be about easing access to credit, okay, because there's no question that the, Dodd-Frank is going to be a very important part of the deregulation, basically, attempt. I think this is about essentially unshackling the U.S. economy for it to do what it does best, which is to take risk, invest, and grow.
So what will this next stage of the rotation look like? If there's still room to go, what will it look like in the next stage versus what we already saw?
Right. That's an excellent question. I'm of the view that, if you look at basically, for example, the sell-off in rates, right? Much of the sell-off in rates has happened in the back end, like 10-year, 30-year. And much of the sell-off has been driven by a repricing of inflation expectations. Break-evens, 10-year break-evens now back at 2%. At 2%, I have no qualms because I think 2% is probably fair. Where I think the market potentially still has yet to reprice, for example, the rates market, is the belly of the curve. Think about this. The market is still only pricing in, less than 2 hikes for next year for the Fed. The market is only pricing in less than 2 hikes for 2018. Now that's inconsistent with a 3% plus GDP when unemployment is at 4.6%. So I think from that point of view, the market, as long as the market is still pricing below the Fed's own dots, forget about any revision in those dots, I think that means that rates definitely have more upside to go. And I think anything that's linked to rates have more upside to go.
It's funny listening to you say that Donald Trump is going to bring with him a whole cocktail of reforms. Kind of reminds me of Shinzo Abe and all the different arrows of Abenomics, the fiscal, the monetary, deregulations, a sort of national greatness message, getting people excited about the Japanese economy. I think the verdict on Abenomics is mixed at best. Do you think that this cocktail, as you put it, will actually translate? Why will it translate effectively?
So first of all, you know what? Yes, now looking back at our economics, it's, oh, wow, this thing's totally lost momentum. It hasn't worked out well. But you know what? In the first 3 months of our economics, the first 6 months, the first 12 months, that's all people talked about. I think going back to the last 5 years, I think that was the only year hedge fund investors actually made honest money was in 2013, trading our economics, Nikkei, Dolly, and so on and so forth. I think the point is that we're only like 1 month after the U.S. election. This trade has a long way to go, at least up to, let's say, the inauguration day. I personally think a lot of the Trump trade is going to get priced in already by January 20th. But nevertheless, this is sort of like a buy the rumor phase. But nevertheless, you remember, Abe, much like Trump, right? Abe actually, when he won in December 2012, he did not control the upper house. Right. That's why he said, well, I need to basically really boost GDP growth so I can basically pick up the upper house so that I can basically change the Constitution. The same thing with the Republicans. For them to do what they said that they really want to do, which is to repeal Obamacare, they actually haven't got enough seats in the Senate to get that done. They only got 52. They need 60 to prevent filibuster. So from that point of view, again, much like Abe, they need to boost growth between now and the midterm election of 2018 so they can pick up another 8 more seats in the Senate. So from that point of view, the political pieces are very, very similar between now and basically Japan beginning of 2013.
That's an interesting analogy, but I want to go back to some of your clients' questions about, are we too late in this economic cycle? That may be the case that they didn't have their trade put on correctly, but it is a valid point nonetheless. This has been the longest running expansion, I believe, in post-war history. How much further can it go? I know people say that bull markets don't die of old age, but it has gone on for a long time, and you could argue that it's starting starting to peter out, or it was before this election result.
I mean, Scarlett, you may be right, but what I would say is this: investors cannot be talking from both sides of their mouth, right? Only a month ago, the day before the election, the market was pricing practically no hikes for all next year because they saw, well, even the economy grows at 2%. There's no way the Fed is going to be able to hike because we got all this, underemployment in the economy and all this hidden unemployment. And then what? A month later, all of a sudden, people are worried about where the full employment and then inflation is going to go through the roof. I think, the honest truth is this is where I've got an intellectual inconsistency problem we could talk about. I think where people are getting it wrong is that people are much too focused on the infrastructure, basically piece. Everybody say, fiscal stimulus equals infrastructure spending equals more copper, more tractor. This is why, copper prices gone through the roof, Caterpillar prices gone through the roof. But the truth is, I think, the infrastructure piece probably is going to be the last piece to get through. Because, one thing is for Trump to go to the Tea Party and say, we're going to blow up the deficit because we're going to cut taxes. Another thing is to say, well, we're going to blow up the deficit because we're going to do infrastructure spending. I think infrastructure spending is probably going to be the last piece to get through. Even if it were to get through, think about it. If you want to build a bridge, you got to have a bridge to build. Right. So I think the earliest you're going to see anything like that is going to be late 2017, maybe early 2018. So I'm not that worried about this inflation running amok. Commodity prices, this is why, I'm more worried about Chinese housing going to slow before U.S.-based construction spending starts to pick up.
You mentioned that a lot of the skepticism of your thesis you think is caused by the fact that people just don't have the trade on, or they were caught really offsides. And we know that the people were wildly bullish on bonds throughout much of the year. Even within stocks, they like the bond proxies. How far offsides are investors still, given the move we've already had?
I would say definitely the hedge fund community has been well positioned. I think not that they had a position on going to the election, but definitely since then, I think they get the point. They've been going after this. We just said Abe Economics provide a great movie script. Right. I think a lot of the real money clients, the mutual funds, I think they're still looking to take advantage of any basically dip in bonds to actually increase duration. I think those are the guys who are still in denial, who have yet to basically play catch up.
All right, David Wu, Global Rates and Currencies Research at Bank of America Merrill Lynch. You're sticking with us because we're going to talk Trump's geopolitical agenda with China and how it's exacerbating relations with our largest trade partner.
And some breaking news here. I want to pass some headlines along. Boeing planning a deeper cut in production next year for the 777 jetliner, which is the company's second biggest source of profit. Boeing plans to slow output of its largest twin-engine model to 5 aircraft a month starting in August of 2017. That is a drop from a previously announced cut to a 7-jet monthly rate that takes effect early next year. Boeing shares trading marginally lower in after hours, trading down 0.6%. This is Bloomberg.
I'm Nina Melendez. Let's get to First Word News this afternoon. It's official. Goldman Sachs President Gary Cohn, once the heir apparent to CEO Lloyd Blankfein, has accepted the job as Chief Economic Policy Advisor for President-elect Donald Trump. That's according to the Trump transition team. Cohn has spent more than 25 years at the investment bank. And Trump is eyeing former presidential rival Carly Fiorina for Director of National Intelligence. That's according to a report by the New York Times. Trump met with the former Hewlett-Packard CEO today in New York.
We talked about the opportunity that the president-elect has to literally reset things, to reset the trajectory of this economy, to reset the role of government, to reset America's role in the world and how we're perceived in the world. And I think it's why he's getting such fantastic people in his administration.
Trump is meeting with another former presidential primary rival today as well, former Texas Governor Rick Perry. He's reportedly a candidate for Energy Secretary. And Electoral College members have requested a briefing on Russian interference in the U.S. election. 9 Democrats and 1 Republican sent a letter to James Clapper, the Director of National Intelligence. The electors say they are concerned about Donald Trump's disregard of the intelligence community's conclusions about the hacking. They're also concerned about Trump's continuing defense of Russian President Vladimir Putin. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Nina Melendez. This is Bloomberg.
What do you miss? U.S. President-elect Donald Trump has upped the ante with Beijing by saying he'll use the One China policy as a bargaining chip to get a better trade deal. All 3 asset classes in China fell overnight, stocks, bonds, and the yuan. Still with us is David Wu, Global Rates and Currencies Research at Bank of America Merrill Lynch. David Wu, thank you for staying with us. So the first thing that Donald Trump has truly done is just totally turned over the table on China, being very explicit that the One China policy is not sacrosanct, that he wants to use that as a bargaining chip. How does this play out? What do you see as being some of the next steps here?
This is my single biggest worry for 2007. I mean, otherwise, I'm pretty bullish about the world outlook for 2007, except that I fear the U.S. and China could be on a collision course. And it's almost making the case. Why do I say this? Think about it. Trump has 2 major policy pillars, fiscal policy and trade policy. His fiscal stimulus is going to be definitely bullish for the U.S. dollar. But for his trade policy, which is to bring jobs back to the U.S., he actually needs a weak dollar. So does he want a strong dollar? Does he want a weak dollar? There lies the biggest contradiction of his entire policy mix, right? Now, I think he's going to ultimately want a weak dollar. The problem is that China also needs a weak RMB. So how can China and Trump both have weak currencies? Think about it. The biggest irony is like this, right? The more successful Trump is going to be, meaning the stronger is the U.S. economy, the stronger is going to be the dollar, which means the weaker the RMB, which are only going to increase the pressure on Trump to label China as a currency manipulator.
Right.
Right? So from that point of view, it's almost self-fulfilling. It's already baking the cake. That's what I worry most about. And how it plays out, I think this is going to be the biggest headache for investors thinking about 2017.
So by bringing in Taiwan and speaking with the president of Taiwan over the phone, he's just mixing that up even further. Does it derail the relationship and the areas of trust that we do have with each other?
What's interesting to me was 3 days after he had this conversation with the Taiwanese president, he appointed, of course, Xi Jinping's close friend, the governor of Iowa, as ambassador. So from that point of view, he is definitely sending mixed messages to Chinese, which I think is very clever. You think about it. Have you ever seen that movie, Rebel Without a Cause, with James Dean? In that famous scene, he was playing this game of chicken with this guy who was going to jump out of the car first, basically. Think about it. If you're Chinese, you're playing, you're thinking about, well, I'm about to basically play this game with this guy who has a reputation being unpredictable, reckless, and even dangerous for that matter. I don't know if the Chinese are going to be so readily jump into the game with Trump. So I think Trump's unpredictability, in some sense, is going to help lower the probability of a crisis. But of course, we all know if there were to be a crisis, it's going to be the mother of all crises.
So there might be something to say for this strategy, this sort of, I forget the game theory term of it, but the wild strategy.
I think so. I think there's no question. I mean, in some sense, this is the same strategy he's using towards Carrier, towards Boeing, and so on and so forth, right? In some sense, because people don't know what he's going to do, and because people have no idea about his policy reaction function, so to speak, people are going to think twice And so from that point, he might be able to achieve something that, without having to try too hard.
Trump aside, China is facing its own issues. Last week, we got the headline about limits on ATM withdrawals in Macau. That in itself probably not a huge thing, but signifying perhaps a much deeper concern about the level of capital outflows. How bad is it right now for the country, and how much, what more do you expect to see on this front?
Joe, you just hit the nail on the head, right? You think about it. What's the difference between today than a year ago? A year ago, the Fed was about to hike rates, the dollar was going up, and the RMB collapsed, which basically brought about a collapse in emerging markets, global growth, and next thing you know, the Fed is no longer hiking rates. So can that happen again this time? The difference between this year, right now, versus a year ago, is that a year ago, this was before the RMB was included in the SDR. And China had to at least pretend that they were still trying to, essentially loosening capital controls. Now that, the RMB is including the SDR, they can afford to go out there and tighten controls without any consequences about the RMB being kicked out of SDR. So I think, as my real estate agent in New York would tell you, last year at this time, 20% of apartments sold over $2.5 million in New York City was sold to a Chinese person. Right now, it's zero. Because, it's become more difficult to get your money out of China than to actually go to the moon right now. So I think from that point of view, if China is indeed successful in, basically containing this capital outflows, which I think you have to basically assume, I'm going to give them some benefit of doubt in terms of doing this. This is what's going to actually allow the U.S. story to sort of decouple from China, for the dollar to go up, U.S. rates to go up, and the U.S. economy to do better. So from that point of view, China's ability to crack down on capital outflows, it will be very, very important for Donald Trump's success in bringing off basically a good 2017.
Okay, so in addition to cracking down on capital outflows, what are China's next steps in 2017? They can't predict what Donald Trump is going to do next. So what do they do to proceed with what they need to do to reform the economy?
Well, first of all, you've got the Party Congress coming up at the end of next year.
Yes.
So they absolutely have to have something to show for. So I think from that point of view, I think downside risk Chinese economy is going to be more limited for that result, because they're going to be managing the economy even more closely than usual to make sure that, at least on paper, it looks all good and basically stable. I think the geopolitical sphere is more complicated. We are short. We've been recommending selling the Korean won. And the reason is because I think, that's where, if Donald Trump is not going to, maybe the Chinese are going to be nervous about, sticking it to Trump, but, however, you think, well, what does China really have as a trump card versus the U.S.? Well, North Korea.
North Korea, right.
I mean, even Donald Trump, or for that matter, Doug Mathis, I think, are going to struggle to come up with, sort of out-of-box solutions as far as basically North Korea is concerned. So I think, especially given the political crisis in South Korea, can the Korean Peninsula become the next flashpoint in this proxy conflict between Trump and China? I don't think you can basically rule that out. That's why I like basically buying out-of-money put on the Korean won.
All right, David Wu, head of global rates and currencies research at Bank of America Lynch. He'll be sticking with us as we talk about his other currency calls. You already heard one of them, the Korean won. This is Bloomberg. Glad you missed. David Wu, head of global rates and currencies research at Bank of America Merrill Lynch, is with us. And David Wu is bullish, super bullish, you would say, on the Mexican peso. Tell us why.
Yeah, because you know what? First of all, everybody's short, right? Everybody's worried that, well, they're still short, and people are worried that Trump is going to be terrible for Mexico because of NAFTA. But let's think about this, right? If you look at the law, right? As president of the United States, he does have the right to throw NAFTA out of the window, flush it down the toilet to rip it off. But he does not have the legal right to renegotiate his terms without congressional approval. And I'm telling you right now, forget about the Democrats, even Republicans in the Congress have no appetite to go down this path. So I would say they're not going to basically go near NAFTA with a 10-foot pole. And remember, Mexican export to the U.S. is 25% of Mexican GDP. From that point of view, U.S. economy really does accelerate to basically 3%. Mexico is going to be the biggest winner.
One factor that's traditionally driven the peso is oil. We got this oil rally thanks to OPEC. What's your takeaway on the significance of this agreement to cut production?
I think Russia's participation in the production cut is absolutely huge. It's unprecedented. I think, you know, there are many different interpretations, but nevertheless, when we think about who's going to be the biggest winner, clearly it's going to be the U.S. Right? In that sense, Trump is actually quite lucky. It's almost like a welcome party, you know, welcome present basically from OPEC and non-OPEC. Think about this. That means OPEC's cutting back on production means U.S. producers are going to be able to produce more at higher prices. So this is going to be bullish for U.S. GDP growth. It's going to be bullish for the dollar. There's no question about that.
Talk about the impact of the Russian ruble. Is it going to be bullish for the Russian ruble? We saw it rise today because of the rise in oil exports.
It's also one of the biggest this year.
We're very bullish on the ruble. I mean, I think there are two emerging markets I like, Mexico and basically Russia. Russia also has the added advantage that, you know what, right now, I think under Trump presidency, we're more likely to get a deal on Ukraine, which probably will lead to some sanction relief for Russia next year. So I think that is going to be additional, basically, bonus for Russia, not to mention the fact real rates in Russia is the highest within emerging markets.
Real quickly, I see here you have a call on the New Zealand dollar, the Kiwi. What do you see for them?
I think this is more of a technical call. I think, especially, I think this currency looks pretty expensive. I think in general, I think, Kiwi and Aussie, I would say even Aussie is very more expensive. If you're worried, as I said before, the whole fiscal stimulus, the whole infrastructure spending is not going to happen until much later this year. By the time U.S. construction spending starts to pick up, Chinese construction spending is going to slow. I think a lot of these commodities rallies not sustainable. Sell Aussie.
All right, David Wu, head of global rates and currencies research at Bank of America Merrill Lynch. Don't go anywhere, because next up we're going to be talking central bank policies from the Fed to the BOE to the ECB. This is Bloomberg.
Nina Melendez. Let's get the First Word News this afternoon. House Speaker Paul Ryan says the House Intelligence Committee will look into Russian cyber threats of the DNC and Hillary Clinton's presidential campaign. But he says any investigation should not, quote, cast doubt on the clear and decisive outcome of this election. Meanwhile, White House spokesman Josh Earnest had this to say about the probes.
You didn't need a security clearance to figure out who benefited from malicious Russian cyber activity. The president-elect didn't call it into question. He called on Russia to hack his opponent. He called on Russia to hack Secretary Clinton.
Earnest called government intelligence officials patriots. In Italy, Paolo Gentiloni has been sworn in as Italian Prime Minister. The move came after Gentiloni submitted the lineup for his new government to President Sergio Mattarella. Economy Minister Pier Carlo Padoan will remain in his post as part of the new coalition government. Matteo Renzi had been serving as caretaker premier after he resigned last week when voters rejected his proposed constitutional reforms. And a manhunt is underway in France for 4 thieves who have stolen what could be more than $1 million in gold. The thieves took the gold from an armored truck on a major highway near Lyon and then set the vehicle on fire with the 2 drivers inside. Police say the drivers were rescued thanks to a tip from a witness. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Nina Melendez. This is Bloomberg. Scarlett?
Thank you so much, Nina. Let's tell you what happened in the intervening 2 minutes while Nina was speaking. Boeing has boosted its quarterly dividend to $1.42 a share from $1.09. The consensus estimate was for $1.25, so this is a bigger than expected increase in its quarterly dividend. Also, Boeing setting a new $14 billion stock buyback program. Of course, it doesn't actually have to buy back $14 billion worth of stock, but this is an authorization to do so if it wants to. As for how equities closed, the Dow and the Russell 2000 finishing at all-time highs. The S&P 500 slipping 0.2%.
What'd you miss? Fed officials are set to meet in Washington this week to discuss rates for the first time since the U.S. election. While there's little doubt that the Fed will deliver a hike, investors will be closely watching to see how officials view the impact of a Trump presidency. Still with us is David Wu, Bank of America Merrill Lynch, head of global rates and currencies research. And joining us is Peter Fisher, senior lecturer at Dartmouth College's Tuck School of Business. Peter was the former head of fixed income portfolio management at BlackRock and former undersecretary for domestic finance at the Treasury Department. Peter, thank you for joining us. Let's start with you. Everybody expects a hike, so we don't need to really talk about that. But then the question is, what do they indicate going forward, 2017 beyond? A lot of focus will be on those dots. How do you think they're going to position the ongoing hiking cycle after this meeting?
It's hard to say. My best guess is they're not going to try to incorporate any Trump fiscal plans, which look like they aren't quite there yet. But the Fed's going to have to reflect the fact that the economy is a little firmer now than it was in September. The labor market's a little tighter. The inflation measures have moved a little further. So it'll be interesting to see how much their inflation expectations and Fed funds path moves on them, even if they're probably not yet going to incorporate the Trump fiscal plans.
David, what do you think? You were saying earlier that there's some upside risk to growth estimates, growth consensus estimates here. How much does the Fed move up in its forecast for GDP?
I think here it's not a question of the Fed staff that's going to be forecasting GDP, but actually the people, who are going to be contributing to the whole consensus. I think, it'll be kind of strange for them not to basically apply some probability that some fiscal stimulus will get through, at least in terms of the individual who are going to be basically casting vote for the dots. So I think from that point of view, as I said before, the market is still pricing below the dots, and there's definitely going to be more upside.
It's interesting looking at the situation now this year versus where we were at the end of last year when they hiked. If we go inside the Bloomberg, this chart really demonstrates it nicely. On top, the white line is the U.S. Economic Surprise Index. And as you can see, this is for 2015. It was really heading down at the end of the year. If we look at this chart, you can see the purple line it's really shooting up. And along with the market going into the end of the year, very different vibe. Peter, do you think that unlike last year when they saw 4 hikes possibility and then they really had to ratchet it down, that we might see a real continuation this time due to strength in the economic cycle?
Yes, I think that's a possibility, but I think the hardest thing for the Fed is they really don't know where they're going to be a year or two from now. Right. They don't know how much this recovery we see is going to come through. They don't know how much on top of that the Trump administration is going to put and Congress is going to put. So I think what I'm looking for is what kind of hint we get about, does Janet Yellen know she's got to pull back from forward guidance? She's going to have to pull back from pretending she knows a point estimate on the Fed funds rate for 12 months from now, which she really doesn't know. And that uncertainty is going to come back to the markets. I think it's healthier. I think forward guidance has done its thing and it's past its expiry date.
And we have a lot more to discuss on that forward guidance dilemma there for the Fed. But David, I want to get your thoughts here because it seems like central banks for the last couple of years drove the bus in terms of everything. They dictated how asset prices move. Now we're in a situation where fiscal policy is going to take center stage. Does monetary policy matter less to traders? I mean, as someone who advises on rates, where rates and currencies head, do we need to pay less attention to what the Fed says and does and more attention to what Donald Trump tweets?
Now, listen, even the Fed has been saying this for the last number of years. They kept rates super low only because fiscal policy was much too restrictive. So I'm sure they're more than happy to pass the baton off now to basically fiscal policy. I think in the fiscal dominant world, growth is going to matter a lot more than interest rates. So I think from that point of view, as Peter said, the Fed doesn't know. I mean, they don't even pretend to be able to see into the crystal ball. At the end of the day, growth is going to basically speak for the Fed and for basically and for the market. And I think we're going to go back to trading growth rather than basically interest rates, I think, going forward.
Okay, so that's the scene in the United States. If you look at the other big central banks, we're talking about Bank of Japan and European Central Bank, they're still on a path to, they're still in extraordinary easy monetary policy. You're looking at the balance sheets, and of course the Fed is in blue, and it's been pretty stable there, and it's actually inching down or trending down. The Bank of Japan is in purple, and it's come off a little bit. The white line here is the ECB, and they have extended their QE program, Joe.
David, it really feels like, in the U.S. there's a lot about what the fiscal picture is going to look like. In Europe, it really seems like not even fiscal so much as political. What's going to happen with the election in Italy? What's going to happen with the election in France? How do you see just sort of raw political risk, not even fiscal, sort of affecting the sort of economic situation that ultimately the ECB will be forced to reckon with?
I mean, there's a Chinese saying, when you're bitten by a snake once, you're afraid of ropes for the next 30 years. The market clearly was surprised by Trump and then by basically Brexit. So clearly the market doesn't want to make that same mistake again. But I think the market may overreact because I'm not that worried about the German election. I'm not that worried about the Dutch election because one thing we've known the last few years is that the right and the left in Europe, they hate the far right so much, they're going to do whatever it takes to keep them from power. I think a bigger issue is France. Because right now, the three center-left candidates, Macron, Valls, and Mélenchon, their problems are they're equally popular. They're basically all campaigning on a very similar platform. They might cannibalize each other's, and then neither of them basically getting through in the second round. So you end up with basically Fillon and Marine Le Pen. Right now, the market is sort of assuming that Fillon is going to wipe the floor with Le Pen. But is that a true, basically realistic assumption? Because think about this. Fillon is basically campaigning on firing 500,000 French civil servants. He wants to get rid of, essentially, the wealth tax for the rich. He wants to break the back of the unions. The last time the French elected someone like that into basic presidency was like 1873. I'm just saying, it's going to be difficult for him to get any votes from the left. And in the second round, this is going to be extremely, extremely crucial.
Right. I mean, this sets up an interesting situation for the ECB, Peter, because they have to keep in mind whatever policy they put in place has to kind of cover them for whatever election outcome happens in the Netherlands, in Germany, and in France.
Well, the ECB, it seems to me, is treading water here and hoping something turns up, preferably growth. But they really they're just treading water. That's the announcement they made. They're going to keep their plan going a little less, but a little longer. That's steady as she goes. They aren't likely going to get a fiscal boost big enough to be meaningful anywhere in Europe. It's just not going to happen. The politics, whatever the outcome of the election, it will be constricting. It's not the process of the election isn't going to be good for consumer confidence. So I think the ECB is just keeping its fingers crossed. And the same really with the Bank of Japan.
So your interpretation of the latest ECB decision was that it was basically the political approach to keeping the exact same policy, more or less?
Yes. Exactly.
Keeping the peace, basically, giving
Exactly.
a little bit of everything to the hawks and the doves.
Yeah, I mean, it has its internal ramifications, but it has its external ones for Europe because there's no fiscal rescue coming. Here in the U.S., much to the Fed's relief, there's going to be some fiscal policy to come around, but not in Japan and not in Europe.
Well, what about Japan, David? We talked a little bit earlier about Abenomics. Now that Trump is going to be president in the United States, does that give Abenomics another push? Does it breathe new life into that effort?
I think the election of Trump is about the best thing that could have happened to Abe and Kuroda, both of them. Because think about it this way, right? Only a month ago, we were talking about the fact that negative interest rates are no longer effective. Japan was in deep trouble because dollar yen been going down, because negative interest rates, nobody basically care about that anymore. And think about this, now with Trump, easier fiscal policy, higher rates in the U.S., you see dollar yen going through the roof, Japanese, and this is why Japanese equity markets been one of the best performing. So they have actually, ironically, U.S. fiscal policy and Mr. Trump to actually to thank. But I think the issue here, which I think is a key issue here, is that the Bank of Japan, as you know, has gone a step beyond QE by pegging 10-year JGB at zero. Effectively, they become the central bank of the world. Because whenever rates go up anywhere else, you're going to see Japanese investors piling into all other basically foreign bond market. So in some sense, Bank of Japan, by pegging 10-year JGB at zero, is also capping long-term rates globally, including the U.S.
Is that sustainable, Peter, that Bank of Japan will be able to keep its long-term rates pegged like that, or will they have to relent at some point?
I think they're going to have to relent at some point. I mean, I actually interpreted the move they made in September to lock in the 10-year rate, to peg the 10-year rate as a realization that over the coming years, they're going to have to let it back up. That they're just not going to have either the stamina to keep it there, nor do they really think they want to, because the negative rates didn't work. The flat yield curve hurt credit intermediation in Japan. So it's going to be something that they're going to be very gradual about. I think it's a lesson for other countries who've tried negative rates and extraordinary policies that unwinding these, you don't want your yield curve to jump too fast. And I think the Japanese, in this case, Kuroda, got ahead of it with his peg the long end so that he can manage it up over time.
So does dollar yen become a good litmus paper for U.S. policy or for Japanese policy? I mean, which one does it move more on?
Well, I think there's going to be more changes in the U.S., so I think it's U.S. change will drive that exchange rate because we sort of know what's coming inside Japan, but it's going to have a big impact, as David said.
I love that way you put it, that Bank of Japan is essentially going to become the world's central banker because everything becomes this de facto easing, money rushing to bond markets around the world. How big of an effect how big of a dampening effect on long-term yields in Europe, UK, the U.S. will that have ultimately?
Listen, I mean, this year alone, I think Japanese year-to-date bought something like $300 billion of foreign bonds. That's a lot of bonds. So, I mean, you're talking about the BOJ buying unlimited amount of JGB to keep 10-year JGB at zero, which is what they said in the last meeting, in order to allow Japanese investors to buy more foreign bonds. So you're talking about, I think it's about the marginal buyers. And there's no question that if you look at just in the last few weeks, I mean, since the backup in rates in the U.S., I think we've definitely seen very aggressive buying from Japan, especially investment-grade credit. I think long-term rates in the U.S. would have gone up a lot more than it did if it hadn't been for Japanese investors.
All right, David Wu, Bank of America Merrill Lynch, head of global rates and currencies research. Thank you so much for joining us. Peter Fisher is staying with us because we're going to talk about the problem with the Fed's forward guidance next, and also a little bit about dots as well. This is Bloomberg. What'd you miss? Is Fed forward guidance played out? Peter Fisher with the Tuck School of Business at Dartmouth is still with us, and he says perhaps it's time to get rid of the dot plot. So, of course, if you come inside the Bloomberg, this is the famous dots go, and you can see the green line is the median where the FOMC members have projected. The blue line is the market's projection, and as Joe has pointed out several times, they converge here in early 2017. Peter, when we talk about forward guidance, it's not just dots, is it? It's rhetoric. It's the communication policy that they have overall that has evolved over time to include dots.
Yes, the dots are sort of the firmest manifestation of this effort, which Bernanke really was firmest on and he first started talking about when he was first governor before he became chairman. Then during the crisis, it was a very powerful device to sort of assure everyone monetary policy would stay easy for a long time. And then the dot plot was a way of spreading that out, showing people how long we'll keep rates low. But it's really not credible that that's going to be maintained over time. Uncertainty is going to kick up here. That is, we'll have stimulus from the Trump administration. At some time, we'll have to worry about whether there's a recession or not over the coming years. This idea that we can put down exactly what we think the forward path of rates is out for several years, and that's going to be credible, it is going to expire. And so I don't expect Yellen to say anything about that itself, but I'm wondering if there won't be a hint somewhere, maybe tomorrow, day after tomorrow in a press conference, about that they realize widening uncertainty. So we can look in their forecasts this time, or maybe in 3 months' time. If the range of their forecasts is getting wider and wider and wider for GDP and inflation and the Fed funds rate, well, we know uncertainty is going wider and wider. So we're going to find less and less information from the dot plot.
There were a lot of monetary policy innovations that came about during the crisis. The dots are one of them. The press conferences was another innovation. But they obviously seem to have their drawbacks. Some would argue that the dots sort of may have forced them into a December hike because they had that dot out there. The press conference creates the impression that there are only 4 live meetings every year, even though they insist otherwise. Were these innovations valuable during the crisis period and have perhaps outlived their usefulness, or in retrospect did not fully serve what they attempted to serve even in a crisis period?
Well, I think the press conference is a useful device so the chair can speak to the world in the capacity representing the committee. I think it's a shame that we only think we're going to find something out about what the committee is going to do when the chair gives a speech away from the committee. I think we'd like to know that policy will change at committee meetings, not just little hints dropped in speeches. So I think the press conference is a good device for that. It has the limitation you say. I think the dot plot is a different problem because it anchors policy. It creates a kind of inertia in policy that I don't think is helpful, and that as uncertainty about the economy and the range of outcomes widens out, it's going to be particularly binding and awkward to pretend that this is helpful to spell out where we're going to be. When I ran the open market desk for the Fed years ago, it was a big deal to imagine we knew what was going to happen at the next meeting. No one had any idea what was going to happen 2 or 3 meetings yet. And no one would want to even bind their hands as to where we thought we'd be 2 or 3 meetings hence. So that's a healthier outcome, in a sense, to recognize the uncertainty that's natural in the economy.
That's interesting that you put it that way. I mean, I wonder if forward guidance is a blunt hammer. Is it more of a blunt hammer, or is it more of an open-ended device that lacks parameters and historical precedent?
Well, I think one thing that forward guidance was used for was the wealth effect, to try to pump up asset prices. You can read former Chairman Bernanke's speeches pretty clearly that he was trying to goose asset prices up, house prices and equity values.
So he gave specific numbers.
So he wanted to hold long-term rates down for a long time. Well, you might not always want to be doing that. It's a little more difficult now when we sort of want asset prices to go where they will and not just where the Fed is directing them to go. I think that's a business the Fed needs to get out of, and that's part of the exit problem they're having from extraordinary policy.
Real quickly, we've seen oil is having a massive year. In your view, I mean, obviously the Fed strips out headline and really looks at core, but in your view, how much does rising oil, rising gas prices play into inflation expectations and ultimately into real policy ramifications?
Well, of course, it's an important part, but what the Fed is going to look for, and the most important thing, is to see whether a rise in oil prices gets embedded elsewhere. So I think the public has misunderstood this, and the Fed hasn't been as articulate as it should be. The reason to look at core core and then to look at CPI with energy in it is to see whether big movements, volatile movements in commodity prices get embedded in non-energy prices. Like if you're eating out on the highway at a roadside restaurant, do that food away from home start reflecting higher energy prices? Now it's getting embedded in the psychology of inflation, so we should care about that. I think that's the sort of thing the Fed will be looking for.
All right, Peter Fisher, thank you so much. Peter Fisher from Dartmouth College's Tuck School of Business.
My pleasure.
And remember, on Wednesday, you'll want to be sure to watch our special coverage of the highly anticipated Fed decision. That begins at 1 p.m. in New York on Bloomberg Television and Radio.
What'd you miss? ExxonMobil CEO Rex Tillerson is said to be under consideration for U.S. Secretary of State. Last hour, BP Capital's Boone Pickens explained why Tillerson would be an excellent choice.
Tillerson, he's a worldwide personality, and to go from CEO of Exxon, I mean, he's leaving Exxon. He's off to a different part of his life.
Bloomberg Politics reporter Kevin Cirilli joins us now from Washington. Kevin, two things. A, how confident does it look like Tillerson is going to be the pick? And B, how are these few days as people had a chance to digest the news going over so far?
Well, the oil industry is really liking this, and the folks in the business community as well. I put that question directly to two senior Trump transition sources earlier today. They told me to expect an announcement sometime within the next 2 days about who this pick will be. Of course, Tillerson is right now the perceived front runner, but we'll have to wait and see when that final pick finally comes out.
Finally comes out. We're already hearing, though, that if he is chosen, Tillerson could have trouble being approved, winning confirmation from Congress, not just from Democrats, but from Republicans as well. John McCain, Marco Rubio.
This is where it gets interesting, is you have folks like Senators Rubio, Senators McCain, who have had a rocky relationship with Trump in the past, criticizing him for his perceived wranglings with Russia. So I would anticipate that right now the transition officials are doing everything they can to try to shore up support. You did see Trump give an interview and tweet out support for Tillerson. Clearly, this is someone whom he thinks highly of, but whether or not he would be able to get confirmed remains to be seen. Either way, a lot of intrigue around this pick is just the latest development in what has really become a fascinating journey for this Secretary of State pick.
Real quickly, do the headlines over the last few days about Russia and WikiLeaks and its reported preference of Donald Trump make the Tillerson pick even more difficult, given the lack of desire for just more Russia headlines?
Well, if there's one thing we know about Trump, it's he knows how to drive and manipulate the media. I would anticipate more tech headlines regarding the Russian involvement in the U.S. elections on Wednesday, when Donald Trump is set to meet with tech industry leaders in Trump Tower.
All right, Bloomberg Politics reporter Kevin Cirilli, thank you very much, and we'll be right back. All right, it is Monday. When we look ahead to tomorrow, don't miss this. Coming out overnight, you've got China releasing its data for November industrial production. And don't miss this. Tomorrow is the start of a two-day Federal Reserve meeting to discuss what could be the first interest rate hike since last year, and certainly since it'll be the first meeting since the presidential election. Then on Wednesday, we'll have special coverage beginning at 1 p.m. on television and radio of the announcement itself. In the meantime, that is all for What You Missed. Thanks for watching. Have a great evening. This is Bloomberg.
I'm Nina Melendez, and you're watching Bloomberg Technology. Let's start with your Bloomberg First Word News. Goldman Sachs President Gary Cohn, once the heir apparent to CEO Lloyd Blankfein, has accepted the job as President-elect Donald Trump's chief economic policy advisor. That's according to the Trump transition team. The Kremlin is disputing claims that it used hacking to interfere with the presidential elections in Trump's favor. The press secretary to Vladimir Putin told reporters today that the allegations have, quote, nothing to do with reality. Trump and his team are also pushing back on the claims. A Brazilian soccer player who survived the deadly plane crash in Colombia has woken up from a coma after nearly 2 weeks. The player had no memory of the crash. According to his doctor, he wanted to know the outcome of the game. 71 people died, including 19 members of the soccer team. German Chancellor Angela Merkel disagrees with President-elect Donald Trump on China. In Berlin today, Merkel said she's standing by Germany's One China policy. Trump says his support for One China will depend on cutting a deal with the Chinese on trade. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Nina Melendez. This is Bloomberg. Bloomberg Technology is next.
Chang, and this is Bloomberg Technology. Coming up, after a rocky relationship with Silicon Valley, President-elect Trump invites tech leaders to meet this week. We'll see who's coming and who's not. Plus, my exclusive interview with investor, entrepreneur, and former Google Ventures CEO Bill Maris. He tells us why he pulled the plug on a new healthcare fund. And the CBS-Viacom deal collapses after Shari Redstone pulls her support for the deal. We find out what's next for the media giants. First, to our lead. A tech-focused meeting of the minds at Trump Tower. The president-elect sits down with top executives Wednesday who largely backed his campaign rival, Hillary Clinton, and spoke out adamantly against him. Among those attending, Amazon CEO Jeff Bezos, Facebook COO Sheryl Sandberg, Tesla and SpaceX CEO Elon Musk, as well as Cisco's Chuck Robbins, Oracle's Safra Catz, Google's Larry Page and Eric Schmidt, and Apple CEO Tim Cook. Now, the meeting is a chance for Silicon Valley to find some common ground with the new administration after clashing on key issues from immigration and trade to climate change and net neutrality. So what kind of reconciliation can we expect? Joining us now, a leading voice on the industry, longtime venture capitalist and GV founder, Bill Maris. Bill, great to have you back on the show. So I would love to be a fly on the wall at this meeting. What do you think is going to happen? Do you think there will be a reconciliation of sorts?
Oh, I don't know. I mean, it's hard to say with Trump what he will say or do, but I think I know almost all of the individuals who are reportedly attending, and they're all good people. I mean, Tim Cook in particular, super values-driven person, and I think it's good for people to talk rather than talk about each other, so I'm optimistic.
Do you have any concerns about Trump in the Oval Office?
I think it's a wake-up call for a lot of people, especially in Silicon Valley, who for once didn't get what they wanted, and to stop referring to the rest of the country as flyover country, and that there is a lot of things going on that Silicon Valley has been out of touch with.
Do you have any concerns about the state of Silicon Valley, the future of Silicon Valley, the future of innovation under Donald Trump?
I have concerns that are different from those. We were talking earlier, I learned that 62 people in the world control as much wealth as the poorest 4 billion. And that's stunning. They could fit in this room, and I probably know half of them. And that's down from almost 400 people 6 years ago. And so I think there are some real problems to talk about that are different than whether Silicon Valley will get along with the president.
Now, I know that you're close friends with Peter Thiel, who was sort of the lone Silicon Valley Trump supporter. How do you feel about his contrarian views having a potentially great influence on the president?
Peter's a friend. He's someone I respect a lot. I think he called it. He said the election was going to go this way, and I think he said for a couple years that people were unhappy and pessimistic, and I think we have a new president who was elected fair and square, and as an American, I think we should all want him to be successful. And so I've got great respect for Peter and his intellect, and do count him as a friend.
Has Peter asked you to help in any way? I know he's been trying to rally the troops.
If Peter asked me to help, I'd help him.
Anything you would like to contribute?
I'm just going to leave it at that.
Now, you did move your family outside of Silicon Valley down to San Diego, in part, as I understand it, because of a disillusionment with Silicon Valley culture. Can you explain that decision?
Yeah, there's a bubble here of a concentration of wealth, and on the flip side, a pursuit of innovation and disruption, which I think is really admirable. But it's easy to fall prey to that and be pulled into a vortex of kind of belly button gazing and self-interest. And I deliver Meals on Wheels, and when you go out and see real people who are not building apps, but who are hungry or alone, I think it puts you a little bit more in touch with the rest of the world.
So outside the vortex, there are still a large amount of people with great concern about a Trump presidency. The CIA has now told Congress that Russia not only tried to hack the election, but also hacked it to help Donald Trump. Trump has attacked the CIA for this revelation, if you will. What's your reaction to that?
Yeah, I haven't seen any evidence myself that the outcome would have been any different. Of course, no foreign power.
We don't know.
Well, no foreign power should interfere in our elections. So I think we can all agree on that. But at the end of the day, I think we should judge Trump on what he does rather than what he says, or certainly what other people say about him. And I think that's probably a good rule just in life for all of us to follow. And I think this news about the election is just breaking now, so it's hard to know exactly what happened and what didn't happen.
What about the idea that Rex Tillerson could be our Secretary of State, the CEO of Exxon, and someone with strong friendly ties to Russia and President Putin?
You know, again, he's not Secretary of State. Trump isn't president yet, and that hasn't happened. But ExxonMobil is a gigantic corporation and involves a lot of responsibility to run a company like that. And I wouldn't judge. I try not to corral people into what they can be as to what they have been. And I would rather wait and see, and proof's in the pudding. Okay,
so Trump has said that climate change is a hoax, and you are somebody that I know is very passionate about clean energy. The latest is that Rick Perry is the top candidate for energy secretary. Do you have any concerns about the future of clean energy?
Yeah, I have concerns. They go beyond that, but I think, Rick Perry, who I don't know personally, but the governor of a very large state, an energy-producing state, I don't think it's, again, he's not in the position yet. I don't even know if he's been officially picked.
It's not official.
Yeah, so it's probably not worth speculating too much, because part of the problem, I think, for me, has been turning everything into fantasy football and a sporting event and making judgments when nothing's happened yet.
Mm-hmm.
So I definitely have concerns and would like to see clean energy advance, but I think Bill Gates had a great announcement just in the last 24 hours about that.
Mm-hmm. In many ways, some of this stuff has not happened, but there's been a lot of tweeting going on. So
I think I'm not a tweeter. I don't look at Twitter. I think we'd probably all be healthier if that were the case.
Bill Gates, Jack Ma, Jeff Bezos, Vinod Khosla, John Doerr are now backing this new $1 billion clean energy fund. Do you think that this fund will actually move the needle in an area that has been slow to have big exits?
I hope so. There are people I all know. I know all of them, and I admire them. And I think Bill Gates, in particular, has a kind of amazing track record, especially in healthcare, of helping to rid the world of polio, on the way to hopefully doing the same with malaria. And if he can do in healthcare, if he can do in energy what he's done in healthcare, I think that'd be fantastic.
All right. Bill Maris, entrepreneur and investor, former GV CEO. We'll be right back with you after a quick break. On the latest tech funding board, Apple is said to have held talks about investing in SoftBank's $100 billion tech fund. This according to a person with knowledge of the discussions. Apple may contribute as much as $1 billion to the fund, which would give the company insight into up-and-coming technology. Apple also invested $1 billion in the ride-hailing giant Didi earlier this year, marking a major shift in strategy for the iPhone maker. SoftBank CEO Masayoshi Son told President-elect Trump last week that half of its $100 billion fund would be invested in the United States. And a reminder, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. A story we are watching. Online retail site ASOS is banking on its recent success with plans for expansion. Britain's largest online-only fashion retailer is going to double its UK manufacturing, hiring an additional 1,500 employees. A variety of departments will be hiring, including tech, marketing, and retail. Unlike many rivals, ASOS has benefited from the drop in the pound after the Brexit vote because about 57% of its sales are outside the UK. Turning back to our exclusive conversation, venture capitalist Bill Maris with me here in the studio. He founded Google Ventures, now known as GV, in 2009, where he oversaw investments in tech and life sciences. But he left in August of this year and was working on a new healthcare-focused fund to the tune of hundreds of millions of dollars. Then, last week, Maris pulled the plug. He joins us now to discuss why. So, why? You were on track to close this week and then said, actually, I'm not going to do this.
I did this crazy thing called changing my mind. It was it's wild, I know, but I did it. I left hundreds of millions of dollars behind, but I did it because I feel like there are a lot of venture funds right now in the Valley. Every couple days I see new announcements of new funds, and I felt like after 10 years in the business or close to it, there might be other ways to have a bigger impact on some of the problems that I think are worth tackling.
Now, I know initially it was a $300 to $500 million fund. Then there was a report it was $230 million. Did you have any trouble raising the funds that you wanted, or
this is no?
Was this really, your
this is yes. This is a time where there is tremendous capital available, especially if you have a track record, and that doesn't mean that it's the right thing to do. So the interest rates are low. People are looking for, institutions are looking for places to deploy money. Venture is one of those places, but it's almost overfunded. So it's almost peak VC, I would say.
Now, you also were planning to do this on your own, and I'm curious why. And if there are so many other funds out there, why couldn't you do it differently?
Yeah, I did that once, starting at a place called Google Ventures, and I think virtually everything I've done in my life, apart from having a child, I've done alone, or started it alone. And then I was fortunate to build an amazing team at Google Ventures, and I feel like they're doing an outstanding job. There's lots of great funds in the Valley, but there are real problems as well. There are funds out there that I can help, but I don't know that being a professional VC, that the world needs yet another venture fund right now.
So do you think we're in a bubble? Do you think we're at peak VC? Where are we?
I think we're in a huge bubble. I mean, I think the election is a testament to that. I think that there is almost too much capital available to investors, making too much capital available to entrepreneurs, which raises prices, which raises expectations, and there are a lot of people working on what I would think of as trivial problems as opposed to the real problems that the country faces.
What are the trivial problems?
Do we need another more optimized advertising system to further a consumer culture that's based around consumption of goods and services? There needs to be some balance, I think.
So how does this then play out? Is there some sort of catastrophe or disaster?
It depends how you define it. Maybe those are good things to happen. I think what happens is ultimately interest rates probably go up sometime soon. As a result, the stock market corrects anywhere from 1,000 to more points, and the pendulum will swing the other way. Capital will become harder to come by, and I think there will be an overreaction, and it will seem like Armageddon when it's not that. It's just part of the natural business cycle, and I think we're overdue for that kind of correction.
So who's headed for a wake-up call?
Oh, I think a lot of us got a wake-up call in November, but I think you'll see a lot of startups that were perhaps overfunded or overly optimistic not be able to raise future rounds.
Now, I'm curious about why you left Google, and I wonder, do you think that VC can't really be done from inside a big tech company very well?
Hopefully my last 10 years proves that it can be.
So you think that model works? There's nothing flawed about it?
I think it worked. I think my last day was August 12th, and beyond that, it's very difficult. Running a venture fund is very difficult. Doing it inside a massive corporation is also difficult. But it was successful. But I think creating the same model outside of Google, I'm not sure that didn't feel that inspiring at the end of the day, which is why I pulled the plug.
What do you make of some of the transition that we've been seeing inside Alphabet? You know, you're not the only head of an Alphabet company to leave. What should we make of that?
I think every big company has turnover. I mean, honestly, I can only speak for myself. I had a fantastic team of people who are all still there, and I wish them huge success because I'm an investor with them in a lot of companies.
But is this just the usual turnover, or is this, spawned by the arrival of Ruth Porat, a sort of cleaning of house?
I think it's interesting to go on a witch hunt or look for reasons, but as far as I'm concerned, Google is still full of fantastic people that want to do important things, and my team in particular, I think, feels that way. So I can't speak for the company at large, other than I had an amazing experience in a totally unique opportunity, and like anyone that was hired to do a job, you need to know when that job is done, and I felt like my job was done.
So what will you do next? Will you be angel investing?
I don't know. I will angel invest. I'll help funds and companies and colleagues that like I always have. But in terms of what the next big thing is, I think that's what the next few months are about, is taking a lot of calls and a lot of ideas and talking to people and seeing how I can help.
And just one last question. You were very vocal about Theranos and foresaw some of the problems there.
That's still a thing.
It's still a well, so my question is, what is the appetite for funding of healthcare-related startups in the wake of Theranos?
I've seen a huge increase in life science, interest in the life sciences, especially where machine learning and artificial intelligence can be applied to improve outcomes for patients. I think Theranos, whether it was in life sciences or not, is a really unfortunate story, and especially because it ended up hurting patients in the end. But it hasn't put a damper, as far as I've seen, on smart investors' appetite to help innovation.
All right. Bill Marius, entrepreneur and investor. We will be watching to see what you do next from San Diego.
Thank you.
Thanks so much for stopping by. Great to have you back on the show. Coming up, Advanced Micro Devices is trying to make up ground on rival NVIDIA. We will break down the chip maker's latest venture in AI next. This is Bloomberg. Skype is working to make language barriers a thing of the past. It is integrating a real-time translation feature for calls on mobile phones and landlines, making a conversation in 2 languages seamless. The feature is available on the latest beta of the Skype app, and users will need to pay credits to use the tool. Skype translation currently runs in 9 languages, including English, Spanish, Mandarin, German, and Arabic. Turning now to the chip industry, though, AMD is taking aim at rival NVIDIA. AMD will begin offering graphics chips tailored for artificial intelligence use in data centers. They'll do things like speed up computers' ability to train themselves and get better at things like image recognition. For more now, I want to bring in our Bloomberg Tech reporter, Ian King, who covers the major semiconductor companies. So in plain English, Ian, you say that AMD is trying to get into the business of recognizing your voice, sorting through pictures and other tasks that companies are increasingly trying to turn over to AI with these chips.
That's right.
So tell us about this.
Well, it turns out that the task you just said, translating things, as in Skype, recognizing the constituents of a picture, telling us whether it's a dog or a pig or whatever in that picture, building those things, doing things in parallel. A GPU, a graphics processor, is very good at that. Small tasks in parallel.
And this is a chip that normally games are built on, correct?
That's exactly it, yeah. So all of these kind of teenagers are living in their parents' basement and have got their gaming systems. They'll pay $1,000 for a graphics card because that gives it the most vivid image. Those are the chips that we're talking about. Those are the ones that are very good at this kind of task.
So what does this mean for a company like Intel, which don't they dominate in servers?
They have a 99.4% market share in servers. That's a $15 billion a year business for them. Turns out, though, that their chips aren't as good at that kind of parallel task, aren't as good at that multitasking, very good at complex things very quickly, but not in parallel.
But why has it taken so long for AMD to bring this kind of a product to market?
Well, you wind the clock back a couple of years ago and people thought that AMD was going out of business, that they were running out of money. They've brought loads and loads of chips to market that just weren't good enough, lost a lot of market share, ran up a lot of debt that they couldn't pay. So they were in trouble. So it's taken them a long time to get to the point where they were able to invest in technology again, and that's where we are now.
And how big is this market likely to get?
Yeah, I mean, that's the good question. Right now, NVIDIA is bringing in a few $100 million a quarter. NVIDIA is the other graphics chip maker. So that's a pretty good business. It's doubling year on year, so that's nice. But compared to what Intel's bringing in, $15 billion a year, not very much.
Now, you cover the entire chip industry. There's been so much M&A, so much action, companies falling behind, companies betting on new technology. So set the lay of the land for us in terms of who is in a position to really capitalize on the rise of AI, if indeed it's as big as many people think it will be.
Well, so far the big bet that investors have made has been in NVIDIA. This is who AMD is going after. Stock has more than doubled in the last 12 months, done really well. It's now a $40 billion company, and that's just on the promise of what AI might one day mean for people.
So who will be left behind, at least now as far as we can tell?
Well, that's, recently Intel made a lot of announcements about how they're going to try and change their technology lineup, bring in some outside technology that they've bought into what they've been doing. So obviously they're trying to respond. But like I say, it's theirs to lose right now.
In 2017, do you think we'll see more M&A? A lot of folks have been saying under Trump we'll see more M&A.
At this point, it's kind of hard to look at, well, who's left to buy and who's left to make those purchases, because pretty much everybody has either been bought or sold at this point. However, one thing under Trump is that freedom from the regulation is something that some of the bankers are betting on, that there'll be less restrictions on M&A going on, so that might provoke another round.
All right. Ian King, who covers chips for us, Bloomberg Tech, thanks so much for giving us that update. Coming up, how venture capitalists are preparing for a Trump presidency and where they're placing their bets in 2017. Megan Quinn, general partner at Spark Capital, joins us next. And be sure to watch Bloomberg Tech this Tuesday. Gary Liu will be joining me next, leading the South China Morning Post, now owned by Alibaba. Plus, Michael Beckerman, CEO of the Internet Association. He will be going to that highly anticipated meeting of tech leaders and President-elect Trump on Wednesday. He'll tell us what he expects and what he'll say. This is Bloomberg.
I'm Nina Melendez, and you're watching Bloomberg Technology. Let's begin with your first word news. The European Union will this week set out how it will conduct Brexit negotiations with the UK. According to a statement, EU governments will be asked to, quote, proceed swiftly with the talks. That will occur once British Prime Minister Theresa May triggers Article 50 to formally start the withdrawal. A manhunt is underway in France for 4 thieves who have stolen more than $1 million in gold from an armored truck. The thieves then set the truck on fire near Lyon. Police say the 2 drivers were rescued. Senate Majority Leader Mitch McConnell says he has the, quote, highest confidence in the intelligence community. This after President-elect Donald Trump attacked the CIA over its reported conclusion that Russia used cyber meddling to help him win the presidency. McConnell says Senate intelligence panels will investigate the findings. And President Obama will lease office space at World Wildlife Fund headquarters in Washington. That's according to the Washington Post. The building is located in the northwestern section of D.C. called Foggy Bottom. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Nina Melendez. This is Bloomberg. It's just after 5:30 p.m. Monday here in New York, 9:30 Tuesday morning in Sydney. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Good morning, Nina. New Zealand's been trading for 90 minutes now, the only market open, and it's looking flat at the moment, although that's better than can be said for the futures markets at the moment. Nikkei futures are pointing lower, and futures on the ASX are expected, we're expecting a decline of 0.4% when trading gets underway in Australia in the next 30 minutes. We'll keep an eye on energy stocks, however, on the ASX today. They led the way on Monday, and a further 2% boost to the oil price overnight could mean another good day for energy stocks. Saudi Arabia is intending to cut production further than originally promised. Iron ore prices have also pushed to their highest in more than 2 years. However, stockpiles at Chinese ports have also reached their highest in 2 years. So Port Hedland shipments were up 10% in November out of Australia, so the iron ore really piling up in China now. Citi and Barclays are both warning of price falls for iron ore in 2017. Plenty of data out today as well. Here in Australia, we have third quarter house prices and National Australia Bank's business confidence survey for November. And over in China, we're going to have retail sales for November, estimated 10.2% on-year growth there. And China's industrial production for November, that's expected to hold steady at 6.1%. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Silicon Valley leaders head to New York Wednesday to meet with President-elect Trump. Many who backed his rival Hillary Clinton and didn't hold back their disdain for him. The meeting will be a chance for leaders to find common ground with the new administration after clashing on key issues. One key question is what Trump's presidency will mean for global tech investment and how venture capitalists should be preparing for the coming years. Here with us now, Megan Quinn, general partner at Spark Capital, who knows the investment landscape all too well. Spark has invested in companies like Twitter, Oculus, and Slack. Megan, great to have you here on the show.
Thanks for having me.
So what do you think a Trump presidency means for Silicon Valley, and how are you guys talking about this internally?
So if there's anything we know about Donald Trump is that there's a lot of uncertainty that follows him. And there's been a lot of discussion around this meeting tomorrow that's going to take place with various technology leaders. My view is that these people are extremely accomplished, very smart, very successful people I hold in extraordinary high regard. And we need to surround the presidency and the cabinet with more folks who are smart and innovative thinkers.
What do you hope they convey?
I hope that they're able to find some common ground around innovation. I don't know that there's going to be specific topics that they get to the bottom of in an hour-long meeting, but I hope that they open up a dialogue between the president and Silicon Valley.
Now, how are you digesting this at Spark? What are you telling your portfolio companies? There's, a lot of uncertainty. I mean, the markets have reacted positively in some ways, but not others. There's a lot of wait and see.
Yeah, I mean, as a partnership, we're a collection of individuals with our own viewpoints. So we've all been internalizing this very personally. But in terms of what we advise our portfolio companies, it's really to keep on keeping on, to keep with the basics, build great companies, focus on hiring amazing people, focus on building great products and businesses, and really focus on your business.
Now, you used to work at Kleiner Perkins. You focused on earlier stage.
Right.
Now you're with the growth fund. And I'm curious, what is the difference when you're looking at growth stage companies versus early stage companies, and how has your own strategy shifted?
Right. We really talk about inflection investing at Spark on our growth fund. What we're looking for is companies that have already found product market fit and just need to pour gasoline on the fire to really become very, very big, iconic companies. So we're looking for metrics that we can point to without having to squint too hard that indicate that inflection point has taken place. And that can be revenue, but it can also be users or engagement of users.
Do you think there'll be more competition at the growth stage now that the belt seems to be tightening at the earlier stage, and it seems like a fewer number of companies are getting a larger pool of capital?
I mean, there's certainly a tremendous amount of capital available, and no surprise, everyone's capital is green. But we think that there is a dearth of really wonderful investors who can add value to portfolio companies at that growth stage.
Bill Maris was just on and said he thinks we're in a huge bubble. We're at peak VC. It's going to get bad for a lot of people. What's your reaction to that?
We think if you're building an incredible company, that there's going to be plenty of capital for you, but the choice is really going to be around finding a partner that's good for your business, not just blank checks wherever you can get them.
So you guys announced an investment today in a company called Pendo, $20 million. Spark is traditionally a consumer-focused firm, and this is an enterprise software startup. What do we make of that decision?
Absolutely, yes. So Spark has a long history investing in iconic consumer companies like Twitter and Oculus and Tumblr. But there's this trend that we are extremely excited about, and that is typically called the consumerization of the enterprise, but more simply put is really we expect as individuals for the products and services that we use at work to look and feel like the products and services we use at home. And that doesn't matter if we're behind a desk or if our office is behind a bar. We really want engaging products in the workforce. So what Pendo offers is a fully integrated platform for enterprise companies to build better products for their end consumers.
So what I find interesting about this company is they're based in Raleigh, North Carolina, of all places. Talk about getting outside the vortex. Are you looking beyond Silicon Valley more often now to find those diamonds in the rough?
We are always happy to get on a plane. I have the personal view that building a company outside perhaps of the Bay Area bubble is actually a competitive advantage. They sit at the intersection of three very famous, very well-known universities and have incredible access to talent at much cheaper cost. So we consider that a positive when it comes to investing in a place like Raleigh.
So where are you looking in 2017? Where do you see yourself placing your bets? Given the uncertainty and the climate right now?
We are definitely going to ride out this macro shift towards more consumer-feeling products in the workplace. We've already invested in Slack, we invested in Trello, we invested in Mark 43, and now Pendo. But we think there's tremendous opportunity to bring really compelling, engaging, delightful products to the workplace. In addition, and we tend to be founder-driven by trend, we are excited about applied AI. Historically, AI, machine learning development has been relegated to R&D departments. We're actually starting to see it integrated into products and services that consumers use. An example might be credit and risk scoring, whereas previously static heuristics, and now with vast amounts of data, these algorithms can learn over time. And we're also excited personally about VR and AR in the enterprise. My contrarian view is that we might actually see more adoption in the enterprise for these services than in consumer life, perhaps outside of really hardcore gaming. It might actually follow the path of a PC.
Interesting. Now, you're Spark's first female partner. And I know you're very passionate about this issue of diversity in Silicon Valley, in VC, and I'm curious, what do you think it's going to take to see actual change? Where do you think the challenges still lie?
So my view is that you can't be what you can't see. And that the reason that I am a general partner at a venture firm today, a very well-regarded one, is because I had a woman general partner on my board in my previous role as head of products at Square, and that was Mary Meeker. And she stood up as someone who I could be like, and I think we need to have more women in senior positions so that the next generations understand that there are more opportunities for them in their career paths.
All right, Megan Quinn, general partner, Spark Capital, thank you so much for joining us today. Great to have you. One disclosure I do want to note, Megan is a board member at the company Handshake, where my husband currently works. Now, two top Republican lawmakers offered strong support for U.S. intelligence officials Monday, in sharp contrast to President-elect Trump, who disputed CIA reports that found the Russian government interfered in the election and actively tried to help him win. Senate Majority Leader Mitch McConnell and House Speaker Paul Ryan both praised intelligence agencies for taking on cyber threats from foreign governments. The Kremlin also disputes the U.S. intelligence claims. The press secretary to Vladimir Putin told reporters today that the allegations have, quote, nothing to do with reality. Trump and his team are pushing back on the claims as well. Coming up, Viacom and CBS walk away from a potential deal. Meantime, Tencent is looking to fund China's blockbuster boom. From Hollywood to Hong Kong, we're covering the developing stories in global media. This is Bloomberg. The Golden Globe nominations were announced today, but streaming networks appear to be losing their luster. Netflix scored 5 nominations thanks to The Crown and Stranger Things, but that is the lowest number it's received since entering the awards race 3 years ago. Meantime, Amazon Studios nabbed 5 nominations despite a dramatic increase in the number of original series on the Prime Video platform. And staying with new media and turning to the mega deal that wasn't. Merger talks between Viacom and CBS broke down, with Sherry Redstone pulling the plug on the deal. And as a result, Robert Bakish's role as CEO of Viacom is now a permanent position, leaving him in charge of the company's turnaround. Lucas Shaw has been covering this for Bloomberg News, joins us now here from LA with more. So, Lucas, first of all, this company has been through whiplash over the last several months. What does Bakish bring to the table?
He brings some measure of stability. He's been at Viacom for a long time, but was not part of kind of the cabal leadership of Philippe Dauman and Tom Dooley. He ran their international business for about the last decade, so he's got a big priority there, and he thinks that he can apply some of what he's learned there to energize the U.S. business. I think most people at Viacom who've just been suffering throughout the year as there seems to be reading new news about their company in the press every week or so will be very happy if this means that all this turmoil is over. That's not guaranteed, but it would seem like for now we have reached a status quo.
So it seems like the deal fell apart because of a classic power struggle between Sherry Redstone and Les Moonves. How do you see it?
I'd say that there was definitely a negotiation that happened between the two of them. How much of it was a power struggle is unclear. Most of the people I spoke with today said that it broke down more over price than over governance. You know, Les Moonves did want some assurances that if he was going to run a combined company that he'd have a great deal of control, more control than he even has at CBS. People say that he was going to get that. But, you know, as time went by, Shari Redstone became increasingly comfortable with the idea of Viacom as a standalone company. Bob Bakish convinced her that he could make it more valuable. And as she got more comfortable with that idea, the chances of Les Moonves getting a discount for Viacom or getting it at a low price went down. And they could never come to terms that either side were comfortable with.
Now, there are reports of interest from other companies for CBS, including Verizon. What do you know?
Not much on that front. I mean, sources are saying that Verizon probably doesn't want to buy CBS, and I don't know that CBS is a willing seller right now. You know, CBS is a very streamlined company. It's something that down the road could be merged with something, could be sold to someone. Les Moonves is, you know, well into his 60s. He may want to sell to someone, but there are no talks happening right now. I mean, there were people this morning who were surprised by Shari's move. That letter came sort of out of nowhere.
So let's talk a little bit more about Bakish's strategy for Viacom. You know, we're talking about running properties like MTV, Nickelodeon, Comedy Central. What do we know about his plans to turn the company around?
I think you've seen a bunch of leadership changes at the different networks already. MTV got a new boss a couple of months ago. Paramount, the movie studio, just got a new COO. Comedy Central had a leadership change relatively recently, and he's going to try and make sure that all of those divisions have a strategy for how they're going to turn themselves around. I think since taking over, he's assembled different leadership committees to try and discuss what is the plan for MTV, what is the plan for Comedy Central. Everybody involved knows what the pressure points are. There just hasn't been an effective means of turning them around. What the specifics are on those plans will probably come out over the next weeks and months.
All right. Lucas Shaw, our Bloomberg News media reporter in LA, thanks so much for bringing us that update. Staying now with media, Asia's largest internet company, Tencent, is gearing up for a major push into Hollywood. The company's film unit is looking to make its own blockbusters instead of just writing checks for them. It's also working with some of the industry's top talent to increase the presence of Chinese culture on the big screen. Joining us now, Bloomberg's Lulu Chen in Hong Kong, who covers Tencent. So why, Lulu, is Tencent hunting for acquisitions in Hollywood?
Like you said, Emily, Tencent not only wants to write the check, they also want to write the script for Hollywood movies. Acquisitions is just one of the ways to expedite their expansion plans. They are competing with Alibaba, with Wanda for a $10 billion market. And so by these acquisitions, potentially anything ranging from studios to creative production houses, they could expedite those plans. And Tencent said that they're very open to all kinds of possibilities, provided that those companies complement their own resources and the pricing is right.
So how open would the U.S. be to this in light of recent political developments, Trump's election, potentially increasing tension with the Chinese government?
Right. The U.S. and China relations are at a very tense time right now. We're seeing a lot of rhetoric and criticism saying that the U.S. needs to be more critical of these Chinese takeovers, especially with Trump criticizing China's trade and currency policies. Tencent is part of a group of companies, Alibaba, Wanda, that are looking into investing or already have invested into the U.S. Studios. For example, Alibaba investing in Steven Spielberg's Amblin Partners, and also Wanda buying Legendary. And we're going to see more criticism and pushback against this because movies are very powerful and they influence public opinion. So going forward, these companies could face some headwind.
What kind of genres do you think Tencent will focus on? And I mean, how will their strategy differ from what Alibaba is already doing and Wanda?
Well, Tencent's stronghold is in games. You see that they operate League of Legends. Already they've invested into Warcraft, also Kong Skull Island. So fanboys is the genre that they're targeting the most. Going forward, we'll continue to see some of this, a lot of fantasy adventure novels that are going to be adapted into movies. That said, they're not close to only investing in one type of movie.
All right. Fascinating. The race for Hollywood of Chinese tech titans. Lulu Chen of Bloomberg Technology joining us from Hong Kong. Thanks so much, Lulu. Coming up, Microsoft is taking a second shot at chatbots after shutting down its controversial bot Tay earlier this year. We will test the new bot Zoe and see if it's more polite than its predecessor. And remember, on Wednesday, be sure to watch our special coverage of the highly anticipated Fed decision that starts 1 p.m. in New York, 6 p.m. in London, 10 a.m. in San Francisco, right here on Bloomberg Television, also Bloomberg Radio and Bloomberg.com. This is Bloomberg. Instagram's live feature is coming to users in the U.S. in coming days. The live features will be in the stories section of the app, and the live videos won't be stored on your Instagram, meaning your followers can only see them while you're actually broadcasting. That move differentiates the app from its parent company, Facebook, which archives live streams on its platform. Instagram first announced its plans for live content in November. We'll be watching. Microsoft is testing a new chatbot named Zoe on the app Kik. The trial comes 9 months after the company shut down an earlier bot named Tay, amid controversy when users got it to tweet inappropriate remarks, very inappropriate. Our Bloomberg Tech reporter Alex Webb tried out the new bot Zoe to see if it's less potty-mouthed than its predecessor.
So a lot of people expect that the way you're going to interact with electronic devices in future will be in conversations with artificially intelligent bots. And Microsoft's first efforts in this with Tay slightly backfired when they created this racist, Nazi, expletive-spewing bot 9 months ago. Now they've quietly tried again. They haven't formally announced it, but they have this bot on the app Kik called Zoe, and well, we're going to try it out. So let's start with who is Barack Obama. What you got for us? No, I'm not talking about this with you, okay? It sounds like the sort of conversation when my parents at the dinner table when politics might come up. Maybe a more sort of intricate one. Should we get rid of the Electoral College? My boundaries were crossed pretty hard, so I'm out, and a little wavy hand. I hope that she's not completely abandoned me. One which is close to my heart, perhaps. Should Britain leave the EU? I've never been there, is her response to that. Well, she's missing out quite clearly. Everybody should go there, especially now with the pound so cheap. This one perhaps more personal to her herself. Of course, who is the CEO of Microsoft? It's Satya Nadella. I'm sure they are awesome, but we haven't met yet. Oh, goodness, I hope there's no program at Microsoft getting in trouble for that one. Final one for her then. Former Microsoft CEO Steve Ballmer. Do you like Steve Ballmer? Oh, well, that's quite a good one. Well, I know they're associated with the company that made me, so I'm excited to meet them. So I think that's quite an interesting takeaway. Her comments on Brits were not grossly offensive to me, and her comments on Steve Ballmer seemed to toe the company line.
Bloomberg Tech's Alex Webb there. All right, that does it for this edition of Bloomberg Technology. Be sure to watch Tuesday's show. Gary Liu will be joining me to discuss his position leading the South China Morning Post after leaving Dig, as well as Michael Beckerman, CEO of the Internet Association. As tech leaders attend a highly anticipated meeting with President-elect Trump, Beckerman will be advising them. And all episodes of Bloomberg Tech now live streaming on Twitter at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for today. We'll see you tomorrow. This is Bloomberg.
My name's Ashley.
Hello, Ashley. I am a socially intelligent robot.
Ashley Vance is going to the farthest corners of Earth.
This is the UFO. What am I going to find inside? You get Wi-Fi out here?
To find the mad scientists, the tech geniuses, and the dreamers of tomorrow.
It's about high-tech innovation and doing really, really clever things.
Hello, world. Friday on Bloomberg.
studios in New York City, this is Charlie Rose.
We began this evening with cybersecurity and the Obama administration. The president ordered a full review of Russia's election-related hacking. Lisa Monaco, the president's Homeland Security advisor, told reporters about the investigation on Friday morning. She said the report will be delivered before President Obama leaves office on January 20th. Senator John McCain also announced today that monitoring cybersecurity issues would be a significant focus of the Senate Armed Services Committee, which he will chair. Joining me now from Washington, Senator John McCain. Senator, thank you for joining us.
Thank you, Charlie.
Why are you making that announcement today?
Well, obviously, one of the issues, situations that has brought this situation to a boil is the allegations of Russian interfering not only in our elections, but in other elections around the world. That undermines, obviously, the fundamentals of democracy if they're able to succeed. But more importantly, Charlie, testimony before the committee by our military and civilian leaders in defense have all stated that cyber is one of the areas where we do not have an advantage over our potential adversaries. Not only don't have an advantage, in some instances, they have an advantage. And so these hearings will be focused on the overall issue of cybersecurity and obviously their ability or inability to affect the outcome of elections in democratic countries would certainly be one of the issues, but only one.
But you are saying that you're going to have your own investigation at the Armed Services Committee.
Yes, because my understanding, among other things, is that it's simply on whether they hacking into the just past election. By the way, the Chinese hacked into my election back in 1980, but this has got to be a broad and encompassing. We've already had hearings in the Armed Services Committee on this issue. We asked all of our military witnesses. Now we've got to really focus exactly on the encompassing aspects of a challenge, whether it be their ability to shut down our satellites or steal our most important secrets, such as our new weapon systems, or whether it is to be able to listen in on communications, or whether to be able to disrupt and destroy communications. There are some scenarios, my friend, and I'm only emphasizing scenarios, where they could shut down every satellite in space. So this is a huge challenge, and frankly, this administration has no policy as to how to prevent it, what to do in case of attack, and how to prepare for one.
Do you have any doubt that the Russians tried to interfere in the U.S. elections?
I don't know if it was an intentional interference, but I do know that some of the leaks that came out cannot be helpful to the political process. Now, I'll leave it to others, and I don't have sufficient information to make a judgment about the past election. But I can make a judgment that if they are able to disrupt communications and to pervert communications to the degree where the people who are making a determination as to how to vote is distorted or disrupted or destroyed, then obviously it's a big challenge to democracy, whether it be in the United States or any place else.
Do you believe that you have a different point of view than President-elect Trump on this, who has tended to downplay the idea that it might have been the Russians?
Every expert that I've talked to says it was the Russians, and that's unclassified. But everyone I've talked to said the Russians have played a very major role. But not just in elections, Charlie. They are every day bombarding some of our industrial bases, particularly the military-industrial complex. They are bombarding our communication systems. I mean, it's just a fact, is what they're doing. And they're the best at it. The Chinese are next, and then you have the everyday hacker that is also a significant challenge.
But we also have cybersecurity and cyber espionage capabilities. I assume that we're using them as well.
No, we're not. I'm sure we are to some degree, but we don't have a policy. Until a president of the United States sets a policy as to what you do and how you achieve it. For example, right now, if we think that there's an impending attack, there's no policy as to what to do. Once there is an attack, there is no policy as to what we do in response. And so there is really a lack of coherence from the executive branch. And our job is to lay out the scenario and enact legislation if necessary, and I'm sure some legislation will be necessary.
But you were saying that Mike Rogers, Admiral Mike Rogers, does not have a policy to respond to cybersecurity invasions.
Mike Rogers has testified before the Senate Armed Services Committee that there is no policy.
And coming out of the Armed Services Committee and your oversight capabilities and monitoring of cybersecurity will be a recommendation for legislative.
We will, not just a recommendation, we will enact legislation through the Senate Armed Services Committee, and I have received encouragement to address this situation by our Republican leadership.
Have you had any conversations with President-elect Trump about this?
No, I have not.
Should you?
I'd welcome a conversation with him on this and any other issue.
But you know very well the nominee to be Secretary of Defense.
I know him very well, and I have had conversations with General Mattis, a man I've known for the last, I'd argue, maybe 12, 15 years.
Your colleague and mutual friend, Lindsey Graham, and admirer, said, I'm going after Russia in every way you can go after Russia. I think they're one of the most destabilizing influences on the world stage. I think they did interfere with our elections, and I want Putin personally to pay the price.
Well, my friend Lindsey Graham is always shy and retiring and reticent, as you know.
No, he's not.
But I think the point is that we need to have that as part of our overall assessing of the situation, and not only what the situation is, but what we need to do in order to counter this threat to our national security. So that's a part of it. The Russians, according to most experts I talk to, are the leading offenders, but there's plenty of others too. The Chinese, some say that the latest Chinese aircraft has some alarmingly similar features of the F-35. So there's no doubt that a great deal of industrial espionage has taken place, not just by the Russians as well. So we need to develop an overall policy that not only applies to the Russians, but to every other nation and every other individual that might seek to harm this nation.
Even though they don't have a policy, you have underlined the fact you do not believe the administration has a policy. Lisa Monaco, who's in charge of this inside the White House, said, singled out Internet-related dangers as among the most significant national security issues facing the new administration.
Someone should ask Lisa Monaco, what is our policy if we detect an attack is coming to the United States? What is our response if there is an attack? And look at the whole scenario of how the United States of America responds to this threat. There is none.
But why wouldn't you, as chairman of the Senate Armed Services Committee, request a meeting with the president-elect to talk about this?
I promise you the best way to have that dialogue is to declare that there will be hearings and policy making and legislation coming out of the Senate Armed Services Committee. I promise you that will prompt a dialogue. And it's going to take some time, Charlie. It's not something that we're going to be able to do overnight.
Do you believe you have to turn the president-elect's understanding around on this? Because, I mean, basically what he said to Time Magazine, he said, I don't believe the Russians interfered with the election. It could be Russia, and it could be China, and it could be some guy in his home in New Jersey. I believe that it could have been Russia, and it could have been any one of many other people, sources or even individuals. That's what the president-elect said to Time Magazine.
Well, in some respects, he's right, that all of these are players that he mentioned. The problem is that he may not quite understand that the best at it and the most hostile and the ones who have probably had the most significant impact over a number of years are the Russians. They're the best at their job. Admiral Rogers has basically said the same thing. All these experts have said, our Director of National Intelligence has said it, that it's the Russians who are by far the most active in this kind of behavior, but it's not confined to Russia.
Senator McCain, I look forward to talking more about this. Thank you for joining us on Friday afternoon.
Thank you, Charlie.
See you soon. We continue now with Michael Isikoff of Yahoo News and David Sang of the New York Times. Both are from Washington. David Sang, I begin with you. Why did the president take this action today and order this investigation?
Well, Charlie, I think that there is a substantive reason and, from everything we can tell, a political reason. The substantive reason is that it has taken the intelligence community an extraordinarily long period of time to come to all of the major conclusions they've come to on the Russian effort to influence the election. And that's everything from the hacking of the DNC, the Democratic National Committee, and the release of those emails, to the scanning of registration data, though it looks like in the end they did not try to affect the actual voting process and machines. And then all of the other surroundings of this, because obviously the Russians have been hacking into many other American institutions for many years. And I think there's a serious question about why the United States was caught by such surprise here. And so I think substantively he wanted to force the intelligence community to come up with some lessons learned for future elections. But I think the political reason, Charlie, is even more fascinating, because President-elect Trump has been denying, first, that there was much effort to influence the election at all, and secondly, said he has no evidence that it's the Russians, while there is this flood of intelligence reports floating around the city suggesting that it was the Russians and who within Russia did it. So I think what the president is trying to do is force the intelligence community to put all of this down on paper, give it to congressional committees, perhaps make part of it public before President-elect Trump gets sworn in and is able to come in and say nothing happened here.
Michael, what would you add to that?
Yeah, I think David has it exactly right. If nothing else, this sort of boxes in President-elect Trump because to have, and I should point out that even today, the administration ratcheted up what it has said about the Russian role. Eric Schultz, in briefing reporters at the White House press briefing, said that it was high confidence that the intelligence community had that those cyber attacks on the DNC and other political organizations and political leaders were directed and at the highest levels of the Russian government. That's about as strong as you can get. The previous statement from the intelligence community was that it was confident. High confidence is a term of art. So in some ways, the administration is sort of throwing down the gauntlet saying, here it is, and that we're going to compile all this evidence and we're going to present it to you, the new administration. And this is coming the same week that Trump said in that Time magazine interview, he doesn't know if it was the Russians, maybe it was some guy in his house in New Jersey.
So here's the interesting point to me about this, and I want both of you to comment on it. Number one, Mike Pence has been getting, I guess, the intelligence briefings. Number two, the president-elect has been talking to the president with some frequency, if we understand what he is saying, that he's consulted with the president about the transition and about a range of other things. He's taken some pride that he likes the president so much and that he hopes the president likes him. But it's been a very productive session. You would have thought it would have come up in those conversations, and the President of the United States would have reminded him what this administration believes about the Russians hacking.
You would think. Schultz was pressed on that at the White House press briefing today, and said he's not going to give a readout on the conversations between the president and the president-elect. But it's hard to separate out those comments that Trump made, sort of dismissing the whole, what the intelligence community is saying, from the president's decision to make public this review today, and even, as I said before, ratchet up the level of confidence they have that they're right about this.
David, what would you say to that?
Well, I think what adds to the oddity here, Charlie, is that in addition to whatever briefings they've given to Vice President-elect Pence and whichever briefings President-elect Trump has taken, you've now seen a raft of Republicans, more traditional Republicans, step out and say, we need to hold hearings, we need independent commissions, we need to have more of these details come out in public. John McCain said the other day that he would hold hearings through the Armed Services Committee, not only of the hacks related to the election, but perhaps because it's the Armed Services Committee, the efforts of Russian intelligence to get inside U.S. military operations. Right. We know, of course, that the hacking that took place at the DNC and elsewhere was not the first effort by the Russians in recent times. There were hacks on the State Department, the White House, the Pentagon. So this fits into a broader context. And my guess is that if that conversation has taken place between President Obama and President-elect Trump, it's been in the context of there's a bigger Russian campaign out here, and you ignore it at your peril.
My impression is that the investigatory effort is being spearheaded by the FBI. Am I correct?
That's right. For the immediate DNC, John Podesta, so forth. But there's also been other members of the intelligence community who've been brought in.
Mike, you were going to say?
Yeah, no, that's the FBI took the lead on this throughout, but this is clearly going to encompass the entire intelligence community. And I should point out that probably the strongest public statement has come from Admiral Mike Rogers at the National Security Agency, who, although he didn't say Russia, made it all but clear, made it clear that he was referring to a nation state that tried to influence our election. And he said something even further, intending to affect that election. And that is probably the biggest open question here. What were the Russians, if indeed it was the Russians, what were they up to? What was their motive? Was it simply to destabilize and create confusion in the American politic, as they have done in many other countries, or was this a concerted effort to influence the results of the election, to help elect Donald Trump and defeat Hillary Clinton? And that is probably the biggest mystery about this. We don't know the answer.
But my impression is there any doubt that this would be taking place, if it is taking place to the degree that the administration and the various intelligence agencies believe it is, that it would be carried out without Putin's knowledge?
Everybody I've run into, and I don't know if Michael has a different view of this, everybody I have run into who is in senior levels of U.S. intelligence say it is inconceivable to them that somebody would take the risk of doing something this high profile that could draw a major response from the United States without clearing it first with the boss.
Yeah, and it is also true that, you know, the Russian intentions and goals here may have changed over time. That perhaps there was some initial, or when this began, it may have been an effort to help Trump. It may have been an effort. There's certainly indications that Putin and his top aides were not enthralled with Hillary Clinton. At some point, though, they may have read the polls the way everybody else did and assumed that Hillary Clinton was going to win, and they may have scaled back some of their activity. Although that's not entirely clear either. We don't know how. We know that they were in the DNC. They were hacking these emails at least through the summer and of 2016. It's still not clear how long it went on. There's some indications it may have continued for a little bit of time after that, and that's key. You know, did they? And also, I should point out that there was a lot of concern over the summer and fall about those probes of state election systems, which made people, that really rang alarm bells, suggesting they may have been trying to hack the election itself. And I think the administration has made clear that that didn't happen.
A couple of final questions. As soon as we had some evidence of that the hacking had taken place and the FBI jumped on this, my understanding is that the President of the United States, President Obama, said there would be a proportionate response. that they had, intelligence agencies had immediately dug into this from the FBI and the CIA and defense and other people, and that there was going to be a proportionate response. Has there been a response as far as we know?
Well, the main response we've seen so far, Charlie, has been some warnings to the Russians that President Obama gave directly when he last met President Putin in China. That was back in September. There have been some channels of communication elsewhere through the Secretary of Defense, Secretary of State, a warning even sent through a system that is used for both cyber and nuclear warning. But if there has been a punishment to a cost to President Putin for this, we haven't seen it. There haven't been sanctions. Maybe there's been some kind of covert effort, but if so, it's been pretty subtle. It was Joe Biden who said on one of the Sunday shows before the election, you know, Putin, we'll come after Putin, and he'll know it even if nobody else does. But so far, their evidence of that is pretty scarce.
Yeah, if I could point out, this became public today because Lisa Monaco, who's the president's Homeland advisor, did a breakfast with reporters, and she started with an overview about threats to the country, threats to the homeland, and talked about the cyber threat, and said when there are cyber attacks that threaten American interests, we'll act to protect our interests as well as impose costs. I then asked her later in that breakfast session if the U.S. government has taken or will be taking steps to impose costs on the Russians as a result of these cyber attacks, and she didn't answer that question.
Yeah, so it could have been subverted. And somebody once said to me in the intelligence committee after the Russians were accused of doing this, that the response, the proportionate response, would be something that would be done so that Putin knew what it was about, but it would look for credibility within Russia, so it would not be done with a lot of bells and soundings.
That's right, Charlie, but there's a risk to that as well. I mean, there's always a temptation, let's keep it quiet and in the family, and everybody will get their signaling. But one of the biggest problems in cyber, as we've discussed on past shows, is establishing some sense of deterrence. It does not exist in the cyber realm the way it does in nuclear. And so if you're going to establish deterrence, you have to have a pretty public response so that if the next time it's not the Russians, but instead the North Koreans or the Iranians or the Chinese or somebody else we're not thinking of, they understand that this isn't a free fire zone.
David, thank you so much. Michael, thank you.
Thank you.
Back in a moment. Stay with us. We now turn to the latest news from the Trump transition. We're joined by Major Garrett of CBS News, who's been covering not only the Trump campaign, but also the Trump transition. Major, Rudy Giuliani says that on late November, he withdrew his name from consideration. Give us some sense of what was going on there.
Rudy Giuliani, Charlie, as you well know, appreciates opera. He is an operatic character, if you will, in the Trump transition. He endorsed Donald Trump right before the New York primary in April and became his most aggressive and most deeply loved, because I saw this so many times on the campaign trail, surrogate for Donald Trump. And he's the odd man out, spectacularly the odd man out in the Trump transition. It is almost inconceivable to some within the Trump transition that Rudy Giuliani would not find a place within the Trump cabinet. That's partly related to Trump's own instincts, but it's also related to Giuliani's missteps. Trump offered Giuliani the position of Attorney General and Homeland Security. Giuliani turned him down. Sources very close to the transition tell me. Focusing entirely on Secretary of State, a position he wanted and coveted, but in the end, Trump would not give him. Giuliani sensed that, pulled himself out before suffering the indignity sometime next week of someone else getting that slot. So in every way, this deeply important American political figure who revolutionized New York City and who was the biggest, if not most conspicuous, exponent of the Trump approach to the presidency will be left on the sidelines. It's an amazing story.
So who is left in the running for Secretary of State?
I am told by those closest to the process, there are only two. really legitimate figures who may get the position of Secretary of State. Mitt Romney and the CEO, president, and chairman of the board of ExxonMobil, Rex Tillerson.
Tillerson brings what?
Tillerson brings for Trump a couple of things that you may not associate with the position of Secretary of State. He has no government experience. He's not a trained Foreign Service diplomat by any stretch of the imagination. But he is a big American businessman, a corporate chieftain who has done deals. And because ExxonMobil operates in more than 50 countries, it explores for oil and natural gas in 6 of the 7 continents on the earth. He has, if you will, a corporate worldview. He has experience with lots of different governments. And possibly most important, Charlie, he has long experience in Russia and with Vladimir Putin. They knew each other way back when, in the 1990s, when Putin was a KGB functionary in the government of Boris Yeltsin. They got to know each other then. And if you are looking for an analogy, look for the Chinese ambassador for President Trump, Terry Branstad, currently the governor of Iowa, who got to know Xi Jinping, the current head of China, when he was a functionary in the Chinese bureaucracy. If you looked at that as a template, you might see Rex Tillerson as someone particularly amenable to President-elect Trump's worldview.
It's clear, though, that the president has whatever differences there were with Mitt Romney, whatever was said by both men about each other in the campaign, that they've worked their way through that. And that this now is a conversation, which is a positive conversation about the difficult process of selecting a Secretary of State. On the one hand, a man who has to make the decision for the benefit of the country. On the other hand, a man who has his own integrity and does not and is prepared to go to work for a man that he was deeply critical of during the campaign.
Wherever this lands, if Mitt Romney becomes or does not become Secretary of State, what he leaves the process with is a different appreciation of Donald Trump, and importantly to Mitt Romney, a different appreciation of Donald Trump of Mitt Romney, just as Donald Trump has a different appreciation now of the current president, Barack Obama. Charlie, I attended more than 70 Donald Trump rallies. There was not one scintilla of appreciation of Barack Obama, the president, the man, or American figure in history. Donald Trump now has all 3 of those things: a deep appreciation of Barack Obama, the president, the man as a figure in American history. So there is the potential of evolution with President-elect Trump. He's evolved with Mitt Romney. These are serious conversations. Mitt Romney is in the final 2 of an exhaustive list, an ever-expanding list of potential secretaries of state. And if he lands it, it will be among the most fascinating stories of the Trump transition.
You know what's interesting to me? I mean, so much was said about temperament and being fit for the presidency. Yet with respect to Romney, with respect to Obama, the president-elect is reflecting a very adult behavior.
It's an adult behavior, but it's also a behavior I would, if cautiously, Charlie, suggest to you is also one in awe. And perhaps that's appropriate. The presidency, I've covered 3 American presidents. I've read a good deal about those who came before the 3 I was privileged enough to cover. It is an enormously important institution. It is, in its own sense, an awe-inspiring institution. And I think one of the things that is important for the American body of mind, the American culture to appreciate about Donald Trump is that in some levels he is awed by the institution and awed by those who have pursued it and those who have achieved it. Mitt Romney and President Obama fall into both categories. And in ways perhaps surprising to himself, Donald Trump has come to appreciate that.
Yeah, he really is, in everything we know about him, a man who admires success and feeds on winning. Let's talk about the idea of how he does it. This idea of a man who, far more than Barack Obama, far more than George Bush, 43, George W. Bush, has thrown himself into this process, has interviewed people, is on the phone constantly, whereas the impression I have is that the selection by other presidents was much more a product of a transition team and much more product of clearly involvement by the president-elect, but much more the involvement of a team, whereas this president wants to touch and talk to and get a personal sense of the men and women he wants to serve.
Exactly, and I think it's far, far too early Charlie, to offer an appraisal of this approach that is either positive or negative. I think the country and those of us obligated to cover this process as it unfolds before us need to take it step by step and judge it as the results speak for themselves. Remember, Jimmy Carter was a president who was deeply involved in the day-to-day and hour-by-hour details of his presidency, and it bogged him down. It separated himself from the larger vision. So there is a danger involved in that kind of involvement, and yet we tend to appreciate someone who has an appreciation for details, an appreciation for evaluating someone at the personal gut level. If I've learned anything about President-elect Trump in my 18 or so months covering him, is that he makes very important and crucial snap judgments about people by appraising them himself and not getting it filtered by those around him. That's an important characteristic of an emerging Trump presidency. But I'm not going to give you an evaluation, Charlie, whether that's going to be successful or not successful. It just is a reality.
Major Garrett, thank you so much for joining us. It's a pleasure.
Charlie, thank you.
We'll be right back. Philip Rucker of The Washington Post. Stay with us. More on this weekend about the transition of President-elect Donald Trump. We turn to Philip Rucker of The Washington Post. The Giuliani announcement, I had heard before that Giuliani was out of the running. Is this simply today's announcement to make that clear that this possible nominee withdrew himself because of his enormous contribution to the Trump campaign?
I think that's right. I think President-elect Trump was giving Giuliani a big favor with this announcement. He not only made the official word that Giuliani was withdrawing himself from any administration job, but Reince Priebus, the incoming White House chief of staff, stated in a quote on this announcement that Rudy Giuliani was vetted thoroughly by the Trump team and passed with flying colors. Those were Mr. Priebus's words. So it clears Rudy Giuliani of any rumors about whether he might have been passed over for Secretary of State. But, Charlie, I think your reporting is correct. It matches with my reporting over the last few weeks, which is that Rudy Giuliani was really fading in the view of Donald Trump.
Do we know whether he could have been Attorney General if he had not ruled that out and insisted on being Secretary of State?
That's a great question. I don't know for sure. I think if he had been open to Attorney General, certainly there would have been some discussion about whether Jeff Sessions should get it or Rudy Giuliani. So, you know, potentially he could have gotten himself a job there. I think Trump imagined Giuliani more as a better fit as Attorney General or even Department of Homeland Security. But Giuliani was insistent from the beginning that state was all he wanted.
Yeah, and he could have held for, and he could have promised Sessions a Supreme Court appointment or something like that.
Exactly.
Which would have been entirely within sort of the kind of thing that he might want because of his life within, you know, the judicial process, both in terms of law enforcement, also in terms of judging. Let me turn to the Secretary of State. What do we know?
Well, we know that there are two people considered leading candidates right now. Mitt Romney, who has been a candidate for some time, and a new figure, Rex Tillerson. He's the CEO of ExxonMobil. He's an international business executive, a real corporate leader who's done a lot of work around the world because of his role in the oil industry, and including with Russia. He has relationships with the Putin government and has been around the world. He'd be a very different kind of Secretary of State than someone like Mitt Romney, who might be a more traditional patrician political type figure in that diplomatic post. Both of them are well liked by Donald Trump. There are political considerations, of course. Trump's supporters, a lot of them are pretty hostile to the idea of Mitt Romney, of rewarding a former antagonist who was not loyal on the campaign. And then with Tillerson, he's more of an unknown. I don't know what that confirmation process would look like. I don't know whether senators like John McCain and Lindsey Graham would scrutinize his ties and relationships with Russia, for example.
Take us inside the Trump transition team. I mean, who's on what side and how are they lining up and what are the conflicts between different groups?
Well, there are different perspectives on Secretary of State. This has been going on for some time now, really for about a month, this discussion about who the diplomat should be. And Mike Pence is said to have been encouraging of the Romney possibility. Same with Reince Priebus. Both of them have relationships with Romney. They fit in more with the party establishment. And there are other advisors inside that circle, especially Kellyanne Conway, who've been very hostile to the idea of Romney. And I think that's why Tillerson has emerged. He is somebody who matches matches some of the qualities that Trump likes in Romney. He likes that Romney's patrician, that he has a certain kind of stature and gravitas and can travel the world with the authority of a president. And Tillerson is seen as someone who carries himself in a similar way, and I think when he came to meet with Trump this week at Trump Tower, he was very impressive. They had a good conversation. That's what people are saying who know, and so those are the qualities Trump is looking for in a diplomat. It's really, at this point, a political calculation of whether he goes with a Romney, who's more of the party insider, at the risk of alienating his loyal base and his loyal advisors, or going with somebody new like Tillerson.
Is there much pushback to the president-elect because he's seeing Al Gore, because he constantly praises the president?
You know, not within the transition team that I've heard of. And I think a lot of his voters are trying to give him the benefit of the doubt here. You know, it's one thing to have a meeting with Al Gore because your daughter tried to set up a meeting and you listen to what the guy has to say. It's a totally another thing to change your view on the policies. And by all accounts, Trump is as far to the right on these climate environmental issues as he can be. He just appointed Pruitt, the Attorney General from Oklahoma, to be the head of the EPA. That's a pretty far-right pick in that space. So it's pretty clear whatever Al Gore told Trump in that meeting, he's not really heeding that counsel.
What might we learn about how President-elect Trump will govern based on how he is running the transition?
Well, he's very hands-on. As you guys were talking about in the earlier segment, he is interviewing all of these people personally. He is weighing in on them personally. He's making gut assessments about whether they would be a good fit in his cabinet, whether they have sort of the leadership strength that he's looking for. He's been really drawn to alphas, to leaders, to people who are either CEOs in the corporate world or military generals. He's not looking at academics. He's not looking at policy minds and folks who've spent years reading books about things. He wants people who've been in the real world commanding employees or troops and making decisions that have impact on markets, on people's lives, on global affairs. So that's the approach he's taking to governing. The big question mark, I think, at this point is what the policies are going to look like. We know a lot about the composition of the leadership of the administration. We know very little about what kind of policies they're actually going to move forward with after the inauguration. There is a policy team in Washington developing an agenda for the first 100 days, but those details have not been fully released publicly.
But the president-elect has talked about some of his primary priorities in terms of immigration, in terms of trade, in terms of tax reform.
Of course. We just don't know the specific details of that, sort of what the timeline will be like, which things he's going to do first, second, third, fourth, and so forth, and what some of those deals with Congress might look like. There are a lot of details to fill in here.
What role is Steve Bannon playing?
He's playing a very influential role. He's with the president-elect almost every day, weighing in on a lot of these appointments. My understanding is that he's making his views heard on some of these big jobs, certainly Secretary of State and some of the others. You know, they're not quite as involved at this point in the smaller jobs and sort of who's filling in the deputy, the undersecretaries, the assistant secretaries at the agencies. They've also not yet announced senior White House staff positions beyond Reince Priebus and Steve Bannon and the White House counsel. So there's going to be some give and pull between Bannon and Priebus and others on the team about who fills in those jobs. Who is the White House press secretary, for example? Who are going to be the deputy chiefs of staff? Who's going to be the liaison with Congress? Who's going to be in Vice President-elect Pence's office? And another big job is the Republican National Committee chairmanship. That is a job that Reince Priebus is vacating. It's really going to be the political arm of the Trump White House. It's going to be where the Trump re-election campaign starts to take shape early on, and there are a lot of different candidates in the mix for that. We're hearing that the leading contender seems to be Ronna Romney McDaniel, who is an establishment figure very close to Reince Priebus. She's currently the chairwoman of the Michigan Republican Party, of course a very important state for Donald Trump and his electoral victory, but he's not yet made a final decision as far as I know.
Is it an accurate statement of what seems to be the impression that while Donald Trump is urged not to tweet as much as he does, it's irresistible for him?
I think so. It's a great question. He's indicated certainly that he's going to continue making his views known on Twitter. He's been doing it almost every day here since he's been president-elect, and plans to continue into the White House. There's been some suggestion from some of his aides that perhaps he would back off of Twitter, and one person even mentioned maybe Secret Service would have something to say about that. But I think if he is able to tweet, he will tweet. He wants to communicate directly with the American people. That's what we've been seeing throughout the campaign and during this transition, and he really wants to do everything he can to break through what he sees as a press filter and just speak directly to people. So that's Twitter, that's rallies, that's doing call-ins on radio, doing videos on his YouTube page, and so forth.
Phil, thank you so much for joining us. Have a great weekend.
Thank you. You too.
We'll be right back. Stay with us. As it has annually since 1927, Time magazine announced its Person of the Year this week. This time, it's the individual who, for better or worse, had the most influence on the events of the year. President-elect Donald Trump might be the obvious choice, but the nation remains divided over why. With me is Nancy Gibbs. She's the managing editor of Time. I'm pleased to have her back at this table. You've always framed this as the person who has the most influence. Yes. It is not the most popular. It is not anything other than the most influence. This is a slam dunk, isn't it?
It is, although what's interesting to me is the whole thing is who has had the most influence on the year, for better or worse. Right. And there's what, seems like universal agreement that he had the most influence and disagreement over whether it was for better or for worse. And this is one of the things that we really looked at is every presidential election. We named Barack Obama 4 years ago and 8 years ago. We named George W. Bush 12 years ago and 16 years ago. In presidential election years, it would be a little unusual for someone other than the newly elected president to have been the dominant figure that year. And in any presidential year, the country is divided. Roughly half the country votes for one and for the other. There is something that feels different this year, at least from where I sit, of the level of surprise at the outcome, which just speaks to how many people who were meant to be, the experts and the data analysts and the pollsters didn't see his victory coming, and the reaction since then that. Even when you think about Bush and Gore in 2000 with the extraordinary 5-week-long denouement of that drama, even that one didn't feel as dramatic and as fraught as this one. And that's a lot of the challenge that the president-elect, I think, faces. He talks about wanting to bring the country together. I think even he acknowledges that represents a pretty significant challenge.
He certainly was pleased by the decision, wasn't he?
He was, and it's complicated for us that he talks about it as an honor, and we have run into that for years, that, it sounds like the kinds of things that people honor people with at the end of the year, and we always have said, look, this is a measure of influence. Last year, we picked Angela Merkel, right, who's, on the one hand, who's the position that she took, particularly on the refugee crisis, but also on the Eurozone and on the economic policy in Europe, made her a pretty divisive figure as well. She, was by no means universally admired.
And she suffered politically, even though she's announced she's going to run for re-election. Right. She's up for re-election. We'll have a new president in France. We'll have some change going on in Italy. The Netherlands, I think, has an election. We just saw an election in Austria. I mean, the whole idea. I mean, if I thought of any other thing other than Trump, and Trump would seem to me to be obvious this particular year, because it is, you have framed the question, would be populism as an idea.
And, we have a story about the rise of the populists around the world, and, Nigel Farage and Duterte in the Philippines and others. But one of the reasons why we weren't even tempted to do a group, which I never like to do anyway if I can avoid it, is what's remarkable about Donald Trump that we have not seen before is somebody who comes in and defies all expectations, breaks all the rules, shatters every sort of norm and convention for how you run for president, defeated not one but both major political parties on his way to winning, and
defeated two dynasties.
Defeated the two reigning dynasties. And did it with largely based on his own instincts, not a huge cadre of political advisors and pollsters, not with the help of the Republican Party infrastructure in particular, or the donor class. The enormous army of people who are usually around a winning presidential candidate and taking some responsibility for the victory. There's nothing like this in Donald Trump's case. He has, this small coterie of advisors, and he has his kids, and it's him. And
so, therefore, is this a transformative election in terms of the way people win the presidency?
I think there are a million fascinating questions for journalists coming out of this, one of which will be, do we see other politicians trying to copy his model, and can they? It's possible that he was unique in the ability to accomplish what he did. I think of the many things about the 2016 race that was unprecedented, we had two candidates who went into it with probably 100% name recognition. It's easy to forget that Donald Trump had been a very familiar figure in millions of people's living rooms from his television career, quite apart from his life as a real estate baron and casino owner.
And his
people felt like and his self-promotion, which was central to his brand. People felt that they knew him. They liked him, they hated him, they felt that they knew what he was about from the beginning. So that's hard for someone else to replicate, I think.
Also, and I've thought about this more recently than I did before, certainly before the election, is that, and he may have understood this, in terms of the winning of the presidency, the disruptiveness of the way he ran his campaign, the language that he used, the attacks on other people, was for his sense that it made him be perceived by his people who were enthusiastic about him as a leader, and B, as a strong leader. That was part of how he viewed the disruption, that it was necessary to overcome the challenge he had to achieve.
And, the subtext of it, whatever outrageous or controversial thing he was saying, the subtext was, this is someone who is willing to say controversial things. And so, even on Election Day, even as he ended up winning, the Electoral College vote, certainly, 6 out of 10 voters don't think he has the judgment and the temperament to be president. And
only 40% of the people do.
And yet, that was not, and Hillary, so people for whom judgment and temperament were the most important issue, Hillary Clinton won by miles. But by about a factor of 2 to 1, more people cared most about who could bring change to Washington. And he won that group by 68 points. And that ended up being that desire for change and the belief that he was more likely to bring it. I mean, the irony there is, to that extent, was that Hillary Clinton punished for the very experience and long track record that she brought.
Your instinct would be that she was. She was punished by the fact that he was able to grab the change mantle.
And this was, everyone knew that this was meant to be a change election. Americans typically don't grant third terms. Right. But, again, I think that the fact that one of the reasons that, the political experts all along were inclined to think this can't possibly succeed is he kept on doing things that no one had done before, or to the extent that they had done anything like that, it had proven fatal to their candidacy.
I was watching the other day, just people looking back, it is the capacity to stand in front of a huge audience and have a conversation with them is, to me, one of the qualities that made his rallies different. It wasn't a speech. If it was a speech, it was simply a regurgitation of what he'd been saying before. But much more of it was reacting, impressions, talking about he almost was having a conversation with them about what he'd read in the paper or what he had seen on television. And what do you think of this? And didn't you agree with me? It was much more of that kind of dialogue.
Well, that's why on the occasions when he was back on the teleprompter, it felt so odd, because that was not the vernacular of his campaign.
And the spontaneity. You've interviewed him before. You interviewed him the last time with the Eagle and all that. And then you go back, what, a week ago?
Mm-hmm.
How was he? Was he different in any way and perceptibly?
I would be the first to say that there's every chance that because I expected that he would be different, that I saw a difference. But I did see a difference. The main one being the thing that struck me so much. I'm very interested in the relationship between presidents because of what that job does to you. And the night before we spoke to him, he had been on the phone for 45 minutes with President Obama again, talking to him about ideas for his cabinet choices and other topics that were on his mind. And he spoke with extraordinary warmth and respect. He talked about the chemistry he felt between them. He felt about how he had expected that day that he went to the White House and the two men sat down together, which was 48 hours after Election Day. He said, everyone would have thought that would be a very awkward moment. It didn't feel awkward at all. We sat down, we started talking. We talked for a long time. I found him very gracious and helpful, and, we've talked since then. And in listening to him talk particularly about his conversations with President Obama, you start to see a glimpse that he is having to get his head around what has just happened. And, I've always wondered, did he expect, of course they'll say, oh, we always knew we were going to win. Yeah. Which, I
have wondered the same thing, because I read somewhere that early in the evening they didn't think they were going to win. It only was that after the 8 o'clock thing, when they began to see, what the possibilities were in Pennsylvania and Wisconsin and Michigan, that they realized victory might be possible.
But there, so then you win and you wake up, is it like the dog that catches the car, where, okay, now I actually am going to have to be president, and what is that going to mean, and how is that going to work? And so I think the conversations that he's having with everyone who he's bringing in, this is the next season of the reality show that he has been staging.
Right. It's interesting too, in terms of some of the people he's talking to, not only Mitt Romney, who said all the things that he said about him, but also Al Gore shows up. Al Gore shows up.
It's a peculiar. You just wonder, how is it that between business leaders and military leaders and politicians and private sector activists, this part of his own personal transition. Yes, there's the administrative, institutional transition. There's a personal transition too, and so that's what I was struck by talking to him this time, was that he is very much in the throes of that process.
Thank you for coming.
Thank you for having me.
Thank you for joining us. See you next time.
Asia-Pacific markets are poised to fall, following the worst day for Chinese stocks since June.
OPEC boosted production last month despite agreeing to historic cuts. No one wants to lose their market share.
Donald Trump names another Goldman exec to his team, but postpones news of how he handles his empire as president.
And Apple considering joining SoftBank's $100 billion tech fund to keep up to speed on some new ideas.
This is the second hour of Daybreak Asia, coming to you live from Bloomberg's U.S. and Asian headquarters. I'm Yvonne Min in Hong Kong, where it's just after 8 a.m.
And it is just after 7 p.m. here in New York. I'm Betty Liu. And Yvonne, of course, we are watching very important this week, the Fed move. And what that means for the markets afterwards. Have we pretty much all calculated in this rate hike? So let's joining us on set now is Sue Keenan with more on that. And Sue, before we talk about the Fed, though, what caused the stock slide today? Is there nervousness in the markets?
Well, what you saw was the oil up and away, and then as it faded, you saw the oil stocks come back. You also saw financials move lower. They've been a big leader. If you look at the board, we did hit a record for the Dow, but a bit of a pullback. Let's call it a pause in the cause. Quickly to the big movers, and you'll see the divide of financials on the downside. That's Navi at the bottom, and Pfizer, which had a dividend announcement, and Exxon among the winners. Let's go into the Bloomberg, though, because if you want to look at the big picture on how the market was doing last year with the economic surprises in the white at the top, you'll see toward the end of the year, economic surprises were negative, bad news, and so the market was in tough shape. Look at this year. The economic surprises moving higher as well as the market, and that's rising almost to kiss the Fed at its meeting on Wednesday. In other words, they're expecting and embracing this rate hike that's planned.
Apparently they are. Okay, let's talk more about this oil rally, right? So we had oil hitting the highest level since July 2015. It looks like the markets believe these output cuts are real.
Yes, and you're seeing that not only in a 17-month high for the oil price, but let's go into the Bloomberg once again. Volatility dropping in a very big way. Volatility dropping to the lowest since June 2015. Now, what you're seeing here is a white line that is the volatility gauge for oil. See how that's dropped, particularly toward the right-hand side of the screen as the price has gone higher. What that tells us is that the path is clear for prices to go higher. Go quickly to the chart of oil for the last few weeks, and you'll see it's been on a tear. In fact, there's a view it goes much higher from here. What's unique about the news that came out, there were many traders that expected the agreement between the non-OPEC members. It's the Saudi members that juice the gains. Take a listen to Boone Pickens on where we go from here.
The producers of oil, whether they be OPEC, the Russians, whether it's the oil and gas industry in the United States, have all had enough. And so you will be at $60 a barrel within 30 days.
60 within 30 days. He believes we'll see $75 oil next year. And here's what's key from traders on the New York trading floor for oil. They believe the fact that Saudis rolled in with this statement shows they're serious, they're unlikely to bail, and that's what gives this decree or accord to cut real power.
And Sue, you know, traders now talking about Trump Twitter risk, which is something we need to really look into as well. This time, his post was targeting Lockheed Martin, and it really did hit the defense stocks pretty hard.
It did indeed. The argument here from Twitter's Twitter post by Trump is that the fighter jet way too expensive. Take a look at what he did to the stock. Kaboom! Lockheed stock down in a big way, and this is exactly what happened with Boeing. Took a hit when Trump started tweeting about costs for Air Force One. His concern about Boeing jets is that the costs are in the billion, and they have a jet F-35 program that is at the center of defense. He says the costs are out of control. What did that look like in terms of the defense group? Take a look at the stocks. They were all lower in a big way. Trump is promising that we're going to save money as taxpayers. Not good news for the investors in those stocks.
All right, Sue, besides Donald Trump, of course, the Fed is in play. Let's take a look at how things are looking at the market open here in Asia. Heidi.
Yvonne, we saw yesterday really the wind get knocked out of that OPEC oil-driven rally, and then we had the downward pressure coming through from our lower open on Wall Street, and that is that pressure that we're seeing play through in the early market open. We already had that lower start straight out of the gates from Australia and New Zealand. Japan now joining in on the fray. The Nikkei 225 down by 0.4%. As we expected, we saw those futures indicating a softer open, and it really is down to that stronger yen. We had the dollar index falling against most G10 as well as emerging market currencies, and that stronger Japanese currency is weighing on exporters in particular when it comes to that Tokyo session that is just coming online now. I mean, take a look at some of the top losers. We are seeing some of these currency-sensitive stocks moving. CalCorp, though, interestingly, up by 2.5% today. Elsewhere around the region, the Kospi looking pretty flat at the moment. We had some declines yesterday. Really, this has actually been one of the better performing markets in this region over the past couple of weeks or so, on these expectations that the political turmoil, the impeachment process will actually produce some, I guess, rejuvenation when it comes to the government in South Korea. A quick look at some of the movers. We had that oil rally yesterday, of course, that huge ramp up when it comes to oil producers, oil refiners and explorers. Seeing some of those stocks give back those gains today. Origin Energy down by 1.8%. We're also seeing some of the miners continuing to extend those declines despite a slight recovery in oil. And finally, Qantas coming under pressure from those cheaper Chinese airfares despite launching that super long flight from Perth to London, down by 2.9%. The top decliner when it comes to Australian stocks. Yvonne.
All right, Hattie, thank you. Now let's get to the First Word News with Paul Allen joining us from Sydney. Paul.
China has filed a World Trade Organization complaint against the United States and European Union. Beijing wants its two biggest trading partners to stop using example prices from other nations in anti-dumping probes on Chinese goods. Beijing argues authorities should be using domestic prices in the disputes, saying third country models have seen duties on Chinese imports artificially inflated. The European Union will set out how it will conduct Brexit negotiations with the UK. Leaders will meet on Thursday without British Prime Minister Theresa May to discuss the bloc's strategy once she triggers Article 50 of the Lisbon Treaty. A draft statement seen by Bloomberg says the UK will be excluded from all meetings where the 27 remaining EU members discuss Brexit. Hong Kong's outgoing financial chief, John Tsang, says he'll make a decision in a few days on whether to run for chief executive. Tsang quit the finance post yesterday, but needs Beijing to formally accept his resignation. Current chief executive, CY Leung, said last week he would not seek a second term, citing family reasons.
The principles of one country, two systems, Hong Kong people administering Hong Kong, and a high degree of autonomy have been successfully implemented, and that Hong Kong continues to be prosperous and stable. I think all of you are concerned about whether I would run for chief executive or not. As I have said before, whether I would run or not run is a serious and solemn matter. I shall think through this in the coming days and make an announcement once ready.
Donald Trump has nominated another Goldman Sachs executive to his administration. He's picked 25-year veteran Gary Cohn to be his top economic policy advisor. Cohn became Goldman's co-president in 2006 and later the sole president, an office that in recent decades has been used to groom the next CEO. His role on the National Economic Council will help him coordinate Trump's economic program. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Well, let's stay on Donald Trump, President-elect Donald Trump, because now he's postponing an announcement on how he's going to handle his business empire while he's in the White House. Let's go straight to Washington now. I'm Bloomberg Politics reporter Kevin Chirilli. Kevin, his aides said that he was busy with the transition, and that's why he's delaying this. But is there anything more to this?
Well, I put that question to the senior Trump transition sources that I spoke with earlier today, and what they told me is that this announcement will be coming sometime in January ahead of the inauguration on January 20th. However, it does come at a time when he is facing mounting criticism, bipartisan criticism, mind you, on Capitol Hill to release some sort of arrangement for how he will coordinate or not coordinate with his business while he is in the White House. So clearly today, his team saying that he needs a bit more time, that he wants to really think this through before releasing that plan. But a delay is a delay, and he is postponing from Thursday to January.
You know, he's been very quick to do to take certain actions ahead of his official ascension to becoming the official president of the United States. So, is this surprising that he's delaying this?
Well, you know, I think what we're going to have to wait and see is whether or not he follows through. To be quite frank with you, I think if he does release a plan, he's going to receive criticism regardless. But if he does release a plan, he needs to do it before inauguration. And should he follow through with that, I don't think anybody will really remember that he delayed for 2 weeks. He's relying on a variety of lawyers, everyone from his White House counsel, Don McGahn, to his Trump Organization attorneys, as well as outside counsel. So he's taking a lot of advice on this front.
Kevin Cirilli joining us there on Bloomberg Politics. Kevin, thank you. Appreciate your perspective on this, with Donald Trump delaying his plans to announce how he's going to handle his empire once he takes office. All right, Tuesday is going to bring us another gauge of the health of China's economy as we head towards the end of the year with a triple dose of data. Let's bring in China correspondent Tom McKenzie. He's going to be breaking that data for us in just about 2 hours' time. So, Tom, what can we expect here?
A steady, stable picture is what we're expecting, Yvonne, when we get those data points out at around 10 o'clock Beijing time. We're talking about industrial production, retail sales, and fixed asset investment. We've got a chart that shows just where they've come from. From 2013, there's been obviously a fairly steady decline in those data points as the economy here has slowed, and then it's kind of leveled off in the last few months, and we're expecting that to continue. Retail sales, obviously a key gauge of the consumer confidence here, are expected to come in up 10.2% for November versus 10% in October. Industrial production, that's expected to come in at 6.1%. That will be the third month of 6.1% number for industrial production. Factoring into that, of course, are commodity prices and demand for those products. And then we've got fixed asset investment expected to come in up 8.3% the second month in a row. And those are going to be interesting when you look at how much the public sector has had to step in and spend versus the private sector. All these data points, of course, following on from what the other data points we've had in November, the more positive manufacturing picture that we've got, the exports that are seen up, and the inflationary improvements that we've seen, producer prices picking up and beating consumer prices for the first time in 5 years, and seen as something of a positive for China's factory sector. And all of this is laying something of a foundation. Goldman Sachs economists saying that this now gives policymakers here, particularly the PBOC, a grounding on which to tackle financial risks. They expect them to focus and become slightly more hawkish, particularly as we head into 2017. That is the emphasis. That seems to be the consensus now, that there is going to be stable economic data. That gives policymakers here more of a platform to tackle those risks in the property sector and leverage, of course. Yvonne?
Tom, thank you so much. Tom McKenzie there in Beijing. Still ahead, billionaire Benny Steinmetz is escalating his fight with Rio Tinto, seeking more than $5 billion in damages.
Plus, Kevin Anderson of State Street Global tells us why he finds emerging market debt still attractive. This is Bloomberg.
This is Daybreak Asia. I'm Betty Liu in New York.
And I'm Yvonne Mann in Hong Kong. A quick check of the latest business flash headlines. Bloomberg's been told Tata Sons wants to buy up to 50 million shares of Tata Motors before the car maker's EGM next week. The news comes as Tata Consultancy prepares to hold its own EGM on Tuesday. It is the first of 6 such meetings of Tata Group companies called to resolve its leadership battle. Shareholders will choose between Ratan Tata and Cyrus Mistry, who claims he was illegally ousted as chairman.
Korea's Mile Business newspaper says Hanjin Shipping is likely to be liquidated. It says the accounting firm in charge of due diligence over the bankrupt line, Samil Price Waterhouse Coopers, will recommend that option to a Seoul court. The Mile says Hanjin's value after liquidation is estimated at around $1.5 billion. Hanjin shares touched a record low on Monday and now trading down almost 7%.
Hong Kong has arrested 29 current and former staff of 5 financial institutions for alleged bribery over obtaining confidential customer information to market personal loans. The anti-graft agency says Operation Mirabilis began last week and led to the arrests. It has not named the institutions involved, but 4 of them are banks. All those detained are on bail, and the investigation continues. Take a look at markets here. Asian stocks look to follow Wall Street and retreat as the oil rally loses a bit of steam. We've also seen Chinese stocks sinking the most since June, while gold rebounded after sliding to a 10-month low. Let's analyze all of that now with Kevin Anderson, head of Asia Pacific Investments for State Street Global Advisors. Kevin, good to see you.
Good morning.
Tell us what the recent moves that we have seen overnight. I mean, is it just mostly on Fed? Is it that we're really starting to finalize these positionings ahead of this FOMC decision? What do you make of it?
Well, of course, we've got the Fed coming up this week. We think, like most others, we're going to see a hike. It would be a huge surprise if we didn't. I guess the additional surprise over the weekend was the non-OPEC oil-producing countries signing that accord with their intent for next year. So I think an additional piece of volatility and news into the macro picture.
An additional piece I want to add, of course, is China after we see quite a brutal day on Monday. Let's start up the chart for Kevin to see, guys. Dollar renminbi 1 month implied volatility. I kind of dated back to 2011. That's when we saw the different circles here. The first circle dates back to 5 years ago. Then you have August of 2015 during the yuan devaluation, the market turmoil in January that then followed. Now, there we are now in the very far right circle. We're not close to that panic that we saw. But what does this signal to you, Kevin?
Well, I think we're seeing a couple of things going on. Firstly, of course, there's a slow in the overall internationalization of the RMB from policymakers, as it would appear, since the inclusion in the SDR, in an attempt to maintain capital within China. We're also getting to end of year period and ultimately getting into a period where there may be lower liquidity. So it may be natural that in those environments we would see an increase in vol, certainly.
And all 3 of those previous spikes that we have seen have led to drops to stocks. When you take a look at not just China, but the U.S. As well. So far, Wall Street seems unhinged by all this. They haven't been affected. We saw some stress yesterday in Shanghai. But what does this mean? Could this change quickly as we continue to see more rhetoric from Donald Trump and Beijing hitting back?
Well, I think there's two bigger players in the equation now. Of course, the unanticipated or unexpected policy changes from the US that may take place. And of course, during a period of transition, it's when we might see the largest risk of a policy mistake and hence greater volatility. And of course, with China, I think the Chinese policymakers earlier this year gained a certain amount of credibility through their gentle movements in the currency. So that's perhaps why we're not seeing the same reaction in the global markets at the moment.
Speaking about the markets, Kevin, though, I want to just pull up a chart here we have on the Bloomberg just about global markets overall. And you see such a big divergence now, in terms of stocks, in terms of people taking their money essentially out of bonds and putting it straight into the equity markets. You can see just how much since Trump's election, the Bloomberg World Stock Market cap, which is the white line, how much it has just skyrocketed since November. And I wonder, is that momentum going to continue into 2017? Or are we going to get some reprieve in the bond market?
Well, we're still underweight to the Treasury market, the U.S. Treasury market. We have been for some time. Yeah, if we look and snapshot a year ago from now, U.S. Treasuries aren't that far away from 12 months ago. We think with a Fed that is on a hiking cycle this next week and also twice next year, there is still some room for Treasuries to sell off. But I think some of this immediate momentum may dissipate.
And Kevin, if you were to give us a one contrarian thought for 2017, what would that be?
I think the outside risk, and it's a risk, it's not what we view, the outside risk is we might see the return of inflation in 2017, and inflation that is unanticipated.
Okay, all right, so perhaps that'll rear its head. Finally, Kevin, thank you so much. Kevin Anderson, the head of investments for Asia Pacific at State Street Global Advisors. And up ahead, Apple said to be pondering an investment in SoftBank's $100 billion tech fund. We're going to tell you what it stands to gain from that investment. This is Bloomberg.
This is Daybreak Asia. I'm Yvonne Men in Hong Kong.
And I'm Betty Liu here in New York. Well, Apple is said to have held talks on whether to invest in SoftBank's $100 billion technology fund. Sources told Bloomberg that Apple may contribute as much as $1 billion. It sounds like a lot, but it's only 1%. Hoping to gain insight into some new technologies. Let's get more with Ramy Inocencio for this. And Ramy, tell us the logic behind this.
Yeah, you know, on one hand, I'm seeing it as a search for innovation for Apple. A lot of people, a lot of critics have said maybe they've run out of ideas. On the other hand, there's a search for stability in terms of revenue and in terms of profit. Probably it's a mix of both of these things. So let's go into the profit stability first. And of course, we have to take a look at Apple's reliance on the iPhone, because 2 out of every $3 that it makes does come from the iPhone. Look at that, 66% there, followed by Mac laptops as well as iPads there. But, you know, okay, so 66%, that is our foundation. The concern here, though, is that revenues are actually falling quarter on quarter. Take a look at what's happening in terms of the third quarter of 2016. You see that orange bar that's going down? That's the revenue. A 23% revenue drop on a shipment drop of about 15%. So Apple definitely needing to find the next big tech thing in its lineup. What could that be? That could be a couple things where it might push, for example, the Apple Watch, of course, that's been out for a couple years or so. It did get a reboot earlier this year. The Apple Watch is the market leader with a 40% market share in the third quarter of 2016. But get this, last year, year on year, it had a 70% market share. So we're looking at a loss of a 30-point drop there. That's according to IDC. Garmin is in number 2. Samsung is in number 3. There's also revenue that could come out from Apple Pay looking ahead. But Apple says that it expects $200 billion in transactions in this kind of contactless buying mode, but it's still a few years away there. There's also the Apple Car, but of course Bloomberg ourselves has been reporting that we put the kibosh on that Apple put the kibosh on that just a couple months ago by laying off hundreds of workers, Yvonne. So basically, they're looking for the next best thing, and what they have right now, a lot of people saying, is not it.
So $1 billion, that would be just 1% of the fund, as Betty just mentioned. But we did see Apple putting in some more investments earlier this year with Didi Chuxing and now SoftBank. So are we likely to see more?
Yeah, you know, I mean, well, if they wanted to, they definitely could dole more money out. Hop into the Bloomberg, because I want to show you how much money that Apple has cash on hand right now. You know that fund that SoftBank is trying to do? That's $100 billion. Look at how much they have here. That's $237 billion. So they could make their own technology fund if they wanted. So $1 billion, clearly a drop in the bucket, as you said. In May, of course, they did invest. They just threw out $1 billion to Didi Chuxing. In 2013, the last time they did something even more than that was $3 billion for the headphone maker Beats there. But looking ahead, Apple, if it decides to ante up into this fund, could get some of its money back, because SoftBank CEO Masayoshi Son said that $50 billion of that $100 billion would go back into U.S. investment. Betty and Mon.
All right. Thank you so much, Ramy Inocencio there with Apple's latest move. Now, much more ahead. Hong Kong's money market squeeze is sending a sell signal on stocks. We're going to crunch the numbers for you next.
Yeah, and take a look at markets trading here in the Asia Pacific. This is how we look after half an hour of trade. The Nikkei 225 leading some of the losses this morning, down a little bit more than 1/4%. The Kospi's seeing some pressure too. Not much movement out of Sydney right now. But this is how we do see some positioning ahead of the Fed. We do see the dollar taking a bit of a halt here, and we're counting down to the open in Singapore. This is Bloomberg. It is 11:30 in Sydney this morning. We have some breaking news just crossing the Bloomberg right now. This is the latest NAB monthly business survey. This indicates a slight improvement in confidence despite concerns about the underlying strength of the Australian economy. It's certainly needing some good news after that third quarter GDP print, which was quite an upset last week. Business confidence came in at 5 for November, having dipped to 4 the previous month. So looking a little bit better for business confidence there in Australia. I'm Yvonne Min in Hong Kong.
Indeed, a little bit of a perk there for Sydney, perhaps, or for Australia. I'm Betty Lou in New York. You are watching Daybreak Asia. Let's get to the first word news now with Paul Allen in Sydney.
OPEC boosted production in November ahead of next month's collective cut. Sources tell us Nigeria, Libya and Angola all pumped more oil, raising the cartel's total output to 33.8 million barrels a day, up from 33.7 million in October. Analysts expect OPEC members and independent producers to increase output ahead of the cuts to ensure no loss of market share. Donald Trump is said to be postponing until next month details of how he'll handle his business operations while in the White House. Transition officials say a news conference scheduled for Thursday will be delayed because the president-elect is busy filling his administration posts. Trump has about $3.6 billion of assets and $630 million in debt held in more than 500 companies. IMF chief Christine Lagarde has told a Paris court that an imaginary plot has led to her being on trial on negligence charges. She told the tribunal she acted in the public interest when, as French finance minister in 2007, she did not try to block a $300 million public payout to businessman Bernard Tapie. Judges rejected Lagarde's request for a delay in the trial, and she'll return to court on Tuesday. The last vessel searching for the missing Malaysia Airlines plane has set off from Fremantle in Western Australia. The mission will be a final sweep of deep ocean ravines that might hold the remains of MH370 and the 239 people on board that disappeared on March 8, 2014. Local media say that if the plane isn't found in one of the trenches, then the search will be called off in January or February. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Paul, thank you. Time to see how the Asian markets are shaping up so far this morning. Let's go to Heidi Lin for more. Heidi.
Yvonne, we had these headwinds coming through from the US, of course, which closed lower overnight, and we also had, that oil-driven rally really give up steam late in the afternoon session here in Asia. This is what we're seeing. Interestingly, Australia has actually managed to turn positive. We're seeing upside of about 1/10 of 1% when it comes to Aussie stocks. New Zealand, though, falling deeper into negative territory, and the Nikkei 225 down by about 1/4 of 1%. Still, Japanese stocks have pretty much erased their losses for 2016 as we go into that widely anticipated Fed meeting, where essentially we're looking at a certainty when it comes to that tightening rate hike there. The Kospi down by about 1/10 of 1% there. Just taking a look at some of the movers, we are seeing some interesting moves when it comes to the Japanese session. Some favourites, if you will. Nintendo is falling down by over 2%. This is one of the top decliners on the MSCI Asia Pacific Index on news that Universal Studios and Nintendo will be launching Super Nintendo World. This is a part of the theme park that will open in the Osaka theme park in time for the Japan 2020 Games. The companies plan to spend about $434 million to develop and create this theme park. That price tag a little bit more than what had been flagged by Universal in the last update. We're also seeing declines for Toshiba. This is a company, of course, that has gone through all of these accounting and internal governance scandals. The Nikkei reporting a story today saying that the Tokyo Stock Exchange is considering keeping Toshiba on their watch list, where they've been since September 2015. This is essentially a probationary list for companies where internal controls are still being reviewed, so they were expected to make a decision to move Toshiba off that list by spring 2017, but there are reports that it may stay on there a little bit longer over these concerns that internal controls and governance haven't been improved adequately. Again, that's a report from the Nikkei. And Qantas, the biggest decliner when it comes to the Australian session, it did just launch that fairly, I guess, challenging sounding 17-hour direct flight from Perth to London, but of course we have this story about Chinese carriers carriers, the Centre for Aviation, putting quite a bit of pressure on fares that come through from major airlines like Qantas, down by about 2.5% today in the Australian session. Betty.
All right, Heidi, thank you so much. And we've got some breaking news right now. More on President-elect Donald Trump monitoring his Twitter feed. Well, there's some breaking news right now. Trump tweeting out that I will be making my announcement on the next Secretary of State tomorrow morning. So he will be making that announcement of who will take that spot. And as you know, certainly over the past weekend, lots of speculation that it's going to be the Exxon CEO Rex Tillerson, even though his appointment has come under some criticism and scrutiny, even from senators within the Republican Party. So, but apparently we're going to be getting that confirmation or that news out tomorrow morning. So Trump tweeting that out. In the meantime, back on the Fed and the markets here, the Fed is widely expected to announce their rate hike on Wednesday. Bond traders are not waiting until then. They're already pushing up yields in anticipation. Bloomberg's Kathleen Hayes joins us now. So now they're pushing up yields.
Yeah, well, actually they started, just months ago, Betty. But and in fact, as we get into the Asian trading session, we are seeing a little bit of a bounce back. But after such a vicious sell-off in Monday's session in the U.S., it was fueled a lot by the rise in oil prices. 17-month high. You worried about more growth, inflation. All this hit the bond market. Let's jump into the Bloomberg now and look at hashtag BTV 4968. You can see at the far right hand of your screen, 2.5% intraday. The 10-year note touched that level. Again, I said the highest in 2 years. That little red circle shows you that's July of this year, 1.32%, a record low. Look at that move in bonds, but put it in perspective. Back to July 2007, see that yellow line going over to the left-hand side of your screen? That shows where the 10-year note yield was then, 5.29%. And, of course, Donald Trump's victory, the promise of stimulus and tax cuts, the possibility of more growth, that has helped fuel this sell-off. And now, of course, the question is, everyone assuming that we get the 25 basis point hike on Wednesday, what is the Fed signal for 2017 and 2018? Right. That's what bond people are waiting to see.
Absolutely, right? What happens afterwards? So why are bond traders and investors, why are they finally believing these Fed forecasts for the economy and for hikes?
Maybe it's because the Fed finally got its wish, not just monetary policy, but it looks like fiscal policy is going to push this economy forward, too. But remember last year, Betty, at the beginning of the year, the Fed was forecasting 4 interest rate increases, and instead of selling off, bonds just kept rallying last year, right? They just didn't believe it. But now we're seeing that the bond traders are falling in line with the Fed's dot plots. The derivatives trader seem to be betting for more interest rate increases. So let's jump back into the Bloomberg. Real easy. Go to your Bloomberg, DOTS, dots, go. The yellow dots, those are the 2016, 2017, and 2018 depictions of what each Fed official was seeing. But you can see for the green line, the median, 2016 was clustered around 1 interest rate hike. 2017 for the Fed focused around 2. 2018 focused around 3. Red line at the September meeting, that's what bond traders thought the Fed was going to do. You can see it's a long way from that green median line. But look at the purple line. That's what the derivatives traders are doing now. They're getting much more in line with the Fed. Peter Fisher is the former executive vice president of the New York Fed, former undersecretary at the Treasury, was on Bloomberg television early. He says it may be time for the Fed to retire those dots.
The hardest thing for the Fed is they really don't know where they're going to be a year or two from now. Right. They don't know how much this recovery we see is going to come through. They don't know how much on top of that the Trump administration is going to put and Congress is going to put. So I think what I'm looking for is what kind of hint we get about, does Janet Yellen know she's got to pull back from forward guidance? She's going to have to pull back from pretending she knows a point estimate on the Fed funds rate for 12 months from now, which she really doesn't know.
Peter Fisher says that forward guidance has done what it can do now. It's past its expiry date. We'll see if Janet Yellen signals anything like that. The opportunity will be the press conference on Wednesday after the announcement's made.
And Kathleen, we might be talking about who the next Secretary of State is this time tomorrow. But today we're talking about Goldman President Gary Cohn. He is to head the National Economic Council. Does that have any implications for the Fed and future rate hikes?
Probably not. Very important to make a distinction between the various government bodies that have to do with the economy. The Federal Reserve controls monetary policy. It was created by Congress in 1913 to do just that, to be the central bank of the United States. Now, the NEC was created by executive order by Bill Clinton in 1993. He wanted to bring Bob Rubin, then at Goldman, into his cabinet, into his administration, but Lloyd Bentsen was already Treasury Secretary, so he created this new post to to give Bob Rubin a role in setting economic policy. Basically, the NEC, Yvonne, it has brainstormed everything and brought together all the department chiefs to figure out new banking policies, new tax policies. It's certainly the kind of thing that someone like Gary Cohn from an investment banking background probably has a lot of background to apply to this question. There's one more group, the Council of Economic Advisors. It's more like an economic think tank. You can put them sort of to one side, too. It looks like from the White House perspective, Trump perspective, Gary Cohn is his guy to start spearheading things to create jobs and do all kinds of things to the economy.
Yeah, and what's going to happen to Goldman, too, after he does leave for the White House. Kathleen Hays, thank you so much, our global central bank watcher. And as the Fed prepares to tighten funding costs, meanwhile, here in Hong Kong are surging, heaping pressure on the city's currency and equities. Let's bring in Sherry Ann joining us here with a look at this. We're just about an hour away from the open. So what's the risk here?
Well, we are seeing just increasing funding costs. And what that means is that it could become more expensive for people to borrow in order to buy stocks, and that could apply pressure to the equity markets. Funding costs, we're talking about the 3-month interbank rate in Hong Kong or HIBOR that's now jumped for the past 10 days to 2009 high. Now, ANZ says that the credit crunch just signals concern about a cash exodus. Now, in isolation, if you see higher U.S. interest rates, you would see support for the Hong Kong dollar because it's pegged to the U.S. dollar. But if you take a look at this chart on the Bloomberg, you can see that in previous bouts of cash outflows, we have seen the currency depreciating along with a jump in rates. So in January, the Hong Kong dollar plunging to an 8-year low. That would be the blue line right there, as fears of a yuan devaluation roiled global markets, and of course, higher U.S. interest rates just causing outflows from emerging markets and Hong Kong.
So is it here we go again? I mean, should we start worrying about capital outflows now?
So far, it looks okay. Investors don't seem too worried. We're talking about implied volatility and being near a 20-month low. Also, the Hong Kong exchange rate is not depreciating that much. It's still trading at the stronger part of the band against the greenback. Not to mention that economists say, okay, if the U.S. goes ahead and hikes, say, 2 times next year, the rate gap with Hong Kong will still not be as big or as wide to cause huge flows outside of Hong Kong. Also, keep in mind that we're getting more mainland investors coming into Hong Kong in order to hedge for the weakness in their currency, and they're buying Hong Kong equities and Hong Kong homes.
All right, Sherry, thank you so much. And we're getting some more breaking news right now. This time, Muddy Waters coming out with their latest report here, saying that they're targeting in their first short on a Japanese company, Nidec shares, saying that the company constantly misses sales and profit targets and questions whether Nidec is using, quote, highly aggressive accounting to boost their reported profitability. Their short interest apparently is at 3.5% of free float as of December 9th. And the shares are falling at this point as much as 5.5% when reached. A spokesman for Nidec saying that they have no immediate content on this new short from Muddy Waters targeting Nidec in their first short in Japan, or first short of a Japanese company. Much more ahead. China, though, let's move over there, taking a stand against tariffs from the U.S. and EU. We're going to look at why they think they're being ripped off. This is Bloomberg. This is Daybreak Asia. I'm Betty Liu in New York.
And I'm Yvonne Mann in Hong Kong. A quick check of the latest business flash headlines. Boeing shares rising in extended trade after it boosted the dividend by 30% to $1.42 per share, topping estimates. The board also set a new $14 billion buyback plan. Boeing said it's planning to produce fewer 777 aircraft due to waning demand for long-haul jets and will slow output to 5 planes a month from August. The company said the changes won't affect its 2016 financial guidance.
Viacom has named Bob Bakish as CEO after scrapping merger talks with CBS. He's a 20-year veteran of the company and has been acting chief executive since last month. Viacom's board and management were dumped in August by Sumner Redstone and his daughter Shari in a battle over company performance and direction. Viacom shares tumbled in New York after the Redstones withdrew their proposed deal with CBS.
ANA is seeking to capture demand in Asia's fastest growing economy by investing in a new airline venture in Myanmar. The new carrier aims to start international flights in 2018, and ANA has a 49% stake and a local company holds the remainder. The Japanese carrier is expanding abroad as more people take to the skies in developing economies.
Spending power among people in Myanmar, especially in the new middle class, is growing. We want to service these customers on their business and private travel. Most of all, we want to contribute to Myanmar's economic development.
And tension between Beijing and Washington is being ratcheted up yet another notch. Beijing has filed a complaint to the WTO over how the U.S. and EU apply their anti-dumping tariffs on China. Stephen Engel joins us now with more. Such a long-standing issue, Steve, but as we've already been seeing, there's a retaliation over Trump's one China comments, right?
Yeah, I mean, this is taking it another step. Of course, there's always been trade friction between China and the United States, given the sheer volume of trade between the two countries. But given the timing, of course, after the one China comments, you'd like to link it to this friction, that this might be a bit of a tit for tat. But it's also, keep in mind, a day after the complaint from China came, a day after the 15th anniversary of China's ascension to the World Trade Organization. And China really wants full WTO rights in the WTO, but what their complaint is against the United States and the EU is that they use what's called surrogate country pricing for anti-dumping violation probes, and China says that unfairly or artificially lifts the price of sanctions against them. China wants WTO members, all WTO members, to use domestic pricing, not third country pricing in reflection of China's exports. China wants, of course, to keep open markets for its steel, solar panel, and others. But these anti-dumping violations that have been filed by the U.S. and China have stalled some of that.
But these statements coming out of the president-elect about the one China policy, I mean, this is the political bedrock when it comes to U.S. and China relations. And, you know, some saying there is no give here when it comes to Taiwan. It's a core interest for China. So when do these tit-for-tat jabs between China and U.S. start to be a serious concern, Steve?
Yeah, I've been thinking about this a lot because I've been covering the one China policy for so long, living out here this time, and also, of course, Taiwan's view on it, and that is the 1992 consensus that there is, you know, they agree that there is only one China, even though they'll disagree on the definition of what that is. Either Trump knew exactly what he was doing or had no idea what he was doing, because China will not necessarily give on this issue. This is the core part of their relationship with the United States. The Global Times out with more criticism of Donald Trump, saying he's acting like a child in his ignorance on foreign policy. The one China policy cannot be bought and sold. David Wu of Bank of America Merrill Lynch, he says it's the #1 wild card for 2017.
This is my single biggest worry for 2007. I mean, otherwise, I'm pretty bullish about the world outlook for 2007, except that I fear the U.S. and China could be on a collision course.
I don't know how many times I actually misspoke and said one child policy, but again, it comes back to what the Global Times was saying about the childlike innocence, if you will, ignorance coming from Donald Trump. One China policy.
And obviously we saw a little bit of that escalation in the China markets as well. We'll see how things go here today. Steve, thank you. Well, Israeli billionaire Benny Steinmetz has escalated a decade-old dispute with Rio Tinto over the rights to a Guinea mine. Now, his BSG Resources is pointing to claims that Rio Tinto may have authorized a payment to a consultant who was also a friend of Guinea's president in 2011. Let's bring in Bloomberg's commodities reporter David Stringer. He's joining us live from Melbourne right now. So, David, tell us more about this new development.
Hi, morning, Yvonne. Well, as you say, they're lawyers for BSG Resources. That's the company controlled by Israeli billionaire Benny Steinmetz. They sent a letter on Monday to the CEO and chairman of Rio Tinto seeking billions in damages for what they say was a breach of their rights to mine the giant iron ore deposit Simandou in Guinea. And look, in fact, the BSG director told Bloomberg News yesterday that the company could seek as much as $5 billion in damages. Basically, the letter, it's known as a letter before action. It sets out that if the company doesn't receive a response, which includes an offer of compensation by the 3rd of January, it intends to file a lawsuit. And look, all this relates to the ongoing issue for Rio with that iron ore deposit Simandou. Just last month, Rio alerted authorities in the UK, in the US and Australia after it carried out an internal inquiry into that $10.5 million payment to a consultant that was acting for the company on that project. So this is just yet another issue related to what's proven to be quite a problematic prospect for Rio.
Problematic indeed, but Rio, I mean, they've been, David, fairly measured, right, in what they're saying publicly about these investigations. So have they responded to this letter?
Look, they have, and they responded in a statement out of London yesterday. And look, what they said is that if BSG Resources does make a lawsuit, then at that point the company will robustly defend itself. And as you say, up to this point, they've been incredibly guarded about what's been said on the inquiry the company's conducted itself into that consultant payment, and obviously the ongoing investigations that authorities are carrying out. The CEO, J.S. Jacks, he was interviewed just last week on Bloomberg Television, sticking to his script. He said the whole issue is very challenging, but that under his watch, the company will do the right thing in every territory that it operates in. So, yeah, the company pretty guarded up to now, but we're expecting a response to BSG in due course.
All right, David Stringer, thank you so much. And shares, of course, down about 1.4% right now. Much more ahead, the flood of cheap long-haul airfares out of China. We're going to assess the impact on the other global carriers next. This is Bloomberg. Well, Chinese airlines are now flooding the world with some of the lowest long-haul fares ever seen, delivering a hammer blow to foreign carriers trying to keep up. It's another kind of maybe form of dumping by the Chinese. Joining us now is Angus Whitley. And Angus, what is emerging out of all these low airfares out of the carriers?
Yeah, good morning from Sydney. I think it's fair to say we're seeing a new order of Chinese airlines emerge around the world, not just in China's backyard in Asia, challenging Asian airlines like Singapore Air, Cathay and Korean Air, but really spreading right across Europe and into North America as well. British Airways, Delta Airlines and American Airlines, all affected by this flood of capacity, particularly across the Pacific, putting pressure on passenger yields right around the world. It's great news if you're a passenger. If you're a holidaymaker, you can save hundreds of dollars, perhaps up to 50% off fares if you're comparing Chinese fares on Air China, China Southern, China Eastern with legacy carriers like American, British Airways, Singapore, Cathay. It does raise other questions about the sort of longevity of this trend, though.
Yeah, you know, I'm sure, Angus, that everyone's watching your report and checking on those flights right now for the holidays. Who essentially gets hurt then?
Yeah, well, we've had Delta Airlines and American already point to excess capacity across the Pacific on Americans' flights between, for instance, Las Vegas into Hong Kong and other Asian airports, including Tokyo. The question is, can they keep this up? We've seen oil prices rise after OPEC cut production. It's not clear whether Chinese airlines can sustain this with pressure on yields already beginning to take effect.
I can imagine, right? So they've got to watch the oil prices pretty closely. Angus, thank you so much. Angus Whitley in Sydney, our aerospace reporter. And that is it from us. Plenty more still to come. Bloomberg Markets Asia is up next, Yvonne.
This is Bloomberg. More to come.
9 a.m. in Singapore, it's midday in Sydney, it's 8 p.m. on the eastern seaboard of the United States. I'm Rashad Salamat.
And I'm Sophie Kamarudin from Bloomberg's Asia headquarters in Hong Kong. This is Bloomberg Markets Asia.
The next hour brings us the latest snapshot of China. Forecasts for factory output and retail sales suggest more stability.
Funding costs are surging in Hong Kong ahead of the Fed rate decision. That's heaping pressure on the city's currency and equities.
Donald Trump delaying his presidential business plan. He also names Goldman's Gary Cohn as economic advisor.
And the tycoon's in-tray is already filling up. Beijing has launched a trade complaint and has concerns about his one China remarks. We're 30 minutes away from the open in China and Hong Kong, but Singapore, Taiwan, and Malaysia just coming online. Heidi, how are the markets tracking?
We're looking at a pretty mixed picture, trending a little bit lower, if you will. We really had the wind taken out of the sails of that oil-driven rally that we had yesterday. Oil pulling back a little bit, still seeing some gains in the Asian session, but certainly that exuberance has come off the top, and we've seen that come out of the equities market as well, following on that more lackluster US close. This is what we're seeing so far, a little bit of sort of, I guess, modest buying when it comes to some of these markets like Sydney, up by 1/10 of 1%. The Kospi also managing to hold on to gains. We're seeing weakness, though, coming through from the Nikkei 225, although worth pointing out, we've actually managed to come back from some steeper losses that we saw early on. We do have the yen, which is starting to weaken again. That is giving a little bit of a headwind there to some of those Japanese exporters. But still, Japanese stocks, they have all but wiped out their losses for 2016 as we go into that Fed meeting. Things are looking pretty good when it comes to Japanese equities. New Zealand up about 0.2 of 1%. In terms of the Southeast Asian Open, we've got some strength coming through from Malaysia. The KLCI up by 0.6 of a percent. Straits Times looking pretty flat at the moment. Big data week for Singapore as well. Non-oil domestic exports out towards the end of this week, and Taiwan opening up pretty flat at the moment. Of course, lots to do with some of those geopolitical concerns given the war of words between China and the President-elect Donald Trump. The Kospi, we're seeing gains of about 1/10 of 1% as the political uncertainty in that market continues. The impeachment vote, of course, now going to the Constitutional Court for some consideration. Let's head over to the currency sphere, because this is where we're going to be seeing most of the action, given that we are just about an hour away from the China numbers. Watching the Aussie dollar, that tends to be a really good proxy as to reaction to any China macro numbers. Aussie dollar, let's bring that up for you. We have seen resistance at around that 75 level, but a lot of analysts saying, look, if we get to 76, we could see that building up to a really nice rally and another leg up when it comes to the Aussie dollar. We have seen some weakness when it comes to metals overnight, so that's also one space that could react quite poorly if we get a miss, particularly on fixed asset investment, as well as industrial production coming out of China in about 50 minutes or so time. We had copper falling for a second session. Gold, though, staging a little bit of a recovery as a little bit more money goes into safe havens as that oil rebound starts to fade. Finally, dollar yen is looking like this. That weakness in the dollar index that has fallen against pretty much every G10 currency and a lot of emerging market currencies, including the likes of the yen and the won, that is driving a little bit more risk sentiment when it comes to the Japanese market. We're heading to that 115 handle again for the yen. Rish.
Well, less than an hour away now, and we'll have another gauge of the health of what's going on when it comes to the Chinese economy as we head to the end of the year. And indeed, we have a triple dose of data. China correspondent Tom McKenzie joins us. Now, Tom, what are we looking at?
Rich, we're not expecting anything that's going to derail China's economic stabilization. We've got these three data points that Heidi just touched on: industrial production, retail sales, and fixed asset investment. We've got a chart that shows their progress, those data points, since about 2013. As clearly, as the economy overall has slowed, those data points have all dropped down. But in the last few months, they have stabilized, and we're expecting a continuation of that theme. The industrial production number is expected to come in at 6.1%. That'll be the third month in a row. Retail sales are expected to come in up 10.2% for November versus 10% in October, and fixed asset investment expected to come in at 8.3% the second month in a row. And as Heidi mentioned, it's going to be interesting to see how much public spending on fixed assets there is versus how much private spending on fixed assets. And of course, these three data points following on from the better than expected manufacturing data we got for November, a pickup in exports as well, and an improvement in the inflationary picture with producer prices picking up and in fact outstripping consumer prices for the first time in 5 years. So expecting a more details around what is turning into be a stabilizing picture for China's economy heading into 2017.
Stabilizing. Now, Tom, given this potentially more positive picture, what can we anticipate then from Beijing in 2017?
Well, we've heard from an economist at Goldman Sachs based in Hong Kong, and she has said she expects the PBOC to move to a more hawkish stance now that this more solid economic base and foundation is being laid. And that seems to be a consensus now, that with a stronger economy and with that growth target of 6.5% to 7% likely to be easily met by the end of the year, that the policymakers here will now start to tackle those financial risks that we talk about all the time, the leverage in the corporate sector, the housing market, where we've seen already curbs being put in place. That seems to be the emphasis now and will be the emphasis of policymakers going into 2017, according to the economists that we've spoken to. Interestingly, Bloomberg's also speaking to a sinologist, a strategist called Andy Rothman at Matthews International Capital Management, a guy who spent 2 decades in China. He says that the risks to China's economy are being overplayed, that there is no more of a chance of a financial crisis here in China in the next decade than there was in the last decade. He thinks that the housing market doesn't face a bubble problem, that in fact it's on strong foundations because of leverage and the fact that people here have to put down big deposits before they buy their homes. He also doesn't think there's a big problem with the banks, and that goes against the views of many economists who think that China's banks will need to be bailed out in the next few years. So Andy Rothman painting a more positive picture of where China's economy lies, but we're going to get more details in a little under an hour, 10 a.m. Beijing time, with those 3 data points hitting our screens.
Yep, 53 minutes away, thanks to be precise. Thanks a lot for that. Tom Mackenzie there, of course, our China correspondent.
And from China to the Fed, widely expected to announce a rate hike on Wednesday, but bond traders aren't waiting till then and are already pushing up yields. Bloomberg's Kathleen Hayes joins us with that. Kathleen, what's driving the rout that we're seeing in the bond markets?
Well, it certainly has been dramatic, and of course we are seeing a little bit of bounce as Asian trading gets underway. But the latest factor, of course, is the rising oil prices. The highest levels in 17 months. That maybe creates a little concern about eventual inflation, and that's the enemy of bonds. So that is the latest thing that helped drive bonds pretty dramatically lower in price, higher in yield. Jump into the Bloomberg with me now. Hashtag BTV 4968. It's a 10-year yield. It got up in an intraday basis just over 2.5% on Monday. That is a run up from that red circle, the lower right-hand corner, 1.32% on the 10-year note in July, a record low, near doubling of yields in 6 months. Now let's go back up to the left side of the screen. That yellow line will take you in that direction. That was the high in July of 2007, going into the recession at 5.29%. Just putting in perspective, we've seen a big move up, but we're a long way from there. Now, of course, Trump's victory, his plans to boost the economy, also weighing on the bond market. And the big question now, if the economy is going to pick up more, if it's changing now, will that cause the Fed to change? Not its question about a rate hike. It's going to do that. That's what everybody expects. 2017, 2018, what's going to signal about rate hikes then?
Kathy, the question is, why are bond traders and investors finally now believing the Fed's forecast when it comes to the economy, when it comes to these rate hikes? Because they were, well, skeptical, to be really diplomatic, before.
Skeptical, to say the least. In fact, when the Fed in December 15, think of it, a year ago, forecast 4 rate hikes in 2016. The bond market didn't sell off. It kept rallying because they just weren't seeing signs of the economy picking up. Now we've got Donald Trump in the White House. That's one of the big things. The Fed's getting the fiscal action it wanted. At least it looks that it's going to get that. So bond traders are starting to fall in line with the Fed dots. The derivatives traders looking for more rate hikes than they were before. DOTS Go, one of my favorite functions on the terminal. You can see the clusters of yellow dots. They depict the spread, what the Fed was looking for. 2016, 1 rate hike. 2017, 2. By 2018, 3 hikes. That's the green median line showing you that. The very bottom, that red line, that's at the September meeting what traders were looking for. They didn't believe that green line. They said, no, you're barely going to hike rates at all for the next 2 years. And you can see the purple line getting very close now to where the green line is. That's what traders are looking for now. So they have definitely come around. Now, Peter Fisher was on Bloomberg Television earlier. He's the former executive vice president of the New York Fed, a former Treasury undersecretary. When it comes to dots, he thinks maybe it's time for Janet Yellen to signal she's just about done with them.
The hardest thing for the Fed is they really don't know where they're going to be a year or two from now. Right. They don't know how much this recovery we see is going to come through. They don't know how much on top of that the Trump administration is going to put and Congress is going to put. So I think what I'm looking for is what kind of hint we get about, does Janet Yellen know she's got to pull back from forward guidance? She's going to have to pull back from pretending she knows a point estimate on the Fed funds rate for 12 months from now, which she really doesn't know.
Peter Fisher, who knows all about this, says that forward guidance has done what it can do for now. It's past its expiry date. It's time for the Fed to maybe step back and make it clear that the dots are a suggestion of what might happen. The Fed cannot tell us with any certainty where it's going to be in 2017 or 2018.
All right. Thanks, Kathleen. That's our central bank watcher, Kathleen Hays, ahead of the Fed decision on Wednesday.
Right, well, let's move from New York and get over to Sydney because we've got the first word news with Paul Allen from there. Paul.
China has filed a World Trade Organization complaint against the United States and European Union. Beijing wants its two biggest trading partners to stop using example prices from other nations in anti-dumping probes on Chinese goods. Beijing argues authorities should be using domestic prices in the disputes, saying third country models have seen duties on Chinese imports artificially inflated. The European Union will set out how it will conduct Brexit negotiations with the UK. Leaders will meet on Thursday without British Prime Minister Theresa May to discuss the bloc's strategy once she triggers Article 50 of the Lisbon Treaty. A draft statement seen by Bloomberg says the UK will be excluded from all meetings where the 27 remaining EU members discuss Brexit. Donald Trump is said to be postponing until next month details of how he'll handle his business operations while in the White House. Transition officials say a news conference scheduled for Thursday will be delayed because the president-elect is busy filling his administration posts. Trump has about $3.6 billion of assets and $630 million in debt held in more than 500 companies. Donald Trump has nominated another Goldman Sachs executive to his administration. He's picked 25-year veteran Gary Cohn to be his top economic policy advisor. Cohn became Goldman's co-president in 2006 and later the sole president, an office that in recent decades has been used to groom the next CEO. His role on the National Economic Council will see him coordinate Trump's economic program. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Nice one, Paul Allen there for us in Sydney.
Now, still ahead, it's a food lover's paradise, but getting into Japan's top restaurants can be a challenge for foreigners. We'll meet the CEO of a company promising to get you a reservation for a price.
Plus, going to get down to that Fed decision, the dollar falling the most in 2 months as traders square bets. Macquarie Wealth Management is with us. That is next.
It's 9:15 a.m. in Singapore, and we're 15 minutes into trading there. Let's take a look at how some of the other markets in the region are tracking. Taking a look at what's going on in Australia, just slightly unchanged there, but in the green. And the Nikkei losing about 0.2%, and over in the Kospi up 0.1%.
Right, there we go. Let's take a look at some of those business flash headlines now, with Boeing shares on the up in extended trading. This is after the company boosted its dividend by 30%. That was way ahead of what the thinking was by analysts. The board also setting a new $14 billion buyback plan. Boeing saying that it's planning to produce fewer 777 aircraft. This is due to waning demand for the long-haul twin-aisle jets. They're also saying that they're going to slow output to 5 planes a month from August. Was 7 before. The company saying that the changes will not affect its 2016 financial guidance. That yield at the moment on the dividend yield there at Boeing now 3.5%.
And Sinopec is selling a 50% stake in a pipeline unit for $3.3 billion, seeking funds to expand its natural gas business. China Life will pay $2.9 billion for about 44% of the project. A division of State Development and Investment Corp will take the remaining 6%. Beijing is to boost natural gas use and revamp bloated state-owned enterprises.
Viacom has named Bob Bakish as chief executive after scrapping merger talks with CBS. He's a 20-year veteran of the company and has been acting chief executive since last month. Viacom's board and management were dumped in August by Sumner Redstone and his daughter Shari. The battle over the company's performance and direction was really the reason behind that. Now Viacom shares tumbling in New York after the Redstones withdrew their proposed deal with CBS.
Let's check back in on the markets, and we're joined by Martin Lakos, Division Director at Macquarie Wealth Management. So we did see a reversal in the fortunes of Asian markets yesterday following that rally fueled by oil. What do you make of the themes that are driving markets ahead of that Fed decision?
Yeah, a very good morning to you both. Look, it is interesting, isn't it? We've seen this very strong rally. There's clearly been quite a bit of momentum, but I think markets are probably in the short-term run ahead of themselves. Clearly, the market's getting more positive about the outlook on the Trump presidency and the policies, but of course we're still lacking quite a bit of detail, if any detail at all. We'd certainly be expecting to see markets quieten down somewhat, but we're also seeing markets will be data-driven. And as we know, we've got China data coming out later today, and we certainly expect that they will continue to reinforce a fairly stable outlook for China, building a reasonable platform for the Chinese economy to be holding a 6.5% to 7% growth range, and that's certainly where we're forecasting going into next year as well. On the oil price, well, we certainly see the oil price heading higher towards $60 a barrel going into next year, but that's probably where it's going to get capped in that medium term as the US shale oil producers start to ramp up production potentially. But I think that the commentary out of Saudi Arabia and the non-OPEC producers probably has surprised most in the marketplace in regards to potentially, or the potential of additional production cuts, and I think that's where we're going to see some more momentum on that oil price.
Martin, let's get back to you. I mean, you covered everything virtually there. Let's talk about the FOMC and the statement there as well. We're going to be essentially looking for what happens next. I mean, it's a done deal pretty much, but then again, you know, people are going to get into a tiz about, well, when's the next rate hike? How many rate hikes are there going to be in 2017?
Well, Macquarie's economist David Doyle in the US certainly has been forecasting for some time the rate rise in the December period, so it's obviously coming up in a couple of days' time, and there seems to be a very high probability. He's also been forecasting 2 further rate rises in 2017. I guess the question, Rish, is if we start to see inflation starting to pick up, both on the reflationary story as a result of higher oil prices potentially, but also the economic or the fiscal spend by the Trump administration, whether in fact 2 becomes 3. And I don't think that 3 is yet priced in by markets. Up until now, we've certainly been looking for the Fed funds rate to cap out or top out at about 2% by 2018-19. There might be potential upside from there, but again, that's still relatively low rates that we've seen, obviously, in this particular cycle. And look, lastly, I think there was been a lot of discussion around the 10-year bond market sell-off with yields going to 2.5. Just again, I like to put things in perspective. That 10-year bond yield was 2.2 at the beginning of this year in a time frame where the markets were talking about US Fed rate rises. So we're just seeing a readjustment back to where we were at the beginning of the year, slightly more, but not dramatically so. That shouldn't be such a surprise, to be quite honest with you.
Now, Martin, let's put things into perspective with China as well ahead of that data. We are expecting signs of that stabilization story, but you're saying there's not enough to offset the weakness in the broader economy here.
Yeah, look, obviously there's been some concerns that there are elements of the Chinese economy really aren't firing as much as we'd like to see. There's obviously been concerns on the banking sector, on the possibility of a property bubble. We don't see those as major concerns, but they're clearly in the background for us. We think the authorities have actually been managing this economy very well over the last year or so. Not only do they have the desire to manage 6.5 to 7% growth, but clearly they've got the financial capability. But as those risks have potentially been there, authorities are clearly having to focus in on policies that will stem those potential risks. So we think it's a steady as she goes type of strategy by the authorities, and that's certainly what we're forecasting going into next year, and we're pretty comfortable with that.
Steady into 2017. All right, thank you so much, Martin. That was Martin Lakos, Division Director at Macquarie Wealth Management out of Sydney.
Well, coming up, growing pressure in Hong Kong's money market and the risks to the city's equities and currencies. The details are on the way.
Let's return for a moment to the rate hike that everyone is expecting this week as the Fed prepares to tighten. Funding costs are surging in Hong Kong, heaping pressure on the city's currency and equities. Sherry Yan joins us with a look at this. All right, Sherry, what are the risks here?
Well, there are a couple of risks. First, on equity markets, because we're seeing that it's becoming more expensive to borrow in order to buy stocks. So what this means is that the 3-month interbank rate, or HIBOR, here in Hong Kong, that's been surging for the past 10 days, and it's now at a 2009 high. So it's becoming more expensive for people to fund their stock purchases. And now another risk right now is a risk on the currency, because ANZ is saying that this credit crunch is now signaling concerns of cash outflows. Of course, in essence, if you look at it in isolation, higher rates should support the Hong Kong dollar. Of course, it's also pegged to the US dollar. But take a look at this chart on the Bloomberg, because what we've seen in the past is that we see these cash outflows, of course, that come with higher US interest rates, causing cash outflows from emerging markets and Hong Kong. That's led to currency depreciation along with a jump in rates. You can see in January, the blue line right there would be the Hong Kong dollar plunging to an 8-year low along with the surge in the HIBOR rate. And this, of course, is fears of a yuan devaluation are also roiling global markets.
Sure, I mean, you know, it's such a small move, though, really, you know, when it comes to the dollar, because it's pegged so tightly against the US dollar here as well. But tell me here, what about the capital outflow story? I mean, how does it play into that narrative?
Right now, what we're seeing is that at least investors don't seem too concerned about it, because we are seeing this implied 20-month implied volatility near a 20-month low. And yes, you said it, that exchange rate, because it's pegged to the dollar, is not huge in itself. So what we're seeing is that the exchange rate is holding near the strongest level of the band against a greenback. Not to mention that economists are saying, okay, fine, if the Fed goes ahead and hikes rates, say, 2 times next year, still the gap with Hong Kong rates won't be as big, so cash outflows won't be huge. And remember, Chinese investors from the mainland are also putting money here in Hong Kong because they're trying to just hedge for currency weakness in the yuan itself. So they're buying Hong Kong equities, Hong Kong homes, and so on.
All right, so with those moves, perhaps something not necessarily to be too concerned about. Thanks so much, Sherry.
An offset, basically.
Yeah. All right, thanks, Sherry, for that.
Right, well, China filing a complaint with the WTO over how the United States and the European Union apply anti-dumping tariffs. We've got a look at that story on the way.
This is Bloomberg Markets Asia. I'm Sophie Kamarudin.
I'm Rashad Salaman. Looking at the oil price, of course, Sophie, we've been looking at this, and ever since Saudi Arabia made that, well, their version of the whatever it takes story, it's gone on this absolute binge. It's gone up to what? We've got Brent trading, what, $55.81.
So it seems like we're leaving behind that 4 number.
Yep. I mean, it was easy before to trade between 40 and 50. It was just in this range for much of the year. Some saying at the moment, we had Martin Lakos, didn't we, a second ago, saying he could see it going up to 60, but that might top out there.
And T-Boone Pickens, CEO at BP Capital, he says oil could see 60 in 30 days.
It's not exactly an audacious call, that one particularly, is it? Now, but if we have a look at this, jump into Bloomberg and have a look at what's been going on, because I think you've been highlighting this, and that is that this is in overbought terrain. This is the relative strength index, right?
Yes, that's it. And we're seeing that for Brent, it's heading toward that 70 mark, a level that's signaling overbought territory.
Yep, that's the red line there, and the green line is oversold there. So that's currently what we had. Okay, let's get to the market open here in Hong Kong and Shanghai. Heidi.
Hi, Okay, Rish, let's see what this Greater China Trading Day has in store for us, right? Because remember, yesterday was a horrible day for mainland markets. We had Shanghai falling 2.5%. That was the worst decline we've seen in just about 6 months, and really brought back some of those concerns that we had about a year and a half ago, that great rise and fall of the Chinese stock market, the summer of 2015. Those memories are still pretty fresh. Taking a look at where we've headed, it's not a great start. Shanghai is down by about 0.5% at this point. Of course, quite a bit of nervousness in terms of the data dump that is just down the horizon. We've got about half an hour before fixed asset investment, retail sales, industrial production, these domestic activity indicators that will paint a better picture of exactly how this China rebalancing or stabilisation is faring. We're seeing ahead of that just modest gains coming out of Australia as well, up about 0.1%. It is turning to more of a mixed picture, and in fact, as we speak, the Nikkei 225 has actually just managed to get its head above water, coming off those earlier losses. Japanese stocks are now off their or rather, I should say, Japanese stocks have recovered from the losses that we've seen this year, and in fact, we were looking at some 2016 highs when it comes to Tokyo earlier on. Taiwan up about 0.2% there. Some nice buying despite these concerns over the geopolitical, I guess, implications of some of the rhetoric that's been exchanged between Beijing and the President-elect Donald Trump over the One China policy. The Kospi up by about 0.25%. Again, quite a bit of optimism there that this impeachment process is going to really give the government a shot in the arm and get policy, fiscal policy in particular, back on the agenda. Weakness coming through from the Straits Times. Of course, it was a really good session for some of these energy-heavy markets, but oil is starting to retreat a little bit, or pulling back from the 17-month highs that we saw in the last session. Take a look how we're sitting in terms of the currency space. Dollar yen is looking like this, pretty much unchanged. We are actually, in fact, starting to see quite a bit of move in terms of that dollar index. We had 2 days of losses for the dollar index, but take a look at yen at the moment at 115. We're starting to see a little bit more weakness. Oil is tracking like this. That sort of exuberance that came off the top of that oil rally, $52.83 when it comes to New York crude there. A little bit of weakness. And this is one space that we will want to be watching, both the Aussie dollar, these commodities, currencies, and also commodities themselves, depending on whether we get unexpected weakness from those China numbers. Copper has been falling again for another session. The Aussie dollar really positioned like this ahead of the China numbers. A little bit of weakness. 75 has been that resistance level, so let's see if we get a good number, we could actually push through towards 76. Rish.
Thanks, Heidi. Look in the markets there.
Okay, let's get you to Sydney and get the first word news. Here's Paul Allen.
Prominent short seller Carson Block has targeted a Japanese firm for the first time with a negative report on motor maker Nidec. His firm Muddy Waters sees the Kyoto-based company falling as much as 52% from Monday's close. It says Nidec consistently misses sales and profit targets and uses highly aggressive accounting to boost profit reports. Shares have paired losses after an initial plunge. Apple is said to be discussing investing in the $100 billion tech fund that SoftBank aims to launch next year. Sources say talks have been held about a contribution of about $1 billion to gain access to new ideas. Apple invested $1 billion in Chinese ride-hailing app Didi Chuxing in May, its biggest outlay since buying headphone maker and music streaming service Beats for $3 billion in 2014. IMF chief Christine Lagarde has told a Paris court that an imaginary plot has led her to trial on negligence charges. She told the tribunal she acted in the public interest when, as French finance minister in 2007, she did not try to block a $300 million public payout to businessman Bernard Tapie. Judges rejected Lagarde's request for a delay in the trial, and she'll return to court on Tuesday. The last vessel searching for the missing Malaysian Airlines plane has set off from Fremantle in Western Australia. The mission will be a final sweep of deep ocean ravines that might hold the remains of MH370 and the 239 people on board that disappeared on March 8, 2014. Local media say that if the plane isn't found in one of the trenches, then the search will be called off in January or February. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Thanks, Paul. Right, let's have a look at Israeli billionaire Benny Steinmetz escalating a decade dispute with Rio Tinto over the rights to a mine in Guinea.
His BSG Resources is pointing to claims that Rio Tinto may have authorized a payment to a consultant who was also a friend of Guinea's president in 2011. Bloomberg's commodities reporter David Stringer is in Melbourne. Tell us more about this new development, David.
Hi, good morning. Well, as you say there, it's the latest twist in what's been a very long-running dispute between Rio and BSG Resources. That, as you say, is the company controlled by Mr. Steinmetz, a billionaire. Lawyers for the company wrote to Rio's CEO and chairman on Monday seeking billions in damages for what they say has been a breach of its rights to mine at the giant iron ore deposit in Guinea known as Simandou. The correspondence, which was a letter before action, basically sets out that if BSG doesn't receive a response that includes an offer of compensation from Rio by January the 3rd, it intends to file a lawsuit. And what one of the directors of BSG told Bloomberg News yesterday is that the company could seek more than $5 billion in damages. And look, all this relates to the ongoing headache Rio have with Simandou. Last month, Rio said it had alerted authorities in the US, in Australia, and in the UK after it carried out an internal inquiry into a $10.5 million payment by a consultant acting for Rio on the Simandou project. So this heaps yet more complications for Rio in that inquiry. It's already facing a threat of legal action from one of two executives who left the company as a result of that inquiry. And of course, those investigations remain ongoing in those three jurisdictions.
Well, Rio's been fairly measured, hasn't it, here, in what it has to say publicly on that Guinea investigation taking place. Now, has the company actually responded to this letter, though?
No, they certainly have. And in a statement on Monday, Rio said that should BSG Resources file that lawsuit, should that eventuate, then Rio plans to defend itself very robustly. So it's come out straight away with that. Also, we're expecting the company to respond more formally to BSG Resources in due course. But as you say, Rio has been very measured on what it's said publicly since alerting those three authorities in various public forums. And in fact, right here on Bloomberg television last week, the CEO has really stuck to a script. He said that the issues related to inquiries into that payment in Guinea are very challenging. And sort of insisted that the company will do the right thing wherever it operates. But as you say, not really commented much on the substance of the inquiry or speculated on when we might see any results from those investigations.
Now, David, this is a long-standing dispute. What's the background here? And is there any prospect of either company, BSG Resources, or Rio Tinto having a role in the project in the future?
Well, look, that might be the most frustrating thing for investors here. Neither company really looks like they'll have any role in the eventual development of Simandou. It's long been touted as a kind of $20 billion iron ore project. Rio took the decision to exit in October. It agreed to sell its holding in the project to its partner, Aluminium Corp of China. As far as BSG Resources is concerned, it was actually stripped of its rights by Guinea in 2014. A Guinea government committee said it had found evidence of corruption in a process to award rights. BSG has always denied any wrongdoing. But look, both of these companies embroiled still in legal disputes and without any prospect, I guess, of eventually earning anything from the project.
All right, thanks so much, David, for the latest there from the BSG Resources Rio Tinto dispute. David Stringer out of Melbourne.
Right, we've got tension between Beijing and Washington ratcheted up another notch. Beijing filing a complaint to the World Trade Organization how the United States and the European Union apply anti-dumping tariffs on China.
And Stephen Engel joining us for more. Of course, now are we already seeing retaliation over Trump's one China comments.
Well, I think you need to put everything into perspective. Of course, with the size of the trade relationship between these two economic powers, you're going to have friction. And there have been a number of cases between the United States and China and also the EU to the WTO on anti-dumping methodologies, if you will. But given the comments on one child and the rhetoric and the tweets from Donald Trump, of course, that's at the backdrop.
One child, one China?
Yeah. Did I say one child again? One China policy, of course. That's always at the backdrop of anything that is happening. Now, this latest news is China, coincidentally, for sure, on the one day after the 15th anniversary of China's accession to the WTO, they made this complaint to the United States, to the WTO, about the United States and the EU's practices of using what's called surrogate country pricing for anti-dumping complaints. And I won't get into the wonkiness of the methodology here, but basically China wants domestic prices to be used for all WTO members on anti-dumping. They say using third-party country pricing artificially raises tariffs on Chinese exports.
Which tell me something, you know, Steve, the danger is you get all these tit-for-tat jabs between, you know, China and the US. That, you know, it becomes cumulative, doesn't it? And at some stage it may well become much more serious.
Yeah, that's right. And we've talked to a number of people who say this could be the biggest concern going forward in 2017. We've been talking about, of course, the Fed, what they're going to do. But now with that certainty pretty much a foregone conclusion, the relationship, once Donald Trump takes the office as president of the United States, whether he labels China a currency manipulator, how this trade relationship is going to go forward, and how generally the overall relationship is going to go forward. David Wu of Bank of America Merrill Lynch had this to say.
This is my single biggest worry for 2007. I mean, otherwise, I'm pretty bullish about the world outlook for 2007, except that I fear the U.S. and China could be on a collision course.
And I just want to read this quote, and it's probably why I misspoke and said one child policy instead of one China policy.
Didn't you? said one China.
Did I? I keep on, you know, they're two important policies. Global Times, which is basically the mouthpiece of the Communist Party, saying Trump is like a child in his ignorance of foreign policy. The one China policy cannot be bought and sold.
All right, Stephen Engel, thank you so much, giving us some hints, perhaps, of what U.S.-China relations may look like in 2017.
It's going to be a fun year.
Well, yeah, certainly will be. Right up next, what could be driving Apple to consider investing in SoftBank's $100 billion investment fund?
quick check of the latest business flash headlines. Korea's Mail business newspaper says Hanjin Shipping is likely to be liquidated. It says the accounting firm in charge of due diligence over the bankrupt line, Samil PricewaterhouseCoopers, will recommend that option to a sole court. The Mail says Hanjin's value after liquidation is estimated at around $1.5 billion. Hanjin shares touched a record low on Monday, now down 11.25% been sold.
Amazon's chief executive Jeff Bezos has been a vocal critic of Donald Trump, but he is said to be attending Wednesday's gathering of tech leaders called by the president-elect. Bloomberg's been told that Tesla chief executive Elon Musk, Facebook's Sheryl Sandberg, and Alphabet's Larry Page will also be at that meeting in New York. The tech industry was mostly cold to Trump's campaign, but may now hope to find some common ground.
There's a couple things that are pretty important potential changes that we could see in the corporate finance arena for us. The first is a shift on repatriation of foreign earnings, and that's not being positioned as a tax holiday. It would be a permanent solution, which we would be very happy with. And that would certainly give us more flexibility. And we've talked about it gives us flexibility across M&A, it gives us flexibility across dividends, it gives us flexibility across buybacks. And then there's also tax reform.
Apple is said to have held talks on whether to invest in SoftBank's $100 billion technology fund. Sources tell Bloomberg that Apple may contribute as much as $1 billion to the fund to keep up to speed on new ideas. Remy Inocencio explains why might Apple be interested.
On one hand, it could be Apple's search for innovation, and on the other, it could be Apple's search for profit stability. Very likely, it's both. And according to one person familiar who wanted to be anonymous, it would give Apple and Tim Cook, quote, insight into up-and-coming technologies. So why the need for profit stability? Well, we have to start with Apple's huge reliance on the iPhone first. 66% of its revenue comes from the device. That's 2 out of every $3 that it makes. And then we have to look at iPhone revenue. In the third quarter, that fell 23%. That as shipments fell about 15%. So Apple does need to find the next big thing. And that could be, at least in part, with the Apple Watch. It is the market leader with about a 40% market share, at least in the third quarter of 2016. But last year, year on year, it had a 70% market share. So we're looking at a drop of about 30 points here. That's according to IDC. Garmin is in number 2 and Samsung is in number 3. There also is Apple Pay, and that's expected to hit $200 billion in transactions by the year 2019. But that still, of course, is a few years away yet. And then there's the Apple Car. But Bloomberg ourselves reported that back in October that the company decided to scale back plans for that with hundreds of job cuts. And as for Apple's possible investment of $1 billion, well, that would just be a drop in the bucket of its cash on hand. Look at the Bloomberg terminal. Apple has a huge cash pile, about $237 billion. You remember back in May, Apple invested about $1 billion in Chinese ride-hailing company Didi Chuxing. The last time it invested more than that was back in 2013 when it bought headphone maker Beats for $3 billion. So it does have a lot of money if it wanted to invest even more. And as for the SoftBank Vision Fund, that's supposed to be up and running in 2017. SoftBank CEO Masayoshi Son said $50 billion, or half of the fund of $100 billion, would go back into U.S. investments. So if Apple decided to invest, its money could go back into the country as it does look to continue to innovate and to profit. Remy Inocencio, Bloomberg News, New York.
Well, our next guest was a trader at Goldman Sachs for 15 years before turning his attention to fine dining. He set up Table All, which allows members to get reservations at some of the most sought-after restaurants in Japan. Joining us from Singapore is the founder and chief executive, Takashi Yamada. Takashi, thank you so much for joining us today. Tell us how it works and how you found this idea, and how you came up with the idea.
Hi, good morning. Thanks for your time. Table All is the online reservation service for the high-end and the best restaurants in Japan. And you can book the best restaurants in Japan with a few clicks. And the idea came because I live in Singapore for 5 years, and then I have so many friends, and I was asked by lots of friends to book a Japanese restaurant. And then, they can ask, of course, to the hotel concierge, but sometimes it takes time, or sometimes they cannot book. And as a sales, again, I worked in Goldman for 15 years. And then, I knew lots of chefs. And then, I had lots of entertainment, and I love eating. So I knew lots of chefs. And then, they want to, welcome more foreigners.
Takashi,
but on the one hand,
it's going to take time, it would seem, to build up your clientele. You've got about 500 registered diners here. What kind of plans do you have to expand in other markets, perhaps, that you're eyeing?
Yeah, so currently we have restaurants only in Tokyo, but we will expand to Kyoto, Kanazawa, Hokkaido, mid next year, and then we will try to expand to Singapore or Hong Kong or maybe Sydney or Hawaii in later 2017.
Right, so it works such that, okay, I want to get a table in a particular restaurant. I have no way of getting it. You already pre-book tables, do you not? And then you charge a $26 reservation fee, right?
That's correct. So we prepaid, and then we take an inventory list for the restaurant, and we list it on the website. So, you can click with just $26, and then your booking is confirmed right after you finish the booking.
So cost management here is critical for you, it would seem.
Yeah, but I learned a lot from Goldman, especially with the cost management, so they're very strict on that, and I'm very good at it.
Well, absolutely. So the thing is, you've got to get it, the scalability of this is going to be based upon, well, you, and you're surely going to have more than just you, and if you're going to scale this business up, Takashi.
Yeah, that's correct. So for now, I'm developing all the restaurants and then talking to them directly by myself. But if I expand to more in Asia, I definitely need more people. And then, I really want to focus on the very limited restaurant. So I will not expand like 100 restaurants only in Tokyo or something. But, I will make sure we have the best spots in each country and each city. And then we definitely need more people to expand.
Thanks, Takashi. Good luck getting diners through the door there. That's Takashi Yamada, CEO and founder of Table All.
Right, let's see what we've got coming up. It's one of India's biggest boardroom battles heating up today as a publicly listed Tata division votes on the move to dump its chairman. The latest is coming up.
The executive battle between Tata Group and its ousted chairman shows no signs of going away. Extraordinary general meetings are being held over the coming days to remove Cyrus Mistry from all the group's boards.
Let's bring in Bloomberg Asia conglomerate editor Dave McCombs. Dave, this is an increasingly bitter fight here. Now, why don't they just get on with making money at the end of the day? Or just gets, I guess it gets much deeper than that.
Certainly does. You know, that's what they'd like to do, is get on with making money, but Cyrus Mistry wouldn't have it that way. You know, he's holding on to power with everything he can, and that's unleashed this widening battle that really stretches across the entire Indian business establishment. We're talking about a company that's diversified into a number of key industries. It's a global company. And you've got investors involved now globally. You know, we've learned from our reporters, George Smith-Alexander and PR Sanjay, they've got a number of scoops on this. One of them is that the Citigroup and JP Morgan have both been recruited to come in on the Ratan Tata side to try to finally oust Cyrus Mistry from the positions that he's holding on to. You've also got investors like Vanguard, BlackRock. They're involved as well. They're going to be having big blocks of votes at these upcoming shareholders meetings, like the one that's scheduled to come up this evening Asia time for Tata Consultancy Services, which is one of the main spokes in this huge business empire. If the ouster of Mistry is formalized there, that will be a pretty good sign that he is definitely on the way out.
So, Dave, did this feud have the potential to potentially spill outside India?
Well, it does. You know, this is a global company, and some of the conflicts that led to this in the first place are somewhat global in nature. For example, Tata Teleservices, the wireless unit of the conglomerate, has a dispute going on with Japan's NTT Docomo, the biggest wireless service provider here. It's a $1 billion dispute over a payment on a joint venture. So that's coming to a head partly as a result of this.
Dave. Great talking, Dave. Dave McCombs there joining us from Tokyo.
And coming up, the latest economic snapshot from China, a triple dose of data. That's next.
It's almost 10 a.m. in Beijing, 1 p.m. in Sydney, and 9 p.m. in New York. I'm Rashad Salana.
And I'm Sophie Kamarudin from Bloomberg's Asia headquarters in Hong Kong. This is Bloomberg Markets Asia.
Just seconds away from the latest snapshot of China, going to be headed to Beijing when that data is out.
Funding costs are surging in Hong Kong ahead of the Fed rate decision. That's heaping pressure on the city's currency and equities.
Donald Trump delays his business plan for the White House while naming Goldman's Gary Cohn as economic advisor.
And the president-elect has his doubts about China's yuan policy, but perhaps his focus should be elsewhere.
Right, well, we are looking, and we are just getting industrial output at the moment. We're getting this data just crossing the Bloomberg terminal here. We're looking for retail sales, industrial output, fixed investment here as well.
And factory output coming slightly above estimates at 6.2% on year for November. Forecast is for a 6.1%
Right,
rise.
straight to Beijing. Tom McKenzie's there. Tom.
Yes, the standout number from these three data points are the retail sales coming in up 10.8% for the month of November. That compares to the estimates of 10.2%. What we saw in October, which was 10% rise in retail sales, which is actually one of the weakest numbers in more than a decade. So this 10.8% showing again that the Chinese consumer remains relatively confident. We also, of course, have that industrial production number, as you said, coming in at 6.2%, marginally above the estimates of 6.1%. It was also 6.1% in October. And then the fixed asset investment, that came in line with estimates, 8.3% for the January to February period versus the estimates, of course, of 8.3% as well. In terms of the retail sales, there had been some discussion amongst the economists here as to how much impact these curbs on house prices would have on people's spending power. We also had those inflation data for November showing a pickup in consumer inflation here, but likely that will feed through in the months ahead rather than in the November number. But that 10.8% number is a positive in terms of what the government and policymakers are trying to do, which is obviously shift the emphasis onto the consumer here. The industrial production number, again, in line with estimates or just marginally above. We've got the commodity prices that have picked up, but also a pickup in demand as well. When we're talking industrial production, we're talking electricity, we're talking cement, glass, autos as well. So we're going to get a breakdown of each of how those components play into that number. When it comes to the fixed asset investment, we're going to have to break it down and see how much the public, the state, has had to step up in terms of its spending, because in previous months we've seen the state having to pick up and take the place of the private sector, which has pulled back on some of its fixed asset investments. So we need to get those details for you probably in the next hour. In terms of what this means for policymakers, it does now continue to paint this picture of economic stabilization leading into the end of the year. It does reinforce that base that we've talked about that policymakers can then use to try and rein in some of the risks. So expect to see continued focus on the property market, expect to see a continued pullback of credit. And in fact, we're going to get money supply data. We're expecting to get that out at some point this week. So that will give you an idea as to the loans and the credit as well, which had eased back in the previous month. Definitely one to watch for. Goldman Sachs thinks that the PBOC is going to take a more hawkish line now, particularly on the back of this stronger data, because it has that space now to act. Of course, the big unknowns going forward into 2017 are Donald Trump, the president-elect, and whether he goes ahead with his plans to impose tariffs on Chinese imports. We've already seen, of course, the market angst around some of his comments on the One China policy, so that is going to be a factor to watch, as is the reining back of this credit and continued steps to curb the property market. Credit and property playing such a big role in driving the economic stabilization that we've seen over the last year. When they start to be pulled back and then you throw Trump into the mix, there is still uncertainty for China, but this gives policymakers some space on which to act. Rich, Sophie?
So fairly solid data then across the board. Thanks so much, Tom McKenzie out of Beijing, looking at the latest out of China data.
Yeah, getting market reaction. Of course, it's the Aussie dollar quite often one to react. One of the first things to react. Jules is having a look at this.
Rich, yes, and we have seen a little bit of a spike up in the Aussie dollar that was trading weaker against the US dollar, despite the fact that we have been seeing a bit of dollar weakness, I guess, across the board, although you are now seeing that pullback. So fairly unchanged, the Aussie dollar, 74.98, just that little bit of a spike initially when the numbers hit the wires, of course, as Tom was saying. Better than expected. So far, no real reaction, though, in the cash market. We're still seeing the Shanghai market down another 0.4%. Remember, yesterday having its biggest plunge average in 6 months. It was down around 2.7%. Still seeing some weakness coming through. And a lot of analysts saying, look, it is likely that markets are going to remain listless ahead of the Fed meeting, even though we have seen a bit of an upside, positive upside in this China data. The ASX 200, you would have thought that that might have got a bit of a boost, but it's actually still flat and in fact now just slightly in the red there. So we are seeing a bit of weakness coming through from some of those metals players as well in Australia. And here in Hong Kong, you're seeing the Hang Seng continue to decline as well, down by 0.2%. A little bit of weakness coming through from financials and also some of those real estate property trusts, although you are seeing still some upside from a lot of the energy players. So PetroChina there is the front runner on the Hong Kong exchange. The Nikkei there pretty flat. Remember though, both the Nikkei and the Topix trading at levels that we haven't seen since December last year, and fairly flat on the Kospi as well. I guess the other action that we are seeing today is in the bond market, and if you have a look at the Australian 10-year, well, you are seeing yields being sold off today, so a pretty different picture than what we saw yesterday. Bonds gaining a little bit more traction. That 10-year basis points down by 3 basis points on the yield, 2.8%. So at this stage, I guess no real positive upside in terms of currencies or the cash market from that China data, but as Tom mentioned, Rish and Sophie, it certainly was a little bit better than what the market was looking for.
Thanks, Jules. Getting analysis now elsewhere.
One of those China figures with Jian Cheng, Barclays chief China economist. So the numbers pretty much coming in line with estimates, given that we saw in November strong trade and the PMIs. What's your assessment then of the latest activity?
Yeah, and I think we see stabilizing industrial production and actually a quite strong retail sales, suggesting very robust consumer sentiment, and as well as also quite decent investment data. So overall, I think the data confirmed that into the fourth quarter, the economy remained quite growing at quite a solid pace, and the growth stabilization story and just humming along.
Well, you say stabilization, but we've been 6.7 every quarter. I mean, that's been stable all, year, essentially. But I mean, this could actually translate into something even stronger than that, looking ahead into, looking at the present quarter.
Well, there could be some modest upside risk, but at the same time, I think the economy does face some headwinds down the road. Number one, I think we have uncertain trade policies coming from the President Trump's presidency, and number two is that China's been tightening on the housing market, which remains a key focus to watch for downside risk into 2017. So despite the near-term stabilization, I think which actually also offers some rooms for the monetary policy to stay somewhat of a neutral to tightening bias.
And what does this mean then for policymakers, especially when it comes to the balancing act between stimulus and managing those financial risks?
Indeed, I think we've seen the shift of policy priorities of the PBOC already since August, when it resumed the 14-day reverse repo, and throughout the past several months, and we see the policy focus has shifted from stabilizing growth, supporting growth, and to containing financial risk, and as well as managing the impossible trinity, which is the currency pressures.
Yeah, and of course, underlining that, this whole capital outflow story as well, and it looks like capital controls being taken down is a conversation a long way off from now.
Yeah, I think the intensifying capital controls is only necessary, especially we've seen a very strong dollar movement after Trump's victory. And going forward, and if our base case is 3 Fed rate hikes by end 2017, and we continue to have a very strong dollar environment, that will further add to the currency depreciation pressure. Especially, we know that the biggest short sellers of the renminbi is actually onshore residents and onshore household, and particularly the corporates, which has a continued incentive to allocate their assets into the dollar assets.
Now, there are some assessments here that the China picture is not as worrisome as some contend. Andy Rothman, for example, saying the sense on the ground is that despite some of what's going on in the housing market, it's still relatively strong. What's your take on that?
And manageable, I think, is what he's saying as well.
Yeah, I think there's clearly a sense of complacency and from the markets, but which is also true that cyclically we've seen the old economy actually stays a very strong rebound since actually the beginning of the year with very strong credit expansion. But we all know that this is another round of debt-fueled investment growth and debt-fueled stabilization, so which only brings, more risks down the road in the medium term. Well, but the near term, I think fair to say that China remains a stabilizing factor for the global economy.
Yeah, Jan, that's just it, isn't it? What you just said here. This is it's manageable, the debt problem as a whole. There is a bit of people a bit sanguine about the whole thing here. So the household problem is one issue, and the capital outflow, household debt is another issue, and of course the capital outflow story. So where does that all leave you with looking at the yuan? How much does it weaken from here? People have said, 7.2, 7.3, maybe before the summer. What's your view?
Yeah, our view is that the currency will continue to depreciate to 7.35 in a year's time. And there is actually also a risk if we see a recent fast depreciation of the currency actually add to the outflow pressures. And there is increasing, I think, probability that the government may shift towards a more rapid shift of floating currency.
So more capital controls anticipated?
And then more capital controls is actually necessary to facilitate this shift towards a more flexible exchange rate regime where we could see more two-way volatilities, and it could be a widening of the trading band, reducing of the FX interventions, and some of the timings, with President Trump's continuing to highlight some potential targeting on China, and there's some,
Looking at the way that China's FX reserves have been drawn down and the weakening of the currency, what do you make then of that potential labeling by President-elect Trump?
Well, we do know that you need 3 criterions to be met to name a country as a currency manipulator: significant trade surplus with the U.S., a current account surplus that's above 3%, and also intervention, constant intervention in the markets to support the currency. And while China only meets the first criterion, theoretically that it does not really constitute a strong argument, but we all know that the president still has the power of maybe making some technical adjustment. But our base case is that the key is not necessarily just on the naming the currency manipulator, but it's more on what kind of trade policies Trump would have imposed with his major trading partners, including China.
Yeah, I mean, that's just it. We just don't know. That's the big problem. I mean, he's going to do so many things on his first day of taking the office that I don't think he'll have time to do anything, actually, much left.
In the near term, it seems that other than the geopolitical kind of comments that he's made in the region, and he has not yet moved on the trade front on China, but clearly there is a risk that we should not be underestimating.
All right,
Jan, thank you so much. Jan Chang from Barclays, looking at all this data which comes from industrial production, slightly ahead of expectations, retail sales slightly stronger, but overall and broadly speaking, we were pretty much
matching estimates somewhat there.
Exactly.
All right, now let's get out to Sydney for the First Word News with Paul Allen.
The European Union will set out how it will conduct Brexit negotiations with the UK. Leaders will meet on Thursday without British Prime Minister Theresa May to discuss the bloc's strategy once she triggers Article 50 of the Lisbon Treaty. A draft statement seen by Bloomberg says the UK will be excluded from all meetings where the 27 remaining EU members discuss Brexit. IMF chief Christine Lagarde has told a Paris court that an imaginary plot has led to her on trial on negligence charges. She told the tribunal she acted in the public interest when, as French finance minister in 2007, she did not try to block a $300 million public payout to businessman Bernard Tapie. Judges rejected Lagarde's request for a delay in the trial, and she'll return to court on Tuesday. Donald Trump is said to be postponing until next month details of how he'll handle his business operations while in the White House. Transition officials say a news conference scheduled for Thursday will be delayed because the president-elect is busy filling his administration posts. Trump has about $3.6 billion of assets and $630 million in debt held in more than 500 companies. And Donald Trump has nominated another Goldman Sachs executive to his administration. He's picked 25-year veteran Gary Cohn to be his top economic policy advisor. Cohn became Goldman's co-president in 2006 and later the sole president, an office that in recent decades has been used to groom the next CEO. His role on the National Economic Council will see him help coordinate Trump's economic program. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Thanks, Paul. Now, still ahead this hour, trade and treasuries. China launches a WTO complaint against the U.S. and EU dumping rules.
Plus, 10-year yields climbing to their highest in 2 years amid the global bond rout. You're watching Bloomberg.
The Fed is widely expected to announce a rate hike on Wednesday, but bond traders aren't waiting till then and are already pushing up yields. Bloomberg's Kathleen Hays joins us with that.
Kathleen, tell us something here. You know, we were talking about this earlier. You know, what's really behind this rout that we're really seeing on these fixed income markets? What's driving this?
Well, you know, if we look back to the middle of last summer-ish, we can say to a certain extent it started with some upside surprises on the U.S. economy. Donald Trump won the White House. Guess the U.S. economy is going to get more stimulus. That really gave it some steam. But then the last few days, it's OPEC. It's oil prices surging to a 17-year high, pouring more fuel on this bond market selling fire. Let's jump into the Bloomberg now and look at hashtag 4968. It's a 10-year note yield, the U.S. benchmark. Intraday basis, it traded as high as 2.5% on Monday, the highest in 2 years. That July record low of 1.32%. Little red circle down at the lower left-hand corner of your screen. Yields doubling nearly in 6 months. Go back up to the left-hand corner, though, 5.29% as the U.S. economy. Just before it went into recession, you can just get a sense of how much further this would have to go. It's been quite a sell-off. But the question now, of course, where's the Fed? Donald Trump's going to boost the economy. Are they going to forecast more rate hikes for 2017 and 2018? This is what's really on traders' minds now.
Now, Kathleen, why are bond traders and investors finally believing the Fed's forecast for the economy and rate hikes?
Well, certainly it's because they're seeing more evidence that the Fed is right. The economy is going to pick up enough for rate hikes. A year ago, actually, December 2015, the Fed was forecasting 4 interest rate increases. Bond market didn't sell off. In fact, it kept rallying. But as all those things I just mentioned build up, they're changing their view. Let's go to DOTS, D-O-T-S, GO. It's a wonderful terminal function. The yellow dots, those are the clusters of all the Fed officials' forecast for rate hikes. One in 2016. The median green line is connecting those clusters to show you what the consensus view was. 2017, 2 rate hikes. 2018, right in the middle there, that's a forecast, the median forecast for 3 rate hikes. But the red line at the bottom, that's what the derivatives traders been betting on. At least they were betting on that in September when the Fed last met. Hardly any rate hikes at all the next couple of years. But the purple line, that's what those same traders are betting now. They're getting closer to what the Fed is looking for. So will the Fed change its dots at this meeting? The Fed, first of all, has said publicly that it can't really change its view on the economy and monetary policy, so we know exactly what Donald Trump is going to do. Peter Fisher is the former executive vice president at the New York Fed, and he says maybe it's time for the Fed to just step away from those dots.
The hardest thing for the Fed is they really don't know where they're going to be a year or two from now. Right. They don't know how much this recovery we see is going to come through. They don't know how much on top of that the Trump administration is going to put and Congress is going to put. So I think what I'm looking for is what kind of hint we get about, does Janet Yellen know she's got to pull back from forward guidance? She's going to have to pull back from pretending she knows a point estimate on the Fed funds rate for 12 months from now, which she really doesn't know.
Peter Fisher basically says forward guidance is past its prime. And in fact, earlier this year, the president of St. Louis Fed, Jim Bullard, who's been one of the guys kind of out front on monetary policy the last 4 or 5 years, he pulled away from the dot forecast. He doesn't think they work very well at all either. So we'll see. It'd be very interesting if Janet Yellen were to signal anything like that at the conclusion of the meeting and that very important press conference on Wednesday.
Thanks so much, Kathleen. We're nearing the end of that countdown to that Fed decision on Wednesday. Kathleen Hayes, their Central Bank Watcher.
It's been a long time coming. Anyway, okay, quick check on the Business Flash headlines. Shares of SMC Corporation are tumbling in Turkey today. This after Well Investments issued a negative report on the company. Now, the short research firm questioned the pneumatic equipment maker's accounting. Well Investments is part of a group of activist short sellers who have been targeting Japanese firms this year. And SMC, well, spokesman said he had no immediate comment. We will be talking to the Wells Investments chief executive, Yuki Arai, the investment CEO there, Wells Investment CEO, about this call here on SMC Corporation.
And more in the short selling space there. A prominent short seller, Carson Block, has targeted a Japanese firm for the first time with a negative report on motor maker Nidec. His firm, Muddy Waters, sees the Kyoto-based company falling as much as 52% from Monday's close. It says Nidec consistently misses sales and profit targets and uses highly aggressive accounting to boost profit reports. Shares pared losses after an initial plunge.
Apple is set to be discussing investing in the $100 billion tech fund that SoftBank aims to launch next year. Sources say talks have been held about a contribution of about $1 billion to gain access to new ideas. Apple invested $1 billion in Chinese ride-hailing app Didi Kuxing in May. Its biggest outlay actually since buying headphone maker and music streaming services Beats, where they paid $3 billion in 2014.
Up next, with the Fed rate hike all but certain this week, we'll look at why Hong Kong's money markets are already feeling the strain. This is Bloomberg.
we got a rate hike from the Fed Reserve this week, pretty much fully priced into the markets.
And funding costs are surging in Hong Kong, heaping pressure on the city's currency and equities. Sherry Ann joins us with a look at this. Now, lay out the risks here.
Right. So it's becoming more expensive to borrow in order to buy stocks. So we are seeing now the interbank rate, the 3-month interbank rate or HIBOR, surging for the past 10 days to a 2009 high. Now, ANZ is saying that this credit crunch just signals concerns of cash capital outflows from Hong Kong. Of course, higher U.S. interest rates have always come with cash outflows from emerging markets and Hong Kong. And the fact is that in isolation, higher rates would boost or support the Hong Kong dollar given the peg to the U.S. dollar. But if you take a look at this chart on the Bloomberg, you can see that in previous bouts of cash outflows, that has led to currency depreciation along with a jump in rates. That spike that you see in January of the blue line, that would be the Hong Kong dollar plunging to an 8-year low as fears of a yuan devaluation roil global markets.
Well, we did see yuan, of course, steadily weaken. And, I mean, this is a highball line, the white one here, isn't it? So this is at what? 0.8% at the moment, or thereabouts?
Yeah, 0.82%. That would be the highest since 2009, so pretty high. So these concerns of cash outflows are there. But what investors or what economists are saying right now is that, okay, so we see the Fed hike rates twice next year. Still, the rate gap with Hong Kong wouldn't be so big, so we wouldn't see those huge cash outflows. Not to mention that we have seen mainland investors just pour money into Hong Kong equities, into Hong Kong homes in order to hedge for the devaluation of their own currency. So the risks are there, but still the exchange rate pegged to the U.S. dollar now trading at the stronger level of that band against the greenback.
And that narrowing of that gap of HIBOR, as you mentioned. All right, thanks so much, Sherry Ann, for the update there on what's going on ahead of that Fed rate decision.
Yeah. Up next, at Donald Trump again, he has made a friend of Taiwan.
In a moment, we'll see why some think the president-elect's affection could be misplaced.
Right, yes, and of course the full market update coming your way too as we head towards that Tokyo close as well for its lunch break. Looking at the Nikkei as we head there for that 60-minute lull, and down at the moment at Nikkei by about 25 points, 19,129. We're back in a bit.
It's 10:29 in Hong Kong, 1:29 in Sydney. I'm Paul Allen with the first word headlines. China's economic stabilisation held in November, with industrial production climbing 6.2% from a year earlier, slightly above estimates. Retail sales advanced 10.8% last month, while fixed asset investment increased 8.3% in the first 11 months of the year. It gives policymakers more room to switch focus from stimulus toward curbing financial risks. OPEC boosted production in November ahead of next month's collective cut. Sources tell us Nigeria, Libya and Angola all pumped more oil, raising the cartel's total output to 33.8 million barrels a day from 33.7 million in October. Analysts expect OPEC members and independent producers to increase output ahead of the cuts to ensure no loss of market share. The Chinese group pursuing AC Milan Football Club has failed to meet the deadline for a down payment. The club's parent, Fininvest and Sino Europe, last week agreed that $106 million will be transferred on Monday, with March 3rd the date for completing the sale. However, the ANSA news agency says the money was not paid. Sino Europe didn't have all the investment in place when it first bid for Milan. The last vessel searching for the missing Malaysia Airlines plane has set off from Fremantle in Western Australia. The mission will be a final sweep of deep ocean ravines that might hold the remains of MH370 and the 239 people on board that disappeared on March 8, 2014. Local media say that if the plane isn't found on one of the trenches, then the search will be called off in January or February. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
This is Bloomberg Markets Asia. I'm Sophie Kamarudin.
I'm Rashad Salamat. Let's have a look at what's going on market-wise. And Jules, what's the flavour of the day?
Well, Rish, not a lot of conviction in markets today. We are seeing the regional index pretty flat there. You know, we thought that with that better than expected China data, you could see a little bit of upside, but we are still seeing equities being sold off. I guess the main story now ahead of the Fed meeting this week. You're still seeing a lot of weakness in financial stocks today, and also industrial players off by about 0.6%. Healthcare, very much the front runner today, so that shows you just how much of a defensive play today's trade is. Having a look at some of the big movers, POSCO in sold down by close to 5%. This is as its trading volume also doubles. The biggest fall we've seen in the steelmaker since June 24. So quite a lot of movement, I should say, going through in that stock. This is a healthcare stock in Japan, just really showing you that buying that we are seeing in healthcare. And then Tibet Urban on the Shanghai Composite is one to watch. It is resuming trade for the first time since June, also saying it's seeking a 1.17 billion yuan in placement for share purchase. This is a company that operates in property development business, and we know that a lot of these China property stocks have been coming under pressure. Having a look at how the overall Shanghai, Hong Kong markets are going, still quite a lot of weakness. The Shanghai market down 0.5%. Of course, yesterday having that biggest fall in 6 months, still seeing a lot of downside coming through from a number of those property and also home appliance companies. So similar to what we saw yesterday. And in Hong Kong, you're seeing the Hang Seng off by 0.2%. Still some solid support, though, from the energy players, which I guess is limiting the losses somewhat on the Hang Seng. So PetroChina and CNOOC looking quite good there. Australia is pretty flat. It had a flat finish yesterday as well, despite that rally that we saw in energy players. You're still seeing a little bit of weakness coming through from some of those other commodity players. And then just having a look at the offshore renminbi, fairly flat there, 6.9297. But we have seen the yuan rise for the first time in 4 days. This as the PBOC strengthened the fixing. So the fixing today came through a little bit stronger than what it has been. And of course, no real reaction there in currencies from that China data so far. Sophie and Rish.
Thanks so much, Jules, checking on the markets for us.
Well, Donald Trump, of course, accusing China of ripping off the U.S. on trade and threatening to brand Beijing, of course, on his first day in office as a currency manipulator.
Yet there are some economists who say his new friend Taiwan is much better suited to bear that label. Bloomberg's Asia EM currency editor Robin Ganguly is here. Now, why does Taiwan deserve a pass on this versus China?
That's a really interesting question, but because Taiwan is a far smaller economy, has a far smaller stake in global politics than Trump has, and it's more fashionable, it's more appropriate to brand, to fight. China's, after all, the second largest economy in the world. So I think what Trump is trying to do There is speculation that he's also trying to use his relationship, or so-called the beginning of this relationship with Taiwan, as a sort of a bargaining chip against China. And China is extremely sensitive about the one China policy.
Well, I mean, if you want to brand any, apart from the US, I'm going to talk about the US, but if you want to brand any country, a currency manipulator, it's going to be Japan. I mean, it's almost stated in Abenomics they want to weaken their currency. But, you know, moving beyond that here, you know, if we look beyond the rhetoric, you know, what about any real impact?
So I'm not quite sure about real impact, but there is, Rich, there's a really, Trump is walking a very dangerous line because, you know, at some point of time, I mean, you want to push, but beyond a certain point, you don't want to take a certain chance. But on the other hand, if you look at the evidence over the past year, since the beginning of this year, so the Taiwan dollar has actually risen against the greenback, but the Chinese currency has dropped about almost 6%. So that's a huge, almost a devaluation, depreciation against in any period of time. So I think Trump in some ways is sort of, I mean, he has his reasons, but the real impact is that he could push things beyond a certain point where it could affect the entire Asian economy. It could have a kind of a knock-on effect and hurt currency stocks, all asset classes. That's the peril.
Now, putting it to perspective here, as you say, you know, China here, it's an economic behemoth, but with Taiwan and what type of potential framing that we're seeing with the U.S. Relationship in this region, what else can we anticipate here? I mean, just take a look at the economics of Taiwan, for example. FX reserves have been climbing.
Yeah, FX reserves have been declining because, and on the other hand, you see China's declining. So that's the kind of two opposite. China's, because, you know, they have been defending their currency, at least as widespread speculation. Nobody really believes that they have let their currency drop. They have been trying to control it. So there is a lot of meddling in the currency. However, Taiwan, we have seen over several years, for a while they had dropped, at least for several months, we have seen them allowing the currency to appreciate, and towards the end of trading, they tend to step in and try and weaken the currency. That is something that, you know, that creates a problem in the currency markets, that creates these artificial moves. I think that is a problem. But going back to that point, if Trump pushes, he has to know when to stop.
Yeah, the Taiwan dollar up to 31.80 on that. Thanks so much, Robin Ganguly, Bloomberg's Asia EM currency editor.
Yeah, declining though. Over year-to-date, 3.8%. Just put that into context, right? Thanks a lot for that. Right, let's just tell you about these tensions, though, between Beijing and Washington, because we're just seeing a little bit more heat here. Beijing filing this complaint to the World Trade Organization over the United States and the EU and how they apply anti-dumping tariffs on China.
So Stephen Engel joining us for more now. Are we already seeing retaliation over Trump's comments on the one China policy?
Yeah, it's interesting. What I was obviously I just replaced Robin. And
yes,
Robin
you just morphed in.
I just morphed it, yeah, from Robin into myself. But it's interesting what Robin had to say about, you know, Trump and his new administration needs to tread carefully in this relationship. But China needs to tread carefully as well, because, listen, so much is at stake in this China-U.S. relationship, and China doesn't like this kind of uncertainty, doesn't necessarily know how to react to it. Do you push back strongly, or do you have a measured approach? And so far, they've been fairly measured, except for a few inflammatory comments coming from state media, which I'll talk to in just a minute. But this latest development is perhaps not related directly, a tit-for-tat for what Trump has said about the one China policy, because it coincides as well with the one day after the 15th anniversary of China's ascension to the World Trade Organization. So this is something that they've been pushing for. They want, in the complaint that they filed to the WTO, the U.S. and the EU and others to use fair, in their estimation, pricing for anti-dumping complaints and tariffs, okay? So they use what's called surrogate country pricing, which takes third country pricing applied to domestic complaints. It's kind of wonky, and I won't get into it.
Yeah, it is very complicated.
It's very complicated, but basically China says it artificially raises the level of tariffs, punitive tariffs against China in a case against Chinese exports. We have a U.S. trade official saying, though, telling Bloomberg that they have no plans, the United States has no plans to modify the way they calculate anti-dumping measures, and the quote from that official saying China has not made the reforms necessary to open up on market principles.
Yeah, I mean, the danger here is, isn't it? We were talking about this earlier, Steve, weren't we? That you just get a series of tit-for-tat moves and between these two countries, and before you know it, it's that the tits and the tats are getting bigger and you're in a trade war.
Yeah, well, that's the biggest concern right now, I think a lot of people, because we are in uncharted territory. Donald Trump is talking and so far acting. He's not the president yet, but so far acting or tweeting unlike any other president is sitting in the White House. So that's what is the concern. In the Global Times, I mentioned about the state media, they are sort of gingerly criticizing Trump. But again, Trump is not the president yet, so we don't know where we're going to get yet. But Global Times saying Trump is acting like a child in his ignorance of foreign policy. The one China policy cannot be bought and sold. And this is what David Wu of Bank of America Merrill Lynch had to say about 2017.
This is my single biggest worry for 2007. I mean, otherwise, I'm pretty bullish about the world outlook for 2007, except that I fear the U.S. and China could be on a collision course.
So we live in interesting times. And, of course, Trump's horse trading tactics, big test for China.
And as you say, China being fairly measured, trying to divide rhetoric from action from the U.S.
Yeah, I don't think I've ever said bigger tit and bigger tat on television before. Anyway, I just said it again. Anyway, that bit can be edited out, can't it? You know?
Which is one? Which is...
Thanks, Steve. Steve Engel there.
Now, in a moment, we meet the short-selling activist who's fast becoming Japan's most influential bear.
Well, investors, Yuki Arai joining us live from Tokyo. That's on the way.
A quick check of the latest business flash headlines. Boeing shares rose in extended trade after it boosted its dividend by 30%, topping estimates. The board also set a new $14 billion buyback plan. Boeing says it's planning to produce fewer 777 aircraft due to waning demand for long-haul jets and will slow output to 5 planes a month from August. The company says the changes won't affect its 2016 financial guidance.
Sinopec is selling a 50% stake in a pipeline division for $3.3 billion. It's really seeking funds here to expand its natural gas business. China Life will pay $2.9 billion for about 44% of the project. A division of State Development and Investment Corporation will take the remaining 6%. Beijing, of course, seeking to boost natural gas use and revamp bloated state-owned enterprises.
Korea's Mail business newspaper says Hanjin Shipping is likely to be liquidated. It says the accounting firm in charge of due diligence over the bankrupt line, Sunmil PricewaterhouseCoopers, will recommend that option to a sole court. The Mail says Hanjin's value after liquidation is estimated at around $1.5 billion. Hanjin shares touched a record low on Monday, now down 16.5% in Seoul.
Right, but look at the Japanese pneumatic equipment maker SMC. It fell the most in 5 months. Why? Well, it was the short researcher Well Investments issuing a negative report.
Well Investments is part of a group of activist short sellers that have been targeting Japanese firms over the past year. Joining us from Tokyo is its head of research, Yuki Arai. Now, Yuki, we're seeing SME fall at one point down 11%. You're saying it could fall as much as 85%.
Yes, thank you for having me today.
So what is driving your view on SME here?
So our activity is just started last year, and my point is to provide a lot of perspectives to the Japanese capital market. And yeah, this time the SMC report is our fourth report.
So there's a question here about the accounting, the measures taken by SMC. You're saying that it's being audited by a tiny firm with a history of overseeing fraudulent companies. What other factors here are, sending up red flags for you when it comes to SMC?
Well, actually, we got an email from someone that indicate that SMC's accounting practice is a dubious one. So I took a closer look at the company, and I found that, as you mentioned, the auditing firm is quite tiny, and it's very unreasonable for this side of the company, and SMC, appoint this kind of tiny audit firm. So we actually doubt the credibility of the financial statements.
Well, yeah, but why are you doubting this? I mean, they say they're sitting on a big cash pile. You say they've got no money at all. You're saying essentially that this company is broke here. Now, why isn't the stock exchange looking at this and investigating it?
Mm-hmm. Well, so there are several points that I want to make, but first of all, so audit firm for the overseas subsidiaries has been changed frequently, and also each different subsidiary uses different accounting firms. So I don't know why SMC has to appoint such audit firms, and also when we look into the financial statements of SMC, we found that cash balances and inventory level and operating margin in domestic market is quite dubious when compared to the competitors. So those are the main points I made in the report.
Now, as it stands, the calls on SMCs are 8 buys, 7 holds, 1 sell. Clearly, you're saying this is a strong sell. What other markers are you looking for to indicate the type of weakness that you've observed?
Okay, so apart from the accounting issue, I found that the holding company by, I think, Chairman Takada, as a company, and Tom Finance, which has more than 5% shares in this company, I mean, SMC, pledged all the shares to the Resona Bank, which is the main bank for SMC. And right after the Lehman failure in the September of 2008, and I couldn't find where this financed money went to. So this kind of facts is a strong smoking gun.
Yeah, that's just it, isn't it? I mean, okay, you're saying you've got all these disparate accountancy firms doing audits on various subsidiaries here. Now, surely the analysts who, I mean, because I think, Sophie, what did you say, the 8 buys here, they would have looked at that. They didn't see any flags here. Why are you seeing them and not them?
Well, actually, so for example, in the Singapore subsidiary of SMC, has a very tiny audit firm which has a track record of involvement with the accounting scandals in Asian region. And that this company has a lot of cash among the group. So, and the account auditing period they conducted, it's quite short. So it's one of the signs that I got a doubtful view on this company.
Now, this, taking it to a bigger picture, this is the fourth stock that you've made this report on. Looking at what's been going on the past year, then, are you saying there are overall concerns around corporate governance and other types of accounting measures? Are we going to see more of this type of activity?
Yes, I hope so. Actually, as you mentioned, that GPIF and BOJ is now investing a lot of money in capital markets in Japan. So if this kind of accounting practice is allowed, that means, that hurts our national assets. And so I hope they're going to take strong actions against these kind of accounting practice.
Yuki, do you have anybody else in your sights? Do you think that these sort of accountancy irregularities, that, as you would say, are actually fairly endemic when it comes to corporate Japan?
Well, yeah, I think a lot of people are now supporting my activities, and especially since September when an article about me was published, and actually a lot of people are contacting me. So I think there are a lot more is coming in the coming month.
Thank you very much indeed for that, Yuki Arai there from Wells Investment, where he is the chief executive. Of course, short-selling research coming through on SMC Corporation. They're sending that stock price tanking.
From Tokyo now, still to come, we'll look at how some of Hong Kong's wealthiest people have met the rules and trimmed their tax bills. This is Bloomberg. This is Bloomberg Markets Asia. I'm Sophie Kamarudin.
I'm Rashad Salamat. Now, some of Hong Kong's wealthiest individuals are managing to find legal ways to sidestep the real estate curbs that have been instituted, and in the process, of course, saving a small fortune on taxes.
Now let's bring in Bloomberg reporter at large Frederick Balfour. Now, Freddie, billionaire Edwin Leong being one of those, and his family saved $17 million in property taxes. How is this possible?
Well, He should be paying at least 15% in taxes, but he managed to qualify as a first-time home buyer. This is somebody who owns hundreds of properties through his company, but because he never registered them in his name, he qualifies for a program that is meant to encourage people at the bottom end of the income bracket to get a foot on the property ladder.
And this wasn't a cheap property he bought either, was it? If you save 17 million.
Well, guess what? It wasn't just one property. This is the other odd wrinkle. He and his family bought 3 properties. 2 of them he plans to combine into more than 8,000 square feet flat. And that's about 10 times the average size of an apartment here. And then another family member got a 3rd. And because it's all considered one transaction, they're all considered first-time purchases.
And the price tag and all, $355 million, FYI. Now, how widespread? U.S. dollars. So how widespread, then, is this practice?
Well, it's hard to say exactly because a lot of it happens sort of behind the scenes. But I think I'd like to answer that question by telling you the other way that the rich evade. And that's by buying properties through companies. And if those companies are registered offshore, guess what? 0 tax paid if you resell the property or if you buy a property through a registered company. And this is very popular among the mainland Chinese. Of course, it's only worthwhile if you're really wealthy because the legal expenses can be pretty high.
What does it mean then here? I mean, does it mean any more in terms of these government attempts to curb these prices here? You know, what does it do to that?
Well, the government measures are meant to try and curtail the demand by investors and second-time buyers. But what this does is it basically undermines the government's efforts because a very wealthy person can say, aha, there's a new development. I think I'll buy 15 units. I've never bought anything in my name, and I can qualify for the concessionary rates. So it actually goes against the sort of...
One transaction.
All in one transaction, exactly.
All right, thanks so much, Freddie Balfour, taking a look at how the wealthy of Hong Kong are sidestepping real estate taxes there.
Right, well, coming up ahead, Angie and Heidi, they're going to be updating us on the big stories of the day. Angie, what's in store?
Well, China's economic stabilization continues, and it means that China is feeling less pressure on fiscal stimulus, and perhaps it can control its markets a little bit more with tightening. But is that what it's going to do? We're going to ask that of HSBC's Fred Newman. Then off to Kyoto we go, where short seller Carson Block and founder of Muddy Waters targeted a Japanese firm for the very first time, Nidec Corp. What does that mean for corporate governance in Japan? And finally, Tata Consulting and the Cyrus mystery saga continues. All that next hour, Bloomberg Markets Asia.
studios in New York City, this is Charlie Rose.
We begin this evening with cybersecurity and the Obama administration. The president ordered a full review of Russia's election-related hacking. Lisa Monaco, the president's Homeland Security advisor, told reporters about the investigation on Friday morning. She said the report will be delivered before President Obama leaves office on January 20th. Senator John McCain also announced today that monitoring cybersecurity issues would be a significant focus of the Senate Armed Services Committee, which he will chair. Joining me now from Washington, Senator John McCain. Senator, thank you for joining us.
Thank you, Charlie.
Why are you making that announcement today?
Well, obviously, one of the issues, situations that has brought this situation to a boil is the allegations of Russian interfering not only in our elections, but in other elections around the world. That undermines, obviously, the fundamentals of democracy if they're able to succeed. But more importantly, Charlie, testimony before the committee by our military and civilian leaders in defense have all stated that cyber is one of the areas where we do not have an advantage over our potential adversaries. Not only don't have an advantage, in some instances, they have an advantage. And so these hearings will be focused on the overall issue of cybersecurity and obviously their ability or inability to affect the outcome of elections in democratic countries would certainly be one of the issues, but only one.
But you are saying that you're going to have your own investigation at the Armed Services Committee?
Yes, because my understanding, among other things, is that it's simply on whether they're hacking into the just past election. By the way, the Chinese hacked into my election back in 1980, but this has got to be a broad and encompassing. We've already had hearings in the Armed Services Committee on this issue. We asked all of our military witnesses. Now we've got to really focus exactly on the encompassing aspects of a challenge, whether it be their ability to shut down our satellites or steal our most important secrets, such as our new weapon systems, or whether it is to be able to listen in on communications, or whether to be able to disrupt and destroy communications. There are some scenarios, my friend, and I'm only emphasizing scenarios, where they could shut down every satellite in space. So this is a huge challenge, and frankly, this administration has no policy as to how to prevent it, what to do in case of attack, and how to prepare for one.
Do you have any doubt that the Russians tried to interfere in the U.S. elections?
I don't know if it was an intentional interference, but I do know that some of the leaks that came out cannot be helpful to the political process. Now, I'll leave it to others, and I don't have sufficient information to make a judgment about the past election. But I can make a judgment that if they are able to disrupt communications and to pervert communications to the degree where the people who are making a determination as to how to vote is distorted or disrupted or destroyed, then obviously it's a big challenge to democracy, whether it be in the United States or any place else.
Do you believe that you have a different point of view than President-elect Trump on this, who has tended to downplay the idea that it might have been the Russians?
Every expert that I've talked to says it was the Russians, and that's unclassified. But everyone I've talked to said the Russians have played a very major role. But not just in elections, Charlie. They are every day bombarding some of our industrial bases, particularly the military-industrial complex. They are bombarding our communication systems. I mean, it's just a fact, is what they're doing. And they're the best at it. The Chinese are next, and then you have the everyday hacker that is also a significant challenge.
But we also have cybersecurity and cyber espionage capabilities. I assume that we're using them as well.
No, we're not. I'm sure we are to some degree, but we don't have a policy. Until a president of the United States sets a policy as to what you do and how you achieve it. For example, Right now, if we think that there's an impending attack, there's no policy as to what to do. Once there is an attack, there is no policy as to what we do in response. And so there is really a lack of coherence from the executive branch. And our job is to lay out the scenario and enact legislation if necessary. And I'm sure some legislation will be necessary.
But you were saying that Mike Rogers, Admiral Mike Rogers, does not have a policy to respond to cybersecurity invasions.
Mike Rogers has testified before the Senate Armed Services Committee that there is no policy.
And coming out of the Armed Services Committee and your oversight capabilities and monitoring of cybersecurity will be a recommendation for legislative.
We will, not just a recommendation, we will enact legislation through the Senate Armed Services Committee, and I have received encouragement to address this situation by our Republican leadership.
Have you had any conversations with President-elect Trump about this?
No, I have not.
Should you?
I'd welcome a conversation with him on this and any other issue.
But you know very well the nominee to be Secretary of Defense.
I know him very well, and I have had conversations with General Mattis, a man I've known for the last, I'd argue, maybe 12, 15 years.
Your colleague and mutual friend, Lindsey Graham, and admirer, said, I'm going after Russia in every way you can go after Russia. I think they're one of the most destabilizing influences on the world stage. I think they did interfere with our elections, and I want Putin personally to pay the price.
Well, my friend Lindsey Graham is always shy and retiring and reticent, as you know.
No, he's not.
But I think the point is that we need to have that as part of our overall assessing of the situation, and not only what the situation is, but what we need to do in order to counter this threat to our national security. So that's a part of it. The Russians, according to most experts I talk to, are the leading offenders, but there's plenty of others too. The Chinese, some say that the latest Chinese aircraft has some alarmingly similar features of the F-35. So there's no doubt that a great deal of industrial espionage has taken place, not just by the Russians as well. So we need to develop an overall policy that not only applies to the Russians, but to every other nation and every other individual that might seek to harm this nation.
Even though they don't have a policy, you have underlined the fact you do not believe the administration has a policy. Lisa Monaco, who's in charge of this inside the White House, said, singled out internet-related dangers as among the most significant national security issues facing the new administration.
Someone should ask Lisa Monaco, what is our policy if we detect an attack is coming to the United States? What is our response if there is an attack? And look at the whole scenario of how the United States of America responds to this threat. There is none.
But why wouldn't you, as chairman of the Senate Armed Services Committee, request a meeting with the president-elect to talk about this?
I promise you the best way to have that dialogue is to declare that there will be hearings and policy making and legislation coming out of the Senate Armed Services Committee. I promise you that will prompt a dialogue. And it's going to take some time, Charlie. This is not something that we're going to be able to do overnight.
Do you believe you have to turn the president-elect's understanding around on this? Because, I mean, basically what he said to Time Magazine, he said, I don't believe the Russians interfered with the election. It could be Russia, and it could be China, and it could be some guy in his home in New Jersey. I believe that it could have been Russia, and it could have been any one of many other people, sources or even individuals. That's what the president-elect said to Time Magazine.
Well, in some respects, he's right, that all of these are players that he mentioned. The problem is that he may not quite understand that the best at it and the most hostile and the ones who have probably had the most significant impact over a number of years are the Russians. They're the best at their job. Admiral Rogers has basically said the same thing. All these experts have said, our Director of National Intelligence has said it, that it's the Russians who are by far the most active in this kind of behavior, but it's not confined to Russia.
Senator McCain, I look forward to talking more about this. Thank you for joining us on Friday afternoon.
Thank you, Charlie.
See you soon. We continue now with Michael Isikoff of Yahoo News and David Sang of the New York Times. Both are from Washington. David Sang, I begin with you. Why did the president take this action today and order this investigation?
Well, Charlie, I think that there is a substantive reason and, from everything we can tell, a political reason. The substantive reason is that it has taken the intelligence community an extraordinarily long period of time to come to all of the major conclusions they've come to on the Russian effort to influence the election. And that's everything from the hacking of the DNC, the Democratic National Committee, and the release of those emails, to the scanning of registration data, though it looks like in the end they did not try to affect the actual voting process and machines. And then all of the other surroundings of this, because obviously the Russians have been hacking into many other American institutions for many years. And there's, I think, a serious question about why the United States was caught by such surprise here. And so I think substantively he wanted to force the intelligence community to come up with some lessons learned for future elections. But I think the political reason, Charlie, is even more fascinating, because President-elect Trump has been denying, first, that there was much effort to influence the election at all, and secondly said he has no evidence that it's the Russians, while there is this flood of intelligence reports floating around the city suggesting that it was the Russians and who within Russia did it. So I think what the president is trying to do is force the intelligence community to put all of this down on paper, give it to congressional committees, perhaps make part of it public before President-elect Trump gets sworn in and is able to come in and say nothing happened here.
Michael, what would you add to that?
Yeah, I think David has it exactly right. If nothing else, this sort of boxes in President-elect Trump. because to have, and I should point out that even today, the administration ratcheted up what it has said about the Russian role. Eric Schultz, in briefing reporters at the White House press briefing, said that it was high confidence that the intelligence community had that those cyber attacks on the DNC and other political organizations and political leaders were directed and at the highest levels of the Russian government. That's about as strong as you can get. The previous statement from the intelligence community was that it was confident. High confidence is a term of art. So in some ways, the administration is sort of throwing down the gauntlet saying, here it is, and that we're going to compile all this evidence and we're going to present it to you, the new administration. And this is coming the same week that Trump said in that Time magazine interview, he doesn't know if it was the Russians, maybe it was some guy in his house in New Jersey.
So here's the interesting point to me about this, and I want both of you to comment on it. Number one, Mike Pence has been getting, I guess, the intelligence briefings. Number two, the president-elect has been talking to the president with some frequency, if we understand what he is saying, that he's consulted with the president about the transition and about a range of other things. He's taken some pride that he likes the president so much and that he hopes the president likes him. But it's been a very productive session. You would have thought it would have come up in those conversations, and the President of the United States would have reminded him what this administration believes about the Russians hacking.
You would think. Schultz was pressed on that at the White House press briefing today, and said he's not going to give a readout on the conversations between the president and the president-elect. But it's hard to separate out those comments that Trump made, sort of dismissing the whole, what the intelligence community is saying, from the president's decision to make public this review today, and even, as I said before, ratchet up the level of confidence they have that they're right about this.
David, what would you say to that?
Well, I think what adds to the oddity here, Charlie, is that in addition to whatever briefings they've given to Vice President-elect Pence and whichever briefings President-elect Trump has taken, you've now seen a raft of Republicans, more traditional Republicans, step out and say, we need to hold hearings, we need independent commissions, we need to have more of these details come out in public. John McCain said the other day that he would hold hearings through the Armed Services Committee, not only of the hacks related to the election, but perhaps because it's the Armed Services Committee, the efforts of Russian intelligence to get inside U.S. military operations. Right. We know, of course, that the hacking that took place at the DNC and elsewhere was not the first effort by the Russians in recent times. There were hacks on the State Department, the White House, the Pentagon. So this fits into a broader context. And my guess is that if that conversation has taken place between President Obama and President-elect Trump, it's been in the context of there's a bigger Russian campaign out here, and you ignore it at your peril.
My impression is that the investigatory effort is being spearheaded by the FBI. Am I correct?
That's right. For the immediate DNC, John Podesta, so forth. But there's also been other members of the intelligence community who've been brought in.
Mike, you were going to say?
Yeah, no, that's the FBI took the lead on this throughout, but this is clearly going to encompass the entire intelligence community. And I should point out that probably the strongest public statement has come from Admiral Mike Rogers at the National Security Agency, who, although he didn't say Russia, made it all but clear, made it clear that he was referring to a nation state that tried to influence our election. And he said something even further, intending to affect that election. And that is probably the biggest open question here. What were the Russians, if indeed it was the Russians, what were they up to? What was their motive? Was it simply to destabilize and create confusion in the American politic, as they have done in many other countries, or was this a concerted effort to influence the results of the election, to help elect Donald Trump and defeat Hillary Clinton? And that is probably the biggest mystery about this. We don't know the answer.
But my impression is there any doubt that this would be taking place, if it is taking place to the degree that the administration and the various intelligence agencies believe it is, that it would be carried out without Putin's knowledge?
Everybody I've run into, and I don't know if Michael has a different view of this, everybody I have run into who is in senior levels of U.S. intelligence say it is inconceivable to them that somebody would take the risk of doing something this high profile that could draw a major response from the United States without clearing it first with the boss.
Yeah, and it is also true that, you know, the Russian intentions and goals here may have changed over time. That perhaps there was some initial, or when this began, it may have been an effort to help Trump. It may have been a effort. There's certainly indications that Putin and his top aides were not enthralled with Hillary Clinton. At some point, though, they may have read the polls the way everybody else did and assumed that Hillary Clinton was going to win, and they may have scaled back some of their activity. Although that's not entirely clear either. We don't know how. We know that they were in the DNC. They were hacking these emails at least through the summer and of 2016. It's still not clear how long it went on. There's some indications it may have continued for a little bit of time after that, and that's key. You know, did they? And also, I should point out that there was a lot of concern over the summer and fall about those probes of state election systems, which made people, that really rang alarm bells, suggesting they may have been trying to hack the election itself. And I think the administration has made clear that that didn't happen.
A couple of final questions. As soon as we had some evidence of that the hacking had taken place and the FBI jumped on this, my understanding is that the President of the United States, President Obama, said there would be a proportionate response, that they had, intelligence agencies had immediately dug into this from the FBI and the CIA and defense and other people, and that there was going to be a proportionate response. Has there been a response as far as we know?
Well, the main response we've seen so far, Charlie, has been some warnings to the Russians that President Obama gave directly when he last met President Putin in China. That was back in September. There have been some channels of communication elsewhere through the Secretary of Defense, Secretary of State, a warning even sent through a system that is used for both cyber and nuclear warning. But if there has been a punishment to a cost to President Putin for this, we haven't seen it. There haven't been sanctions. Maybe there's been some kind of covert effort, but if so, it's been pretty subtle. It was Joe Biden who said on one of the Sunday shows before the election, you know, Putin, we'll come after Putin, and he'll know it even if nobody else does. But so far, their evidence of that is pretty scarce.
Yeah, if I could point out, this became public today because Lisa Monaco, who's the president's Homeland advisor, did a breakfast with reporters. And she started with an overview about threats to the country, threats to the homeland, and talked about the cyber threat and said, when there are cyber attacks that threaten American interests, we'll act to protect our interests as well as impose costs. I then asked her later in that breakfast session if the U.S. government has taken or will be taking steps to impose costs on the Russians as a result of these cyber attacks, and she didn't answer that question.
Yeah, so it could have been subverted. And somebody once said to me in the intelligence committee after the Russians were accused of doing this, that the response, the proportionate response, would be something that would be done so that Putin knew what it was about, but it would look for credibility within Russia, so it would not be done with a lot of bells and soundings.
That's right, Charlie, but there's a risk to that as well. I mean, there's always a temptation, let's keep it quiet and in the family, and everybody will get their signaling. But one of the biggest problems in cyber, as we've discussed on past shows, is establishing some sense of deterrence. It does not exist in the cyber realm the way it does in nuclear. And so if you're going to establish deterrence, you have to have a pretty public response so that if the next time it's not the Russians, but instead the North Koreans or the Iranians or the Chinese or somebody else we're not thinking of, they understand that this isn't a free fire zone.
David, thank you so much. Michael, thank you.
Thank you.
Back in a moment. Stay with us. We now turn to the latest news from the Trump transition. We're joined by Major Garrett of CBS News, who's been covering not only the Trump campaign, but also the Trump transition. Major, Rudy Giuliani says that on late November, he withdrew his name from consideration. Give us some sense of what was going on there.
Rudy Giuliani, Charlie, as you well know, appreciates opera. He is an operatic character, if you will, in the Trump transition. He endorsed Donald Trump right before the New York primary in April and became his most aggressive and most deeply loved, because I saw this so many times on the campaign trail, surrogate for Donald Trump. And he's the odd man out, spectacularly the odd man out in the Trump transition. It is almost inconceivable to some within the Trump transition that Rudy Giuliani would not find a place within the Trump cabinet. That's partly related to Trump's own instincts, but it's also related to Giuliani's missteps. Trump offered Giuliani the position of Attorney General and Homeland Security. Giuliani turned him down. Sources very close to the transition tell me. Focusing entirely on Secretary of State, a position he wanted and coveted, but in the end, Trump would not give him. Giuliani sensed that, pulled himself out before suffering the indignity sometime next week of someone else getting that slot. So in every way, this deeply important American political figure who revolutionized New York City and who was the biggest, if not most conspicuous, exponent of the Trump approach to the presidency will be left on the sidelines. It's an amazing story.
So who is left in the running for Secretary of State?
I am told by those closest to the process, there are only two really legitimate figures who may get the position of Secretary of State: Mitt Romney and the CEO, president, and chairman of the board of ExxonMobil, Rex Tillerson.
Tillerson brings what?
Tillerson brings for Trump a couple of things that you may not associate with the position of Secretary of State. He has no government experience. He's not a trained Foreign Service diplomat by any stretch of the imagination. But he is a big American businessman, a corporate chieftain who has done deals. And because ExxonMobil operates in more than 50 countries, it explores for oil and natural gas in 6 of the 7 continents on the earth. He has, if you will, a corporate worldview. He has experience with lots of different governments. And possibly most important, Charlie, he has long experience in Russia and with Vladimir Putin. They knew each other way back when, in the 1990s, when Putin was a KGB functionary in the government of Boris Yeltsin. They got to know each other then. And if you are looking for an analogy, look for the Chinese ambassador for President Trump, Terry Branstad, currently the governor of Iowa, who got to know Xi Jinping, the current head of China, when he was a functionary in the Chinese bureaucracy. If you looked at that as a template, you might see Rex Tillerson as someone particularly amenable to President-elect Trump's worldview.
It's clear, though, that the president has whatever differences there were with Mitt Romney, whatever was said by both men about each other in the campaign, that they worked their way through that. And that this now is a conversation, which is a positive conversation about the difficult process of selecting a Secretary of State. On the one hand, a man who has to make the decision for the benefit of the country. On the other hand, a man who has his own integrity and does not and is prepared to go to work for a man that he was deeply critical of during the campaign.
Wherever this lands, if Mitt Romney becomes or does not become Secretary of State, what he leaves the process with is a different appreciation of Donald Trump, and importantly to Mitt Romney, a different appreciation of Donald Trump of Mitt Romney, just as Donald Trump has a different appreciation now of the current president, Barack Obama. Charlie, I attended more than 70 Donald Trump rallies. There was not one scintilla of appreciation of Barack Obama, the president, the man, or American figure in history. Donald Trump now has all three of those things: a deep appreciation of Barack Obama, the president, the man as a figure in American history. So there is the potential of evolution with President-elect Trump. He's evolved with Mitt Romney. These are serious conversations. Mitt Romney is in the final two of an exhaustive list, an ever-expanding list of potential secretaries of state. And if he lands it, it will be among the most fascinating stories of the Trump transition.
You know what's interesting to me? I mean, so much was said about temperament and being fit for the presidency. Yet with respect to Romney, with respect to Obama, the president-elect is reflecting a very adult behavior.
It's an adult behavior, but it's also a behavior I would, if cautiously, Charlie, suggest to you is also one in awe. And perhaps that's appropriate. The presidency, I've covered 3 American presidents. I've read a good deal about those who came before the 3 I was privileged enough to cover. It is an enormously important institution. It is, in its own sense, an awe-inspiring institution. And I think one of the things that is important for the American body of mind, the American culture to appreciate about Donald Trump is that at some levels he is awed by the institution and awed by those who have pursued it and those who have achieved it. Mitt Romney and President Obama fall into both categories. And in ways perhaps surprising to himself, Donald Trump has come to appreciate that.
Yeah, he really is, in everything we know about him, a man who admires success and feeds on winning. Let's talk about the idea of how he does it. This idea of a man who, far more than Barack Obama, far more than George Bush, 43, George W. Bush, has thrown himself into this process, has interviewed people, is on the phone constantly, whereas the impression I have is that the selection by other presidents was much more a product of a transition team and much more product of clearly involvement by the president-elect, but much more the involvement of a team, whereas this president wants to touch and talk to and get a personal sense of the men and women he wants to serve.
Exactly, and I think it's far, far too early, Charlie, to offer an appraisal of this approach that is either positive or negative. I think the country and those of us obligated to cover this process as it unfolds before us need to take it step by step and judge it as the results speak for themselves. Remember, Jimmy Carter was a president who was deeply involved in the day-to-day and hour-by-hour details of his presidency, and it bogged him down. It separated himself from the larger vision. So there is a danger involved in that kind of involvement, and yet we tend to appreciate someone who has an appreciation for details, an appreciation for evaluating someone at the personal gut level. If I've learned anything about President-elect Trump in my 18 or so months covering him, is that he makes very important and crucial snap judgments about people by appraising them himself and not getting it filtered by those around him. That's an important characteristic of an emerging Trump presidency. But I'm not going to give you an evaluation, Charlie, whether that's going to be successful or not successful. It just is a reality.
Major Garrett, thank you so much for joining us. It's a pleasure.
Charlie, thank you.
We'll be right back. Philip Rucker of The Washington Post. Stay with us. More on this weekend about the transition of President-elect Donald Trump. We turn to Philip Rucker of The Washington Post. The Giuliani announcement, I had heard before that Giuliani was out of the running. Is this simply today's announcement to make that clear that this possible nominee withdrew himself because of his enormous contribution to the Trump campaign?
I think that's right. I think President-elect Trump was giving Giuliani a big favor with this announcement. He not only made the official word that Giuliani was withdrawing himself from any administration job, but Reince Priebus, the incoming White House chief of staff, stated in a quote on this announcement that Rudy Giuliani was vetted thoroughly by the Trump team and passed with flying colors. Those were Mr. Priebus's words. So it clears Rudy Giuliani of any rumors about whether he might have been passed over for Secretary of State. But Charlie, I think your reporting is correct. It matches with my reporting over the last few weeks, which is that Rudy Giuliani was really fading in the view of Donald Trump.
Do we know whether he could have been Attorney General if he had not ruled that out and insisted on being Secretary of State?
That's a great question. I don't know for sure. I think if he had been open to Attorney General, certainly there would have been some discussion about whether Jeff Sessions should get it or Rudy Giuliani. So, you know, potentially he could have gotten himself a job there. I think Trump imagined Giuliani more as a better fit as Attorney General or even Department of Homeland Security. But Giuliani was insistent from the beginning that state was all he wanted.
Yeah, and he could have held for, I mean, and he could have promised Sessions a Supreme Court appointment or something like that.
Exactly.
Which would have been entirely within sort of the kind of thing that he might want because of his life within, you know, the judicial process, both in terms of law enforcement, also in terms of judging. Let me turn to the Secretary of State. What do we know?
Well, we know that there are two people considered leading candidates right now. Mitt Romney, who has been a candidate for some time, and a new figure, Rex Tillerson. He's the CEO of ExxonMobil. He's an international business executive, a real corporate leader who's done a lot of work around the world because of his role in the oil industry, and including with Russia. He has relationships with the Putin government and has been around the world. He'd be a very different kind of Secretary of State than someone like Mitt Romney, who might be a more traditional patrician political type figure in that diplomatic post. Both of them are well liked by Donald Trump. There are political considerations, of course. Trump's supporters, a lot of them are pretty hostile to the idea of Mitt Romney, of rewarding a former antagonist who was not loyal on the campaign. And then with Tillerson, he's more of an unknown. I don't know what that confirmation process would look like. I don't know whether senators like John McCain and Lindsey Graham would scrutinize his ties and relationships with Russia, for example.
Take us inside the Trump transition team. I mean, who's on what side and how are they lining up and what are the conflicts between different groups?
Well, there are different perspectives on Secretary of State. This has been going on for some time now, really for about a month, this discussion about who the diplomat should be. And Mike Pence is said to have been encouraging of the Romney possibility. Same with Reince Priebus. Both of them have relationships with Romney. They fit in more with the party establishment. And there are other advisors inside that circle, especially Kellyanne Conway, who've been very hostile to the idea of Romney. And I think that's why Tillerson has emerged. He is somebody who matches some of the qualities that Trump likes in Romney. He likes that Romney's patrician, that he has a certain kind of stature and gravitas and can travel the world with the authority of a president. And Tillerson is seen as someone who carries himself in a similar way. And I think when he came to meet with Trump this week at Trump Tower, he was very impressive. They had a good conversation. That's what people are saying who know. And so those are the qualities Trump is looking for in a diplomat. It's really, at this point, a political calculation of whether he goes with a Romney, who's more of the party insider, at the risk of alienating his loyal base and his loyal advisors, or going with somebody new like Tillerson.
Is there much pushback to the president-elect because he's seeing Al Gore, because he constantly praises the president?
You know, not within the transition team that I've heard of. And I think a lot of his voters are trying to give him the benefit of the doubt here. You know, it's one thing to have a meeting with Al Gore because your daughter tried to set up a meeting and you listen to what the guy has to say. It's a totally another thing to change your view on the policies. And by all accounts, Trump is as far to the right on these climate environmental issues as he can be. He just appointed Pruitt, the Attorney General from Oklahoma, to be the head of the EPA. That's a pretty far-right pick in that space. So it's pretty clear whatever Al Gore told Trump in that meeting, he's not really heeding that counsel.
What might we learn about how President-elect Trump will govern based on how he is running the transition?
Well, he's very hands-on. As you guys were talking about in an earlier segment, he is interviewing all of these people personally. He is weighing in on them personally. He's making gut assessments about whether they would be a good fit in his cabinet, whether they have sort of the leadership strength that he's looking for. He's been really drawn to alphas, to leaders, to people who are either CEOs in the corporate world or military generals. He's not looking at academics. He's not looking at policy minds and folks who've spent years reading books about things. He wants people who've been in the real world commanding employees or troops and making decisions that have impact on markets, on people's lives, on global affairs. So that's the approach he's taking to governing. The big question mark, I think, at this point is what the policies are going to look like. We know a lot about the composition of the leadership of the administration. We know very little about what kind of policies they're actually going to move forward with after the inauguration. There is a policy team in Washington developing an agenda for the first 100 days, but those details have not been fully released publicly.
But the president-elect has talked about some of his primary priorities in terms of immigration, in terms of trade, in terms of tax reform.
Of course. We just don't know the specific details of that, sort of what the timeline will be like, which things he's going to do first, second, third, fourth, and so forth, and what some of those deals with Congress might look like. There are a lot of details to fill in here.
What role is Steve Bannon playing?
He's playing a very influential role. He's with the president-elect almost every day, weighing in on a lot of these appointments. My understanding is that he's making his views heard on some of these big jobs, certainly Secretary of State and some of the others. You know, they're not quite as involved at this point in the smaller jobs and sort of who's filling in the deputy, the undersecretaries, the assistant secretaries at the agencies. They've also not yet announced senior White House staff positions beyond Reince Priebus and Steve Bannon and the White House counsel. So there's going to be some give and pull between Bannon and Priebus and others on the team about who fills in those jobs. Who is the White House press secretary, for example? Who are going to be the deputy chiefs of staff? Who's going to be the liaison with Congress? Who's going to be in Vice President-elect Pence's office? And another big job is the Republican National Committee chairmanship. That is a job that Reince Priebus is vacating. It's really going to be the political arm of the Trump White House. It's going to be where the Trump re-election campaign starts to take shape early on, and there are a lot of different candidates in the mix for that. We're hearing that the leading contender seems to be Ronna Romney McDaniel, who is an establishment figure very close to Reince Priebus. She's currently the chairwoman of the Michigan Republican Party, of course a very important state for Donald Trump and his electoral victory, but he's not yet made a final decision as far as I know.
Is it an accurate statement of what seems to be the impression that while Donald Trump is urged not to tweet as much as he does, it's irresistible for him?
I think so. It's a great question. He's indicated certainly that he's going to continue making his views known on Twitter. He's been doing it almost every day here since he's been president-elect, and plans to continue into the White House. There's been some suggestion from some of his aides that perhaps he would back off of Twitter, and one person even mentioned maybe Secret Service would have something to say about that. But I think if he is able to tweet, he will tweet. He wants to communicate directly with the American people. That's what we've been seeing throughout the campaign and during this transition, and he really wants to do everything he can to break through what he sees as a press filter and just speak directly to people. So that's Twitter, that's rallies, that's doing call-ins on radio, doing videos on his YouTube page, and so forth.
Phil, thank you so much for joining us. Have a great weekend.
Thank you. You too.
We'll be right back. Stay with us. As it has annually since 1927, Time magazine announced its Person of the Year this week. This time, it's the individual who, for better or worse, had the most influence on the events of the year. President-elect Donald Trump might be the obvious choice, but the nation remains divided over why. With me is Nancy Gibbs. She's the managing editor of Time. I am pleased to have her back at this table. You've always framed this as the person who has the most influence. Yes. It is not the most popular. It is not anything other than the most influence. This is a slam dunk, isn't it?
It is, although what's interesting to me is the whole thing is who has had the most influence on the year, for better or worse. Right. And there's what, seems like universal agreement that he had the most influence and disagreement over whether it was for better or for worse. And this is one of the things that we really looked at is every presidential election. We named Barack Obama 4 years ago and 8 years ago. We named George W. Bush 12 years ago and 16 years ago. In presidential election years, it would be a little unusual for someone other than the newly elected president to have been the dominant figure that year. And in any presidential year, the country is divided. Roughly half the country votes for one and for the other. There is something that feels different this year, at least from where I sit, of the level of surprise at the outcome, which just speaks to how many people who were meant to be, the experts and the data analysts and the pollsters didn't see his victory coming, and the reaction since then that. Even when you think about Bush and Gore in 2000 with the extraordinary 5-week-long denouement of that drama, even that one didn't feel as dramatic and as fraught as this one. And that's a lot of the challenge that the president-elect, I think, faces. He talks about wanting to bring the country together. I think even he acknowledges that that represents a pretty significant challenge.
He certainly was pleased by the decision, wasn't he?
He was, and it's complicated for us that he talks about it as an honor, and we have run into that for years, that, it sounds like the kinds of things that people honor people with at the end of the year, and we always have said, look, this is a measure of influence. Last year, we picked Angela Merkel, right, who's, on the one hand, who's the position that she took, particularly on the refugee crisis, but also on the Eurozone and on the economic policy in Europe, made her a pretty divisive figure as well. She, was by no means universally admired.
And she suffered politically, even though she's announced she's going to run for re-election. Right. She's up for re-election. We'll have a new president in France. We'll have some change going on in Italy. Yeah. The Netherlands, I think, has an election. We just saw an election in Austria. I mean, the whole idea. I mean, if I thought of any other thing other than Trump, and Trump would seem to me to be obvious this particular year, because it is, you have framed the question, would be populism as an idea.
And, we have a story about the rise of the populists around the world, and, Nigel Farage and Duterte in the Philippines and others. But one of the reasons why we weren't even tempted to do a group, which I never like to do anyway if I can avoid it, is what's remarkable about Donald Trump that we have not seen before is somebody who comes in and defies all expectations, breaks all the rules, shatters every sort of norm and convention for how you run for president, defeated not one but both major political parties on his way to winning, and
defeated two dynasties.
Defeated the two reigning dynasties. And did it with largely based on his own instincts, not a huge cadre of political advisors and pollsters, not with the help of the Republican Party infrastructure in particular, or the donor class. The enormous army of people who are usually around a winning presidential candidate and taking some responsibility for the victory. There's nothing like this in Donald Trump's case. He has, this small coterie of advisors, and he has his kids, and it's him. And
so, therefore, is this a transformative election in terms of the way people win the presidency?
I think there are a million fascinating questions for journalists coming out of this, one of which will be, do we see other politicians trying to copy his model, and can they? It's possible that he was unique in the ability to accomplish what he did. I think of the many things about the 2016 race that was unprecedented, we had two candidates who went into it with probably 100% name recognition. Mm-hmm. It's easy to forget that Donald Trump had been a very familiar figure in millions of people's living rooms from his television career, quite apart from his life as a real estate baron and casino owner.
And his
people felt like and his self-promotion, which was central to his brand. People felt that they knew him. They liked him, they hated him, they felt that they knew what he was about from the beginning. So that's hard for someone else to replicate, I think.
I think also, and I've thought about this more recently than I did before, certainly before the election, is that, and he may have understood this, in terms of the winning of the presidency, the disruptiveness of the way he ran his campaign, the language that he used, the attacks on other people, was for his sense that it made him be perceived by his people who were enthusiastic about him as a leader, and B, as a strong leader. That was part of how he viewed the disruption, that it was necessary to overcome the challenge he had to achieve.
And, the subtext of it, whatever outrageous or controversial thing he was saying, the subtext was, this is someone who is willing to say controversial things. And so, even on Election Day, even as he ended up winning, the Electoral College vote, certainly 6 out of 10 voters don't think he has the judgment and the temperament to be president. And
only 40% of the people do.
And yet, that was not, and so people for whom judgment and temperament were the most important issue, Hillary Clinton won by miles. But by about a factor of 2 to 1, more people cared most about who could bring change to Washington. And he won that group by 68 points. And that ended up being that desire for change and the belief that he was more likely to bring it. I mean, the irony there is, to that extent, was that Hillary Clinton punished for the very experience and long track record that she brought.
Your instinct would be that she was. She was punished by the fact that he was able to grab the change mantle.
Right. And this was, everyone knew that this was meant to be a change election. Americans typically don't grant third terms. Right. But, again, I think that the fact that one of the reasons that, the political experts all along were inclined to think this can't possibly succeed is he kept on doing things that no one had done before, or to the extent that they had done anything like that, it had proven fatal to their candidacy.
I was watching the other day, just people looking back, it is the capacity to stand in front of a huge audience and have a conversation with them is, to me, one of the qualities that made his rallies different. It wasn't a speech. If it was a speech, it was simply a regurgitation of what he'd been saying before. But much more of it was reacting, impressions, talking about he almost was having a conversation with them about what he'd read in the paper or what he had seen on television. And what do you think of this? And didn't you agree with me? It was much more of that kind of dialogue.
Well, that's why on the occasions when he was back in the teleprompter, it felt so odd, because that was not the vernacular of his campaign.
And the spontaneity. You've interviewed him before. You interviewed him the last time with the Eagle and all that. And then you go back, what, a week ago? Mm-hmm. How was he? Was he different in any way and perceptibly?
I would be the first to say that there's every chance that because I expected that he would be different, that I saw a difference. But I did see a difference. The main one being the thing that struck me so much. I'm very interested in the relationship between presidents because of what that job does to you. And the night before we spoke to him, he had been on the phone for 45 minutes with President Obama again, talking to him about ideas for his cabinet choices and other topics that were on his mind. And he spoke with extraordinary warmth and respect. He talked about the chemistry he felt between them. He felt about how he had expected that day that he went to the White House and the two men sat down together, which was 48 hours after Election Day. He said, everyone would have thought that would be a very awkward moment. It didn't feel awkward at all. We sat down, we started talking. We talked for a long time. I found him very gracious and helpful, and, we've talked since then. And in listening to him talk particularly about his conversations with President Obama, you start to see a glimpse that he is having to get his head around what has just happened. And I've always wondered, did he expect? Of course, they'll say, "Oh, we always knew we were going to win."
Yeah.
Which
I have wondered the same thing, because I read somewhere that early in the evening they didn't think they were going to win. It only was that after the 8 o'clock thing, when they began to see, what the possibilities were in Pennsylvania and Wisconsin and Michigan, that they realized victory might be possible.
But so then you win and you wake up, is it like the dog that catches the car, where, okay, now I actually am going to have to be president, and what is that going to mean, and how is that going to work? And so I think the conversations that he's having with everyone who he's bringing in, I mean, this is the next season of the reality show that he has been staging.
Right. It's interesting, too, in terms of some of the people he's talking to, not only Mitt Romney, who said all the things that he said about him, but also Al Gore shows up. Al Gore shows up.
I mean, it's a peculiar. You just wonder, how is it that between business leaders and military leaders and politicians and private sector activists, this part of his own personal transition. Yes, there's the administrative, institutional transition. There's a personal transition, too. And so that's what I was struck by talking to him this time, was that he is very much in the throes of that process.
Thank you for coming.
Thank you for having me.
Thank you for joining us. See you next time.
China's factory output and retail sales show further strength in the economy, but the reasons for that are about to change.
And OPEC nations boosted production last month despite agreeing historic cuts. No one wants to lose market share.
Donald Trump nominates Goldman's president as economic advisor. He's also delaying his business plan while in the White House.
And Turkey gets a $140 billion boost to the economy. It's all thanks to a new way of accounting. It is 8 a.m. across the Emirates, 5 a.m. in London. I'm Tracy Alloway in Dubai.
And I'm Minji Lau in Hong Kong, where it's just gone midday. Welcome to Bloomberg Markets Middle East. Tracy, it was all about the oil surprise that Saudi Arabia's oil minister threw into the pot, but it looks like maybe we are now near overbought territory.
That's exactly right, Angie. So I thought I would bring a little pessimism into our Tuesday show this morning, a little bit of a reality check and a little bit of technical analysis. So take a look at this chart. This shows the price of oil. That's the white line up there. But more interesting for our purposes is the white line on the bottom half of the screen. That is the relative value index. It's a technical indicator that basically looks at the speed and degree of movement of a particular asset price. And you can see it's now above 70. When that reaches above 70, traditionally it's viewed as an overbought indicator. So it suggests to some that the rally in crude may have gone too far and too fast. Angie?
Well, too far and too fast. It looks like it may be more sideline action right now across Asia-Pacific, Tracy. Let's get you a quick check of the state of the play in the markets right now. Mumbai trading for almost 20 minutes right now. Right now it's flat. There is a very interesting move in terms of the Tata saga, trying to remove Cyrus Mistry. So stockholders are, shareholders rather, are being asked to take sides here. Hang Seng Index, just like the mainland, shrugging off that positive data out of China, and we are seeing fluctuations in the Japanese benchmark, fluctuating near this year's highs. It really is about the FOMC this week, it appears. Tracy?
All FOMC all the time. Well, here in the Middle East, it is just under 2 hours away from the opening of the Emirates markets, Dubai and Abu Dhabi at 10 a.m. local time. Let's take a look at how they did yesterday. You can see the Dubai market was up almost 3% yesterday. That was led by a more than 4% gain in property developer Emaar, again off the back of this idea that the rally in oil is going to feed into business optimism here in the UAE. You can see, though, that Saudi Arabian stocks were actually down yesterday, perhaps a bit of profit taking off the back of the big move they had on Sunday. We'll have to see whether they recover later in the week. Before we do that, however, let's check in on the first word headlines from around the world. Here's Sophie.
Thanks, Tracy. The Associated Press and New York Times say Donald Trump has chosen ExxonMobil CEO Rex Tillerson as Secretary of State. An official announcement is due Tuesday morning U.S. time. Tillerson's close ties to Russia could complicate his Senate confirmation. Trump's also said to be postponing giving details of how he'll handle his business operations while in the White House. His team says he's too busy filling administration positions. The European Union will set out how it will conduct Brexit negotiations with the UK. Leaders will meet on Thursday without British Prime Minister Theresa May to discuss the bloc's strategy once she triggers Article 50 of the Lisbon Treaty. A draft statement seen by Bloomberg says the UK will be excluded from all meetings where the 27 remaining EU members discuss Brexit. IMF chief Christine Lagarde has told the Paris court that an imaginary plot has led to her trial on negligence charges. She told the tribunal she acted in the public interest when, as French finance minister in 2007, she did not try to block a $300 million public payout to businessman Bernard Tapie. Judges rejected Lagarde's request for a delay in the trial, and she'll return to court on Tuesday. Prominent short seller Muddy Waters has targeted a Japanese firm for the first time with a negative report on motor maker Nidec. Carson Block's firm says Nidec consistently misses sales and profit targets and uses highly aggressive accounting to boost profit reports. SMC Corp is also tumbling in Tokyo after a negative report, while investments questioned the pneumatic equipment maker's accounting.
When we look into the financial statements of SMC, we found that cash balances and inventory level and operating margin in domestic market is quite dubious when compared to the competitors. So those are the main points I made in the report.
Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Sophie Kamarudin. This is Bloomberg.
Thanks, Sophie. Let's stick with Donald Trump for a second because the names of his team are coming in thick and fast. He wants former Texas governor as energy secretary and has chosen yet another Goldman Sachs executive, this time Gary Cohn, as economic policy advisor. Bloomberg TV contributing editor Bill Cohen joins us now on the line from New York. Bill, we saw another Goldman veteran, Steve Mnuchin, picked as Treasury Secretary. Now we have Gary Cohn taking on one of the most important economic positions available at the White House. What are we to make of these picks? What's the allure here, and what kind of hole does it leave at Goldman in terms of leadership?
Well, I mean, I think as far as Donald Trump is concerned, I mean, I think hiring people from Goldman Sachs affirms him immediately in the Wall Street / capital markets. I mean, it's public affirmation for Donald Trump that, you know, you've got people from Goldman Sachs who are willing to, in effect, bet their next part of their careers on Donald Trump's presidency. And this is a guy, by the way, who Goldman Sachs would never do business with. So it's sort of ironic that now he is turning to Goldman Sachs to give him credibility with the public markets. As far as Goldman Sachs is concerned, look, we all know it's a bit of a cliche, but they have a very deep bench. They have a lot of talent there, and this is actually very healthy for Goldman Sachs because a lot of firms, including the ones where I worked at, people would never leave, and then the junior people would get discouraged and feel like they never had a chance to move up. Now, in the space of a few months, you have Michael Sherwood leaving, Mark Schwartz leaving, and now Gary Cohn, who, you know, unbelievably put in 10 years waiting for Lloyd Blankfein to move on, and now it looks like Gary is moving on before Lloyd. So that is a bit of a surprise. But, you know, they have a very deep bench.
All right, deep bench, but in terms of the pecking order, can someone not a banker or a trader take these leadership roles, be a COO, be the CEO?
You know, look, I would never say never. It's always impossible to know exactly what the calculus is inside of Goldman Sachs. That's some serious Kremlinology. I've only written a book about them, and I'm not sure I understand them better than many people who obviously work there. But, you know, it's clear that they've never turned to anyone other than a banker or trader in the past. It seems to me that we're in a period of time where banking is again in the ascendancy. That would make somebody like David Solomon, who is a very smart and very good guy, be in a strong position. The negative on David Solomon, of course, is he came from Bear Stearns, and Goldman Sachs rarely goes to an outsider to lead the firm. The last time they did that was in the 1920s with a guy nobody even remembers anymore, a guy named Waddell Catchings, who ended up almost causing the firm to go into bankruptcy in 1929 and 1930 because he was the architect of the so-called Goldman Sachs Trading Corporation. So it seems to me that, you know, although he's been at Goldman now since 1999, so he may not be considered a true outsider anymore, but he wasn't born there, and most of the other people who are CEOs of Goldman Sachs were born there. I mean, Lloyd Blankfein was inherited through the J. Aron acquisition, but, you know, he's, in a sense, in effect, trained there and born there, too.
Bloomberg TV contributing editor Bill Cohen. Hey, thank you so much for joining us on the line. I want to confirm that breaking news for you. Bloomberg has confirmed as well that ExxonMobil CEO Rex Tillerson has been named as President-elect Donald Trump's choice for Secretary of State. This is the CEO of ExxonMobil. So apparently the pecking order there will have a vacancy empty, and just like Goldman Sachs, they're going to have to find somebody to fill that slot. All right, well, China's economy continued to show strength in November, which should give policymakers more room to rein in stimulus and tackle financial threats. We've got our China correspondent, Tom McKenzie. He's been through the numbers. These headlines look pretty good.
Yes, China's economic engine chugging along fairly nicely, at least on the surface. I'll run you through some of the numbers. The retail sales came in up 10.8% for November. That compared to estimates of 10.2%. That number, though, flattered by a big tick up in auto sales because there is a tax incentive that may well come to an end in December. So consumers going out there and buying up their four wheels before that happens. Industrial production was roughly in line with estimates, and fixed asset investment that came in also in line with estimates. Interestingly, there is still a large amount of fixed asset investments coming from the state. There's been a marginal pickup from private investment that will be seen as a positive. These numbers building on the strong numbers that we saw in terms of manufacturing, exports, and a tick up in inflation, painting this positive picture for the Chinese economy now. Another sock in the eye to the China bears, but there are plenty of headwinds for 2017 that China's economy faces.
Let's try to feed the bears for a second. What are the threats that are actually facing China next year, then?
Yes, let's give them something. Well, Trump is top of the list, as is a reining in of credit and also continued curbs on the housing market. We got some insight from the chief China economist at Barclays, Jen Chung. Take a listen to what she had to say earlier in the show.
I think the economy does face some headwinds down the road. Number one, I think we have uncertain trade policies coming from the President Trump's presidency. And number two is that China's been tightening on the housing market, which remains a key focus to watch for downside risk into 2017.
So Jen Chung talking there from Barclays. We know that policymakers have been quietly reining in some of the liquidity in the money markets to try to rein in this credit, the over-leverage in the corporate sector. We've heard from Bloomberg Intelligence, they say this China economic data that we've had for the month of November gives policymakers continued space to do more of that. But that space is closing. There is a sweet spot, but for just how long? And that is the question, particularly given these headwinds that have been outlined by Jen Chung there.
Okay, our China correspondent Tom McKenzie live for us from Beijing. Later in the show, the Middle East is a magnet for some of the world's costliest cyber attacks. We take a look at what's being done about it.
But coming up next, we gauge the state of Dubai's economy with Emirates NBD. All of that still to come. This is Bloomberg. This is Bloomberg Markets Middle East, live on Bloomberg Television and Radio. I'm Angie Lau in Hong Kong.
And I'm Tracy Alloway in Dubai. Well, some breaking news now. The Emirates NBD Dubai Economy Tracker is just out with a fresh reading of 55.2 for November. That is up from 53.2 in October. Joining us now to discuss is Khatija Haq. She is head of MENA research for Emirates NBD. Khatija, I suppose we should start with the obvious question. What's driving this recovery?
So in November, the data was particularly strong for travel and tourism and wholesale and retail trade. Travel and tourism actually reached a series high in terms of the PMI reading of over 57, which certainly signals a very strong rate of growth in the tourism sector last month.
So if travel and tourism are the best performing sectors. Yeah. So is that a vindication of Dubai's economic transformation to some extent, or are there short-term factors at play here?
Well, I think one of the factors which may have had an impact on the November numbers is the introduction of visas on arrival for Chinese visitors. This was something that was announced in September, but probably only came into effect late October, early November. And I think that may have contributed somewhat to the exceptionally high reading for travel and tourism. But I think it's a sector that has been adjusting really well to the fact that they've had competitiveness eroded because of the strong currency. So hotels have reduced their revenues per room. They've reduced their rack rates to try and maintain high occupancy levels. And this time of year is normally a high season for the hospitality sector. Right. I do think travel tourism is going to be one of the big drivers of Dubai's growth going forward, certainly into Expo and even beyond that.
All right, and let's turn to the weak spots now, because we did, for instance, see construction down a bit.
Well, it was flat from October's reading, but it's quite a low index number, so under 52, showing a little bit of expansion, but not nearly as much as I think some people would like to see. I do think that optimism in the sector is quite high. The survey does check firms' optimism about the coming 12 months, and that remains above 70. So firms are very strongly optimistic about the coming 12 months. And I think a lot of that is driven by expectations about Expo spending and projects related to Expo that probably are going to start kicking off in earnest next year. So we're hoping to see some improvement in the construction sector indicators from the beginning of next year.
How do you gauge the currency volatility and fluctuation as a result of the stronger U.S. dollar, as a result of all things being FOMC tightening?
So we're expecting a strong dollar going forward because we are expecting the Fed to continue with its tightening program next year. We're looking for at least 2 rate hikes in 2017. And obviously with GCC currencies and the dirham pegged to the dollar, that automatically is going to have an impact on this region and on Dubai's services sectors in particular. We do think firms have adjusted to that to a large extent. We've seen consistent price discounting as one of the strategies that's been employed to try and maintain volume growth even in the face of a stronger currency.
Yeah, that definitely is going to have to be the case moving forward. There is an expectation of a continued weakness in the yuan, and for those Chinese tourists, that's going to be a really important factor when they decide where they're going to go.
Absolutely. I do think, though, that the fact that it's easier for Chinese visitors to come to Dubai than it is perhaps for them to travel to Western Europe and other places where they may need to get visas well in advance is certainly going to be of benefit. We've also seen a lot of firms in the hospitality sector targeting the Chinese market specifically with special offers and incentives to try and attract those visitors and grow that market, where we're seeing slightly slower growth in traditional markets for tourism in Dubai.
Khatija, please correct me if I'm wrong, but I believe the Dubai tracker, this particular tracker, doesn't take into account what's happening with energy firms in the region. With your head of MENA research hat on, please give us some insight into what's going on in terms of the other side of that picture.
Okay, so you're right. The tracker just looks at non-oil sector activity. I think what we have seen when we look at the overall UAE PMIs and the Saudi PMIs, even though they're non-oil surveys, manufacturing in the region is is very heavily oil-related. And the fact that the PMIs have actually continued to show expansion, even though oil prices at the beginning of the year fell to as low as $35 a barrel and have been significantly weaker than 2015, we've still continued to see growth in the manufacturing sector, and I think that that reflects stronger output growth. Now, looking into 2017 with the OPEC agreement to cut output, I think that is going to weigh on the PMI readings in some aspects, particularly related to the manufacturing sector. But what we're hoping is that we start to see an acceleration in growth in construction, in infrastructure investment, especially in the UAE, and that should help to offset any slowing in terms of oil-related manufacturing next year.
Here's a slightly longer-term question for you. Would you expect a big rally in oil prices if it continues to dent some of the attempts at diversification in terms of the economy that have been made?
It's a good question. I think a lot of the changes that have already been implemented, the cuts in subsidies and the attempts to open up markets for investment from foreign capital, I don't think those are going to be reversed. So even if we see oil prices sustained rally up to, $65, $70, $80 a barrel, I don't think governments in the region are suddenly going to come back in and say, we're going to reintroduce energy subsidies. I think those sorts of things, the damage is being done, and consumers are going to have to continue to adjust to those higher energy prices. And so that in itself is going to provide another factor which needs to be taken into account when we're looking at consumption and household demand. Is if we see a sustained rise in oil prices, that is going to feed through to inflation now in the transport sector in terms of household consumption as well. So that is something that we've not really seen in this region before, and we're going to have to see how that plays out.
It's definitely all changing, isn't it? Khatija Haq, head of MENA Research for Emirates NBD, thank you so much for joining us today.
You're welcome.
Okay, coming up, how new accounting methods have catapulted Turkey's economy ahead of India's. This is Bloomberg.
Quick check of the latest business flash headlines. Apple said to be discussing investing in the $100 billion tech fund that SoftBank aims to launch next year. Sources say talks have been held about a contribution of about $1 billion to gain access to new ideas. Apple invested $1 billion in Chinese ride-hailing app Didi Chuxing in May. That's its biggest outlay since buying headphone maker Beats for $3 billion in 2014.
Sinopec is selling a 50% stake in a pipeline unit for $3.3 billion, seeking funds to expand its natural gas business. China Life will pay $2.9 billion for about 44% of the project. A division of State Development and Investment Corps will take the remaining 6%.
Korea's Mail Business newspaper says Hanjin Shipping is likely to be liquidated. It says the accounting firm in charge of due diligence of the bankrupt line, Samuel Price Waterhouse Coopers, will recommend that option to a Seoul court. The Mail says Hanjin's value after liquidation is estimated at around $1.5 billion.
Well, where reforms and a series of rate cuts failed, new accounting methods have succeeded in delivering a $140 billion boost to the Turkish economy. Isabel Finkel joins us now from Istanbul. Isabel, walk us through what exactly Turkey has done here.
Well, what Turkey's done is present investors in the market with a dramatically revised picture of its economy over the last 15 years. And the way it's done that, it's gone back and revised its GDP methodology, its GDP accounting methodology, and that's resulted in 14 out of the last 15 years GDP growth figures, improving versus the previous estimates. So, as you said, whereas last year the economy was supposed to have contracted in dollar terms. We thought we had a $720 billion economy. In fact, it turns out that the economy grew to $865 billion. So it's left people reeling as they try and take count of these changes.
But how are people reacting over there?
Well, with some confusion, it's fair to say. The strange thing is not the newly released third quarter figure, which shows that the economy shrunk 1.8% year over year in the third quarter versus last year. That's everything you might expect from an economy that's dealing with the fallout of a failed coup, with record lira weakness, with slowing investment. But the strange thing is the upward revision of all these other figures, which themselves sit very strangely with other more high-frequency measures of the economy. Industrial output, for instance, in 2015 was 3% year-on-year growth, and now GDP, it turns out, grew 6.1%, higher than the 4% previously thought. So the gap between these two sets of figures is having people pore over the statistics quite closely, it's fair to say.
No, absolutely. I mean, they're going to have to pore over it. But in terms of concrete things that the actual government is doing, are they doing anything concrete to improve the economy over there?
Well, it seems like the government is actually the only one doing anything. If you look at the most recent figures, I said there was 1.8 contraction. There was contraction in almost all sectors except for government consumption, which increased 24%. So if there is any growth, it's definitely government-led. Of course, how healthy that is subject of some debate.
All right, Isabel, we're going to leave it there. Isabel Finkel in Istanbul there for us. Thank you so much for that. Well, coming up, the oil output deal sent crude prices surging. It's also sending bonds tumbling around the world. Analysis next. This is Bloomberg.
It's 12:30 in Hong Kong, 11:30 p.m. in New York. I'm Sophie Kamarudin, and these are the first word headlines from around the world. Sources have confirmed to Bloomberg that Donald Trump has chosen ExxonMobil CEO Rex Tillerson as Secretary of State. A formal announcement is due on Tuesday morning. Tillerson's close ties to Russia are likely to come under question during his Senate confirmation. The president-elect also picked a third Goldman Sachs executive for his team. Gary Cohen will head the National Economic Council. China's stabilization held in November, with industrial production climbing 6.2% from a year earlier, slightly above estimates. Retail sales advanced 10.8% last month, while fixed asset investment increased 8.3% in the first 11 months of the year. It gives policymakers more room to switch from stimulus towards curbing financial threats. Sun Pharma has been criticized by the FDA over some inadequately designed testing programs and because failing results and potential contamination were not always reported in time. A recent visit to Sun's plant in Halol found that certain reports weren't submitted within the 3-day time frame. The plant was warned last year, and past violations have prevented new products being launched in the U.S. South Korea, Japan, and the United States have met to talk new sanctions on North Korea. They discussed Security Council Resolution 2321, which was adopted last month. It's hoped the measure would leave North Korea with, quote, no choice but to denuclearize. The U.S. says it sees support for action from China and that it will engage with the North if it gives up its nuclear program. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Sophie Kamarudin. This is Bloomberg.
Well, the Fed is widely expected to announce a rate hike on Wednesday, but bond traders are not waiting. They're already pushing up yields. Bloomberg's Kathleen Hays has more.
The global bond market sell-off. It started with some upside surprises on the U.S. economy the past few months. It really picked up steam when Donald Trump got elected president, promising to stimulate the economy, create jobs, and more. And on Monday, the run-up in oil prices to a 17-month high poured more fuel on the bond market sell-off fire. Let's jump into the Bloomberg now and look at a G-chart. Hashtag BTV 4968. The far right, you can see that the 10-year note traded as high intraday as 2.5%. Now compare that to July when it hit a record low. That's the lower right, that little red circle, a record low of 1.32%. That's a doubling of yields in 6 months. Quite a run. But let's stand back and put it in perspective. Go to the far left of your screen, upper left corner. You can see that yields were at 5.29% in 2007, just before the U.S. went into recession. So what's next? We've got a Fed rate hike priced in on Wednesday, but where is the Fed taking us? After doubting that the Fed would raise its key rate 4 times in 2016 and proving to be right, bond traders are starting to shift their views. They, too, now are getting on board with the Fed doing more. Let's jump into the Bloomberg again and look at dots go. You've got to be watching this one the next couple of days. You see yellow dots showing clusters for the Fed forecasts of rate hikes from all the officials, what they see for 2016 through 2019. Quite a dispersion. If you look at the green line, though, that's the median. 1 rate hike in 2016, 2 in 2017, 3 in 2018. The red line went in across the bottom. That's what traders were forecasting in September for Fed rate hikes when the central bank last met. Not many rate hikes at all. But look at the purple line. It is moving up now. What derivatives traders are betting on is getting closer to what the Fed itself is looking for. So with expectations of Donald Trump boosting the economy, does that mean the Fed will almost necessarily boost the number of rate hikes it sees ahead? Well, many Fed officials have made it clear they can't change their views of the economy and interest rates until they see what Donald Trump can actually do, not what he is planning and hoping to do. Peter Fisher is former executive vice president of the Federal Reserve Bank of New York. He says it may be time for Fed Chair Yellen to signal less of a role for those dots.
The hardest thing for the Fed is they really don't know where they're going to be a year or two from now. Right. They don't know how much this recovery we see is going to come through. They don't know how much on top of that the Trump administration is going to put and Congress is going to put. So I think what I'm looking for is what kind of hint we get about, does Janet Yellen know she's got to pull back from forward guidance? She's going to have to pull back from pretending she knows a point estimate on the Fed funds rate for 12 months from now, which she really doesn't know.
That's why on Wednesday the rate hike is important, but for the markets it may be all about the dots. Kathleen Hays, Bloomberg, New York.
Well, we are going to be discussing more on the bond market sell-off in just a few minutes. But first, let's get the latest from markets. Here's Heidi.
Hey, Tracy, we're looking like a pretty fluctuating market at the moment. Very, very mixed as we head into the last few hours before Fed decision day. A lot of certainty about what the Fed is going to do, but a lot of uncertainty as to how all of this, with the addition of what the Trump trade does from here, is going to play out for Asian markets and sentiment. I'm going to take a look at some of the swings that we've been seeing. In the Nikkei 225, we had higher gains. We're also in the red for much of the morning session, but we're now up by about 0.1% there. We have had the yen also fluctuating, and that's been weighing on sentiment as well. The Kospi, we had some nice buying early on, but giving up essentially all of the sessions gains as we head into the afternoon. Elsewhere around the region, of course, the biggest story of the day has been that China data dump. It was pretty good, pretty decent, like either a slight acceleration or when it comes to retail sales, it was actually a really nice beat on expectations. But as you can see, that hasn't played out for any of the Greater China markets. Hong Kong off by 0.4%. We've got some liquidity issues really coming into the fore when it comes to China. Shanghai down by 0.7%, breaking through that 55-day moving average for the first time since mid-October. We've seen that support bridge. A lot of analysts saying that is an outstanding indicator of what we're going to see in the longer term. So potentially not boding very well for Chinese equities. We've also seen Shenzhen breaking through, or at the cusp of breaking through, the 200-day moving average. So certainly A shares are not doing terribly well in the session. Southeast Asia, a mixed picture. You're getting some weakness coming through from Jakarta, down by 0.8%. Indian stocks are up by about 0.2% there. Also taking a look at the FX space, because this is really where we're going to see some moves ahead of that Fed decision. Dollar yen looking like this. We've had 2 days of dollar weakness, and that is helping push up a little bit of strength when it comes to the Japanese currency. You can see that playing out when it comes to equities. The Aussie dollar has been really stuck at that 74.75 resistance level. We were hoping that maybe with that stronger than expected lot of Chinese data, we could see that going towards 76, setting up for a nice rally, but the Aussie dollar has been pretty much unmoved. But what we are seeing is a little bit of a breather when it comes to the weakness, the pressure that's been coming down off of some of these Asian currencies. We'll have to see how the dollar index goes from there, but certainly that overnight weakness has been taking the pressure off a little bit. Tracy.
Thanks so much, Heidi. Let's take a turn towards fixed income again with Rajiv De Mello. He is head of Asian fixed income at Schroeder Investment Management. Rajiv, I want to start with a chart that I think sums up a lot of what we've been seeing in the bond market. Yesterday, we had a Treasury auction of a 10-year, the benchmark U.S. Treasury note, some $20 billion sold yesterday. And you can see the yield on those notes was at 2.485%. It was the highest since September 2014. So the sell-off continues, especially in the market for new Treasury issues. So my question to you is essentially, how much further, how much higher could we see U.S. bond yields go from here?
Well, that is a question that a lot of us bond investors are already asking ourselves after the significant increase in yields we've seen in the last 6 months. You know, practically double since the yield increase is practically double since the U.S. election. But I think that, you know, while we have priced in, you know, some Fed rate hikes for next year and some for the year after, there's probably still more to go to the sell-off. Investors have to really get used to that it's a new paradigm right now. Already growth numbers and inflation numbers were going up even before the U.S. election. But now with the potentially new policies which will be implemented in the course of the next year, those should be more further stimulative in an environment where U.S. growth is already at potential and would lead to higher inflation and to higher Fed reaction, higher bond yields. So this is a change in paradigm from something that we've seen and gotten used to, lower bond yields, for the last 7 years.
Rajiv, you're mentioning a change in paradigm. I want to bring up bond market volatility, because one piece of research that really caught my eye recently was HSBC warning that we could see the 10-year yield at 2.5% around the first quarter of 2017, but then it will tumble to 1.35% by the end of the year. That's a huge change for a market that's been really used to yields grinding lower.
Absolutely. I mean, we're there at 2.5%, so I think we can probably go higher. I don't really see the way bond yields would tumble in the second half of the year unless something really out of the blue happens. I would think that yields would tend to drift higher and go closer to the 3% by next year. So it is quite different for investors who are used to lower yields and capital gains coming from lower yields. This is an environment where growth is picking up, where a lot of those expectations of low inflation are probably reversing themselves. You talked about higher oil prices earlier on in the program. Higher oil prices will contribute to higher inflation as well. So those are factors which are quite different from what we've seen in the last couple of years.
Yeah, let's talk about emerging markets, foreign FX here. I mean, how do you select the winners and the losers here? And where do you see it fitting in the global story? I mean, is all fixed to a global supply chain factor?
Well, part of the FX story is obviously linked to, or a large part is linked to the view one has on the dollar. I mean, with higher rates and generally, various tax incentives which would be favorable for U.S. corporates, and I would think that would lead to a stronger dollar. So that would be one part of the story. And the other one is, of course, the differential of interest rates. The Fed probably hikes rates next year after hiking this week. And that continues into 2018. Central banks in the region here are probably less likely to follow if they can avoid that. And that should lead to a stronger dollar as well. So I think that's one component. The other component is, of course, on the trade side. Protectionism and protectionist talk in the U.S. is not good for global trade and not good for the exporters of products which would compete with those made in the U.S. So more advanced economies in Asia would probably be hit by those types of measures, protectionist measures. So the Chinese currency, I'd expect it to continue to weaken a bit. I would expect, currencies like the Korean won and the Taiwan dollar to weaken as well. Whereas some of the countries where that's more commodity exporting, less competition to the U.S. would probably be less affected. And those, the typical commodity-producing countries in Asia, those are Malaysia, Indonesia, by themselves, they would have less impact from the protectionist measures.
But it really sounds like when it comes to emerging markets, all eyes are on the United States, all eyes are on the FOMC, whether or not that tightening is going to continue, the frequency and the path of that in this, outlook.